is something they've always talked about. This $120 level is not where oil should be for them, or at least fundamentally. And there might be a view that they think that this is going to hurt demand in the long run, and we don't want that to happen. But it's still unclear if they're going to come to that decision on Thursday.
All right, Stephen, thanks so much for joining. Stephen Sobczynski there, our energy reporter in Singapore. Now, let's stick with the energy story in Russia with the economy, as the economy there, it is shrinking. It's suffering heavy sanctions from around the world, and there's more pain to come, according to Bloomberg Economics. That says the first quarter GDP only shows a hint of the damage, but BE expects the drag to intensify in the second quarter. For more, we're joined by Scott Johnson, economist for Bloomberg Economics. I mean, Scott, what we've seen with the energy sanctions, I mean, even OPEC here were just hints of it. It is this really go slow approach. These sanctions are only slowly trickling in. To what extent will we see that damage, and how quickly actually show up in the Russian economy?
Hi, Danny. Well, so I think what we're seeing is really more of a gradual deterioration, a gradual breakdown in the Russian economy than a sudden crash. And I think that the EU's energy embargo, I think that that's a great example of it. It's been a long time coming. It's an important step, but it's going to be phased in over the course of 6 to 8 months. So I think the initial impact on the economy has not been as profound as we expected, but it will be. I think we're looking at still a very deep recession.
Scott, good to have you with us. I mean, one of the Bloomberg stories on Top Oil this morning is Russia's $285 billion oil and gas bonanza is funding Putin's war. That is the headline. So it's not the powerful blow. 100 days in, it's not the powerful blow to the revenue side of the equation that Biden had hoped for. But there will be a tail here. In other words, the ability of Russia to sell that oil to China and to other destinations, does that fade? And is the outlook going forward harder and tougher as we hit round 6 and maybe round 7 of sanctions?
Absolutely. I mean, I think we are seeing a darkening outlook. So far, Russia has seen a contraction in its exports. Something interesting, Russia's own economy ministry came out with a report projecting the impact of sanctions, and they think that oil and gas exports will decline in real terms by 10%, non-energy by 20%. That's a major blow, and that's without seeing this additional pullback from the EU that's coming up. The bigger question further ahead is what kind of rebound could Russia see in its economy? If we're looking at a contraction of on the order of 10%, that's our view. Consensus is around there. The economy ministry says 8%, but whether it's 6% or 15%, that's a very deep contraction. I don't think we're looking at much of a rebound in the coming years.
No, and the cost of this war is not cheap. Scott, thank you so much. That is our roundup on the state of play in Russia. Scott Johnson, an economist for Bloomberg Economics. Coming up in the show, the CEO of DWS Group resigns just hours after the police raid on the asset management unit of Deutsche Bank. More on the story here on Bloomberg.
Oh, this one is perfect.
Not as perfect as this one.
That is not a mango, Lenny.
No, but this mango hint water tastes just like mango, and with no calories or sweetness.
How can water taste just like fruit?
How can our feet look just like our hands? How can our feet look just like our hands?
Oh boy, I'm freaking out here.
For a limited time, new customers get 40% off on our top flavors at drinkhint.com.
Larry!
Lenny! The hint was delicious.
That's 36 bottles for $36. Only $1 per bottle.
Relax, pal. The Nature Show guy's got a whole cooler full.
And if you order now, we'll ship it right to your door for free.
Please tell me you heard that voice.
Stuffy pants, disembodied British fella? Oh, yeah.
Hint. Water with a touch of true fruit flavor.
Our roof got damaged during Hurricane Ida last August. When I went to start researching different roofers in my area, I was overwhelmed. The wait was incredibly long. The bids were outrageous. Then we got on Angie. Next thing we knew, we were put in contact with our Angie Pro. It was just insane how quickly things went. And then that weekend, they came out. They were there for a day and a half, and we had a brand new roof.
Got a home project? Get started at Angie.com today.
Assalamu alaikum.
It's great to see you.
Welcome
to the Qatar Economic Forum powered by Bloomberg.
Some people say that there's a de-globalization going on, but I prefer to think of a re-globalization.
Our accomplished speakers, from heads of state to business and policy leaders, will discuss evolving technologies, education, culture, sustainability, and the impact on the economy.
Welcome back to Bloomberg Daybreak Europe. I'm Danny Berger in London, Manus Cranny in Dubai. The CEO of DWS Group, Asoka Verman, has resigned and will be replaced by Stefan Hopps. The announcement comes just hours after a police raid on the asset management unit of Deutsche Bank over accusations of greenwashing. Joining us now is Bloomberg's finance and investing editor, Patrick Winters. So, Patrick, these accusations of greenwashing, they've been in the zeitgeist for a while now. Walk us through how much of a surprise or what it means to have the CEO resign so quickly after this raid.
I think it's one of the really big corporate surprises, one of the few cases where a CEO of a big listed company has stepped down amid a greenwashing scandal. The asset managers' offices were raided yesterday morning, Tuesday morning, Frankfurt time, and then early in the morning on Wednesday, German time, the CEO of the asset management unit was gone. So obviously we'll be looking into what led up to his resignation and if the probe was a factor.
What does it mean for DWS? I mean, look, the accusation of greenwashing, it's not just against DWS in the industry. These claims and challenges are rising. But what will it mean for DWS? More investigation, more management changes? What do you think?
I think it's definitely coming at an inopportune time for them. It seems like the CEO of the asset management unit was a trusted lieutenant of the CEO of Deutsche Bank, and he was appointed in 2018 at a very difficult time for Deutsche Bank. He managed to some extent, turn this asset management unit around. He managed to stem outflows and to, at the same time, take advantage of this global boom in asset management and also in ESG, bringing in new clients. So to have him go is definitely a huge loss. And at the same time, you have this kind of cloud hanging over the bank, hanging over the asset manager. Was this growth, did this growth come at the expense of something else which we don't yet know?
Absolutely, and you can remember just at one stage when we talked about UBS being in the lineup to maybe take DWS along with a number of others. Patrick, thank you so much. Patrick Winters there with the very latest on DWS and the changes. It should be said, DWS, Danny, has said they've cooperated fully with all relevant regulators and authorities on this matter and will continue to do so. So how does risk look, Danny, as we go to the end of this hour? Are we bull up or bear down?
It definitely has that feeling of a rally running out of steam. U.S. futures turning negative just in the past 30 minutes. Mike Wilson over at Morgan Stanley saying that it is a bear market. Bloomberg Markets Europe up next. This is Bloomberg.
What do you think healthier looks like? CVS can help you support your nutrition, sleep, immune system, energy, even skin. So healthier can look a lot like you. CVS, healthier happens together.
Healthcare professionals agree that sleep impacts everything you do. Chiic's performance sheets are engineered to keep you cool, dry, and comfortable. Chiic's are the world's most breathable, moisture-wicking, ridiculously soft sheets with superior stretch, even tested and proven on adjustable beds. Upgrade to Chiic's now.
Go to trychics.com to get 25% off and we'll ship them for free. Plus, we'll include 2 additional pillowcases at no cost. That's over $100 in savings. Go to trychics.com now.
Ginkgo Bioworks was founded in 2009 by several big brains from MIT. The founders wanted to develop ways to treat DNA more or less like software code. You find an organism with an interesting property, snip out the DNA behind that property, and then shove the DNA fragment into something else. The big promise behind synthetic biology is that we'll find a new means to harness nature and bend it to our will. We'll be able to manufacture things like chemicals and fuels and even physical objects in ultra-efficient ways.
Biology is ridiculously advanced. And we're just entering the era of being able to program it to do new things. And it's programmable because inside of it is digital code that we can, as humans, read and write.
Junior achievement is where dreams take flight. We are helping students connect what they learn in school to future work and career success. We are teaching them how to manage money to achieve financial security as adults. And we are showing them that starting a business also means changing lives and communities. However, we can't do it alone. Find out how you can help.
Life doesn't always give you time to change the outcome. Prediabetes does. 1 in 3 adults has prediabetes, but with early diagnosis, prediabetes can be reversed. And you can change the outcome. Take the 1-minute prediabetes risk test today. Go to doihaveprediabetes.org.
Strong enough to stay, we will never.
Good morning. Welcome to Bloomberg Markets Europe. I'm Danny Berger in London. Mark Cudmore, our Markets Live managing editor, joins us to take us through all the market action at this hour. The cash trade less than 60 minutes away. Here are your top headlines. Deflecting blame, President Biden backs the Fed's efforts to tackle price growth, putting the onus on Jay Powell. Janet Yellen admits she was wrong on inflation. Eye on supply, oil edges higher amid a Wall Street Journal report that OPEC Plus could exclude Russia from its production targets. Plus, factories falter. China manufacturing activity misses estimates, raising fears of a second quarter slowdown. Stocks struggle for direction. Welcome to Bloomberg Markets Europe, everyone. It's just gone 7 a.m. here in London. Mark, I mean, it is the 1st of June. May feels like it barely even existed. I don't know how we're here yet, but it feels fitting that we're starting this month worried about inflation, worried about China, and all eyes on oil.
Yeah, there's no positive enthusiasm. That's despite the fact that May actually wasn't that bad a month. Yeah. It feels like this year's been pretty scarring, but May wasn't too bad. But it's a bit of a session out there in markets.
Fair enough.
I think it's holiday impaired this week. People are lacking enthusiasm for the little bit of bounce in sentiment we've seen over the last few days, but they're not yet ready to be really bearish again.
Fair enough, unless you're Mike Wilson over at Morgan Stanley, who has never relented on his bearish status. Now, we are just under an hour away from the start of cash equity trading, so let's take a look at what futures are doing. They are off the highs of this morning, still looking at European stocks, able to push higher, more than 0.25% for most of these markets. If you are one who is partial to seasonality, June tends to be a pretty bad month. In fact, it's the worst month for European equities going over the past 20 years. Looking at S&P 500 futures and NASDAQ pushing into the red. It was a round trip for U.S. stocks in June. They started just 0.01% off of where they started the month in May. Unable to hold on to that rally we saw over last week. Dow Jones, that's doing a little bit better. Small cap futures doing a little bit better, but market does continue to be those tech futures, that concern about inflation that continues to hurt markets. I do, though, just want to quickly break. We have some BNEF estimates coming in, seeing electric vehicle sales reaching 20.6 million in 2025. That's a rise of an estimate by 50%. But Mark, away from the EV world, what's the cross-asset picture looking like to you?
Yeah, the GMM today is a little bit mixed. There's one or two themes that are important. One is we're still seeing yields go higher. This really is still a follow-on from the European yield story. It's been a long time since European yields have kind of dominated kind of the global bond market, but they very much are at the moment. The inflation story in Europe really running away, and that's putting pressure on the rest of the world in terms of the rest of the world's bonds markets. Other theme is in FX, we're seeing dollar strength again, and we are just seeing just weakness across the board elsewhere. And I think that ties into the idea that we might start seeing a little bit of commodity softness. Overall, it's a little bit mixed in commodities, but I'm interested to see that gas prices are coming lower again. And the final thing to draw attention to is the fact that we're still seeing a little bit of softness in China again. Both the equities market and the yuan a little bit weaker today.
All right, Mark, well, let's set the timer, get more into these markets for 3 minutes. And let's start with oil. Commodities, you say markets are a little meh, but this has your interest today. Looking at that big tumble in oil and gas prices yesterday, is it giving you sort of peak vibes this morning?
Yeah, very much so. I will admit that I was kind of looking for this week, so maybe I'm overly prepped. I get a bit nervous when things kind of almost go to what your expectations are. But I feel like all I see are bullish notes of oil, just overwhelmingly so. And on kind of arguments that we've really been aware of for some time. Look, there's an incredible supply story out there. I get that. I'm not trying to dismiss the supply story, but we all know this. And I think that, you know, that's why oil prices have risen so much in the past 6 months. We've been trading that valid supply story again and again and again. I think the story that's not priced is the demand picture. And I think I'm concerned that particularly what's happening in China, where we are seeing those growth forecasts tumble very, very quickly over the recent weeks. And yet we're not seeing that feed through into the projections for commodities demand. And it's not just China. There are financial conditions tightening around the world, and I think that's going to weigh on demand generally for things like oil and metals. And it may not feed directly into food prices, but remember, energy is the biggest cost when it comes to food prices, when it comes to extracting, producing, and delivering that food.
Well, to be fair, you do have Ed Morris out there saying that, look, oil should be more like $70 a barrel if it is recession that are in our sights. But okay, if recession is in our sights, I wonder what you make of hawkishness coming back into the fore, and not just the U.S., I should say, but this idea after those record inflation numbers in Europe yesterday that they need to act more, again, even with the threat of recession.
I think we're in a world where central banks will hike as much as the market lets them get away with. So I don't think they want to guide the market hike. I don't think they want to scare the market by going, we're going to do way more than your pricing. But if the market starts pushing, they will succumb to that. So if the market starts going, you know what, we're going to price 50 basis points, and that's not the base case expectation at the moment, well then I think the ECB will eventually deliver on that. But we still got some time before those hikes come through from the ECB, and a lot more to and fro and volatility to come.
Well, when it comes to the Fed, isn't there a little bit of the opposite of that in terms of the equity market? I mean, specifically, and what caught my eye is Mike Wilson at Morgan Stanley saying the more equity prices rise, the more hawkish the Fed will be. I mean, we have seen financial conditions start to loosen a bit just over the past week because of the rally in equity markets. Does that not make the Fed say, hey, we're not going to be able to pause. If equities are rallying, we need a fight to tighten financial conditions?
I think that's ultimately correct, but I think it's more of a marginal issue. It is true, look, the Fed needs to control inflation, and ultimately to control inflation this time around, they're going to need to make a negative wealth impact on the economy. They're going to need to hurt assets. I don't think they're deliberately thinking, oh, look, equity prices are higher, we better be more hawkish, but it is kind of indirectly kind of going, we're not controlling the inflation problem yet. And that's why ultimately the US is going to head for a recession. I really feel like it's bizarre to have a debate about that. It's just the timing of when that comes is very valid. I'm still in the camp that there's probably no recession this year. It's sometime next year instead.
Yeah, I guess timing and also just how severe of a recession it will be. Mark, great stuff as always. And if you want to get more analysis like that from Mark and the rest of the team, MLive Go is where you head on your terminal. Now let's get to the Bloomberg First Word News. With that is Laura Wright. Good morning, Laura.
Good morning, Danny. China is doubling down on mass COVID testing. The government had imposed a bruising lockdown in Shanghai and strict curbs in Beijing to halt the spread of the virus. Now it's setting up a network of tens of thousands of lab testing booths across the country in a move that's dashing hopes for a shift away from its costly COVID-0 strategy. China's factory activity contracted in May from the previous month, though the slowdown was not as bad as in April. Both production and new orders fell, according to the Caixin Manufacturing Purchasing Managers Index. The survey blamed weak foreign demand as a key factor. Some OPEC members are reportedly exploring the idea of suspending Russia's participation in an oil production deal. That's according to the Wall Street Journal, which quoted unidentified OPEC delegates. Western sanctions and a partial European ban are beginning to undercut Moscow's ability to pump more oil. Some producers in the Middle East are planning to boost output in the next few months to make up for any potential Russian shortfall, according to the report. UK food and drink exports to the European Union are down 17% in the first quarter compared to pre-pandemic levels. That's according to a report from the Food and Drink Federation. Brexit trade rules and supply chain problems continue to dent demand, although shipments to Canada and India helped drive exports to non-EU countries above pre-pandemic levels. It was not enough to offset the lower EU demand. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg. Mark, Danny.
Laura, thanks so much. Laura Wright in London. Coming up, as the U.S. president talks inflation with the Fed chair and the Treasury Secretary, we're going to get the market's view with William Davies from Columbia Threadneedle. That's next. This is Bloomberg.
If you think eating heart-healthy food to support your blood pressure has to take a lot of time and hassle, then you need to try Super Beets Heart Chews, the first and only heart chew with unique polyphenols that make supporting your healthy blood pressure convenient and delicious. Super Beets polyphenols are nature's way of helping reduce oxidative stress and supporting circulation, so you feel more energized.
It gets me going. It gets my circulation flowing, and I have that energy all through the day. It's just fantastic.
I can stick them in my bag and keep them in my car. I love that I'm taking something that's healthy for me, and it's maintaining healthy blood pressure.
What makes Super Beets polyphenols so different from other antioxidants? In a leading clinical study, they were shown nearly 2 times as effective at promoting normal blood pressure as a healthy lifestyle alone.
In my 31 years of helping people maintain healthy blood pressure, I've never seen a polyphenol compound this effective. Super Beets antioxidants help support healthy blood pressure and help your body produce more energy.
Now I feel like I have this wonderful reserve of energy. My blood pressure is even more healthy. I'm loving it.
Now you can try our top-selling Super Beets Heart Chews risk-free. Call to find out how you can receive an extra 30-day supply of Heart Chews free with your first order. And for a limited time, we'll also send you a free 30-day supply of our brand new Super Beets Memory and Focus Chews. The only chew for brain health support to contain unique polyphenol compounds, clinically studied to promote healthy blood flow to the brain, while also supporting memory and focus so you feel more alert. This offer is not in stores, so call today. We'll even include free shipping, free returns, plus a 100% money-back guarantee. That's over $30 in total free gifts. Take your cardio and neuronutrition to an entirely new level. Try Super Beets Chews today. Love your results or your money back.
Call 1-800-577-2994 or visit trychoose.com today. That's 1-800-577-2994.
Welcome back to Bloomberg Markets Europe. About 50 minutes away from the cash equity open, looking to a positive start for your June. That was after equities fell yesterday. So a little bit of a rebound, but how much of this is just a bear market rally? Now to the U.S., where there was a rare meeting between Biden and Powell. The U.S. president says he respects the central bank's independence, but at the same time is attempting to shift responsibility for taming inflation ahead of this year's midterm elections.
My plan is to address inflation. It starts with a simple proposition. Respect the Fed. Respect the Fed's independence.
Joining us now is William Davies, Columbia Threadneedle CIO. And William, there does feel, not just in the U.S., but really this global political pressure to really get inflation under control. Certainly see that with the Bank of Canada, who's set to raise interest rates 50 basis points today. Do we have a good grasp on the hawkishness of global central banks right now?
Well, certainly central banks around the world are dead focused on inflation. Inflation has gone higher than they thought. Inflation has persisted for longer than they thought. And it isn't coming down very soon, for sure. We have seen exogenous factors which have helped drive that, like commodity prices, partly driven by sanctions on Russia. But absolutely, they are dead focused on inflation.
William, the other thing that's happening today is the start of quantitative tightening, finally by the Fed, officially starts today. Obviously, it's not going to change anything in one day, but what do you think is the asset market that's most vulnerable to quantitative tightening over the next kind of coming months?
Well, I guess you've got to look at where we've come from. You know, a decade ago, global financial crisis, quantitative easing, money so cheap. Again, past couple of years, pandemic, quantitative easing, money so cheap. And so we need a reversal of this, absolutely. In terms of which markets are affected, markets have already been affected by this. The fact that it starts today has been anticipated, and that's part of the reason we've seen yields rise around the world.
So, sorry, do you think it's fully priced, or do you think there's somewhere else that's, you know, it's not priced? Are you saying the quantitative tightening story is now fully priced in markets?
I would look at it and say it is expected. It is not a surprise right now, and so it is very much in the price right now. Could there be some small effect as we move forward? Of course there could. But largely, it is anticipated, it's known, yes.
One thing I'm interested in are these oil markets. I know we were talking about this earlier, this idea that you're essentially saying, right, that the supply side, that's what we're worrying about, but demand, that's not as concerned right now. Is that a fair characterization?
Well, we're not pricing the demand story, we've priced the supply story.
Okay, so what do you make of this idea that we haven't fully priced in the demand story? I mean, we see oil get crushed yesterday. Are we accurate? Are markets saying, do they have this idea in them that perhaps demand is going to be a little bit slower? And if not, where does that go?
So supply has driven the rise in the oil price because of sanctions on Russia. That has been the prime mover. However, as we've gone through recent months, we've seen lockdown in China and concerns about the demand side there. But what happens after lockdown? Opening up. And so we start to see increased demand coming through from China, anticipated as we go through this year. So yes, demand, given all the difficulties in the world and uncertainties in the world at the moment, is going to be volatile as we go through this particular year. But supply has driven the price of oil. Demand will have an impact as we move forward.
So can I just clarify, so you think that supply will stay the main driver, but demand's going to be swinging back and forth as we kind of trade the reopening or not, or kind of the recession theme?
Yeah, that is fair. To see a big move in oil prices from here, we'd expect to see some change in that supply dynamic either way.
This is the thing that I struggle with in terms of, wanting to have this crystal ball. It just feels like we don't. Whether it's the oil story, whether it's inflation. I mean, economists can't get a grasp on this. For you, looking at the volatility, where do you take solace? Where do you hide out when, again, so many of these things are just unknowns?
Well, Danny, I tell you, investing this year has been really difficult to hide out. You look at the difficult first quarter, especially in the bond markets, in the equity markets, first and second quarter. Commodities have been the place that you could hide in terms of the rises we've seen there.
They're at the top if you're just listening to Mark.
Yeah, but what I would say right now is be a bit careful about being overly pessimistic about bond markets, given we're looking at a slowdown as we go through the rest of the year. So we've started to see some stability there. Particularly at across the curve, really. And so I guess that's where we're starting to see a little bit of stability, which we didn't see earlier in the year.
Okay, you're suggesting it's time to start nibbling into the bond trade again. And you're saying it's across the curve. Are you talking specifically about the US here, or are there other parts of the world that really start appealing to you or stand out for better value?
Yeah, I love that word nibble, because you don't take that great big bite, but absolutely it's time to start looking at that. Within the US, where we've seen, I guess, the biggest change in expectations of interest rates this year, absolutely time to start nibbling. Thank you, Mark. And if we look at Europe and the UK, well, Europe, we haven't even started to see the increase in rates yet. However, the 10-year yield in Germany is over 1% now, not far off 2% in the UK. I don't think nibbling is the wrong thing in those markets either.
All right, well, we're going to get more into that in just a bit. William, hold your thoughts. We'll dive into Europe in just a moment. William Davies there, Columbia Threadneedle CIO, sticking around with us. Coming up, China's factory activity falls at a slower pace than expected. Beijing doubling down on its costly COVID-0 strategy. We'll discuss that next. This is Bloomberg.
Time for our Memorial Day sale on the Sleep Number 360 Smart Bed. It senses your movement and automatically adjusts so you both stay comfortable. It can help you get almost 30 minutes more restful sleep per night. Save $1,000 on the Sleep Number 360 Special Edition Smart Bed Queen, now only $19.99. Only for a limited time.
If you're someone who struggles with mobility, even a short walk won't seem like a short walk. But the sturdy and comfortable Hurricane provides the balance and support you need. It helps you walk on any surface and truly stands alone. Get the #1 selling cane in America with our worry-free 100% money-back guarantee, plus free shipping. Just go to hurricane.com today. Also available at these fine retailers.
Your personal information gets exposed so often, it might as well be hanging in a museum. Everyday activities like online shopping, banking, and even data breaches may expose your information and make it dangerously easy to have your identity stolen. No wonder there's a new victim every 3 seconds.
Someone stole my information and tried to buy a car in my name.
felt really devastating because I had no control.
But protecting your identity can be easy with LifeLock. LifeLock monitors threats to your identity, and if an issue is detected, a dedicated U.S.-based restoration specialist will work to fix it.
If something happens, you have somebody fighting for you.
All backed by LifeLock's $1 million protection package, including reimbursement for stolen funds.
Everybody needs to have LifeLock.
Identity theft protection starts here. Call the number on your screen or visit lifelock.com/get25 and use promo code GET25 to save 25% on your first year of identity theft protection. Enroll now.
Front Row, exclusive interviews with the most influential figures in finance. First available on the Bloomberg Terminal, then on Bloomberg Television and Bloomberg.com. Front Row, the best seats in the house for business's greatest minds.
Welcome back to Bloomberg Markets Europe. About 40 minutes away from the cash equity open, looking at positive, at least an indicated positive start to this June 1st. Looking at FTSE 100 futures, those are higher. They were the rare market to end positive yesterday, only by 0.1%. Perhaps some concern about oil coming into the market as well. DAX futures, CAC 40 futures, those both up more than 0.33%. Now, China's factory activity in May contracted from the previous month as both production and new orders fell, although the slowdown wasn't as fast as in April. At the same time, China is doubling down on mass testing in a move that's dashing hopes for a shift away from its costly COVID-0 strategy. Joining us to get into it is Bloomberg's chief Asia economics correspondent, Enda Krim. And there was some optimism, perhaps, of Shanghai starting to open. Perhaps the Caixin data wasn't as bad. I mean, what do you make of all these cross currents?
Well, yeah, look, there is a lot to figure out because as the economy reopens, we're trying to see just how quickly the recovery can be. The Caixin data today points to a sector still in contraction. Caixin's better at getting a read on the smaller and medium-sized businesses. But as you say, though, it's also like the official PMI yesterday, Danny, it points to this idea that maybe manufacturing has bottomed out now. There are hints that external orders are getting better. And obviously logistics and transportation is improving, and all of this is reflecting the easing of the restrictions in Shanghai, which is allowing some degree of normality to return. And importantly, we haven't seen any other major style lockdowns in the key industrial areas or in the key ports in recent weeks either, as cases have collapsed. So, you know, clearly the PMIs in China are still in contractionary territory. Obviously, there's a lot of issues still to be ironed out in the supply chains there, but the thinking is that this may have marked the bottom. The question now is how quickly can they get things motoring again.
Good afternoon, Enda. So a bit of marginal improvement on the data side, but what's the next thing we're looking for in terms of China's COVID policy? What's the next potential catalyst?
Well, that's right, Mark. So as I said, you know, Shanghai is reopening now. Beijing didn't go into a big lockdown, but they're sticking with COVID-0, and there's a lot of attention now on practically what that means. And one of the issues our colleagues have picked up on is going to be the role of mass testing in everybody's lives in major cities in China. And the question marks are around, you know, how practical is that going to be? I mean, the scientists and experts say it surely is a way to detect and control chains of the virus early on, but obviously it's going to have a disruptive impact on people's daily lives, on consumers, on schools, and of course on business people. So there's a financial cost to it and there's a practical cost to it. And also, though, I think it speaks to the idea that even though China is trying this juggling act of keeping the economy propped up while it sticks with COVID-0, it really isn't inching away from COVID-0 at all. It's doggedly sticking to, at the very least, aggressive control of the virus. There's no sign of the kind of opening up that you're all familiar with, say, in the Western world, for example. This is their approach. They're sticking with it. And judging by the explosion of these testing booths in cities around China, it doesn't look like they're going to be turning that around anytime soon.
All right, Enda, thank you very much for the update. Bloomberg's Enda Current there. Now let's get back to one of our other top stories with Eurozone inflation accelerating to an all-time high. That intensifying the debate at the ECB about how to rapidly rise interest rates from record lows. Consumer prices, they jumped 8.1% from a year earlier in May. That exceeded the 7.8% medium estimate in a Bloomberg survey. Now that acceleration, it was driven by food and energy after Russia's invasion of Ukraine sent commodity prices soaring. Still with us is William Davies, Columbia Threadneedle CIO. And William, we were all talking about this during the break. Okay, you say QT, that's all priced in. A lot of the Fed hawkishness is priced in, but it does feel like if there's one place for some hawkishness that isn't quite priced in, it's Europe. I was talking about this with Valerie Sarasulo, our charts editor, our markets editor, who pointed out the fact that 6-month swaps, yes, they've risen aggressively, but they could have further to go if we get to neutral. So you say you're nibbling at the European bond market. So tell me why I would be wrong to say, okay, there's not further to fall, considering the ECB does still have more room that they could be in terms of hawkishness.
Well, I think we've got to take a step back, Danny. I mean, let's look at where we are within the Eurozone at the moment. As you rightly say, inflation is, headline inflation is over 8%. Core inflation approaching 4%. Definitely not where the ECB want to be. And where are interest rates? They're minus 0.5%. Of course they've got to rise from here. Should they have been raised already? Probably they should have been. So we are going to see those rate increases as we go through this year. What we've got to be careful about, though, is they're going to be raising rates into an environment where growth is slowing. And so that is going to be uncomfortable. So yes, rates are going to rise. Yes, we can get into positive territory in terms of rates within the Eurozone, but that is going to be happening as we see a slowing. So there's going to be a bit of tension as we go through the Eurozone in the second half of this year.
So when will the recession start in Europe and how deep will it be?
You said when. That's so unfair there, Mark. We're expecting slowdown. Could it be recession? Yes, it could be recession. You're right. However, is it going to be recession like global financial crisis 2008? No, absolutely not. That is not what we believe. But there is greater sensitivity in the Eurozone to Russia's invasion of Ukraine and the impact on commodity prices and oil and gas supplies than there is in the US. So actually, potentially, there's a bigger impact in Europe. And that can impact, especially as we go towards the end of the year. Hence the sensitivity and that tension for the ECB.
But you do go for a recession more than not. More likely a recession.
Certainly possibility. Absolutely.
Oh, that's way too safe.
Are we
Absolutely, Mark.
I thought we were in this place where recession was consensus. Are we not? I thought that was the idea, especially in the U.S. And if the U.S. is going recession, as you say, Europe sure will too.
So consensus. So recession is 2 negative quarters in a row. Right. Let's look at where we've just come from. I mean, the U.S. has had a negative quarter Q1. We've been in lockdown at the beginning of this year. We're expecting that slowdown. Whether it's recession, which is like minus 0.2% or something negative growth, or whether it's +1, to my mind, it doesn't make a big difference. It makes a huge difference to the headlines where you can cite it's a recession. But actually, if it is recession, we'd say it would be more likely mild.
I think that's a fair point about the distinction about it's a theoretical definition. Doesn't really matter so much in the real world. But will it feel like a stagflationary environment then?
I think the answer to that is yes. And we're already seeing it in terms of the effect on disposable income. And we're seeing it in terms of consumer confidence falling right now, and also consumer preferences, what they're going to spend on. That means there is going to be change, there will be continued volatility, and that will make it feel probably recession-like. Yes, Mark?
So maybe not a recession, maybe a technical recession. It might feel like recession. A lot of shades of gray in here. William, thank you so much for walking it through all of us with it, walking us through it all. That's William Davies, Columbia Threadneedle CIO. Now, coming up, we're going to discuss OPEC Plus possibly exempting Russia from its output deal. This is Bloomberg.
Sleep. Feel. The Chic's difference is real. From the light to the dark. Hold back. Fall in. Exhale. Woo! Hot damn. No, ma'am. So chill all night. On a cloud like a feather. Smooth, soft, nothing better. Just right on the night. Visit trycheeks.com and get 25% off this Memorial Day with a 60-night guarantee.
From the world of politics to the world of business. Balance of Power with David Weston. News, analysis, insight from and about politics power players. Weekdays. This is Bloomberg.
Guys, got hair loss? I know what you're thinking. Should I shave my head? Comb it over? Wear a hat? Just stop. This isn't 1970. Keep your hair and your confidence because Bosley, America's #1 hair restoration experts, can give you your real hair back permanently. Check them out today because they're giving away an absolutely free information kit and a free gift card to everyone who texts WILD to 234-234. Dude, you don't have to look like your dad because this isn't your dad's hair loss treatment. People all over the country trust Bosley because they're ahead of the curve. They use the latest technology to give you your real hair back. And the best part, Bosley's permanent solution is protected by the Bosley Guarantee. Let them show you for free how awesome your hair could look with an absolutely free information kit and a gift card for $250 off. Text WILD to 234-234. Ask about the Bosley Guarantee. That's WILD to 234-234.
Material samples brought back from objects in space can shed light on billions of years of our solar system's history, including details about the origin of life here on Earth.
A piece of an asteroid is a piece of the earliest beginnings of a solar system.
But picking up rocks from the surface of an asteroid or planetary satellite isn't as easy as it sounds. It requires voyages of millions of miles to bodies that have never been seen up close. Probes need to land on surfaces with weak gravitational pulls, where the surface terrain is completely unknown, gather samples, and then make the long trip back. And while behemoths like NASA and SpaceX grab headlines, it's a relatively young space agency. The Japan Aerospace Exploration Agency, better known as JAXA, that is taking the giant leap necessary to bring the mysteries of space back down to Earth.
Junior achievement is where dreams take flight. We are helping students connect what they learn in school to future work and career success. However, we can't do it alone. Find out how you can help.
Welcome back to Bloomberg Markets Europe. We're 30 minutes away from the cash equity open. Your top stories. Deflecting blame, President Biden backs the Fed's efforts to tackle price growth, putting the onus on Jay Powell. Janet Yellen admits she was wrong on inflation. Eye on supply, oil edges higher amid a Wall Street Journal report that OPEC Plus could exclude Russia from its production targets. Plus, factories falter. China manufacturing activity misses estimates, raising fears of a slowdown for a second quarter. Stocks struggle for direction. Mark, 30 minutes to go. We were just discussing with William Davies this idea of, okay, are we all too obsessed with supply? Is demand going to be the thing we're worried about? I know you've got your eye on oil.
Yes, Danny, and that's very much my narrative at the moment. I think that, look, and we're going to get more from Paul Wallace about this in the situation with OPEC Plus. But basically, I think the news about OPEC Plus might exclude Russia from their considerations of a slight increase will be very interesting. And I think it's had a real impact on the market because the market has been so psyched up on the supply side story, which has been very negative. So this is the September contract in oil. I did that to avoid some of the front-end distortions over the last 6 months. And you can see it's really risen quite extraordinarily from below $70 up to about $115 a barrel. A really incredible gain over the space of 6 months. Now, we know why. Obviously, there's been the Russia-Ukraine war, and we've just generally had an energy crisis around the world, and there's been a lot of other disrupted supply stories. But I think that supply story, that is the story of the last 6 months. I want to do some technicals here that make it look bearish. I don't know, if the technicals don't suit my narrative, I ignore the technicals. And these technicals are only bullish, but I think they tell the story of the past 6 months that was a supply story. Now, ultimately, commodities tend to be a supply story, but I think the story that is underpriced here is the fact that demand is turning much more negative. And so I think we've probably just seen a medium-term top in oil. I really do think that. I know that was only yesterday, but I think from here we'll see oil prices generally trade lower over the coming months.
Mark, how much does this discussion we've been having about the recession, whether or not it's baked into the picture, fine, but how severe and when it happens, how important is that for the chart you're describing right now?
It's super important because ultimately what I'm saying is the supply story is not going to get miles better, but I think that if there's any surprises, they'll be more likely to be positive ones because we're focused on the very negative bits. My point is the demand demand story is going to get more negative. I think that China, I'm not as gloomy as many people in China, but it's still not going to have as good growth as we were thinking a few months ago. Financial conditions are tightening around the world. Ultimately, oil is still a little bit of a liquidity play because it is a speculation about the upside potential in the economy. So I think that the fact we are going to get recessions in Europe, in UK, in the US, in many other countries, whether they're very deep or not, I actually am not too gloomy about that side either. And how soon they come, they will weigh on oil demand. And I think it's those stories that are not priced, even if they're not dramatic.
Well, Mark, we have someone waiting in the wings who I know is dying to contribute to this, and the oil price rally. Of course, as you've been describing, it's fizzled. That's after a report that OPEC Plus members are exploring the idea of exempting Russia from its production deal. That move could open the door for producers to pump more. Joining us now is our team leader for Middle East energy and commodities, Paul Wallace. Paul, I know you're listening there to Mark, but let's start with the OPEC Plus story first. How likely is this exclusion of Russia?
Hi, Danny. I think it's still a big if at this stage. A lot more would still have to happen. Essentially, well, let's put it this way: a breakup of OPEC Plus or anything, or any kind of development that leads to the Saudis and the UAE and maybe Kuwait and others leads to them pumping more oil would be major for energy markets. But as I said, a lot would have to happen, and a lot of it would have to happen on the political side. So far in public, the Saudis and the Emiratis, who have most of the spare capacity in OPEC Plus, they have been very much in favor of keeping the group together and saying that Russia's involvement is key to their long-term interests, which is stabilizing the market, not just tomorrow, not just in a few months, but in the decades to come. So I think for the development, any kind of breakup to happen, the Saudis and the Emiratis would have to get something on the political side from the US. They've been calling for some kind of security guarantee from Washington, but that would be pretty complicated. There is talk of Joe Biden traveling to Saudi Arabia, perhaps as soon as next month. That would be his first trip since he became president. It is possible that if that trip goes ahead, that's because there's a deal in the making, but there's certainly many more things that have to happen before we get to anything like a breakup of OPEC Plus.
Paul, how damaging would this be for Russia and Putin overall?
I think it would be very damaging for Russia and for Putin personally. OPEC Plus is something that Russia has continually said is very important for them. And even this morning, Sergei Lavrov, the Russian foreign minister, who is in Riyadh to meet GCC foreign ministers, he said, according to him, he said that the Saudis are praising OPEC Plus as a stabilizing force for energy markets. But it would certainly be damaging, and it would be a huge geopolitical blow for Putin if he essentially lost OPEC Plus.
So you've set the scene for us when it comes to the politics of this, Paul, but translate that into these markets. What does this all mean for oil?
Well, we got an inkling of what it would mean late yesterday. We saw that WTI and Brent both dropped when these reports came out that the Saudis were thinking of perhaps something akin to a breakup of OPEC Plus and raising production. WTI at one stage almost erased all its gains, even having been up, I think it was 3.5% before the reports come out. I think there's a very good chance, from what analysts and traders are saying, that if the Emiratis and the Saudis say they're going to boost production significantly, oil has got to drop. Mark, what you were saying earlier about the demand side, obviously not everyone in the market believes that demand is, fragile and waning, but there are enough that do, that suggests that prices will drop if you have pressures on the demand side, and added to that, more supply coming on stream from the UAE and Saudi Arabia.
Paul, can I clarify that we think that even though we saw the price fall yesterday on some speculation this might happen, that you still think that the bigger surprise in terms of reaction in the market would for them to follow through on kind of isolating Russia and increasing supply? That would be a much bigger reaction than if they kind of go stick to the status quo and the bounce we get in that scenario.
Yes, I think so.
All right, Paul, thank you very much. Clear and consistent there. Team leader for Middle East Energy and Commodities, Paul Wallace. Now let's get to the Bloomberg Business Flash. With that is Laura Wright. Good morning, Laura.
Hi, Danny. DWS Group says CEO Asoka Verman has resigned and will be replaced by the head of Deutsche Bank's corporate bank, Stefan Hoops. Verman's resignation comes just hours after Frankfurt police raided the headquarters of Deutsche Bank and DWS, which is the lender's asset management unit. Prosecutors say the search was related to allegations that DWS was inflating its ESG credentials. Fidelity Investments cut valuations for several closely held technology companies, including social media platform Reddit and payment software provider Stripe. Fidelity funds marked down stakes in Reddit by more than a third in April from the preceding month, and Stripe by 13%, according to filings and data compiled by Bloomberg. Fidelity also cut valuations for TikTok owner ByteDance and for Instacart. Bloomberg has learned that HSBC is offering its UK staff the chance to lease electric vehicles using their pre-tax paychecks. Sources say all of its 35,000 employees in the country are eligible for the perk. They can choose between 2 and a 4-year lease and may buy the car from HSBC at the end of the contract. That's the Bloomberg Business Flash. Mark, Danny.
Laura, thanks so much. Laura Wright in London. Now, today marks a turning point for monetary policy in the U.S. Quantitative tightening is officially beginning. Soros Fund Management CEO Don Fitzpatrick says the U.S. economy can withstand the challenges of tighter policy.
So I think the U.S. position right now looks reasonable, but I think we can't take things for granted. Things like our reserve currency status, I think that's not a given, and taking that for granted, I think could be perilous. So I think the U.S. economy is in reasonably good shape, as I said. I do think China is going to pose persistent challenges for the U.S. in the decades to come. But I think they're surmountable challenges.
Now, you and I have served as advisors to a New York Federal Reserve kind of committee. And what is your view of the New York Federal Reserve or the overall Federal Reserve? You think the Federal Reserve missed the boat on inflation and maybe they should have moved more quickly earlier on, or you think that they did the best they could?
In hindsight, they should have moved earlier. And I think they're doing their best to catch up now, and I think you're going to see them move really aggressively. So the market already at 50 basis points at the next 3 meetings is already priced in. So I think you're going to see them rush to get rates up to the 2.5% range, and then I think they're going to reassess where the economy is. They had a hard job. They were obviously worried about inflation, but they were also trying to, to support a population coming through a pandemic.
You can see more of that exclusive interview on Bloomberg Wealth at 6 p.m. London time, 9 p.m. if you're in Dubai. Now, coming up, the CEO of DWS Group resigns just hours after a police raid on the asset management unit of Deutsche Bank. We'll have more on that story next. This is Bloomberg.
This one is perfect.
Not as perfect as this one.
That is not a mango, Lenny.
No, but this mango hint water tastes just like mango, and with no calories or sweetness.
How can water taste just like fruit?
How can our feet look just like our hands?
Huh?
How can our feet look just like our hands?
Oh boy, I'm freaking out here.
For a limited time, new customers get 40% off on our top flavors at drinkhint.com.
Larry!
Lenny! The hint was delicious.
That's 36 bottles for $36. Only $1 per bottle.
Relax, pal. The Nature Show guy's got a whole cooler full.
And if you order now, we'll ship it right to your door for free.
Please tell me you heard that voice.
Stuffy pants, disembodied British fella? Oh, yeah.
Hint. Water with a touch of true fruit flavor.
We're all horrified by what's happening in Ukraine. Hundreds of thousands of civilians are fleeing for their lives, and an estimated 12 million people need humanitarian assistance. I'm Sienna Miller, and I am a Global Ambassador for International Medical Corps. Our teams have been on the ground in Ukraine since 2014, when conflict first broke out in Crimea. Now, with attacks by Russian forces across the country, we are scaling up our relief efforts inside Ukraine, as well as in Poland, Romania, and Moldova, to provide medical and mental health services, protection for women and children, and clean water, sanitation, and hygiene. The needs are immense, and the situation is worsening by the day. You can help. Please visit internationalmedicalcorps.org to find out how. Thank you.
When Singapore announced further easing of restrictions, removing of, opening the lane to all travelers, all vaccinated travelers, and removing all test requirements, there's another big jump. So in the month of April itself, we carry close to 1.5 million. And looking forward, we continue to see very strong booking momentum. So we are quite confident of the demand.
How much clarity do you have beyond this year? I mean, 61% capacity for June, 67% capacity for September. What are you looking at for the rest of the year and perhaps in 2023?
So we don't give projections. What is also important to point out is that we have prepared ourselves so well during the pandemic to actually put in place capacity at short notice that we can respond to any demand changes out there very quickly.
Can you get to pre-pandemic levels without China opening up its border?
China is obviously a very key market, especially for airlines in our part of the world. We used to serve 29 points in China, in the Greater China region, the group that is Singapore Airlines as well as Scoot. So if China is not open, obviously there will be some impact to the overall traffic for any airlines, especially in Asia. However, we are also seeing more demand from other parts of the world. And we are, in some of the cases, increasing our capacity more than what we used to serve.
Where would these places
be? For
be?
example, New York.
Has the pandemic perhaps prompted you to reassess how the business is done? Is there a need to diversify the markets? Is there a need to be in other markets apart from Singapore?
From day one, Singapore Airlines do not have a domestic market, and we compete internationally with the best out there throughout this 75 years. What happened is that we became extremely good at international competition in terms of our product leadership, service excellence, and our network connectivity. We truly is a group with international footprint.
Singapore Airlines CEO there speaking with Bloomberg's Haslinda Aman, and you can watch that full exclusive interview. It'll be tomorrow on Bloomberg TV, 6:30 p.m. Thursday, London time. Now, the CEO of DWS Group, Asoka Verman, has resigned and will be replaced by Stefan Hoops. The announcement came just hours after a police raid on the asset management unit of Deutsche Bank over accusations of greenwashing. Joining us now to discuss is Bloomberg's finance reporter Tom Metcalf. Tom, we've been discussing this greenwash issue for some time now. The pressure's been building. Perhaps what is new is this raid. So was the resignation of the CEO, is it surprising?
Well, I think it was probably inevitable as soon as you had those images of police cars entering DWS's office. As you say, the pressure has been building for months, and I think some people have been surprised that Christian Suen has sort of stood by his man, as it were, in terms of, basically repeatedly back him up, even as the sort of press reports gathered steam. But yeah, I think probably yesterday was probably the sort of the last straw, as it were, and they're looking to kind of draw a line under this if they can.
Tom, good morning. What do we know about Stefan Hoops, his replacement?
Yeah, so he's a fast riser in Deutsche Bank. So he's currently head of the lender's corporate bank, and that was a pretty recent promotion. So he's clearly sort of one of the come-in people at the bank. And, I think the idea is he takes over from June the 10th, and it will presumably to sort of start with a clean slate and, hopefully keep the asset manager out of the headlines if he can.
Now, it's not just DWS, this concern about greenwashing, but does this resignation, what does it do to just the general environment over these concerns of greenwashing?
Yeah, that is going to be the wider impact. I mean, it's really interesting times. Obviously, you've had the sort of long run in by now saga at HSBC, where you had the head of responsible investment saying, some very surprising things about the environment given his role, which I think speaks to the wider sense that there's plenty of people in finance who really only pay lip service to ESG. So what this does, you've seen a CEO ejected. That's certainly going to raise the stakes, and while it may not change what's going on behind the scenes, it will certainly make people perhaps think twice, and you'd think it will see some positive change in this area.
Right. Tom, thank you very much. Tom Metcalf there from our finance team. Should just point out that Vermin does say that the allegations made against DWS and him over the past month are unfounded. Now let's get to the Bloomberg First Word News. With that is Laura Wright. Hi, Laura.
Hi, Danny. President Joe Biden says he'll give Ukraine advanced rocket systems and other U.S. weaponry to better hit targets in its war with Russia. The move, announced in a New York Times article, ramps up U.S. military support as the conflict drags into its fourth month. The package of weapons includes missiles that will allow Ukraine to strike locations as far as 80 kilometers away. China is doubling down on mass COVID testing. The government had imposed a bruising lockdown in Shanghai and strict curbs in Beijing to halt the spread of the virus. Now it's setting up a network of tens of thousands of lab testing booths across the country in a move that's dashing hopes for a shift away from its costly COVID zero strategy. China's factory activity contracted in May from the previous month. Though the slowdown was not as bad as in April, both production and new orders fell, according to the Caixin Manufacturing Purchasing Managers Index. The survey blamed weak foreign demand as a key factor. Some OPEC members are reportedly exploring the idea of suspending Russia's participation in an oil production deal. That's according to the Wall Street Journal, which quoted unidentified OPEC delegates. Western sanctions and a partial European ban are beginning to undercut Moscow's ability to pump more oil. Some producers in the Middle East are planning to boost output in the next few months to make up for any potential Russian shortfall, according to the report. The U.S. Supreme Court has blocked a Texas law that targeted social media platforms. Critics say the measure would require Twitter and Facebook to allow hate speech and extremism. The High Court put the law on hold while social media firms challenge it in a lower court. Texas Republicans say the law is needed to protect conservative voices from being silenced. UK food and drink exports to the European Union are down 17% in the first quarter compared to pre-pandemic levels. That's according to a report from the Food and Drink Federation. Brexit, trade rules and supply chain problems continue to dent demand. Although shipments to Canada and India helped drive exports to non-EU countries above pre-pandemic levels, it was not enough to offset the lower EU demand. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg. Danny, Mark.
Laura Wright in London, thanks so much. Now coming up, we're going to take a look at your stocks to watch. That includes GSK, the UK drug maker, planning to spin off its consumer health unit. It will be the biggest listing on the London Stock Exchange in the last decade. That's next. This is Bloomberg.
Time for our Memorial Day sale on the Sleep Number 360 smart bed. It senses your movement and automatically adjusts so you both stay comfortable. It can help you get almost 30 minutes more restful sleep per night. Save $1,000 on the Sleep Number 360 Special Edition smart bed Queen at only $19.99. Only for a limited time.
Your vibe isn't one size fits all. It's about what suits your body and what suits the moment. It's just you. So instead of options for all, we focus on a style for you. One that knows you and fits you, so that you can be yourself anywhere. Stitch Fix, we're so you. Sign up to get $20 off your first purchase.
Joel, since Kansas, we've taken our own path. We've never done what everyone else did. We took on the fear. We ignored the doubt. We loved the excitement. We believed. Even when our path didn't make sense to everyone else, we kept going.
We keep going until our path is the one they wish they had taken.
(9:30 a.m. New York time), a massive wave of market data comes out of the U.S. exchanges.
We handle around 200 billion pieces of financial information a day. There are millions per second at peak moments.
Those spikes are what we size our system for.
It's vital we don't fall behind during the peaks when our customers need us most.
It's an incredible feat to get this right every single day.
Welcome back to Bloomberg Markets Europe. About 7 minutes away from the cash equity open, looking at gains for European futures, looking near the highs of the pre-market session. Mark, let's also dive beneath the surface here. Look at some of the stocks to watch. One of the stocks I'm looking at, we were just talking with Tom Metcalf about this idea of DWS, a new CEO stepping into the fore after the other one has resigned. That's Asoka Verman, of course, after a raid of DWS on accusations of greenwashing. Now, certainly one to watch during the session, but I am skeptical that this one will move a lot. DWS, this news of the raid, those concerns there were in the market yesterday. DWS sold off, so how much further does it really have to go?
It's been growing for a while, hasn't
Exactly.
it? And you told me you're also looking at GSK. What's the story there?
This one I find really interesting because they're finally spinning off their consumer health unit. They said that they're going to do this in an announcement today, July 18th. Now, this is a unit that, if you'll recall, activist pressure had Unilever originally bidding for it, and this, kicked off this huge brouhaha over Unilever, people saying it's too big. Anyway, after not finding a buyer for it after that rejection, JSK finally going to list it, might derive some wealth, a little bit of rally from GSK today.
And finally, HSBC, some more kind of positive mood music around China again here in this story. What's the implication for the stock?
Exactly. Well, HSBC investing $450 million into China, hoping to build an even larger presence there. It is interesting to see HSBC double down on this idea on China. This is an interview with a local agency there as well, just recommitting to China. So those are some of the stocks I'm watching, but perhaps just taking a moment and pausing about China in general. I mean, this is one story among many of this hopes. Okay, Shanghai finally opening up from some lockdown. You had Caixin data, wasn't as bad as expected, but I mean, there's still just so much unknown when it comes to China at this point.
I think that is exactly what the situation is at the moment. The mood music is turning much more positive, but with a lot of uncertainty. So everyone I'm finding is looking for the opportunity to get involved, the opportunity to buy, but very, very nervously. There's no conviction out there.
Yeah, certainly. Well, we're just speaking to William Davies of Columbia Threadneedle earlier, who is looking at opportunities in China among bonds as well. Certainly bonds, a lot of volatility too. Well, that's it for us at Bloomberg Markets. The open is up next as we look to futures pointing positive. That's after a decline yesterday. Of course, the first day of June tends to be the worst month historically for European equities. Will that pattern continue? This is Bloomberg.
David? I got this. My son Dave Jr. is busy, but I watch a lot of financial news on Sling TV. Don't store all your crypto under your mattress.
With Sling, be confident you're getting the TV you love for a price you'll love. Sling. Try us today.
We're the realists.
We're the advocates.
We're the grinders.
We're the wonks you've always hoped were out there.
We've taken everything we've learned from our company and we've put it into philanthropies, along with almost all of our profits. Which means that with our partners,
we're the builders of stronger communities.
We're the naysayers to anyone who says this planet can't be saved.
And if you're the first in and the last out,
we'll be right there with you.
We're Bloomberg. This is the feeling of certainty. The feeling that comes from knowing you're inspiring your customers, uniting your team, recognizing achievements, and expressing heartfelt thank yous with promotional products people use and love from the experts at 4imprint, your partners in creating special moments and memories by making people smile. Enjoy that feeling of certainty with promotional products at 4imprint.com. 4imprint, for certain.
Companies now, they're getting hundreds, maybe even thousands of applications. So software has come in to automate the process.
You want to write your resume for robots, not for humans. The only job your resume has is to be comprehensible to the software that is reading it, because that software or robot is going to decide whether or not a human ever gets their eyes on it.
These things are programmed by a certain segment of the population that might not be totally inclusive or not be fully aware.
Concerns about how this technology could exacerbate discrimination. For the FTC, I think foremost, the FTC needs to be making sure that we're fully understanding this technology.
We don't trust companies to self-regulate when it comes to pollution. We don't trust them to self-regulate when it comes to workplace comp. Why on earth would we trust them to self-regulate AI?
Life doesn't always give you time to change the outcome. Prediabetes does. 1 in 3 adults has prediabetes, but with early diagnosis, prediabetes can be reversed. And you can change the outcome. Take the 1-minute prediabetes risk test today. Go to doihaveprediabetes.org.
Strong enough to stay, we will never.
Welcome to the European Market Open, everyone. A minute to go until the start of cash equity trading. I'm Francine Lacqua here in London. Tom McKenzie's actually off today. Now, here are your top stories. Deflecting blame. President Biden backs the Fed's effort to tackle price growth, putting the onus on Jay Powell. Janet Yellen says she was wrong on inflation. Eye on supply. Oil edges higher amid a report that OPEC Plus could exclude Russia from its production targets. Plus, factories falter. China's manufacturing PMI remains in contraction for the month of May. Activity falls at a slower pace than April. Now, first thing is first, let's check on the markets. And this is what the futures look like across the board. A lot of focus, of course, on inflation. Once again, a little bit like yesterday, the story is one of fluctuation. So stocks in Asia, a little bit mixed. If you look at bond yields extending their advance, again, it's all about the debate about the scale of tightening and what that means for a lot of these stocks. Euro stocks futures elevated 0.5% higher, much like the FTSE futures and the DAX futures. So as these markets are opening up, we also look at some, not only of the sovereign bonds, and I'm looking at UK, for example, and the Swissy 2-year yield, but look at commodities. Now, we did have a good conversation, strong conversation yesterday saying, if you're an economist, you talk about it in terms of inflation and data, but this is also a cost of living crisis that's just getting worse. So look for the Brent crude and what that means, of course, for gasoline prices. If you look at equity indices in Europe opening up, France, for example, the CAC 40 gaining some 0.6%. So let's get straight to your board as well. Extremely interesting what's been happening in terms of the 10-year yield. Treasuries extending actually decline, pushing the 10-year yield closer to 2.9%. You can see currently at 2.8731. Again, this is as traders are raising bets now that the Federal Reserve interest rate hikes could be a little bit more aggressive than thought, and then Eurozone consumer prices jumping to a record in May. And that, again, also opens the door for more forceful action from monetary policy. S&P futures gaining 0.3%. The dollar, we look at that rally, and then Brent crude 117. Now let's get straight to the Bloomberg MLive managing editor. He is the one and only Mark Cudmore. Mark, you're looking at oil.
Francine, good morning. Yes, I am looking at oil. Here's a chart of the September Brent crude contract over the past 6 months, and you can see it's an incredibly bullish story out there. It's risen from about $65 a barrel up to about $115 a barrel. However, I'm going to argue that this is the price action of the last 6 months. The last 6 months was the bullish story. And if we're going to start looking forward, I think there's really potential for downside in this price here. So really what's been driving this is the supply story, a really well-known supply story. Russia has invaded Ukraine. It's been a massive disruption, but I think we've been really, really focused on that. And I think there's a world where we can't really get much more negative about the supply story. And if we do get any positive surprise, i.e. some of the speculation on OPEC Plus this week, then there'll be really material downside. On the other side of the equation is, of course, demand. I think on demand, we've been too focused on supply, and we haven't yet really factored in the fact that China's growth is slowing. Even if they come out of, they don't have to go into full lockdowns, or the lockdowns aren't as bad as feared a couple of weeks ago, the situation in China is still much slower growth than even a few months ago. We haven't yet brought that fully into the projections for commodities demand. It's not just China, though. Financial conditions are tightening around the world. We're seeing slower growth. Repeatedly, growth forecasts are being downgraded for the US, UK, Europe. All those countries, I think there's a slightly more negative demand picture that's priced. So overall, what I'm arguing is the negative supply story, fully priced. There's more likely to be a surprise bringing prices lower. However, the negative demand story is not yet priced, and I think that's why prices will turn lower from here. I think oil might have just topped out.
Really interesting. Thank you so much. Of course, our MLive managing editor, Mark Cudmore. I would also urge everyone to go and read our Javier Blas. He's a great opinion writer. He knows the oil markets also inside out. And he says, look, an oil crisis hitting an economy like a big wave breaking onto the beach, it means an immediate impact. And then we need to look also at the second and third round effects. Now, let's get into some of the key market drivers with our MLive editor, Noor Al-Ali, and Grace Peters, head of EMEA investment strategy at JP Morgan Private Bank. So thank you both for joining us. Noor, a lot going on. OPEC Plus, what happens with Russia?
Well, it's a big question, right? I mean, if Russia is no longer part of that agreement, that means there's potentially more oil into the market that's flowing into Asia, because Russia is working on getting those Asian buyers more supplied and better equipped with, improvements on their pipelines and the deals, and now at a discount. So this threatens the bullish story, as we've seen Mark talk about just now.
How do you look at, Grace, actually the price of oil and what this means for feeds into inflation expectations?
Yeah, absolutely. I mean, many of the factors that Mark went through, we would subscribe to that view. Our underlying assumption for oil this year is that it's between $100 and $110 per barrel. And therefore, obviously, we are seeing evidence of these higher oil prices feed into the inflation picture, particularly in Europe. In the US, we do think the inflation picture is different. Whilst we think European inflation has not yet topped out, we're probably going to still see another couple of months of higher inflation prints. In the US, the reverse is true. We think you are seeing a peak in inflation. We're going to see that tail over through the third quarter and build a bit more confidence around that through the fourth quarter. And that obviously has very big implications when it comes to, other macro drivers and indeed asset allocation as well.
Grace, how do you play, this is our question of the day, I know we have a great live survey on the blog. How do you play QT, and actually what parts of the markets will change as we get into quantitative tightening?
Yeah, so the way that we're thinking about this is obviously the end of easy money, and this is reflected broadly in higher yields and more sustained higher yields. The other side of that, and Mark spoke to this a little bit, is tightening financial conditions. We think financial conditions are already very tight because of the way the market is priced, not just QT, but also higher rate expectations. And we think growth is going to slow quite materially. So our US GDP forecasts, we've got 1.4% for 2023. That's below consensus pricing. We think you're going to see those growth downgrades. So how do you play it? Well, we've been rotating more into fixed income. As we start to think about bond yields peaking out as growth slows, you want that protection value in fixed income. And so we've been closing underweights to duration and finding value in parts of the market like US investment grade.
And you're looking at risk assets as well on the back of that.
Yeah, absolutely. I mean, and another thing is the TLT ETF, which is basically the 20-year plus treasury, has actually been posting gains because it does show you that the market is indeed, as Grace said, looking for these investment opportunities. And if you are of the opinion that perhaps yields haven't topped out, or yields have come down because you're thinking, okay, growth is going to slow, that means maybe we're not going to get as hawkish of central banks, particularly on the Fed, for a longer period. That means the opportunities in yields. So TINA is no longer in play anymore, right?
Right. What do you do with China?
Yeah, so China, I think, is in a bit of a tussle at the moment. Short term, we've had actually some very positive data out of the region. And I think it's a huge milestone that Shanghai is reopening today. But we can't think that that's just the end of it. Obviously, the zero COVID policy is resulting in really tough decisions when it comes to sticking with zero COVID for the Chinese policymakers versus the obvious downside risk to growth. And growth, we think, is going to be likely below 4% this year in the region, which is obviously some way short of the government's target of 5.5% GDP growth. But of course, you can't stimulate an economy that's in lockdown. So we still need to work through, not just Shanghai is reopening, but obviously COVID infiltrating throughout. So it is a region that we've been advocating for. We're holding our positions in the region. We do think that there's value there, but it's probably not value that will be very quickly crystallized, because you do need to get through ultimately and have COVID spread in the region.
Yeah, and then I guess the other region, I mean, what does the ECB do? Because of the proximity to Russia, its job is so much harder than I guess anywhere else in the world.
Yeah, absolutely. I think, it's really difficult right now. Is the ECB behind the curve? I think that's the big question. If they don't raise rates by July, not by 25 basis points, but even 50, if we don't see that very severe hawkish tilt, I think we're at a pace where, as Grace said, inflation will remain higher in Europe. It will lag, other developed markets, and it will also come at a point where growth will stall. So stagflation definitely in play for Europe if we don't see more hawkishness out of the ECB.
Yeah, and do we see any parts of Europe that are dislocated because of this, Grace?
Yeah, I think you could feed this back to the oil story, that actually when we think about European assets overall, and specifically European equities as that growth-sensitive part of the portfolio, then I think the arguments are that the risks lie to the downside, and we've been using Europe as a funding source within the equity book. But I think that you can really lean into some parts of Europe. Europe has actually outperformed the US because of its composition, because of its pro-cyclical and its commodity exposure that it has as well. So, that only protects to an extent, but I think you can lean into those bits. So food security, energy security, industrials to some extent, because they feed into to the capex needs. But overall, I think in a later phase of the economic cycle, as growth slows, we're looking for more exposure to the US.
Okay, wonderful. We'll talk a lot more about that exposure to the US. Bloomberg's Noor Al-Ali, thank you so much, and stay with us. Grace Peters, head of EMEA investment strategy at JP Morgan Private Bank. We'll have plenty more, of course, on the markets. For the moment, look at stocks. They're elevated, gaining some 0.4% across the board in Europe. This is Bloomberg.
You're someone who struggles with mobility, even a short walk won't seem like a short walk. But the sturdy and comfortable Hurricane provides the balance and support you need. It helps you walk on any surface and truly stands alone. Get the #1 selling cane in America with our worry-free 100% money-back guarantee, plus free shipping. Check out the new Hurry Cycle too. Lightweight and low impact, you can easily move it without bending. Find both at hurricane.com.
I'm Jeff from nuts.com. When my grandfather started this business in 1929, he relied on 4 important values: freshness, quality, variety, and service. I'm proud to carry on his legacy, but from a bigger space. We still freshly roast, season, and dip delicious nuts here in New Jersey and deliver them with the freshest dried fruits, snacks, and sweets to families that love our products all around the country, including mine. We think you'll love nuts.com too, so check us out and enjoy free shipping on your first order.
Your personal information gets exposed so often, it might as well be hanging in a museum. Everyday activities like online shopping, banking, and even data breaches may expose your information and make it dangerously easy to have your identity stolen. No wonder there's a new victim every 3 seconds.
Someone stole my information and tried to buy a car in my name. Felt really devastating because I had no control.
But protecting your identity can be easy with LifeLock. LifeLock monitors threats to your identity, and if an issue is detected, a dedicated U.S.-based restoration specialist will work to fix it.
If something happens, you have somebody fighting for you.
All backed by LifeLock's $1 million protection package, including reimbursement for stolen funds.
Everybody needs to have LifeLock.
Identity theft protection starts here. Call the number on your screen or visit lifelock.com/get25 and use promo code GET25 to save 25% on your first year of identity theft protection. Enroll now.
Healthcare professionals agree that sleep impacts everything you do. Chic's performance sheets are engineered to keep you cool, dry, and comfortable. Chic's are the world's most breathable, moisture-wicking, ridiculously soft sheets with superior stretch, even tested and proven on adjustable beds. Upgrade to Chic's now.
Go to trychic's.com to get 25% off, and we'll ship them for free.
Plus will include 2 additional pillowcases at no cost. That's over $100 in savings. Go to trysheets.com now.
Welcome back to the Open, everyone. We are 12 minutes into the European trading day, and you can see we're holding on to gains for now. Yesterday, we're holding on to gains, and then we had a reversal a couple of hours into the trading session, but European stocks are getting 0.3%. If you look at the DAX, it's also 0.6% higher. Now, overnight, Asian stocks actually did fluctuate, and again, there's one story that everyone wants to know about, which is basically what is the scale of tightening given the elevated inflation? How do central banks react to that? So we'll have plenty more on that. But first, let's get straight to the Bloomberg Business Flash. Here's Laura Wright. Hi, Laura.
Hi, Francine. DWS Group says CEO Asoka Verman has resigned and will be replaced by the head of Deutsche Bank's corporate bank, Stefan Hoops. Verman's resignation comes just hours after Frankfurt police raided the headquarters of Deutsche Bank and DWS, which is the lender's asset management unit. Prosecutors say the search was related to allegations that DWS was inflating its ESG credentials. DWS says it is cooperating fully with the authorities. Fidelity Investments cut valuations for several closely held technology companies, including social media platform Reddit and payment software provider Stripe. Fidelity funds marked down stakes in Reddit by more than a third in April from the preceding month, and Stripe by 13%, according to filings and data compiled by Bloomberg. Fidelity also cut valuations for TikTok owner ByteDance and for Instacart. Singapore Airlines says it's committing to a strategy of working with international partners and operating overseas hubs after COVID exposed the financial dangers of not having a domestic aviation market. CEO Goh Choon Pong told us exclusively that the airline is open to opportunities and will evaluate potential synergies.
From day one, Singapore Airlines do not have a domestic market, and we compete internationally with the best out there throughout these 75 years. What happened is that we became extremely good at international competition in terms of our product leadership, service excellence, and our network connectivity.
Bloomberg has learned that HSBC is offering its UK staff the chance to lease electric vehicles using their pre-tax paychecks. Sources say all of its 35,000 employees in the country are eligible for the perk. They can choose between a 2- and 4-year lease and may buy the car from HSBC at the end of the contract. That's the Bloomberg Business Flash. Francine.
Thank you so much, Laura Wright in London. Now, still with us, Grace Peters, head of the MEA Investment Strategy at JP Morgan Private Bank. Grace, thank you so much for sticking around. We were going around the world in like 6 minutes last time, and it also goes back to inflation, the unknown of the war in Ukraine, the cost of living. You quite like U.S. stocks. Which ones?
Yes.
What part of the market?
So we like the US because ultimately we think that there is more visibility over earnings growth, and as growth slows around the world, earnings growth is going to slow. And actually we think, even though we like the US market, we think that consensus forecasts for 2023 earnings growth are a bit high. So we can expect downgrades in the market, but our visibility, we think, is pretty solid. And of course, you've still seen a big drawdown when it comes to equity valuation. So all in all, we think you can get a mid-single-digit return out of US equities, which feels appealing to us in the overall context. As to the bits of the market that we like, we're looking for a few things. So firstly, we want defensive exposure, reflective of being later in the cycle. So healthcare is a sector that we've been advocating for. But we also want exposures that really feed into the idiosyncratic nature of this cycle. And we look to energy for some of that, utilities when we think about decarbonisation, industrials when we think about automation, when we think about a lot of the supply chains that we think will ultimately get rejigged as a result of the pandemic, but also the war, as you mentioned, Francine, and technology. You know, technology is
about technology. I don't really know what to do with the technology at this point.
Yes. So the bits that we want to focus on within technology are enterprise-focused parts. I think what we've learned about the consumer, and it's no surprise, it's inflation, it's the cost of living squeeze, and it's the pull forward that we saw during the pandemic. The consumer is changing its habits. It's still spending overall, but it's switching from goods to services. That will impact parts of the technology sector as well. But businesses, we think that businesses, when they think about, you know, what are their spending plans over the next 3, 5 years, we still think that they're going to be pretty robust. And actually, if I may just say that the higher inflation, the higher wages coming through, all of that calls for the need for greater productivity, whereas obviously technology can help.
But Grace, within all of this, is the U.S. consumer safe? Because we don't exactly know. And I thought it was quite telling hearing Janet Yellen saying, look, I got it wrong on inflation. And so the ramification of that is unclear at this point, June 2022.
Yeah.
Also, I can't believe we're in June.
I know. Look, safe is a strong word. I think that the US consumer has got some ballasts, which so far, I mean, thank goodness they've got those ballasts. You know, we saw through the end of last year $2.7 trillion of accumulated wealth on US household balance sheets. We're not growing that anymore. Quite the opposite. We're spending that down. About $40 billion has been spent down so far this year. So that's providing the ballast, and we think that will continue to provide the ballast. But of course, it can only last for so long, given all the pressures that the consumer's feeling. And so really the idea that inflation is peaking and will slowly fall is absolutely critical to the thesis that we can avoid a recession. Yes, growth is lower below trend, but it doesn't ultimately get us to the recessionary scenario.
So, Grace, what do you absolutely have to get right? I mean, I know you have to get right your calls and things, but is it, the dollar dynamics and rally that will also ultimately decide what you do with certain parts of the emerging market?
I think the first thing to get right is absolutely inflation. And so when we're thinking about what are the components of that, we need to see supply continue to come back to the labour market. We've seen some of that supply come back over the past 6 months, and that's directly correlated more recently with some of the wage inflation pressures that we've seen cooling in the US. That's a really healthy dynamic, and we still think the labour participation rate can rise by another 0.5%. So that gives you the cooling in the labour market, which is so important for those medium-term inflation dynamics. You don't want inflation to get entrenched. That's a key thing for us to get right. And from there follows on bond yields. For this
but
cycle,
that's all
and
to do
thus
with
the asset
inflation.
allocation.
What do you do with the UK?
Yes. So the UK, I think, is in a particularly tight spot at the moment. It's obviously further into its hiking cycle. It's got structural issues around Brexit as well. There are parts of the UK that we like. The commodity exposure, when you're talking about the FTSE 100, has meant that this is a market that's actually seen some of the most earnings upgrades year to date and has helped support the index. But for the UK economy at large, and maybe the FTSE 250 and some of those smaller companies, we've been avoiding that because we think the growth slowdown and the risk of recession is probably higher in the UK than, say, on continental Europe.
Grace, thank you so much for joining us. Grace Peters, they're head of EMEA investment strategy at JP Morgan Private Bank. Now, coming up, the chief executive of DWS Group resigns just hours after police raid on the asset management unit of Deutsche Bank. More on that story next, and this is Bloomberg.
If you think eating heart-healthy food to support your blood pressure has to take a lot of time and hassle, then you need to try Super Beets Heart Chews, the first and only heart chew with unique polyphenols that make supporting your healthy blood pressure convenient and delicious. Super Beets polyphenols are nature's way of helping reduce oxidative stress and supporting circulation, so you feel more energized.
It gets me going. It gets my circulation flowing, and I have that energy all through the day. It's just fantastic.
I can stick them in my bag and keep them in my car. I love that I'm taking something that's healthy for me, and it's maintaining healthy blood pressure.
What makes Super Beets polyphenols so different from other antioxidants? In a leading clinical study, they were shown nearly 2 times as effective at promoting normal blood pressure as a healthy lifestyle alone.
In my 31 years of helping people maintain healthy blood pressure, I've never seen a polyphenol compound this effective. Super Beets antioxidants help support healthy blood pressure and help your body produce more energy.
Now I feel like I have this wonderful reserve of energy. My blood pressure is even more healthy. I'm loving it.
Now you can try our top-selling Super Beets Heart Chews risk-free. Call to find out how you can receive an extra 30-day supply of Heart Chews free with your first order. And for a limited time, we'll also send you a free 30-day supply of our brand new Super Beets Memory and Focus Chews. The only chew for brain health support to contain unique polyphenol compounds, clinically studied to promote healthy blood flow to the brain, while also supporting memory and focus so you feel more alert. This offer is not in stores, so call today. We'll even include free shipping, free returns, plus a 100% money-back guarantee. That's over $30 in total free gifts. Take your cardio and neuronutrition to an entirely new level. Try Super Beets Chews today. Love your results or your money back. Call 1-800-577-2994 or visit trychoose.com today. That's 1-800-577-2994.
Junior achievement is where dreams take flight. We are helping students connect what they learn in school to future work and career success. We are teaching them how to manage money to achieve financial security as adults. And we are showing them that starting a business also means changing lives and communities. However, we can't do it alone. Find out how you can help.
Welcome back to the Open, everyone. We are 22 minutes into the European trading day, and for the moment, we're seeing quite a lot of support for the European Stock 600, gaining some 0.2%, the DAX, the CAC, and also the FTSE gaining between 0.4% and 0.5%. Now, the chief executive of DWS Group, Asoka Verman, has resigned and will be replaced by Stefan Hoops. The announcement came just hours after a police raid on the asset management unit of Deutsche Bank over accusations of greenwashing. For more on all of this, we're joined by Nick Comfort, our European finance reporter in Frankfurt, who also helped broke, of course, this story yesterday. So, Nick, how bad is this for DWS and Deutsche Bank legally, but also reputationally?
I think first and foremost, it's a reputational issue for now. Clearly, we weren't expecting this to happen so quickly. I mean, one could then assume that this isn't a case of Verman jumping before he's going to be pushed. But clearly, this must go pretty deep down at Deutsche Bank. I mean, it must be sending tremors through the company. And now, obviously, it's a very public show of lack of confidence in Deutsche Bank and DWS rather. And so investors will be wondering, okay, I mean, this is, how green are my investments? And it's something which, more importantly, the retail investors will see. And let's not forget that assets under management held up pretty well at DWS over the last couple of quarters. But this kind of publicity definitely makes headlines and shows then the retail investors that, well, maybe they might want to reconsider.
So, Nick, what could be the impact of this more broadly in terms of greenwashing as an issue within the investment world?
I think it's just going to be even more on people's agendas. I mean, greenwashing, ESG in general has been kind of a squishy topic. I mean, let's face it, it's kind of hard to see from the outside whether something is really green or not. But, I mean, there's nothing like the resignation of a CEO to really catch the attention of fund managers worldwide to realize this kind of stuff does have real-world consequences. I mean, even if Deutsche Bank, obviously, and DWS rejects the allegations that have been made by a former employee of theirs, but it shows that this kind of thing, once it builds momentum, can cost people their jobs. And so even if it might be hard to fine Deutsche Bank or to fine DWS for a financial penalty, it has real-world consequences for the people who are leading these institutions.
So, Nick, what can you tell us actually about some of the conversations probably going, on behind closed doors at Deutsche Bank and DWS today? What are some of the questions that they need to ask themselves going forward?
So, I mean, we knew that already last year the leadership at Deutsche Bank were upset about the flow of negative headlines about DWS. It was a major distraction, and even if, as I said, the asset management held up well, this was not the kind of thing they wanted to see for their asset management arm. They wanted to be a leader on ESG, and they did not want to be cast in this light. I think that's going to be the next question for Stefan Hoops, who's taking over at DWS. How can he restore confidence in their ability to be a sustainable investment manager? Now, also beyond that, there are still probes running by the SEC and by BaFin, the German regulator. So it's going to be a question of, well, how did DWS deal with also internally the allegations made by former chief sustainability officer? Did they do a good enough job?
Okay, the million-dollar question. Nick, thank you so much for all of your reporting and, of course, for coming on TV to talk about it. Nick Comfort there joining us, our banks reporter. In the meantime, this is what U.S. futures are telling us. We did have a bit of fluctuation in Asia. Stocks fluctuating were certainly mixed because bond yields are also extending their advance. And it's all about the debate about the scale of tightening of monetary policy to fight inflation. Treasuries, in fact, extending this decline, the 10-year yield close to 2.9%. You can see S&P futures, Dow Jones futures, and even NASDAQ futures gaining around 0.2%. Coming up, as the war in Ukraine approaches its 100th day, Russia could see a flood of cash averaging $800 million a day this year just from oil and gas. That's our big take today, and this is Bloomberg.
Life doesn't always give you time to change the outcome. Prediabetes does. 1 in 3 adults has prediabetes, but with early diagnosis, prediabetes can be reversed. And you can change the outcome. Take the 1-minute prediabetes risk test today. Go to doihaveprediabetes.org.
Hi, this is Lisa from 4imprint. Yes, I like 50 welcome wows, 300 customer, I love it, and 200 team member, oh yes, certainly. You know we got some brand new woohoos.
Dial up the wow factor with promotional products from 4imprint. We specialize in awesome items that are certain to awe and guaranteed to deliver some ooh yes. From apparel, backpacks, drinkware to high-tech items.
Wow.
I love it. Woohoo!
Go to 4imprint.com and find some wow now. 4imprint, for certain.
Imagine simply climbing a cable into space. The concept is known as the space elevator. Not only could it significantly change how we leave planet Earth, but it could also completely transform humanity's relationship with space. And there are scientists who think we could have already built it.
We have the material, we have the technology, we have the lasers, we have the climbers, we have all of it. If a private entity wants to build it, or a government, they can build it. It'll change society. We have no clue how colonizing into space, how really spreading out into space will really change our society over the next 50 to 200 years. It'll be completely different.
Markets are preparing to close, but the day is not over yet.
Stock that is now up about 45%.
A lot of volatility right now.
You need the power of the Bloomberg terminal to get you market-moving data before anyone else.
These numbers are much higher than expected.
Upgraded today to overweight.
You need top analysts to bring you exclusive global insight into cross-asset markets.
The muni bond market.
China is a really big focus.
Bitcoin ain't playing along today.
It's going to be short term.
Bloomberg Markets, The Close. Weekdays on Bloomberg. Front Row, exclusive interviews with the most influential figures in finance. First available on the Bloomberg terminal, then on Bloomberg Television and Bloomberg.com. Front Row, the best seats in the house for business's greatest minds.
Welcome back to the Open, everyone. 30 minutes into the European trading day, and here are your top stories. Deflecting blame. President Biden backs the Fed's efforts to tackle price growth, putting the onus on Jay Powell. Janet Yellen says she was wrong on inflation. Eye on supply. Oil edges higher amid a report that OPEC Plus could exclude Russia from its production targets. Plus, factories falter. China's manufacturing PMI remains in contraction in May. Activity falls at a slower pace than in April. Well, good morning, everyone. This is what the markets are looking at. It's, of course, the pace of change when monetary policy is in play to deal with inflation. That's the big question that day in and day out, markets try and get right and position themselves on the back of it. Now, European stock 600 gaining some 0.2%. The DAX gaining 0.5%. Quite a lot of the stories also on some of the earnings going forward, with a couple of downgrades, not by sector, but really by some of the companies that maybe have more exposure to China, that have more exposure on a supply chain where their their costs go up and they can't necessarily pass it on to some of their customers. This is a picture for the sectors on the move. Now, this is usually quite telling because it doesn't always track what we also saw overnight in Asia. Now, banks, the biggest gainers, 0.6% higher. Auto parts, some of the material and construction insurance. And then you can see on the way down, telecom, basic resources, and technology. I know we'll spend a bit of time understanding the basic resources, the dynamics at play. Our Mark Cudmore had a great chart looking at not a concern about supply, but maybe some of the demand longer term, especially if that demand from China gets put under pressure. Now, Russia has long acted as a global commodity supermarket. Today's big take says that even with some countries now halting energy purchases, Russia oil and gas revenue will be about $285 billion this year. Meanwhile, the rally in oil prices fizzled after a report that OPEC members are actually exploring the idea of exempting Russia from its production deal. Grain futures also are plummeting as prospects for food exports from Ukraine improve. Well, joining us now for more on today's Big Take is our oil strategist, Julian Lee. Julian, it's a beautiful piece, and I urge everyone to go and look at it on the website, but also push out on social media. We have this Big Take story about how Russia continues to make billions off commodities. Is that something that sanctions could change, or is it just impossible for them to have that much of an impact?
I think sanctions will certainly have an impact. They're not going to cut it to zero in any sense. I don't think we should write sanctions off as a failure simply because they don't cut Russia's export earnings to zero. They will have an impact. Europe will likely back out more than 1 million barrels a day of Russian exports. Some of that will get rerouted to places like India, but that is more costly for Russia. It's more costly to ship it there. The journeys are much longer. They'll need many more ships to do it. And there are real questions over how much more Russian oil India and China are actually going to be willing to take, because that's going to displace supplies from some of their traditional suppliers like Saudi Arabia and the other Persian Gulf countries. And they have to be wary about the long-term relationships that they have built up with those countries. So I do think sanctions will have an impact, but they won't cut Russia's earnings to zero.
Yeah, and you were talking, of course, about China and India. So exactly how do China and India play in the picture of funding Putin's war? I know you can put oil on cargo ships, but actually for LNG and gas, it's much more difficult if you don't have those pipelines.
Yeah, I mean, certainly for gas, it would be much more difficult. LNG, again, you're putting the product onto tankers and shipping it around the world. But the journey time from the ports in Western Russia, even to India, are at least 4 times as long as the traditional journeys to European countries. That means that to ship the same amount of oil, you need 4 times as many ships to do it. And it's just not clear, with the sanctions that are also being placed on shipping, on insurance and other services to shipping, whether Russia is going to be able to find enough ships to divert all of the crude that it's currently selling to Europe, to places like India and China. The other thing to bear in mind, of course, is that it is already having to offer big discounts to ship that oil. For the last round, they calculate their export duty based on a price from a month sort of prior to that. They're already trading at a discount of about $35 a barrel to Brent. So Russia isn't getting anything like the sort of $116, $120 a barrel that we're seeing as a Brent figure. They're still getting a price of under 100 for their crude.
Yeah. Julian, if you look at what moves we're expecting from OPEC Plus, I mean, what does exempting Russia from production deals mean concretely?
I personally think that it might actually mean very little. Russia's production isn't constrained at the moment by its OPEC Plus quota. It's constrained by its ability to export oil and the impact that sanctions on things like oil field technology are starting to have on the industry. So I don't think it does anything for Russian production. The question then is, does Russia's share of the OPEC plus target get divided among the rest of the group. Saudi Arabia has been very much against taking the shares of even the very small countries that couldn't meet their targets. So I hesitate to think that it will actually divvy up Russia's share among everybody else. And even if it does, there are real questions about who within OPEC Plus can actually boost output by any significant amount. Saudi Arabia is already producing close to the maximum sustainable levels that it's done in the past.
Julian, thank you, as always, for making us smarter on the subject. Our oil strategist for Bloomberg Economics, Julian Lee. Now, coming up, China's factory activity falls at a slower pace than expected as Beijing doubles down on its cost of COVID zero strategy. We'll look at that story next, and this is Bloomberg.
If you think eating heart-healthy food to support your blood pressure has to take a lot of time and hassle, then you need to try Super Beets Heart Chews, the first and only heart chew with unique polyphenols that make supporting your healthy blood pressure convenient and delicious. Super Beets polyphenols are nature's way of helping reduce oxidative stress and supporting circulation, so you feel more energized.
It gets me going. It gets my circulation flowing, and I have that energy all through the day. It's just fantastic.
I can stick them in my bag and keep them in my car. I love that I'm taking something that's healthy for me, and it's maintaining healthy blood pressure.
What makes Super Beets polyphenols so different from other antioxidants? In a leading clinical study, they were shown nearly 2 times as effective at promoting normal blood pressure as a healthy lifestyle alone.
In my 31 years of helping people maintain healthy blood pressure, I've never seen a polyphenol compound this effective. Super Beets antioxidants help support healthy blood pressure and help your body produce more energy.
Now I feel like I have this wonderful reserve of energy. My blood pressure is even more healthy. I'm loving it.
Now you can try our top-selling Super Beets Heart Chews risk-free. Call to find out how you can receive an extra 30-day supply of Heart Chews free with your first order. And for a limited time, we'll also send you a free 30-day supply of our brand new Super Beets Memory and Focus Chews. The only chew for brain health support to contain unique polyphenol compounds, clinically studied to promote healthy blood flow to the brain, while also supporting memory and focus so you feel more alert. This offer is not in stores, so call today. We'll even include free shipping, free returns, plus a 100% money-back guarantee. That's over $30 in total free gifts. Take your cardio and neuronutrition to an entirely new level. Try Super Beets Chews today. Love your results or your money back.
Call 1-800-577-2994 or visit trychoose.com today. That's 1-800-577-2994.
Sleep. Feel. The Chic's difference is real. From the light to the dark. Hold back. Fall in. Exhale. Woo! Hot damn. No ma'am. So chill all night. On a cloud like a feather. Smooth, soft, nothing better. Just right on the night. Visit trycheeks.com and get 25% off this Memorial Day with a 60-night guarantee.
Welcome back to the Open, everyone. We are 39 minutes into the European trading day, and you can see European stocks being supported 0.2% overall. The DAX powering ahead 0.6%. But if there's one thing that taught us in the last couple of days, markets lack conviction. They're trying to feel their way around what policymakers will do to deal with inflation. And again, they fluctuate, so we could see a reversal in the next couple of hours. Now on to China, and it's, the factory activity contracted in May from the previous month as both production and new orders fell, although the slowdown wasn't as fast as in April. Now, meanwhile, China is also doubling down on mass testing in a move that's dashing hopes for a shift away from its costly COVID-0 strategy. Well, joining us now is Bloomberg's Chief Asia Economics Correspondent, Enda Kern. Enda, great to speak to you as always. So what's the main takeaway from the data?
Well, good morning, Francine. Look, the Caixin PMI reading gives you a better sense of where the small and medium-sized
businesses are. And the takeaway from the data is that, sure, things are showing signs of bottoming, but it's still in contractionary territory, which speaks to the challenges these companies still face in terms of logistics, their operations, their transportation, and indeed in terms of getting new orders back up to where they need to be. The big hope with these readings on manufacturing is that China has now hit the bottom as Shanghai is reopening, like you mentioned. Not only is Shanghai gradually reopening, but we haven't seen any kind of mass-scale lockdown in any of the other key industrial hubs or port hubs around China in the weeks since either. So there's now a kind of a mounting view among economists that perhaps China has hit the bottom. We're going to start to see a recovery from here. But I think one thing to take away from this PMI data is it won't be a V-shaped recovery. It's probably going to be, it'll take some time before these factories really get up and running back to full speed again.
And we're also looking at COVID-0 as a long-term policy. So what could the impact of that actually be?
Well, again, even though Shanghai is pulling out of its big lockdown, our colleagues are reporting that actually China is now really reverting to mass testing, or appears to be reverting to mass testing right around the major cities. They've got testing booths, PCR testing booths popping up on every street corner. And the thinking is that this is actually an indication China's doubling down on COVID-0. It might be changing how it approaches it, but it's certainly sticking with it. Now, scientific experts say, this kind of frequent mass testing certainly breaks up transmission chains and does identify the disease early on. But you've got to ask, what's the practical impact of it in terms of consumer and workers' daily lives, how it impacts everything from schools to offices to factories. And of course, there's a financial cost to it as well. So I think people are saying that it does demonstrate just how serious China is about its COVID-0 strategy, and it hasn't yet shown any real signs that it is going to pivot from that. And these testing booths seem to indicate that the authorities are doubling down, sticking with it, and no sign of a change, at least as we all keep saying, until the other side of the party Congress later in the year.
And thank you so much for all of the insight and the current there in Hong Kong for us. Now, joining us is Julian McCormack. He's chair of the British Chamber of Commerce in China, country director for Rolls-Royce, and the BCC has just released their latest annual assessment of the business environment in China. So, Julian, thank you so much for joining us. So what's it like? What is the business assessment of what it's like doing business in China with the COVID-0 policy?
Well, if you'd asked me that question 6 months ago, where we just published our sentiment survey of 650 members of the British Chambers, then I would have given you perhaps a more optimistic answer than I can today. At the time, we saw confidence restoring, and people were entering this year, 2022, with more optimism than they had previously. But when we look at the recent surveys, and most recently the position paper that we published yesterday, what we see is that business confidence really has been dented, and that's something that we can really see in the data. When we looked at when we surveyed companies in April this year, then around about 73% of respondents were saying that they really were affected by the lockdowns and the COVID situation in China, and 50% were saying that they were either delaying or reducing investment. So the consequences of the ongoing strategy for managing COVID in China are really being felt among our members.
So, Julian, does it mean that actually they're willing to spend less in China, or are they powering through investments but with a side of caution?
So I think we need to be clearer on what type of companies and what types of industries. That some companies are able to take a longer term view. But what we're finding is it's particularly smaller and medium-sized enterprises. Those are the companies that really need to see measures to boost confidence in the next 12 months. And of course, at the moment, it's hard to see that. Of course, we're seeing the resumption of operations and business in Shanghai. That's great. Of course, we see Beijing now coming out of lockdowns. That's positive. But currently, under the current policies, it's hard to see how we will avoid further lockdowns and therefore a further period of uncertainty here.
So, Julian, give me a sense of, how this pans out in the next couple of, months and quarters. I know there has also been a push from a lot of foreign investors to have more clarity on legislation and regulation. Do they worry about that just as much as a COVID-0 policy, or is one taking the front lead in terms of on top of people's minds?
I mean, currently it is the dynamic zero COVID policy that is dominating everything that companies are thinking about. There are broader concerns within the economy, but actually broadly long-term optimism is there because the foundations for growth haven't changed. But what people are really concerned about is how you bridge the gap between where we are now and where we want to be, where we predict we'll be in the future. And it's particularly apparent in certain sectors. So if you look at education as an example, international schools in China, we're seeing around about, or any estimate between 40 and 60% of foreign teachers that are planning to leave this year who will be very difficult to replace. And so therefore we're seeing different sectors affected in very different ways and quite a lot of uncertainty without additional confidence in terms of the measures really that can be put in place to help rebuild that.
So do you see that actually, Julian, even being eroded further, the pool of talent of foreigners in China being depleted in the next couple of quarters?
Absolutely. So we see that foreign talent is coming down. And of course, this is actually contrary to what leaders are saying here in China. There is a big focus on having or encouraging the flow of information across borders, knowledge, and of course, skills and talent. And what we're seeing is that on one level, there is an objective to enhance the flow of people and information into and out of China. But of course, when we look at what's happening on the ground today, there are significant barriers, both in terms of restrictions in relation to COVID, the practicalities of actually coming into China with the permissions needed, and also uncertainty over the broader regulatory environment. And this is particularly relevant when it comes to things like the cyber and security, the data security laws that have been introduced, where there's a lot of uncertainty about further frictions or restrictions on the flow of data across borders into and out of China.
And Julian, I know you've been lobbying for this dynamic strategy for managing COVID-19, which is basically a more proportionate approach when there's clusters. Do you think the authorities will change that to be, I guess, more proportionate in dealing with COVID-19 going forward?
So the engagement as a chamber that we've had over the last few weeks gives us reason to be hopeful. So we've had a lot more engagement with government all the way up to premier level. And that means that it's very clear that the government is listening, is very attentive to what business is saying. So we're seeing now the economic concerns are starting to come to the fore. So that leaves us hopeful that we will see some significant changes. And of course, the dynamic COVID or dynamic zero COVID policy actually allows the government a lot of scope to adjust the measures, to adjust what happens here as the situation changes. And of course, what we're hopeful for is that the government will let us know what are the conditions that need to be in place in order for measures to be introduced that will give us more confidence for the coming months.
Julian, thank you so much for joining us. Julian McCormack there, chair of the British Chamber of Commerce in China and country director for Rolls-Royce. Now let's get straight to the Bloomberg First Word News with Laura Wright. Hi, Laura.
Hi, Francine. President Joe Biden says he'll give Ukraine advanced rocket systems and other U.S. weaponry to better hit targets in its war with Russia. The move, announced in a New York Times article, ramps up U.S. military support as the conflict drags into its fourth month. The package of weapons includes missiles that will allow Ukraine to strike locations as far as 80 kilometers away. The U.S. Supreme Court has blocked a Texas law that targeted social media platforms. Critics say the measure would require Twitter and Facebook to allow hate speech and extremism. The High Court put the law on hold while social media firms challenge it in a lower court. Texas Republicans say the law is needed to protect conservative voices from being silenced. UK food and drink exports to the European Union are down 17% in the first quarter compared to pre-pandemic levels. That's according to a report from the Food and Drink Federation. Brexit trade rules and supply chain problems continue to dent demand, although shipments to Canada and India helped drive exports to non-EU countries above pre-pandemic levels. It wasn't enough to offset lower EU demand. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg. Francine.
Laura, thanks so much. Laura Wright in London. Now, coming up, as inflation soars across much of the world, politicians grapple with growing public anger. We have more on the political fallout from rising prices. That's coming up next, and this is Bloomberg.
this one is perfect.
Not as perfect as this one.
That is not a mango, Lenny.
No, but this mango hint water tastes just like mango, and with no calories or sweetness.
How can water taste just like fruit?
How can our feet look just like our hands?
How can our feet look just like our hands? Oh boy, I'm freaking out here.
For a limited time, new customers get 40% off on our top flavors at drinkhint.com.
Larry!
Lenny! The hint was delicious.
That's 36 bottles for $36. Only $1 per bottle.
Relax, pal. The Nature Show guy's got a whole cooler full.
And if you order now, we'll ship it right to your door for free.
Please tell me you heard that voice.
Stuffy pants, disembodied British fella? Oh, yeah.
Hint. Water with a touch of true fruit flavor.
I have a number of money managers that advise me on investment strategies, portfolio construction, and asset classes. But sometimes I just want to do a trade by myself. So I went to the App Store and downloaded IBKR Global Trader. No conversations, no messages, no friction, all done in 20 seconds. They have 90 trading venues, 27 currencies, and even crypto. So give it a try. You're going to like the way it works.
I'm Sienna Miller, and I am a Global Ambassador for International Medical Corps. Our teams have been in Ukraine since 2014. Now we are expanding relief efforts inside and outside the country to provide medical and mental health services, protection for women and children, and clean water. The needs are immense. You can help. Please visit internationalmedicalcorps.org to find out how.
Welcome back to the Open, everyone. We are 53 minutes into the European trading day, and we're seeing a bit of a reversal across the board with a lot of these stocks fluctuating. Now, a rare meeting between Biden and Powell. The U.S. president says he respects the central bank's independence, but at the same time, he's been putting the onus on the Fed for taming inflation ahead of this year's midterm elections.
My plan is to address inflation. It starts with a simple proposition. Respect the Fed. Respect the Fed's independence.
Of course, all of this comes as inflation continues to loom large politically, not just in the U.S., but also in Europe and in many developing nations. Now, for more, we're joined by our Bloomberg senior reporter for international affairs. He's Mark Champion. Mark, great to have you on TV today. So inflation, 8% in US and some parts, in the U.S. and some parts in Europe. What does it mean politically for the leaders in charge?
Inflation is just visceral. So, there are lots of things in elections that can matter, but the cost of living is really reliably important. And you even, you saw that quite early on when you had the French election. And yes, President Macron won, but he was given a real run for his money, and there was some real doubt about whether that would happen just because Le Pen focused really hard on cost of living, inflation, and so on. And you're seeing the same in Biden's opinion poll ratings in the US. They're tanking. A lot of that is to do with the cost of living. You've had riots in Peru already, again about the cost of living. And there's more than 50 countries that get more than 30% of their grain from Russia and Ukraine. And a lot of those are very poor. They're seeing inflation rising even faster than 8%, in the developing world.
So Mark, this of course focuses and changes election results. Does it also topple governments, or because there's the underlying understanding that this is because of a war in Ukraine, citizens will accept it more than if it were because of government's fault?
Yeah, unfortunately, the The record doesn't really suggest that, people sort of, balance those things terribly well. Plus, you have to remember that there's, here in the UK or in the US, there's a pretty solid support for the idea that, Russia's in the wrong and needs to be constrained. That isn't true in actually most of the world in terms of population and so on. And, certainly if you're in Egypt, you don't particularly care about those issues. You really care about whether you can put food on the table.
And so, is there anything that politicians can do to try to, keep an eye on this?
It's likely to become fairly zero-sum in a lot of countries. You're either going to have to, press for these, energy sanctions and so on that are pushing up prices to be reduced, to press for a ceasefire, in Ukraine, which the Ukrainians don't want, in order to get grain shipments moving again. These are the kinds of things that are likely to change over the months to come.
Mark, thanks so much. Mark Champion there from Bloomberg. Now, stocks and U.S. equities actually edging higher, but we're seeing a bit of fluctuation. The biggest move is probably in bond yields extending their advance. It's a big debate. We continue. We stay on it. The scale of tightening of monetary policy to fight inflation. Well, that's it for the European Market Open. Surveillance Early Edition is up next, and this is Bloomberg.
If you're someone who struggles with mobility, even a short walk won't seem like a short walk. But the sturdy and comfortable Hurricane provides the balance and support you need. It helps you walk on any surface and truly stands alone. Get the #1 selling cane in America with our worry-free 100% money-back guarantee, plus free shipping. Just go to hurricane.com today. Also available at these fine retailers.
To start eating better? If only it were that easy. Fresh and Lean thinks it is. Meals with fresh organic ingredients delivered to your door, ready to heat and eat in under 3 minutes. So if you're looking to eat healthier, we got you. How easy is that? Fresh and Lean.
Imprint, this is Lisa. Hi, I'd like 50 welcome wows and 300 customer I love it.
Promotional products from 4imprint are certain to deliver ooh yes.
Wow.
I love it. Find some wow now at 4imprint.com. 4imprint, for certain.
Ginkgo Bioworks was founded in 2009 by several big brains from MIT. The founders wanted to develop ways to treat DNA more or less like software code. You find an organism with an interesting property, snip out the DNA behind that property, and then shove the DNA fragment into something else. The big promise behind synthetic biology is that we'll find a new means to harness nature and bend it to our will. We'll be able to manufacture things like chemicals and fuels and even physical objects in ultra-efficient ways.
Biology is ridiculously advanced, and we're just entering the era of being able to program it to do new things, and it's programmable because inside of it is digital code that we can, as humans, read and write.
Junior achievement is where dreams take flight. We are helping students connect what they learn in school to future work and career success. We are teaching them how to manage money to achieve financial security as adults. And we are showing them that starting a business also means changing lives and communities. However, we can't do it alone. Find out how you can help.
Life doesn't always give you time to change the outcome. Prediabetes does. 1 in 3 adults has prediabetes, but with early diagnosis, prediabetes can be reversed. And you can change the outcome. Take the 1-minute prediabetes risk test today. Go to doihaveprediabetes.org.
My plan is to address inflation. It starts with a simple proposition. respect the Fed, respect the Fed's independence.
It is extremely important to work on the possibility and to explore the possibility of import price caps also with international partners.
You have to look at where new production is coming and where it would be coming even if we didn't have $123 Brent. And I'd say it's more in the $70 range than it is in the $120 range.
This is Bloomberg Surveillance, Early Edition with Francine Lacqua.
Well, good morning, everyone, and welcome to Bloomberg Surveillance Early Edition on this Wednesday, the 1st of June. I'm Francine Lacqua here in London, and here's what's coming up on today's program. Deflecting blame while President Biden backs the Fed's efforts to tackle price growth, putting the onus on Jay Powell. Janet Yellen, meanwhile, says she was wrong on inflation. Eye on supply, oil edges higher amid a report that OPEC Plus could exclude Russia from its production targets. And Deutsche Bank replaces the CEO of its asset management arm after yesterday's police raid over suspected greenwashing. Stefan Hoops is DWS's new chief executive. Now, first thing is first, let's check on the markets. We actually started the day on a high. Now we're seeing quite a lot of fluctuation. It's a pattern that we also saw in Asian stocks. If you look at yields, probably one of the most interesting dynamics, extending their advance. And of course, the debate is about the scale of monetary policy to deal with inflation. It's a debate that we have day in, day out, and that moves everything. We were speaking to Grace Peters of JP Morgan Asset Management, and she says if there's one thing you need to get right in this market, and it's inflation, and that will give you, of course, the cue to buy or sell whatever you want. The dollar, of course, that's also linked to inflation. We have the Bloomberg US dollar. We could have also shown you euro dollar or anything else showing the dollar rally in the last couple of months. That's come off a touch, 1,228 from the Bloomberg US dollar index. Brent crude, again, this is not something that we need to talk about theoretically. This means gasoline prices are going up. This means a lot of the cost of living for a lot of people out there is really hurting them. This could also politically have a huge impact, of course, on some politicians in charge, and then the S&P futures gaining some 0.2%. This is a picture overall for Europe, but we're also just getting some manufacturing data. I think that came out a short while ago. The difference, if you're standing in Italy or in Germany or in the CAC 40 today, you can see gaining some 0.3%. The UK also, it is the platinum jubilee of the Queen, 70 years on the throne, so we'll celebrate. The bunting's out for tomorrow and Friday, but it will have an impact on economic growth. And you can see the UK, for the moment, the FTSE down 0.1%. Now, the rally in oil prices has fizzled. That's after a report that OPEC members are exploring the idea of exempting Russia from its production deal. At the same time, Joe Biden has sought to shift blame around price rises to the Fed. The U.S. president says he respects the central bank's independence.
My plan is to address inflation. It starts with a simple proposition. Respect the Fed. Respect the Fed's independence. They have a laser focus on addressing inflation, just like I am. And with a larger complement of board members now confirmed, I know we'll use those tools in monetary policy to address the rising prices for the American people.
Now, we're joined by Sylvia Merler, Head of Policy Research and ESG at Algebris, and Noor Al-Ali, our MLive editor. So thank you both for joining us. Noor, a lot going on with OPEC. I mean, I haven't been this excited about OPEC Plus meeting, but has it peaked?
I'm in the camp that is cautiously saying yes, because if you look at inflation expectations, so those are break-evens. If you look at the five-year, which is the Fed's favorite inflation gauge as well, you will see that they've actually come down off their highs and they've sort of stagnated now. Those, they don't typically move in line with oil, but they have been because energy has been a big supplier and mover of the hot inflation prints that we've seen. They've kind of diverged now. So the question is, are inflation expectations wrong or has oil peaked? I'm in the camp that says, well, maybe we've just peaked.
Okay, we've peaked. I'm interested to have Sylvia's thoughts on that in a second. But QT also begins today in the U.S. or begins in the U.S. today. What does that mean for riskier assets?
I think we've priced in that beginning of quantitative tightening. You have seen definitely, stocks come on the highs today. The futures are higher, but also I'm a believer in the mantra of sell in May and go away. I think, volumes are much lower now. If you look at the Stocks-600, it's, the average volume is about 20% lower than its 180-day average. So definitely much lower now. So
Sylvia, many questions, of course, about the markets, about how we should look at them, inflation. What are markets at this point you think getting wrong?
So I think basically what we have seen today, I think one detail that perhaps you have not mentioned yet was the data coming out of Germany on retail sales. I found that was quite important. So a very significant miss on the downside on retail sales in Germany, even considering the inflation rate that is very high in Germany. And I wonder whether that signals that at least in some quarters of the Union, in Europe at least, we are getting close to a scenario where inflation is sort of self-inducing a correction in the economy without the ECB having to force its hand too much.
Yeah, and the ECB, nor of course left, right, and center. How behind the curve are they?
Well, as we just heard, definitely some data out of the European Union shows that we are definitely struggling. France expects inflation to, go behind its peak in 2023. We are seeing elevated inflation prints. They will continue to be the case in Europe, and it will lag, the U.S. and the U.K. as well, because we haven't even started raising rates or quantitative tightening in the ECB.
All right, Nor, thank you so much. I know Nor has to run off to radio, so we'll continue the conversation with Sylvia. Sylvia, when you look at, we're hearing and getting some headlines from Mr. Holtzman on the ECB Governing Council, and he says the new inflation record backs the need for a 50 basis point hike. Is I guess, has the ECB now, boxed themselves in being so behind the curve, and what does it mean for fixed income across the board in Europe?
We have definitely held this view that the ECB was behind the curve on inflation, but honestly, that's something that's common across major central banks, as being common across major central banks. I think what is different so far still in Europe compared to, for example, the situation in the US is wages. So there isn't much that a central bank can do when it's faced with a supply shock, the kind of the shock that we're seeing now. The choice is between hiking immediately, so trying to rein in inflation fast, or sort of wait for inflation to induce a correction in the economy with obviously an impact, much bigger impact on purchasing power in the meantime. I think that the answer to that question depends on whether you think inflation is going to be sticky or not, and a lot of the answer to the second question depends on wages. And so far, I think that's the main difference between Europe and the US. In Europe, we haven't yet seen the kind of wage dynamics that we have seen in the US. So far, I think there's still room for, let's say, maneuver and the kind of ambiguity that we're seeing on the ECB side, but that may be closing fast.
Sylvia, what does it mean when you look at, of course, wage pressure? If we're going to see that kind of wage pressure in Europe, do you see it in Germany first, or does it come from elsewhere?
Yes, I would assume it would probably show up in Germany first because of the significantly higher inflation rates that we are observing in Germany. So that is the market, the labor market, that I would keep a close eye on.
All right, Sylvia, thanks so much. Sylvia Merler there from Algebris stays with us. Now we'll have plenty more, of course, on the markets. Also coming up, the CEO of DWS Group resigns just hours after police raid on the asset management unit of Deutsche Bank. So we'll have plenty more on that story next. And this is Bloomberg.
If you think eating heart-healthy food to support your blood pressure has to take a lot of time and hassle, then you need to try Super Beets Heart Chews, the first and only heart chew with unique polyphenols that make supporting your healthy blood pressure convenient and delicious. Super Beets polyphenols are nature's way of helping reduce oxidative stress and supporting circulation, so you feel more energized.
It gets me going. It gets my circulation flowing, and I have that energy all through the day. It's just fantastic.
I can stick them in my bag and keep them in my car. I love that I'm taking something that's healthy for me, and it's maintaining healthy blood pressure.
What makes Super Beets polyphenols so different from other antioxidants? In a leading clinical study, They were shown nearly 2 times as effective at promoting normal blood pressure as a healthy lifestyle alone.
In my 31 years of helping people maintain healthy blood pressure, I've never seen a polyphenol compound this effective. Super Beets antioxidants help support healthy blood pressure and help your body produce more energy.
Now I feel like I have this wonderful reserve of energy. My blood pressure is even more healthy. I'm loving it.
Now you can try our top-selling Super Beets Heart Chews risk-free. Call to find out how you can receive an extra 30-day supply of Heart Chews free with your first order. And for a limited time, we'll also send you a free 30-day supply of our brand new Super Beets Memory and Focus Chews. The only chew for brain health support to contain unique polyphenol compounds, clinically studied to promote healthy blood flow to the brain, while also supporting memory and focus so you feel more alert. This offer is not in stores, so call today. We'll even include free shipping, free returns, plus a 100% money-back guarantee. That's over $30 in total free gifts. Take your cardio and neuronutrition to an entirely new level. Try Super Beets Chews today. Love your results or your money back.
Call 1-800-577-2994 or visit trychoose.com today. That's 1-800-577-2994.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, the chief executive of DWS Group, Asoka Verman, has resigned and will be replaced by Stefan Hoops. The announcement came just hours after a police raid on the asset management unit of Deutsche Bank over accusations of greenwashing. Well, joining us now is Bloomberg's German banks reporter, Steven Ahrens. Steve, great to speak to you. So first of all, why did Verman resign so quickly?
Well, there have been a lot of negative news around him for a long time. As you may remember, the whistleblower Desiree Fixler came out with allegations of greenwashing in August last year, and ever since then, news stories have popped up, questions about his private use of email, WhatsApp, stuff that, always created a cloud over his head. And then you have that big raid over greenwashing. And I think it was the straw that broke the camel's back. Deutsche Bank decided they needed to draw a line under this, and he resigned.
So what do we know about the new guy in charge?
The new guy, Stefan Hoops, what's most important, I think, to know about him is he speaks very close to Christian Sewing, and Sewing, the Deutsche Bank CEO, trusts him a lot. He's been putting in at different places when he needed someone to fix a unit, and so he's sort of a fallback solution for difficult cases. And now Sewing has turned to him to go to DWS. He doesn't have any experience in asset management, really. He's a trader by training, and we'll see how he performs. But he does have the confidence, the trust of the CEO of Deutsche Bank.
Steve, so how should we look at this? First of all, reputationally, but also legally. What does it mean for DWS and Deutsche Bank, and what does it mean for greenwashing in financial services in general?
Well, it's important to of course, state that this is just allegations now. Nothing has been proven. It was a raid to find further evidence, but the presumption of innocence still applies until they've been proven guilty. But it's clearly a new legal cloud hanging over their head. Greenwashing is something new. It's unusual. But what the prosecutor said in their statement yesterday is that they believe they have found evidence that DWS said something to investors in their funds about ESG that didn't actually take place. So misleading investors, obviously, can be a crime. And if that turns out to have taken place, it would be a big blow for DWS and, by extension, for the parent company, Deutsche Bank.
Thank you so much, Steve. Bloomberg's Steve Ahrens covering banks for us in Germany. Now we're back with Sylvia Merrilayer, head of policy research and ESG, and Al Jabriz. Sylvia, you look at ESG, you take it very seriously. I know, look at a lot of the policy research. Is this now a crux point for financial services to really understand how they cannot mislead? Do we have the tools to try and not make a mistake on this?
I think, yes, this is a turning point. I think it was in the cards that a lot more scrutiny would be growing on ESG and, generally speaking, sustainable finance. This was in the cards because the regulatory environment in Europe has been moving very fast on this, even though with some regulatory pieces still needing to come into place for us to have the full picture. And so I think that is where the risk currently is, in having a regulatory environment that still isn't complete and at the same time having to implement that in practice. Another element where we have written and where we think that regulation might be needed is the area of ESG scores and ESG ratings. This has been in the news recently, I think with Elon Musk complaining that Tesla was rated worse than some of the biggest polluters on the planet. I mean, that was obviously a very strong statement, but at the same time, it does point to a more general issue. So there is no standard, there is no regulation for these ratings for the time being, and so much is reliant on these ratings credibility and reliability. So I think that is also an area where we will at some point need and see some regulatory intervention to make sure that the instruments the industry is using to translate regulatory requirements in practice are really reliable and consistent.
Yeah, and Sylvia, are we seeing also, such things, we're talking about Europe, but are we seeing it across the world in Asia and the US to doing same, as ESG portfolios or certainly ESG products will become more prominent in a lot of these portfolios? How do you align everyone?
So I think that's really a question to which we yet don't have the answer. We know that Europe is the jurisdiction that's far ahead in terms of implementing all this regulation compared to other jurisdictions. I would expect everybody else to follow. It is not automatic that we will have alignment. If you look at developments in the UK, for example, on sustainable finance, they are to some extent aligned to what is happening in the European Union, but there are differences as well. I think one element that so far perhaps has been a little bit underlooked and will become prominent, especially in light of scandals like this one, is how active managers really are. So the engagement side of the ESG that is really, I think, showing what investors can do to leverage their power as investors to stay true to what they say they do in terms of promoting sustainability.
And Sylvia, to follow up on that, I know you've written extensively about the Russian oil embargo, but also the global food crisis. How should we look at the Russian oil embargo, and will a lot of this just be diverted to other parts of the world?
So I think, first of all, it's positive that this was agreed. I don't think it was, we got to a point where expectations had fallen so low that I think this is good news. The good news that the European Union could rally together and agree on an oil embargo, even if it's partial. I don't think it's the best deal that they could have found agreement on, but it's still something that shows unity and that potentially, particularly with the inclusion of insurance and the deal between the UK and the EU on insurance can put significant pressure on Russia, because insurance for Russian oil, also Russian oil that is shipped to third countries, so not just the EU or the UK itself, but everywhere else in the world, is predominantly done in the UK or in Europe. And so having this particular piece in the package, I think, is the most important signal that Europe can send.
And so, another which is not ESG, but also linked, of course, is, the global food crisis. Are we underestimating the impact this will have longer term? Are we too short-termists when we talk about the markets day in, day out? Because this will have a huge, huge impact on the cost of living for years and decades to come.
I agree. This has been a concern of ours for some time. We wrote a piece in March highlighting the risk of a global food crisis and global food inflation due to disruptions that the war was inducing, both in the shipping of grains from Ukraine, but also in the future agricultural cycles. So the planting of the new crops, the tending of the crops that have already been planted and need to be harvested in the summer. And this is only part of the story, really, because when you factor in also the skyrocketing prices on fertilizers, factors that are linked to the price of gas. This means higher input prices for farming across the board, not just farming in Ukraine, farming everywhere. And I think this is just the beginning, to be honest, because if we look at where in the world the impact will be felt more strongly, particularly for exports of grain in Ukraine, the areas that are going to be hit the most are very poor areas where there could be also episodes of political instability related to this. We calculated that a decrease of 50% in imports of wheat from Ukraine could reduce daily calories in some of the countries in the Middle East and North Africa by between 30 and 35% a day, which is really massive. And so obviously this is a crisis. It can be a crisis of major proportions. I think we have been underestimating it so far. And I think it also will be more longer term than many people might be thinking, because of how the agricultural cycles are relatively medium to long term. So the perspective here is really one of months, if not a couple of years.
Sylvia, thank you so much. As always, Sylvia Merler, their Head of Policy Research and ESG at Algebris, joining us this morning. Now, coming up on the program, China's factory activity falls at a slower pace than expected as Beijing doubles down on its costly COVID-0 strategy, and how the world's hunger for Russian commodities is fueling the Kremlin's war machine. We'll bring you our big take shortly. This is Bloomberg.
This one is perfect.
Not as perfect as this one.
That is not a mango, Lenny.
No, but this mango hint water tastes just like mango, and with no calories or sweetness.
How can water taste just like fruit?
How can our feet look just like our hands?
How
can our feet look just like our hands?
Oh boy, I'm freaking out here. For a limited time, new customers get 40% off on our top flavors at drinkhint.com.
Larry!
Lenny! The hint was delicious. That's 36 bottles for $36. Only $1 per bottle.
Relax, pal. The Nature Show guy's got a whole cooler full.
And if you order now, we'll ship it right to your door for free.
Please tell me you heard that voice.
Stuffy pants, disembodied British fella? Oh, yeah. Hint. Water with a touch of true fruit flavor.
Your personal information gets exposed so often, it might as well be hanging in a museum. Everyday activities like online shopping, banking, and even data breaches may expose your information and make it dangerously easy to have your identity stolen. No wonder there's a new victim every 3 seconds.
Someone stole my information and tried to buy a car in my name. Felt really devastating because I had no control.
But protecting your identity can be easy with LifeLock. LifeLock monitors threats to your identity, and if an issue is detected, a dedicated U.S.-based restoration specialist will work to fix it.
If something happens, you have somebody fighting for you.
All backed by LifeLock's $1 million protection package, including reimbursement for stolen funds.
Everybody needs to have LifeLock.
Identity theft protection starts here. Call the number on your screen or visit lifelock.com/get25 and use promo code GET25 to save 25% on your first year of identity theft protection. Enroll now.
Healthcare professionals agree that sleep impacts everything you do. Chic's performance sheets are engineered to keep you cool, dry, and comfortable. Chic's are the world's most breathable, moisture-wicking, ridiculously soft sheets with superior stretch, even tested and proven on adjustable beds. Upgrade to Chic's now.
Go to trychicks.com to get 25% off, and we'll ship them for free. Plus, we'll include 2 additional pillowcases at no cost. That's over $100 in savings. Go to trychicks.com now.
From the world of politics to the world of business. Balance of Power with David Weston. News, analysis, insight from and about politics power players. Weekdays. This is Bloomberg. Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
Great question.
Great question.
Best question I get all night.
Bloomberg. Top experts. Great questions.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now let's get straight to the Bloomberg. First for news, here's Leanne Gerrans. Hi, Leanne.
Hi, Francine. U.S. Treasury Secretary Janet Yellen has given her most direct admission yet that she made the wrong call last year when she predicted elevated inflation would not pose a continuing problem. Yellen has told CNN she misjudged the path inflation would take, saying she did not fully understand the circumstances. Now, President Joe Biden says he will give Ukraine advanced rocket systems and other U.S. weaponry to better hit targets in the war with Russia. The move, announced in a New York Times article, ramps up U.S. military support as the conflict drags into the fourth month. The package of weapons includes missiles that will allow Ukraine to strike locations as far as 80 kilometers away. UK food and drink exports to the European Union are down 17% in the first quarter compared to pre-pandemic levels. That is according to a report from the Food and Drink Federation. Brexit trade rules and supply chain problems just continue to dent demand. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg. Francine.
Leanne, thanks so much. Leanne Gerrans in London. Now, coming up is your London commute about to get a bit shorter. Well, we'll be joined by the Chief Executive of Canary Wharf Group, Shobi Khan, to discuss the opening of the Elizabeth line and how London's second financial district is actually trying to reinvent itself. That's coming up shortly, and this is Bloomberg.
I have a number of money managers that advise me on investment strategies, portfolio construction, and asset classes. But sometimes I just want to do a trade by myself. So I went to the App Store and downloaded IBKR Global Trader. No conversations, no messages, no friction, all done in 20 seconds. They have 90 trading venues, 27 currencies, and even crypto. So give it a try. You're going to like the way it works.
Material samples brought back from objects in space can shed light on billions of years of our solar system's history, including details about the origin of life here on Earth.
A piece of an asteroid is a piece of the earliest beginnings of the solar system.
But picking up rocks from the surface of an asteroid or planetary satellite isn't as easy as it sounds. It requires voyages of millions of miles to bodies that have never been seen up close. Probes need to land on surfaces with weak gravitational pulls, where the surface terrain is completely unknown, gather samples, and then make the long trip back. And while behemoths like NASA and SpaceX grab headlines, it's a relatively young space agency. The Japan Aerospace Exploration Agency, better known as JAXA, that is taking the giant leap necessary to bring the mysteries of space back down to Earth.
How did Jeff Bezos realize you could sell anything on the internet?
The web was growing at something like 2,300% a year. Anything growing that fast is gonna be big.
Why did Bill Gates create Control-Alt-Delete?
Kind of become the poster child of, hey, couldn't you have made this stuff a little simpler?
And what inspired Diane von Furstenberg to create the wrap dress?
The wrap dress created me.
On the David Rubenstein Show, I uncover the untold stories of the world's most successful leaders, right here on Bloomberg.
Strong enough to stay, we will never.
Bloomberg Green, bringing you the business data and innovations to fight climate change. I'm Kaylee Lyons in conversation with pioneers like Gina McCarthy.
Climate change is also a public health crisis.
Green superstars like Robert Downey Jr.
I don't know what it's going to be, but I know that we're going to do whatever it takes to get there.
And political game changers like John Kerry.
Human beings created this problem. Human beings can solve it.
Reinventing climate news on TV, Quick Take, and Bloomberg.com.
Deflecting blame. Well, President Biden backs the Fed's efforts to tackle price growth, putting the onus on Jay Powell. Janet Yellen says she was wrong on inflation. Eye on supply. Oil edges higher amid a report that OPEC Plus could exclude Russia from its production targets. And Deutsche Bank replaces the chief executive of its asset management arm after yesterday's police raid over suspected greenwashing. Well, Stefan Hoops is the WS's new chief executive. Good morning, everyone, and welcome to Bloomberg Surveillance Early Edition on this Wednesday, the 1st of June. Yes, it's June, everyone. Hold on tight. I'm Francine Lacqua here in London. Now, the market's definitely struggling to hold on to some of the earlier gains. I'm looking at stocks in Europe, but also U.S. equity futures. They're trying to find their feet, struggling for direction amid this debate over the scale of central bank monetary policy tightening needed to fight inflation. I'm also looking at the dollar gauge advancing again on this Fed rate hike wager. And then I'm looking at yen sliding. S&P futures pretty much flat. Now, Canary Wharf Group has dubbed the Elizabeth line as a game changer for the future of London's second financial district. But with banks now accounting for less than half of the group's rental income, Canary Wharf is looking to a future beyond the big lenders. In fact, Europe's largest commercial lab is being built on a site once tagged to be Deutsche Bank's London headquarters. Well, we're now joined by the Canary Wharf Group Chief Executive Shobi Khan. Shobi, thank you for joining us. This is exciting. I mean, you're trying to regenerate Canary Wharf. The Elizabeth line was inaugurated a short while ago. How are you expecting it to change?
It's already changed. Thanks for having me this morning. We've seen traffic increase by 25 to 30% in the first week. Now, the first week is not the year, but we've had a robust start, and people are now discovering new ways and avenues of getting to the Canary Wharf site.
But this is people that come in to spend. Is it tourists? What kind of, customers are you hoping to attract on site?
So, Canary Wharf historically has been known as a financial center, but we are now a truly vibrant mixed-use community. So we appeal to both office workers, residents now that live at Canary Wharf, as well as customers that are shopping. We've got a robust food and beverage offering. We've got over 80 cafes and restaurants at Canary Wharf.
Shobi, you sound like an ad. What will be the biggest revenue driver in the next 12 months?
Well, revenue driver, I think, we're still a financial center in the sense of the office, but we've now got the residential that is leasing up dramatically. We've got 5 towers that we've built up on the rental side. They're leasing up extremely well. Rents are going up, and so we've now committed to build another 4 residential towers.
So how do you revitalize? I love coming to Canary Wharf.
Right.
I mean, I'm going to put my hand up and say, actually, every time I have an interview with, one of the big newsmakers in Canary Wharf, I hope it's a little bit later so that I can have lunch there. Not a lot of people want to spend weekends there.
No, that's not true. No. Our traffic, we average over approximately 100,000 visitors both Saturday and Sunday now. And I think the Elizabeth line, to your first point, will be even more significant because we've got all that growth coming from East London. They're coming now and experiencing Canary Wharf.
But you could do better. Is that fair?
We could do better, yeah. And we have announced a partnership with the Eden Project.
Yeah.
We're going to create a green spine through the middle of Canary Wharf. And so you're going to be able to go swimming, paddleboarding, play paddle tennis, rent a kayak, all these kinds of leisure activities. We've even created the electric go-kart race tracking in the garages now.
Do you need influencers? How'd you get the word out there?
I'm coming on TV to kind of talk about it with you. But we're actively marketing, I think, to the community, and I think the Elizabeth line, to your point, will be a game changer that people now have another way of coming there, and then the connection to Heathrow is critical for us.
You are our original influencer, Shobi, certainly for Bloomberg TV viewers. Give me a sense of whether people are coming back to work and whether you see that going back to full-time. How has COVID actually changed, life at Canary Wharf?
Yeah, so I think, look, 2 points. One, we're in a hybrid world now, and each company is deciding what they want to do based on their culture. And so each company is deciding how they want to lay their offices out, what kind of technology they want, but they've realized that they need the office. They need the office to collaborate, to innovate, to mentor. And our job is to create an environment, an extraordinary environment for them, so when they do come and they're excited about coming, we've got a plethora of options for them to take hold of.
So what do people want? And have you actually been talking to banks or chief executive in financial
Everybody
services?
wants a sustainable environment, and so we are actually the UK's largest sustainable developer. We've built over 10 million square feet of sustainable both office and residential. So great light, great air quality, filtration, access to green space, and then all the other things that I mentioned earlier about restaurants and health clubs, et cetera, movie theaters, providing that environment so when folks do come to the office, they have a great environment.
gyms? I mean, I imagine in the last 10 years what workers want has significantly changed. I mean, I used to go out to the pub in my youth. People now go for kale juice.
Yep. They go to kale juice. We've got Third Space. It's over 100,000 square foot gym there, and they've got so much demand. We're building another Third Space gym in the Wood Wharf area. So all that what you talked about, and everyone's got different interests, and so we've got the largest art collection in the entire country, public art, over 100 sculptures.
I did not know that. And that changes regularly, or is it
We've
fixed?
got some permanent collections, and then we do some annual things. So Winter Lights that we do in mid-January. Obviously, we haven't done it the last 2 years, but it'll be coming back this January. We do it for about 10 days. We get artists all over the world to come. In 10 days in January, we have over 500,000 people come.
So when you look at the COVID legacy, is that also, do people dress differently? Do their office hours change? Have you seen any patterns that we should be focusing on?
Yeah, I think, look, you've got that Monday, Friday kind of elbow with Tuesday, Thursday, Wednesday. Thursday's the new Friday, Wednesday's the new Thursday, so to speak. So yeah, I think, but I think each company is trying to determine that, and they'll figure that out. I think over the next several years, everyone's going to kind of figure out what their culture is for what they want to do.
So you're telling me that Thursday night is the happening?
It is.
Is it the big night out in Canary Wharf?
It is. And Hawksmoor just opened up a flagship restaurant. You have to book in advance now because you can't get a seat at a table now.
How do you attract the techies and the biotechs of this world?
So, great question. So we announced about a month ago that we're going to build Europe's largest commercial health lab building, 22 stories, 750,000 square feet. So that is going to be our first anchor that we will attract, hopefully, great companies in that field. But we've had tech, Revolut, that you guys know about. That started with 2 desks at Canary Wharf. And now they're over 80,000 feet. And so we've incubated some of those kinds of companies. Apple has moved to Canary Wharf. They've got some floors. So we're starting to get those new economy businesses coming to the wharf.
All right, so what's my ideal? I'm coming for a drink, I'm going to a cocktail bar, and then Hawksmoor?
You're going to wake up in the morning and go paddleboarding. You're going to have a great green juice for breakfast, go exercise, then have a great lunch, and then go to Hawksmoor for a nice steak.
There you go. No work. That's it. We don't need to work. We just go and hang out in Canary Wharf. Shobi, thank you so much for coming on. Shobi Khan, the CEO of Canary Wharf Group. Now, coming up, China doubles down on its costly COVID zero strategy. We'll look at the economic impact next. This is Bloomberg.
If you think eating heart-healthy food to support your blood pressure has to take a lot of time and hassle, then you need to try Super Beets Heart Chews, the first and only heart chew with unique polyphenols that make supporting your healthy blood pressure convenient and delicious. Super Beets polyphenols are nature's way of helping reduce oxidative stress and supporting circulation, so you feel more energized.
It gets me going. It gets my circulation flowing, and I have that energy all through the day. It's just fantastic.
I can stick them in my bag and keep them in my car. I love that I'm taking something that's healthy for me, and it's maintaining healthy blood pressure.
What makes Super Beets polyphenols so different from other antioxidants? In a leading clinical study, they were shown nearly 2 times as effective at promoting normal blood pressure as a healthy lifestyle alone.
In my 31 years of helping people maintain healthy blood pressure, I've never seen a polyphenol compound this effective. Super Beets antioxidants help support healthy blood pressure and help your body produce more energy.
Now I feel like I have this wonderful reserve of energy. My blood pressure is even more healthy. I'm loving it.
Now you can try our top-selling Super Beets Heart Chews risk-free. Call to find out how you can receive an extra 30-day supply of Heart Chews free with your first order. And for a limited time, we'll also send you a free 30-day supply of our brand new Super Beets Memory and Focus Chews. The only chew for brain health support to contain unique polyphenol compounds, clinically studied to promote healthy blood flow to the brain, while also supporting memory and focus so you feel more alert. This offer is not in stores, so call today. We'll even include free shipping, free returns, plus a 100% money-back guarantee. That's over $30 in total free gifts. Take your cardio and neuronutrition to an entirely new level. Try Super Beets Chews today. Love your results or your money back.
Call 1-800-577-2994 or visit trychoose.com today. That's 1-800-577-2994.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, China doubling down on mass testing in a move that's dashing hopes for a shift away from the costly COVID-0 strategy. It comes as China's factory activity in May contracted from the previous month as both production and new orders fell, although the slowdown was not as fast as in April. Well, joining us now is Bloomberg Shanghai Bureau Chief Charlie Zhu. Charlie, talk us first of all through what's happening on the ground with COVID.
Today is a really special day for Shanghai people. The 2-month lockdown has finally been lifted. It's a big move, for the government here. It's for the first time in about 2 months. Most residents are allowed to leave their residence and move freely around the city. I just came back from a trip in the shopping district on the other side of the city. Saw a lot of people, shoppers, and also traffic on the street. Crowds in malls and the subway. It feels a bit surreal after such a long time of the confinement. Anyway, I think the general feeling is Shanghai is slowly coming back to life. Some curves are still, remaining. But there's for example, there's capacity limit for some malls, for example, but things are slowly coming back.
So, Charlie, what's the latest on business resumption, and what does Shanghai reopening mean for the broader economy?
People can return, to return to work. You just need to, have a negative PCR test result, valid. The test must be done within the past 72 hours. If the test result is negative, you can go back to office to work. And we heard from traders and bankers, fund managers. They are, gradually returning to the office. Not all of them overnight, but they are going back to their office. And of course, some companies are, told us they still can't fully restart their operations despite the easing because of, supply chain issues. After all, there's been disruption to supply chain production, for 2 months. It takes time to repair. Yeah. For the economy, I think, there's a lot of uncertainties because, the Omicron risk is still there. If there's an outbreak, there will be more, economically, disruptive lockdowns.
Yeah, and we're speaking actually to the chair of the British Chamber of Commerce in Shanghai, who's saying there's also a lot of international foreigners, of course, that are leaving the country. Thanks so much. Our Bloomberg Shanghai Bureau Chief, Charlie Zhu. Now let's get straight to the Bloomberg Business Flash with Leanne Gerrans. Hi, Leanne.
Hi, Francine. DW's group says CEO Asoka Verman has resigned and will be replaced by the head of Deutsche Bank's corporate bank, Stefan Hoops. Verman's resignation comes just hours after Frankfurt police raided the headquarters of Deutsche Bank and DWS, which is the lender's asset management unit. Prosecutors say the search was related to allegations that DWS was inflating its ESG credentials. DWS says it is cooperating fully with authorities. Now, Singapore Airlines says it is committing to a strategy of working with international partners and operating overseas hubs after COVID exposed the financial dangers of not having a domestic aviation market. The CEO, Goh Chun Pong, told us exclusively that the airline is open to opportunities and will elevate potential synergies.
From day one, Singapore Airlines do not have a domestic market, and we compete internationally with the best out there throughout these 75 years. What happened is that we became extremely good at international competition in terms of our product leadership, service excellence, and our network connectivity.
And finally, Bloomberg has learned that HSBC is offering its UK staff the chance to lease electric vehicles using their pre-tax paychecks. Sources say all of its 3,500 employees in the country are eligible for the perk. They can choose between a 2- and 4-year lease and may buy the car from HSBC at the end of the contract. And that's your Bloomberg Business Flash. Francine.
Leanne, thanks so much. Leanne Gerrans, there are a lot of people in the newsroom would love a Tesla. Now, Russia has long acted as a global commodity supermarket. Today's Big Take says that even with some countries now halting energy purchases, Russia's oil and gas revenue will be about $285 billion this year. Now, meanwhile, the rally in oil prices fizzled after a report that OPEC members are exploring the idea of exempting Russia from its production deal. Grain futures also plummeting as prospects for food exports from Ukraine improve. Well, joining us now for more is Bloomberg's oil strategist, Julian Lee. Julian, great job, of course, course, on this big take. We have this big take story about how Russia continues to make billions off commodities. Is that something that sanctions could actually change, or no?
I think sanctions can have an impact, and I had a very small part to play in that story. Sanctions can have an impact. They're not going to send Russia's earnings to zero, and nobody should expect them to do that. But they are going to have an impact, and the self-sanctioning that has been going on has already been having an impact. Russia is getting a lot less for every barrel of oil that it sells than it was even at the beginning of the year. It's certainly getting a lot less than the sort of headline Brent prices that we see would suggest. Its own figures show that in between sort of mid-April and mid-May, the discounts that it was having to offer were close to $35 a barrel on average. So sanctions and self-sanctioning has had an impact. The moves that the EU has just passed will have a bigger impact, but they won't reduce it to zero or anything close.
So, Julian, how do China and India actually play in this picture of funding Putin's war?
Well, one of the things that we have seen is a big shift in the movement of crude oil that comes out of Russia's western export terminals. These are ports on the Baltic Sea, the Black Sea, and in the Arctic. Traditionally, those have stayed very local. The Baltic and Arctic shipments have largely gone to Northwest Europe. The Black Sea shipments have either stayed within the Black Sea or gone to refineries in the Mediterranean. We're seeing many, many more barrels moving from those ports now, particularly to India. In the east, we're seeing China taking barrels that previously went to Japan or South Korea and the United States. So we are seeing those movements, but they're much, much more expensive to do because the journeys are much longer.
Yeah, more expensive journey. And then, of course, if it comes to gas, it's almost impossible to transport it by cargo. Julian, also, what moves will we expect, or do you expect, from OPEC Plus and that meeting later on? What does it mean if they exempt Russia from their production deals?
Well, I think that at this meeting tomorrow, we're probably going to get another straightforward rollover of the deal as it stands. That's another 435,000 barrels a day on paper to production. The actual production isn't rising anywhere near as quickly as that. I'm a little bit skeptical about this talk of exempting Russia from its output target. I don't see it having any big impact. Russia's production isn't limited now by its OPEC Plus target. It's limited by the impact of sanctions, both on exports and on oil-filled equipment. So I don't think it has any impact on Russia's production if it happens. There's been talk that Russia's share may then be divided up among other OPEC Plus countries. But Saudi Arabia has been very much against that kind of a process, even for the smaller countries that couldn't meet their targets up until now. I think doing that would damage relations between Russia and the OPEC countries, and I think those relations are important to both. And then I think there are questions that even if Russia's target is shared out, who has the spare capacity to pump those barrels? And I'm not sure that there is a significant amount of spare capacity. If you look at Saudi Arabia, they are pumping now almost as much as they have pumped at any time in the past outside of the production free-for-all in 2020.
Julian, thanks so much. As always, Julian Lee, there are Bloomberg oil strategists, and I urge everyone also to go online on social media or on the Bloomberg terminal to check out our big take. Coming up, as inflation soars across much of the world, politicians, of course, are grappling with growing public anger. We have more on the political fallout from rising prices. That's coming up next, and this is Bloomberg.
At Empower, we believe in opening doors.
Well,
Let us help move you towards financial freedom for all of life's moments. We've been helping over 17 million customers create the future they want, and we're ready to open some doors for you.
I purchased a house and was told that it was cleaned, and it wasn't.
And right away I knew there was a problem because it was leaking.
And we have a gate that doesn't open.
I went to Angie.
And I typed in water heater.
Cleaners.
Garage. Interior painting.
I type in crown molding.
Exterior painting.
For whatever project you need, there's an option.
I still walk in my house and I'm like, wow, this is gorgeous.
Got a home project? Get started at Angie.com today.
Front Row, exclusive interviews with the most influential figures in finance. First available on the Bloomberg Terminal, then on Bloomberg Television and Bloomberg.com. Front Row, the best seats in the house for business's greatest minds. From the world of politics to the world of business. Balance of Power with David Weston. News, analysis, insight from and about politics power players. Weekdays, this is Bloomberg.
If you struggle with mobility, the sturdy and comfortable Hurricane helps you walk on any surface and truly stands alone. It comes with a worry-free 100% money-back guarantee plus free shipping. Get America's #1 selling cane at hurricane.com.
Life doesn't always give you time to change the outcome. Prediabetes does. With early diagnosis, prediabetes can be reversed. Take the 1-minute prediabetes risk test today. Go to doihaveprediabetes.org.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacroix here in London. Now, this is what the markets are looking at. Stocks in Europe, U.S. equity futures struggling for direction. Big debate still every day, day in, day out, over the scale of central bank monetary policy and the tightening needed to fight for inflation. This is a picture across the board. European bonds falling, treasuries extending a decline. And if you look at the 10-year yield, 2.8640. Now, a rare meeting between Biden and Powell. The U.S. president says he respects the central bank's independence, but at the same time is attempting to shift responsibility for taming inflation ahead of this year's midterm elections.
My plan is to address inflation. It starts with a simple proposition. Respect the Fed. Respect the Fed's independence.
Well, for more, we're joined by Bloomberg senior reporter for international affairs, Mark Champion. Mark, always great to speak to you. We were in Davos last week, and of course, all of the panels and debates on energy transition, on inflation, went back to the fact that politicians worried about the citizens of this world. With inflation above 8%, what can they do?
Yeah, I mean, there's, to an extent, there's a trade-off here, which is a tough one. So on the one hand, if you want to really constrain Russian revenues, you need to cut back on imports of oil from Russia, you should cut back on imports of natural gas. As soon as you do that, price goes up. And energy prices go up in your countries. And actually, the pattern so far is that Putin has received more revenue from oil and gas because the price went up. So it's a tough one. And for politicians, the real calculation is that in terms of domestic politics, people care a lot more about their food and about prices than they do about Russia.
What are we looking at in terms of political implications? So I know we were talking about Emmanuel Macron and and of course Marine Le Pen, how that was decided also on the cost of living. But are governments going to be toppled on the back of this?
Well, some may, and you know, you've already seen protests in Peru, for example, over precisely this issue. In the Middle East, places like Egypt, which are really very dependent on grain from Ukraine and Russia, seeing prices go up, availability fall. Remember also that the Arab Spring was sparked largely about food prices at the time. So, as soon as you throw this kind of real shock, price shock into the equation, then it's hard to predict exactly where or what the political fallout will be, but there will be fallout. Yeah,
and this is, I imagine, in especially parts and countries where they're most dependent on the price of wheat and grain.
Absolutely, and you've got more than 50 countries where who get more than 30% of their grains from Russia and Ukraine. So that's very significant.
And this is not really about inequality. I mean, it's inequality in certain countries, but there's something much deeper. If people can't eat, then it's unclear how these populations will also shift.
Absolutely. I mean, this is visceral. Food prices are visceral, and politicians know this very well.
Mark, as always, thank you so much for great reporting and, of course, bringing us this very important story, our Mark champion. Now, Bloomberg Surveillance Early Edition continues in the next hour. Matt Miller and Kay Lines will be in New York, and Edwards here in London. They'll spend a good amount of time, of course, looking at the markets. If you look at the Euro Stocks 600, they surrendered some of the gains that we saw in the earlier part of the trading day. Investors assessing cheaper valuations against a record jump in Eurozone consumer prices. And then if you look at some of the individual moves, Dr. Martens, they surged after a pre-tax profit actually beat estimates. Some of the other things we need to watch out for is, of course, the future of OPEC Plus and unity there as ministers from the group prepare to meet tomorrow. This is Bloomberg.
You probably know Vistaprint for business cards, but did you know we also print that, and that, and that, and that too? Can't forget about that, or that either. So next time you think print, remember, when you use Vistaprint, the print abilities are endless.
Hi, I'm Jeff from nuts.com. When my grandfather started this business, he relied on freshness, quality, variety, and service. We still deliver the freshest nuts, dried fruits, snacks, and sweets to families all around the country. Nuts.com. Enjoy free shipping on your first order.
Joel, since Kansas, we've taken our own path. We've never done what everyone else did. We took on the fear. We ignored the doubt. We loved the excitement. We believed. Even when our path didn't make sense to everyone else, we kept going. We keep going until our path is the one they wish they had taken.
RockAuto.com can help you stay cool with GPD complete AC compressor and component kits. GPD kits come with all the parts to do the job. Shop AC parts and more at RockAuto.com.
All the parts your car will ever need, Rock Auto.
I got my degree at SNHU for my family.
This degree is for me. I did this for my partner.
My siblings.
My daughter.
My son.
Congratulations, Dad.
All right.
No matter who you get your degree for, Southern New Hampshire University can help you get it done with low online tuition and multiple term starts per year. So the best time to get started is right now. Visit snhu.edu.
This feeling of certainty comes from inspiring your customers and expressing heartfelt thank yous with promotional products people love from the experts at 4imprint. Enjoy that feeling of certainty at 4imprint. 4imprint, for certain.
Companies now, they're getting hundreds, maybe even thousands of applications. So software has come in to automate the process.
You want to write your resume for robots, not for humans. The only job your resume has is to be comprehensible to the software that is reading it, because that software or robot is going to decide whether or not a human ever gets their eyes on it.
These things are programmed by a certain segment of the population that might not be totally inclusive or not be fully aware.
Concerns about how this technology could exacerbate discrimination. For the FTC, I think foremost, the FTC needs to be making sure that we're fully understanding this technology.
We don't trust companies to self-regulate when it comes to pollution. We don't trust them to self-regulate when it comes to workplace comp. Why on earth would we trust them to self-regulate AI?
Junior achievement is where dreams take flight. We are helping students connect what they learn in school to future work and career success. We are teaching them how to manage money to achieve financial security as adults. And we are showing them that starting a business also means changing lives and communities. However, we can't do it alone. Find out how you can help.
We're in an environment now which is very different to the one we've seen in the last couple of decades.
This inflation is really coming from everywhere.
I think it's too early to call the peak level of inflation. I know the market is very anxious to call peak prices.
We got to get back to the table and sit there and almost make a war plan. How do we want to address energy problems? How do we want to address food problems?
The Biden administration has a very real problem here. They've got to get inflation down to a more comfortable 3%.
This is Bloomberg Surveillance, Early Edition, with Anna Edwards, Matt Miller, and Kaylee Lines.
It's 10 a.m. in London, 5 a.m. in New York, and 5 p.m. in Hong Kong on this Wednesday, June 1st. Our top stories today. A surprise admission from Janet Yellen. The U.S. Treasury Secretary says she got it wrong on inflation and blames unexpected shocks to the economy and supply bottlenecks. The price of oil is rising. Investors are assessing a report that OPEC members may suspend Russia from its production deal. And a shake-up at Deutsche Bank's asset manager. The CEO of DWS Group resigned hours after a police raid over so-called greenwashing. Welcome to Bloomberg Surveillance Early Edition. I'm Anna Edwards in London with Matt Miller and Kaylee Lines over in New York. Kaylee, good morning. And a lot of political talk, a lot of political conversation around inflation. Janet Yellen saying that she thinks she got it wrong. Well, let's face it, she'd be in good company because so did many people.
Yeah, I think a lot of us got inflation wrong, Anna. And of course, that is something that this market has to continue to weigh in this month of June, just as it did in May, which saw the equity markets really going absolutely nowhere at all. As for how June started in Asia overnight, it was pretty mixed overall. You had stocks down in China and Hong Kong. That dragged the MSCI Asia Pacific Index just fractionally lower, only down about 0.2%. But your outperformance in Asia came from Japan. The Nikkei 225 actually rising by about 0.7% or so. And that was in large part due to the weakness, once again, of the Japanese yen. The yen weaker against the U.S. dollar for a third day in a row. It is getting closer to that 130 handle once again. It continues to be a rate differential story. You have policy and the Bank of Japan staying easy while the Federal Reserve is consistently hawkish. That obviously has pushed Treasury yields higher over the last couple of days and as a result putting pressure on the Japanese currency. And of course, it's not just Treasury yields that have been moving higher, Matt. It's really a story across the world, including in Australia, where their 10-year yield was up 7 basis points again for a third day in a row overnight. It's now trading right around the 342 level, Matt.
All right, so we do see yields rising around the world and really a struggle for direction in terms of stocks that are trading cash right now. In terms of futures, we're up right now on the S&P futures, but only by 0.1%. So still waiting for some catalyst to move us today. Not the case with Treasuries. The second day in a row that we see yields rise as investors sell off that debt. Of course, Chris Waller on Monday made headlines in Frankfurt saying he thinks the Fed needs to do 50 basis point hikes at every meeting until inflation gets closer to the Fed's 2% target. And of course, we're still very far away. Janet Yellen yesterday talking about the core at 6. NYMEX crude right now up 1.5%. One of the big drivers has obviously been energy prices of inflation, but 116.22. It's actually a smaller barrel price than we saw yesterday. For much of the day, we're trading at 117. And Bitcoin right now down 0.5%, but still up over 31,000. Remember, this measures the change in price since midnight. And yesterday at this time, we were looking at 31,600 as well. So still stuck at that level, just a little bit higher than we had been over the past few weeks. Anna, what do you see in Europe?
Yeah, struggling for direction here then, Matt. You mentioned it. You said that we were struggling for direction in cash markets, and that seems to be what we're experiencing here in European equities. The end of May, or towards the end of May, last week, certainly ending in decent form, appetite for risk assets, but not sure whether that has more to go here this week or whether we take a leg down further from here. And that seems to have caught us in sort of limbo here. UK market is down by 0.2%. The German market, the French market up by 0.3% this morning. And really, it's the sector weightings that are driving that. Let's have a look at where we are on one of those sectors. This is what weighs on London today, down by 1.6% on basic resource stocks on the mining sector. Sticking with commodities, this is Brent crude. This is the August price versus the close of the August price yesterday. So looking at that particular contract for you, 1.4% higher. So just in keeping with what Matt was saying there about the higher energy prices, the higher Brent crude price. Zalando is in focus, the German online fashion retailer, down by 4.8%. A couple of brokers downgrading their guidance or their estimates when it comes to Zalando, and so that's weighing on the stock. And I put in Dr. Martens, the maker of iconic boots, Kaylee. The stock is up by 28% today. They've guided higher. They've said they've got pricing power. They can pass on higher costs to consumers. I don't think it has anything to do with the fact the Sex Pistols song, God Save the Queen, they are big wearers, of course, of Dr. Martens, is vying for the #1 chart position as we head towards the long
I think you're
Jubilee
dating yourself.
weekend.
I'm not sure Kaylee knows who the Sex
I am
Pistols
dating myself.
were.
I'm not sure she does, but she knows what
I'm shocked that
Doc
the kids
Martens
are wearing Doc Martens again, right? I mean, I threw out my last pair 25, 30 years ago, and now they're back.
Vintage.
Yeah.
Everything comes back around, just like bell-bottom pants. Skinny jeans are out, if you haven't heard.
Thanks.
All right, now let's take a look at what else is ahead today, other than some fashion commentary here on Early Edition. There is a lot going on, including ECB Governing Council member Klaus Knott speaking at the Bank of International Settlements Green Swan Conference. PBOC Governor Yi Gang, ECB President Christine Lagarde, and other central bankers also will be speaking. Plus, GameStop reports its earnings results at 4 p.m. New York time. And then finally, on the front of the Federal Reserve, it is set to finally start shrinking its almost $9 trillion balance sheet later on today. Plus, the central bank's beige book is released at 2 p.m. New York time, Matt.
All right, so we will watch out for that data. But let's talk about President Biden. A number of news items coming out of the White House yesterday. He used a fairly rare meeting with Fed Chair Jerome Powell to highlight the central bank's independence and kind of pass the buck to them in terms of responsibility for inflation.
My plan is to address inflation. It starts with a simple proposition. Respect the Fed. Respect the Fed's independence. They have a laser focus on addressing inflation, just like I am. And with a larger complement of board members now confirmed, I know we'll use those tools in monetary policy to address the rising prices for the American people.
Treasury Secretary Janet Yellen was also in attendance. She admitted she underestimated inflation risks last year. A little late, but I guess it's still worth something. And in an interview with CNN, she said, quote, "I was wrong about the path inflation would take. There have been unanticipated and large shocks to the economy." Bloomberg's Washington correspondent Anne-Marie Horton joining us now from Washington, D.C. So, Anne-Marie, what do we make of the president's meetings yesterday?
Well, I guess who you asked, but one thing is certain, Matt, and that's that the president wanted to make clear, and then his deputies out on a lot of cable networks, Brian Deese in the briefing room, really wanted to stress this point that the president respects the Fed and wants it to be an independent Fed. So in that sense, as you say, he's almost passing the buck over to Fed Chair Jay Powell. This is in the Fed's realm to deal with inflation. And that the president is saying, first and foremost, it is their job. The administration's also talking about a number of other measures. We've seen them talk about, of course, over the past year, really. They're just now tainting it or putting in a little bit of a tainted frame when it comes to inflation, talking about how they can get costs down for American families, whether or not that's tax incentives for climate initiatives to maybe reduce energy off of fossil fuels or bringing down prescription drugs. But you're going to see a concerted effort from this White House and the administration over the month of June to talk about the economy. One, the robust recovery, but then also how they are dealing with inflation. Because this is something that is really battering Biden in the polls, is on top of mind of everyday Americans.
I guess he was saying, though, yesterday, he's saying, I'm going to deal with inflation by letting the Fed deal with it. And he also kind of said there's not much we can do about guns. It seems like a lot of these messages out of the Oval Office are, we can't really do very much.
Well, it depends what the issue is. And when it comes to inflation, I think what the president wanted to do yesterday is just remind the public, which doesn't really talk about the Fed the way we would say on Bloomberg or Bloomberg terminal users, the same way that everyday people going to the grocery store, going to fill up their tank at the gasoline station understand, like, really whose responsibility is it to tame consumer prices. So that's what they wanted to do. But at the same time, obviously, if you're an individual in America, you're not going to blame Jay Powell, right? You're going to blame the individual sitting behind the Resolute desk in the Oval Office. And that is why they are going to make an effort to talk about any ways they can tackle inflation. But it's very difficult for this White House to tackle inflation, especially when they're dealing with this energy crisis.
Yes, and dealing with a lot abroad, and these are linked, of course, the domestic and the international agenda, Anne-Marie. Also talk then over the past 24 hours of advanced rocket systems that the US says it will now supply to Ukraine. What difference will they make?
Yeah, this is the second opinion piece also we should note the president has penned over the last 24, 48 hours. So first was on inflation. Now he's talking about the war in Ukraine. And these are new systems, Anna, and the missiles could reach about 80 kilometers. That's like 40 or 50 miles away. There was a lot of discussion about which kind or how long of the range of missiles they should be sending over, because the worry would be that could Ukraine then hit Russia? Potentially, does that bring any NATO members into this conflict? The U.S. says they have assurances from Ukrainian government that they would not be using it to target Russian land, but they are sending these missiles. And the president, writing in the New York Times, said what they want is an end to this conflict. That means a negotiation at a table. That means a peace deal. But negotiations are always reflected on what's going on the battlefield, and they felt it was necessary to send these types of missiles. We're going to have more details on that today. It's another tranche of assistance, about $700 billion worth.
All right, Bloomberg's Anne-Marie Hordern in Washington for us. Thank you so much.
Million dollars, excuse me.
Important correction, Anne-Marie, thank you. On the subject of Russia, investors are also weighing the future of OPEC Plus and that alliance that Russia is, of course, for now a part of, just as ministers from the group prepare for their routine meeting on Thursday. According to the Wall Street Journal, OPEC Plus members are exploring the idea of suspending Russia from its oil production deal. Let's get more on the upcoming meeting with Paul Wallace, who leads our Middle East energy and commodities coverage. So, Paul, how big of a blow would it be to Russia and Vladimir Putin himself if Saudi Arabia and the other members did cut them out and increase production faster?
I think that would be a very big blow for Russia and for Vladimir Putin personally, if there was some kind of breakup at OPEC Plus, or there was a change in the agreement that allowed Saudi Arabia, the UAE, and perhaps some other Gulf OPEC members to increase production. Russia has consistently said that OPEC Plus must stay together, that it's a force for good in oil markets. And that's something that the Saudis and the Emiratis and other OPEC members have also been saying. So if that changed and let's say Saudi Arabia did increase production significantly, that would in essence be Saudi Arabia ditching Russia and moving even further into the U.S. and the Western camp, and that's certainly not something that Putin or the Russian government would want.
Paul, thanks so much. Paul Wallace there from Bloomberg News talking to us about the possibility of OPEC Plus becoming just simply OPEC again. Now let's get to Germany. Deutsche Bank has replaced the CEO of its DWS group. This just hours after the police raided the asset manager amid allegations of greenwashing. Let's get more with Stephen Ahrens, Bloomberg banking reporter in Frankfurt. So, Stephen, why did the CEO step down? What are these greenwashing allegations, and who's going to replace him?
So, hey, Matt, the CEO, the former CEO now, I guess, Ahsoka Verma, decided to resign after this raid. There were police officers and law enforcement officials entering the building over evidence that DWS has overstated publicly just how much of sustainability factors they're putting into their investment decisions, which would be misleading investors. These allegations have been swirling for months, almost a year now, and they've always been a cloud over his head. He now had to draw a line. Deutsche Bank was was pressuring him. And the new guy now, Stefan Hobbs, is a close confidant of Deutsche Bank CEO Christian Sewing. He's been running the what's called the corporate bank in the business. He's actually a trained trader, and he's now going to have to run the asset manager.
Okay, so new leadership at the asset manager, and of course DWS is the asset management arm of Deutsche Bank, Stephen. So what does this mean for the parent company?
It means they have now another big legal cloud over their heads, right? I mean, prosecutors raiding a unit is definitely something that they can't use at this moment. Deutsche Bank is in the throes of a turnaround. They've been restructuring the bank for years now. They're now on a way to achieve a really good profit this year. And this is something that now casts a shadow over that track record of Deutsche Bank CEO Sewing himself, because he was the guy who appointed Verman back in 2018. It's something you can't need at this moment.
All right, Bloomberg's Steve Ahrens, thank you so much. Now let's get back to the U.S. and take a look at some stocks moving in pre-market trading here that we're following. One big mover to the upside is Salesforce. It actually reported after the bell yesterday, raised its profit forecast, showing that demand remains pretty strong for the business software. That stock is up about 8.4% in early hours as a result. Another stock that is moving higher is AMC. It's riding the high of Top Gun Maverick, which did incredibly well in its opening Memorial Day weekend here in the U.S., actually a record Memorial Day for any movie. So AMC is benefiting from the phenomenon of Tom Cruise and those jets, up nearly 2% in early hours. One stock that is moving lower, though, that we should keep an eye on today is ChargePoint. This operates an EV charging network. It posted a wider first quarter loss than expected. Also, gross margins contracted, that together taking the stock down about 3.8% before the bell, Anna.
Lots to watch then at the start of trade. Coming up on this program, Skylar Montgomery-Koenig, TS Lombard Senior Global Macro Strategist. We will talk to her about everything influencing markets right now. What does she make of quantitative tightening? What's the big risk point for markets as the Fed embraces that from today? Christian Horner also joins us, Red Bull Racing CEO. That team riding high in the driver championship right now, the driver standings. We will talk to him about his expectations and how well the Formula One phenomenon is now doing in America, plus how the world is paying for Putin's war. Russia will make more this year from selling oil, gas and other commodities than it has seen frozen by international sanctions. Read more by typing NI Big Take into your terminal. This is Bloomberg.
Tune in to today's Options Insight, sponsored by Thinkorswim by TD-Ameritrade.
Right now, we're all feeling a little strapped, but weekends are still all about grilling. And Walmart always keeps prices low on our fresh ingredients, so you can save money and live better.
Yo, dude, you need some help?
Don't worry about me.
Yo, there's no shame.
No shame? You don't know my family, man.
It's okay to ask for help. Find a licensed therapist at BetterHelp.com.
Sure, you should teach him to ride a bike. Then use Greenlight and teach him how to invest in bikes. Teach him to be smart about money, and he'll go far.
Super far! Oh, hey, Mom!
Navigate the world of money together. Invest in your best investment. Greenlight.
Never be afraid of your strength, because your body is capable of amazing things. Own your strength and see how far it takes you. Tonal, be your strongest.
Ask your financial advisor about BitW, the first and largest crypto index fund.
Sleep. Feel. The Chic's difference is real. From the light to the dark. Hold back. Fall in. Exhale. Woo! Hot damn. No ma'am. So chill all night. On a cloud like a feather. Smooth, soft. Nothing better, just right, on the night. Visit trycheeks.com and get 25% off this Memorial Day with a 60-night guarantee.
claims season continues.
There's so much nervousness in the market right now.
This market punches you in the face.
Bloomberg is fastest with the numbers and analysis.
Big numbers from Disney.
It just slammed expectations.
Bloomberg, the fastest numbers and analysis you trust.
Welcome back to Bloomberg Surveillance. This is the early edition. We are simulcast on both Bloomberg Radio and Bloomberg Television. I'm Matt Miller here in New York with Kaylee Lyons, Anna Edwards with us out of London. Now, we're watching a continued rise in the price of oil as we all worry about the inflation that it's causing. But we may have seen a peak, at least according to two-year break-evens. I've got here a chart of U.S. and German two-year break-evens, which have rolled over in the past couple of months, coming down from their peaks. Now, oil continues to rise, but if you look at the charts going back, it's been lagging the break-evens. So maybe it's time for oil to peak as well. Noor Al-Ali joins us, Bloomberg Markets Live editor out of London. So, Noor, what do we think? Is this it? Have we reached the apex?
I think that's a very valid question. A lot of my colleagues will tell you, though, it's absolutely crazy to be an oil bear at this time because there's so much that's going on for oil at the moment. However, if you do factor in the latest news from Wall Street Journal that perhaps Russia could be kept out of the OPEC supply agreement and we might see more oil coming out of Saudi, that for me signals perhaps a question of whether or not supply could be upped from the Russian side to Asian consumers, which are big buyers in the market. So it's all about demand right now and whether or not it would pick up against the backdrop of prospects of slowed economic growth out of China, which is a big deal, obviously, for commodities.
Yeah, no, our colleague, Mark Cudmore on the Markets Live blog talking about how, all of the supply issues are priced in. It is all about demand. I know he was making that point earlier on. Talk to me about where we are on the Fed and the ECB then. This week has really been dominated by higher inflation once again coming through from the Eurozone, and Europe really in the driving seat when it comes to the yield story, the sovereign debt story.
Yeah, absolutely, and it's a reflection of how the market assumes or thinks that the ECB is lagging the Fed and even the BOE in their inflation pricing and their rate hikes. The ECB's Holzman, which is a big hawk, of course, said that perhaps, those hot inflation prints bring into question whether or not 50 basis points is possible for July. That'd be fantastic from, a fixed income market perspective. I do think that's perhaps a bit harder to think that all of the ECB members would say, yes, absolutely, let's go with the 50 basis points. I think we're going to be a bit more dovish on that side.
Okay, yeah, hawks like to be hawkish, obviously, so we'll bear that in mind. But Noor, thank you very much, Noor Al-Ali of Bloomberg Markets Live. And for more market analysis, check out MLIV Go. That is the function to use on your Bloomberg terminal to keep up with the Markets Live blog. This is Bloomberg.
A Hall of Fame swing. Like Capital Group's new ETFs, there's so much behind it. A lifetime of experience. Honing your skills, dealing with curveballs, and having a whole team behind you. Introducing actively managed ETFs powered by Capital Group. Can I find an ETF with a whole lot behind it? With Capital Group, I can.
Accenture. Let there be change.
Joel, since Kansas, we've taken our own path. We've never done what everyone else did. We took on the fear. We ignored the doubt. We loved the excitement. We believed. Even when our path didn't make sense to everyone else, we kept going. We keep going until our path is the one they wish they had taken.
What if you were a gigantic snack food maker and you had to wrestle a massively complex supply chain to satisfy cravings from Tokyo to Toledo? So you partner with IBM Consulting to bring together data and workflows so that every driver and merchandiser can serve up jalapeno, sesame, and chocolate-covered goodness with real-time data-driven precision. Let's create supply chains that have an appetite for performance. IBM, let's create.
We empower those who act. Those who see the correlation between things above and things below the surface. Those who navigate risk by meeting every turn with a heightened awareness of what's possible. Constant assessment. Determine the best position. Catch the perfect wave. CME Group, where risk meets opportunity.
Here in London, in Sydney, in San Francisco.
9 a.m. in Beijing and Shanghai.
Good morning, everyone.
Have a great evening.
To recap the headlines.
You do not want to miss this
How
story.
are you thinking about those dynamics?
Every Friday with 30 minutes dedicated to fixed income, I'm Jonathan Ferro. This is Bloomberg Real Yield.
Welcome back to Bloomberg Surveillance Early Edition. Now keeping you up to date with news from around the world. Here's the first word. China is planning for years of COVID zero with testing sites on almost every corner. Tens of thousands of lab testing booths are being set up across the country's largest and most economically vital cities. The goal is for residents to always be just a 15-minute walk away from a swabbing point. The U.S. Supreme Court has blocked a Texas law that targeted social media platforms. Critics say the measure would require Twitter and Facebook to allow hate speech and extremism. The High Court put the law on hold while social media firms challenge it in the lower court. Texas Republicans say the law is needed to protect conservative voices from being silenced. And of course, Elon Musk has made quite an issue of free speech on Twitter as of recent weeks. And we also heard him on Twitter overnight, Matt, talking about the return to work. Apparently, he wants Tesla employees back in the office at least 40 hours a week.
Yeah, he has reportedly sent a very angry letter to employees saying they have to get in, and tweeted that if they don't want to work from the office, they should pretend to work somewhere else. Now, I don't want to sound too woke, Anna, but it seems to me study after study shows that people working from home are doing more than they did in the office, and yet all of these middle-aged white male bosses are angry about it.
Even we managed it for a period, Matt, which must say something. Yeah, it's difficult when these things become caught up in culture wars. They tend to become a little too binary and lose some of the granularity. We'll get back to the markets shortly. This is Bloomberg.
You know real chili never has beans. You know which pizza is eaten with a fork and a knife, and which one is definitely not. You know a cappuccino is for the morning, and an espresso is for the afternoon. You know how to answer sparkling or still in over 12 different languages. You'll try anything that's not currently alive. Unless, of course, it's highly recommended. The Delta SkyMiles American Express card. If you travel, you know.
Fidelity, your dedicated advisor will work with you on a comprehensive wealth plan across your full financial picture. A plan with tax-smart investing strategies designed to help you keep more of what you earn. This is the planning effect.
Remember when you used to get stickers for doing something good? This one smells like strawberries. What if you got Bitcoin? With Upgrade Card, you can. You can get 1.5% back in Bitcoin on payments. Plus, you're building healthy credit habits because Upgrade rolls all your monthly purchases into one easy installment loan. That helps you pay your balance down faster and get rewarded for it. Now that smells like money. Get started at upgrade.com.
This is Scribd, an app that gives me access to ebooks, audiobooks, podcasts, and more.
With Scribd, I can get in my steps and countless pages.
Scribd makes every moment a reading or listening moment.
Depression can be a really tough thing to go through. Fortunately, people always have a lot of ideas how to help you through.
You just gotta snap out of it.
You have so much to be happy for.
Fake it till it feels normal.
Cheer up.
It's all in your head.
It's because you're a Leo. Think about all the people that have it worse than you.
Although there are ample Japanese assets inside Japan, it does not have the capacity to raise like the risk capital above, let's say, $100 million. Finally, some of the Japanese investors are starting to understand, but we still have to go abroad to raise that kind of money right now.
In terms of public policy, has it helped or hurt when it comes to innovation, fintech, venture capital, the startup culture overall?
Nowadays, many of the both government officials and also the financial industry puts high expectation on open innovation rather than like internal innovation, and that has been hugely supportive. There is a very different measurement going on right now inside the government to support this, because everyone just understands it just cannot get worse.
This is Bloomberg Surveillance Early Edition. Here's what you need to know. A surprise admission from Janet Yellen. The U.S. Treasury Secretary says she got it wrong on inflation and blames unexpected shocks to the economy and supply bottlenecks. Last year, Yellen predicted that elevated inflation wouldn't pose a continuing problem. The price of oil is rising. Investors are assessing a report that OPEC Plus members may suspend Russia from its production deal. That could mean an end to the OPEC Plus supply pact and see Saudi Arabia add more barrels earlier than expected. And a shake-up at Deutsche Bank's asset manager. The CEO of DWS Group resigned hours after a police raid over so-called greenwashing. There are allegations that DWS made unsupported claims about ESG investments. I'm Anna Edwards in London with Matt Miller and Kaylee Lyons in New York. And Matt, really searching for direction, it seems, on European markets and maybe on US futures right now.
That's right. Although we are looking at gains, they're only up about 0.25% right now. And we do have investors selling bonds, again, pushing those yields higher. So right now you can see S&P futures actually not even a quarter, up 0.2%. Maybe this is what a relief rally looks like. We had a little bit of a drop in the cash trade yesterday. The 10-year yield continues to rise. That should be no surprise, I guess, as you have Fed speakers coming out saying we need to continue doing 50 basis point increases. Obviously, if the paper is going to yield more later, why would you want to hold this paper? And then NYMEX crude right now at 116.49. It's up 1.5%. Now, this is going to look a little bit confusing. If you saw us yesterday, we were at 117. We almost hit 120 on NYMEX yesterday, up about 5%, but then came down drastically into the close. So this is a little bit of strength coming back into crude as we start to focus more on OPEC non-plus. And then Bitcoin right now down about 0.5%, but still at 31,646. So a similar move in Bitcoin yesterday. You saw it at this level, even stronger yesterday at this time. It came down into midnight, and now it's at 36,646 again. Kaylee, what do you see in terms of the pre-market movers?
Well, I'm focused on that oil story as well, Matt, because as you're seeing oil prices moving higher, it's giving a lift really broadly to energy names here in early hours in the U.S. That includes the likes of Marathon Oil, up about 1.75%, and big majors like Exxon also are moving higher. It's up about 1.3% or so. Another big upside mover is Salesforce. It actually reported earnings after the bell yesterday and gave a really optimistic outlook, raising its earnings forecast. Shows that demand for some of that business software is still strong, even in the face of all this macroeconomic uncertainty that is out there. Salesforce is up a little more than 8% as a result. One stock moving lower, though, keep an eye on it, is GameStop. Of course, this is the original meme stock. It was part of a broad sell-off in meme stocks yesterday. It actually fell about 9%, giving back some of the gains it saw in a really strong week last week. It also will be reporting earnings after the bell today, Anna, so it'll be interesting to get a read on the actual fundamentals for this company that often has traded just completely not in line with those fundamentals, Anna.
Yeah, meme stocks, old school. Kaylee, let's have a look at European equity markets then. And we really are searching for direction here. Matt was saying slight gains coming through in US futures. Well, here, European stocks down by 0.1%. The basic resource sector still weighing, getting some gains in banking and in autos. But we're quite divided here in terms of where we are on European equity markets. Brent crude up by another 1.6% today, 117 the handle. This is the August contract compared to the closing price of the August contract yesterday. Zalando down by 2.8%. This is an online clothing retailer over in Germany. A couple of brokers downgrading their expectations for this business, and so as a result, that one is suffering today. Dr. Martens, though, out with an update. The maker of the iconic boots, the company saying that it does have pricing power. It's guiding higher and saying it can put up its prices, so we see that stock jumping by more than 26% this morning, Kaylee.
Yeah, some really interesting micro stories that are out there, Anna, but let's get back to the macro picture now. Joining us is Skylar Montgomery-Koning, Senior Macro Strategist at TS Lombard. Skylar, it's a new month. Happy June. How optimistic or pessimistic are you feeling in this June compared to May?
Yeah, I mean, so when we've done our asset allocation stance, for the first time since 2020, last month, we downgraded our stance to below 1. So that is our beta to our benchmark is below 1. So it represents a significant de-risking. And specifically in the last month, we've gone from being a small overweight in developed market equities to a small underweight. Since 2020, we've also maintained an underweight in government bonds, and we've moved that allocation up a bit this month. And so because we've reduced our overweight in equities, we've been pushed into cash, and I think a lot of the market has as well. And that cash allocation for now, for us stands at 10%, which is kind of the max of what you can reasonably expect. And the reasoning behind these changes is, the global economy is moving towards a slowdown. That's where economic conditions are worse than average, and they're getting worse still. And of course, there are differences between countries, but importantly for allocators, the slowdown, part of the cycle is the worst part of the cycle for risk assets. And not only is that negative, but we're also getting countercyclical inflation. As we've mentioned this morning, or you've mentioned this morning, you've got that oil price spike that's also feeding in negatively.
Skylar, that all sounds pretty negative then and pushed into cash, and we haven't even seen quantitative tightening start yet. It starts from today from the Fed, although it has been happening from other central banks around the world already. What are the biggest pain points for markets, do you think, from QT, from quantitative tightening?
Yeah, I mean, I think what's underappreciated is the fact that yields can still go up. And so, we're still underweight government bonds, and that would actually, we've reduced. But I think, markets, they're looking for places to hide, right? And quantitative tightening combined with the fact that you've got this countercyclical inflation now occurring in the U.S. means that there's a very high risk that, people are moving to being worried more about growth than inflation, but inflation is still a worry. And so, there's a very high risk that you still get that positive equity bond correlation. There's not anywhere to hide. And so I think investors have shifted more into government bonds because that yield is higher, but I don't think that's necessarily a safe place to be. And so you have to look for alternatives.
How long is inflation going to be a worry? I mean, aren't we supposed to start feeling the base effects soon? Shouldn't these numbers be coming down drastically?
Yeah, I mean, I agree, right? So, we've been positioned for falling break-evens for about a month or so now. But, break-evens and inflation is still very, very elevated. We do think inflation will settle higher this cycle, especially in the U.S. So in the U.S., we see inflation kind of around 2.5% to 3%. Mathematically, longer term, as you say, inflation will have to fall on base effects alone. The rapid rise in commodity prices, it's a shock, but it's a shock. So for that to feed continuously into inflation, you need commodity prices to continuously rise to that degree. That will feed up eventually, as well as China lockdowns, while it will continue. They're getting better at managing that. That will come down, but the problem is, will it come down fast enough? And so the expectation for U.S. inflation is that even the Fed thinks we're still going to be above 4% by the end of this year. And they've now admitted that in 2023, they're not going to get back to their inflation target. And so, the 2023 forecast for the Fed is 2.5%. And so while it's still coming down, you need it to come down in a clear and convincing way, the Fed has said, for them to back off policy. And we're not going to see that this year. And the risk is very likely that we're not going to see that as we head into 2023.
So how much more room upwards for yields to move is there then, Skylar?
So, in terms of when we're looking at policy rates, for us specifically, we have a model that we input, Fed dots into kind of the forward curve, and we look at it over the next 10 years, what policy expectations are. And if you put the Fed dots in, which are lower than what the market expects, in the near term, you get to a 10-year yield that's justified of around 3%. Now, the problem is, I think we're going to have to overshoot that. And so our chief U.S. economist, Steve Blitz, thinks that inflation will be persistent enough this year and growth okay enough in the U.S. that, you'll see the Fed hike aggressively into next year. And you may even get our base case, or the highest probability for us is that you get to above 4.5% in the Fed funds rate by mid-2023. And that justifies then a higher than 3% rate. We're seeing a big divergence in terms of our expectations for real yields versus break-evens. And so we think break-evens will come down, but that real yield will continue to rise. And you could see significant pressure there. And so I wouldn't be surprised if we get above 3% on the 10-year.
And Skylar, you mentioned about getting into cash, and you thought a lot of people in the market have been pushed into cash. What does it take to get that cash off the sidelines then?
I think the problem is positioning and sentiment. People are looking for that moment, right? So we've seen this rally, and at the 6% rally, and there's been lots of talk about bear market rallies and that kind of thing, in terms of that's what we're seeing now. But if you look at previous bear markets, if you look at 2008, for example, the largest rally that you saw, during the whole bear market, you were down around 60%, but you saw a rally of 24% during that period. And so the scale that we're seeing now is quite small, and I don't think it represents a turnaround in sentiment because the economic conditions are worsening so much. And I think, that's a staple of a bear market, right? Is that positioning and sentiment are very, very low. People aren't looking to get back in. And so I think, you need a significant turnaround in the economic conditions, or you need the Fed to come off the break, or other central banks to come off the break for people to get back in. And that doesn't seem to be happening, or we don't think it will happen in 2022. And so you'll continue to see these rallies, but the downtrend is still there in equities especially.
Skylar, thanks so much. Thanks for joining us. Skylar Montgomery-Koning of TS Lombard with her thoughts on the markets. Coming up on this program, we will talk Formula One. We will talk racing with Christian Horner, Red Bull Racing's CEO. This is Bloomberg.
How will your business adapt to change? You could hire an office full of Peyton Mannings.
What's up, Peyton? Morning, Peyton. Hold for Peyton.
They'd huddle.
Welcome to the Peytonverse. Such a visionary.
Game plan.
You go. No, you go.
And call audibles.
Double our investment in Omaha. Omaha! 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 Omaha!
Or you could use Workday. Omaha. The finance, HR, and planning system used by over half of the Fortune 500 for a be agile like an MVP world. Workday for a changing world.
Teaching him to ride a bike? That's parenting 101. But Mom, get Greenlight and teach him what it takes to buy a bike. Nice shot. Crushing chores, getting paid, and buying a, ooh, cool bike. Then teach him how to buy stock in a bike company. Teach him how to be smart about money, and he'll go far.
Super far. Oh, hey, Mom.
Navigate the world of money together. Invest in your best investment. Greenlight.
Yo, dude, you need some help?
Don't worry about me.
Yo, there's no shame.
No shame. You don't know my family, man.
It's okay to ask for help. Find a licensed therapist at BetterHelp.com.
Tommy John has been dedicated to elevating underwear for over a decade. Now, we're proud to reveal our most premium men's underwear yet. This is Apollo. All new, ultra breathable, rigorously tested for durability, and enhanced with exclusive dry release tech. We've upgraded the softness and the level of comfort, so don't be surprised if your confidence is upgraded too. Experience high-end for your rear end at TommyJohn.com and get 20% off your first order.
A market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
This is Bloomberg Surveillance Early Edition. You're looking live at the Principal Room. Coming up later today, EU Commission Executive Vice President and Trade Commissioner Valdis Dombrovskis. This is Bloomberg.
This This is Bloomberg Surveillance Early Edition. I'm Matt Miller with Kaylee Lyons in New York and Anna Edwards in London. Now, last month, Formula One made a big push, an even bigger push, into the U.S. with the inaugural Miami Grand Prix. The U.S. has historically spurned the racing series in favor of NASCAR as well as other American sports. But now it's front and center after a Netflix documentary has fascinated Americans from coast to coast. Joining us now to talk about the future of what is, I think, otherwise the most watched league in the world is Christian Horner, CEO of Red Bull Racing. Christian, thanks so much for joining us. To what do you attribute this burgeoning popularity in America of what had previously just been a global obsession?
Well, I think that, the great thing is, Formula One through the Netflix, series, this Drive to Survive series, it's engaged, America, and, the sport's always been great, but I think now it's been a great way of introducing people to the sport, explaining the sport, and getting to know some of the personalities, some of the challenges, that go on in the business world as well behind the scenes.
What about the racing? You have had incredible success at Red Bull. You've been doing this there for, I think, 15, 16 years. But I've heard you lament the loss of the V10 and V12 engines. Now that we get into these, tiny little, I think, 1.6-liter hybrids, it seems like the racing has improved.
Yeah, look, the racing's been fantastic. And I have to say, since Formula One was bought by the Liberty Media Group, the regulations that have been introduced to promote better racing have been, they're working. And we're seeing some great racing, some, the best drivers in the world going wheel to wheel at some of the most exciting circuits. And it's a fantastic competition. So it seems to be working.
You won, of course, last year with Max Verstappen, the entire championship, and he's leading this year. Your other pilot, Checo Perez, has won probably the most iconic race in Formula One at Monaco. What do you think about your chances this year?
Well, look, I think we've got a chance. There's been the biggest regulation change this year for 40 years. The team's done a great job in adapting to those regulations, and having achieved that world championship last year with Max, we're determined to defend it. And in Checo, we've got a driver that's growing in confidence. He's just won the Monaco Grand Prix 2 days ago. I think he's still recovering from that. But, we've got these two wonderful drivers that, we're taking on new challenges from Ferrari this year.
Good morning to you, Christian. I wonder how you manage the rivalry within the team between these two great drivers. When you've got one in first position on the drivers the driver's standings, and you've got one in third. I mean, how much of a challenge is that?
It's a nice challenge to have, but ultimately they're team players. They're part of the team. It's not Sergio Perez racing or Max Verstappen racing. It's Red Bull racing, and they work for the team. They have a responsibility. They drive the cars that the 800 or so employees here have designed and produced for them. So they're one link in the chain. They're a very important link, but it's vital that they recognize that the team's ambition is greater than their own.
Let's talk about competition in a different way in the form of M&A in the F1 space. Christian, would you consider an offer from someone like Porsche or Audi?
Well, I think it's fantastic that they're talking about coming into Formula One. It's iconic brands, particularly the Porsche brand, is particularly iconic. And of course, we're heading into a new chapter as we become power unit manufacturers. So other than Ferrari, we'll be the only team to have engine and chassis under one roof. So, it would be logical to hold conversations with them, after declaring their intent to enter the sport.
Yeah, is there room for other teams, for new teams on the grid? Is there always room, Christian?
I think we've got a 10-team system at the moment, and that works very well. So effectively, you've got 10 franchises involved in the sport, and I think you dilute that by introducing more teams into the sport. So I think until 2026, I can't see any new entrants coming in. It'll be a case of having to take on one of the existing franchises if a new party were to want to come into the sport.
One of the great things that Porsche and Audi have is a ton of money. Right? It's so expensive. You've even said that you're not sure all of the teams right now can compete because of the cost. They're prohibitive. Is that a problem?
It's more the cost cap rather than the actual cost. I mean, the sport is in great health. I mean, we've got some fantastic partners. We've introduced a lot of American partners. So, Oracle have become our title partner this year. We have companies like ExxonMobil, a whole plethora of different companies that are supporting the team. But with a cost cap, it's the amount of money that we're restricted to spending, which is the challenge. But that is creating a more equal playing field for the 10 teams.
What do you think about trying to manage the popularity at the same time as staying true to your heritage, right? There have been a lot of complaints that the track in Miami was not up to snuff in terms of quality, and there's a lot of talk about Monaco actually falling out of the schedule.
I think it's always a matter of finding that balance, and each circuit has different characteristics. And Monaco is part of the DNA of Formula One. It's been there since the beginning. It's a little bit like Wimbledon is to tennis. And the Miami track, it produced a great race. It's probably not the most challenging of circuits for the drivers, but it's a 22 race championship, and it's a matter of being competitive across all of these different circuits, street circuits, permanent circuits, some of the iconic historic circuits as well. And that's part of the challenge of Formula One.
Christian, thanks so much. Thanks for joining us here on Bloomberg TV. Christian Horner, the CEO of Red Bull Racing. Coming up throughout the month of June, our new special Bloomberg Equality takes a look at what equality means for the economy, for companies and for investors. Catch it every Thursday at 1 p.m. New York time. That's 6 p.m. in London. This is Bloomberg.
May I be of assistance, sir?
Please. I know the 2013 Bitcoin, but the rest, I really need something well-balanced.
Very good, sir. May I suggest a blend?
Crypto doesn't have to be overwhelming.
That's exactly what I was thinking.
Wonderful. I'll bring that over. Great choice.
Ask your financial advisor about Bitwise, the world's leader in crypto index funds.
Healthcare professionals agree that sleep impacts everything you do. Cheik's Performance Sheets are engineered to keep you cool, dry, and comfortable. Cheik's are the world's most breathable, moisture-wicking, ridiculously soft sheets with superior stretch, even tested and proven on adjustable beds. Upgrade to Cheik's now.
Go to trycheiks.com to get 25% off, and we'll ship them for free. Plus, we'll include 2 additional pillowcases at no cost. That's over $100 in savings. Go to trycheiks.com now.
What does the future of strength look like? It's dynamic weight that adjusts for you in real time for a more efficient workout. And you can only experience it on Tonal. Learn more at tonal.com.
Hi, I'm Francine Lacroix. Join me on Leaders with Lacroix as we explore what drives the most influential people on the planet, with guests like U.S. Special Presidential Envoy for Climate Change, John Kerry.
Climate has no affiliation with any party or ideology. Listen to the scientists. This is not a matter of ideology. It's not a matter of politics. That's the challenge.
Leaders with Lacroix on Bloomberg Television, TV Go, and Bloomberg.com.
Greater constraints and tighter regulations are impacting the volatility of the commodities markets. Bloomberg's enterprise solutions deliver powerful end-to-end support for your commodities workflow. Gain deeper perspective on our planet's valuable resources. From data analysis to price discovery and beyond. Tap into the world's most advanced commodities solutions.
This is Bloomberg Surveillance Early Edition. I'm Anna Edwards in London with Matt Miller and Kaylee Lyons in New York. Also joining us, Tom Keene, co-anchor of Bloomberg Surveillance, who's with us now. And I know you have a single best chart, Tom, that reflects on the fact that here in the UK, I mean, it was a ghost town coming into work, frankly, this morning. A lot of people away, I think. Jubilee holidays approaching.
Well, it's going to be interesting, Anna. And, of course, I know, Anna, you're going on a special extended bank holiday weekend, is what they're calling it, for the Platinum Jubilee. Let's look at the state of the United Kingdom. Back to 1956. This is a really interesting story. I did not expect this chart. This is log per capita GDP, and the answer is slope matters, and there is a beautiful slope until the bank crisis of 2007, 2008. Things change. Yes, a little bit of a pandemic over by where we are now. But this is what has been given up in 15 years of economic growth, Anna, in your Britain. I really, it's very French-like, it's very Italian-like, and I really didn't expect it, but there it is. It is a changed United Kingdom.
Tom, I'm excited about the program today. I was just looking over NLRT on my terminal, shows me all the alerts that I have. And the only people I have set up here are Matt Levine, Gary Schilling, Mohammed El-Arian, and Howard Marks. You've got Howard Marks on the program today.
We're going to have Howard Marks, Lisa Abramowitz, in an extended conversation with Mr. Marks and State of the Market on what value means today. Speaking of value, we'll get value from William Dudley, Bill Dudley, the former president of the New York Fed, and of course his comments after a meeting in the Oval Office yesterday and Chair Yellen, Secretary Yellen's discussion of inflation.
Yep, she says she got it wrong last year. Tom Keene, co-anchor of Bloomberg Surveillance, thank you so much. Now, on the subject of the Fed, he was just talking about Bill Dudley. I am also watching the Fed today for a number of reasons. One being that QT is actually starting. We've talked so much about it, but until today, the Fed had not actually started rolling off that $9 trillion balance sheet, but that is what begins today. You're also going to get the Beige Book out of the Federal Reserve at 2 p.m. New York time. It, of course, reports on regional economic conditions, and we'll be getting more Fed speak today. New York Fed President John Williams and St. Louis Fed President Jim Bullard will be talking. So how much will they echo what we heard from Christopher Waller earlier this week about 50 basis point hikes until inflation is closer to 2%? And who knows how far away that is, Matt?
Yeah, absolutely. So very important stuff to watch. I'm watching the work from home beat right now. You know, a few years ago, guys stopped wearing ties, ditched the jackets. I've noticed lately nobody shaves anymore, but now people just don't come to the office, and that makes Elon Musk really mad. It makes a lot of middle-aged white guys super angry, especially if they're bosses. And he's reportedly sent a note to his employees saying, if you don't come to one of Tesla's main offices for at least 40 hours a week, and satellite offices don't count, then go find a job somewhere else. He says they should pretend to work somewhere else, defending this on Twitter. The funny thing is that study after study shows that people who work from home actually put in more hours and dedicate more of their life to work. But bosses just don't want to believe it.
It's hard to switch off, apparently. Yeah, I mean, Elon Musk with strong views. Who'd have thought it? Let me get to what I'm watching today, which is a couple of European political developments. I'm watching what's going on in Denmark. In Denmark, they are voting today. They're going to the polls to vote on joining the European Union's defence pact. So this is not NATO, but the defence pact that is part of EU membership. They have traditionally shunned deeper integration over in Denmark, and they have had an opt-out for this since 1993. So interesting to see whether what is happening in Ukraine brings them back into the fold there. Also watching Croatia. It's going to find out whether it's in good enough shape economically to become the Eurozone's 20th member. We will get the verdicts of the ECB and the European Commission today. That is it for Early Edition. Surveillance is right ahead. This is Bloomberg.
I had such anxiety. Sometimes it felt like I couldn't breathe. Fortunately, one of my friends told me,
"You've got to relax. You're going to get yourself sick."
From the world of politics to the world of business,
Balance of Power with David Weston. News, analysis, insight from and about politics power players. Weekdays. This is Bloomberg.
What about this couch?
It's awesome, but I'm just saddled with so much credit card debt right now.
Dude, you need an upgrade card. It rolls all my monthly purchases into one easy installment loan so I can avoid stuff like that. Plus, I earn triple cash rewards.
Where do I sign up?
What about this guy?
He's dead to me.
Get your upgrade card at upgrade.com.
Script is my time to listen.
I can listen at home, in the car.
It's a way for me to stay informed, get entertained.
Script is ebooks, audiobooks.
Magazines, podcasts, Script, it's awesome.
Time for our Memorial Day sale on the Sleep Number 360 smart bed. It senses your movement and automatically adjusts so you both stay comfortable. And can help you get almost 30 minutes more restful sleep per night. Save $1,000 on the Sleep Number 360 Special Edition smart bed Queen at only $19.99. Only for a limited time.
Ginkgo Bioworks was founded in 2009 by several big brains from MIT. The founders wanted to develop ways to treat DNA more or less like software code. You find an organism with an interesting property, snip out the DNA behind that property, and then shove the DNA fragment into something else. The big promise behind synthetic biology is that we'll find a new means to harness nature and bend it to our will. We'll be able to manufacture things like chemicals and fuels and even physical objects in ultra-efficient ways.
Biology is ridiculously advanced, and we're just entering the era of being able to program it to do new things, and it's programmable because inside of it is digital code that we can, as humans, read and write.
Doesn't always give you time to change the outcome. Prediabetes does. With early diagnosis, prediabetes can be reversed. Take the 1-minute prediabetes risk test today. Go to doihaveprediabetes.org.
I think the Fed is very aware that the U.S. economy is already showing signs of easing, that we're already seeing cracks in the armor.
Companies are still able to pass costs through. But again, as we reach higher and higher price levels, that becomes more difficult.
There's this frustration with where policy is headed.
Tightening will get us down to about a 4%, but getting down to a 3% probably is going to engineer a recession.
The reality is, I don't think they're going to be able to raise as much as markets have priced in.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Live from New York City for our audience worldwide. Good morning, good morning. This is Bloomberg Surveillance on TV and radio alongside Tom Keene and Lisa Abramowitz. I'm Jonathan Farrow. Futures just about positive 0.1%. TK, goodbye May. Hello June.
Hello June. It's almost like a mid-year review, John. There's been so much turmoil and tumult. I'm almost looking at June 1 as July 1, where you reset for the rest of the year. I mean, you know, you got a negative 1% 12-month trailing SPX. We're down year to date a little more than that. But just with the news flow we have, political and financial, is this our mid-year day?
Hey, Tom, let's talk about that. A mid-year review in the White House. What do you make of what's happening in the last couple of days?
I think there's a lot of jockeying going on. Greg Villiers with a smart note, others as well, talking about, you know, you change the guards. If you're a one-term presidency, what do you do mid-year? What do you do mid along the way? And maybe some bodies will move in and out.
Bramo, the effort to sharpen the message, an op-ed in the Wall Street Journal on inflation, in the New York Times on foreign policy, a mea culpa from Secretary Yellen.
Exactly.
And it's them, not us, towards the Federal Reserve on inflation.
I don't know that this really comes to a cohesive message. There also is a proposal for $2 billion to support the food supply chain. How much is too late, and how do they get ahead of a message that's changing in real time, that when they're already so far behind, it is unclear to see how they can potentially position themselves going forward.
TK, are you laser focused on the potential for a shake-up in that White House, given the NBC report that many people read about? Perhaps the president's The president's upset about what's happening within his government, within his administration.
It's very typical, John. I mean, we see this among all administrations. I mean, it's part of the political process, if you will. What I would say, John, is how does it redound back to the Bloomberg world of economics, finance, investment? Chairman Powell, I believe his job is something that will stay, but you really wonder about Secretary Yellen and if there would be a switch there.
And the calendar going forward through this summer. Lisa, June 15th, the Fed. July 27th, the Fed. September 21, the Fed, and some CPI reports in between.
Yeah, and frankly, the price of gas at the pump may be the most important data point of all. How do they actually affect all of these economic indicators and, frankly, sentiment of consumer with trying to hone the message when you have a real issue, right? I mean, there's one thing if it's all a political drama. This is not political drama. This is real drama when people go to the store, when they go to the gas pump. And I think that they're going to have to deal with that. That's way beyond a messaging issue.
Speaking of drama, did you see the monthly performance of the S&P 500 through May?
Yes.
Just how it closed. Positive 0.01%.
Nothing happened.
It didn't feel like a positive 0.01% month, did it?
But if you look under the surface, there is still the turmoil. And actually, that's what's notable today. You're seeing a downgrade to some of the projections for big tech from Morgan Stanley. Even Citigroup is saying this is a bear market rally. There's a feeling that earnings per share, that basically valuations still need to make an adjustment in a new era of slower growth, higher inflation, and perhaps much higher interest rates.
Let's get June started. Futures positive on the S&P 500 this morning. Good morning to you all. Up about 0.11%. Looking at the NASDAQ 100 positive. They're negative, down by 0.11%. Yields look like this on a 10-year, up about a basis point, 285.86 on a 10-year yield. In foreign exchange, euro dollar basically unchanged, 107.28. And crude Bramo. Crude was interesting yesterday. I'll allow you to explain that, but right now 116.77, up by 1.8%.
Yeah, it closed down on the day. And this was interesting after a report in the Wall Street Journal talking about how Russia might be kicked out of the OPEC agreement or exempted from increasing production because, frankly, that production is not going to come online, which would basically pave the way for other oil-producing nations to increase production materially. All right, this is what I'm watching today. As Kaylee was talking about earlier, the Fed is formally kicking off quantitative tightening, although technically it doesn't really begin until June 15th, when $15 billion of treasuries come due. How quickly are they going to reduce their balance sheet? What will the actual impact be? This is the big unknown in markets. This is what people are trying to price in. We've had a number of Fed officials come out and say it's basically the equivalent of a couple of 25 basis point rate hikes. It is not exactly the same. People are trying to price this in and really view this as a big unknown. At 10 a.m., the Bank of Canada is poised for its second consecutive 50 basis point hike. The reason why I'm watching this is because, frankly, the Bank of Canada has been out front. We don't talk about the Bank of Canada, but it really has been one of the more aggressive banks, and it sets the tone for how aggressive potentially the Federal Reserve and the ECB could potentially be. And today we get a host of Fed speak, including New York Fed President John Williams at 11:30, St. Louis Fed President Jim Bullard at 1 p.m. Also, the former New York Fed President Bill Dudley is joining us here on Bloomberg Television at 7:45 a.m. This comes after ISM data as well as the JOLTS data, the job openings data that we get today, John, to really give an indication of just how frothy the labor market is and whether it's starting to cool maybe a little bit and giving them perhaps an exit ramp that's a little smoother.
Lisa, do you get the sense that the JOLTS data is a target? That data point is a target for this Federal Reserve?
Look, Fed Chair Jay Powell has pinpointed this particular data point as indicating perhaps how tight the labor market is. You can also just view any of the help wanted signs in any of the stores that you go into. Yes, I do think that this is important. However, it is backward looking. So this is something, how do they message this going forward will really give you a sense of where the Fed presidents are looking in terms of the path of the Fed funds rate.
Lisa, thank you. What a day ahead, what a week ahead going into payrolls this Friday. Joining us now to kick off coverage this morning, Vasilios Giannakis, the head of European FX strategy at Citi. Vasilios, your colleague Jamie Fahy said yields haven't peaked, equities haven't bottomed, the dollar is not out. On the third piece of that, where are you on the team on the dollar?
I think we largely agree with that, Jonathan. I think we have, first of all, a tactical view for a continuation of the dollar correction. It has happened before whenever we have been in dollar bull markets, in dollar rallies. We have seen periods at which we have been through dollar corrections. The dollar is overvalued. Of course, there will be periods at which markets will pay attention to it, but there will also be extended periods at which the market can stay irrational for longer than one can actually stay solvent. I think right now, for the immediate future, an important part of the key of the puzzle is actually China reopening. Now, with firms in Shanghai, manufacturing firms basically allowed to reopen from today, with COVID cases having come down quite considerably on the back of the lockdown, of course, there is a sense that we may get some impetus about this China reopening. And I think this is important because you can actually get the dollar correcting lower, even if US yields go higher. But the condition for that would be if growth expectations were rate higher. And China reopening could actually play a role into that.
Right.
That being said, going further out, the dollar remains probably the best housing in a bad neighborhood, meaning that there is still a fundamental story to support it.
Vasilios, the yen in the last 4 days has had a life of its own. What are the ramifications to the general currency markets if we get weak yen through 132?
Well, I think that has largely been, first of all, this has largely been a result of bottoming out, at least for now, in US yields that have propelled dollar-yen higher. And that, in a sense, is creating a bit of an issue as far as Japan is concerned, especially for the Ministry of Finance, because they are the ones really that have been pushing back a bit, at least, against further yen weakness. But it also, as you said, it is going to make an issue for the rest of the regional currencies because they're going to become less competitive. And of course, that includes the renminbi, as well as main competitors, including South Korea and other Asian currencies. It also implies that imports to Japan are going to be far more expensive, which also going to be implying that a lot of these exporters, the Asian exporters, are going to have a bit more difficulty pushing into the product chain towards Japan. So there is definitely an element of that. I wouldn't say that going from 127 to 132 is going to have a major impact of that.
Right.
I would be especially more concerned if we gravitate towards the 135, 140, which would definitely require US yields to go closer to 3.5%.
Vasilios, wonderful to get your thoughts on a show, as always, buddy. Vasilios Giannakis there of Citi on the FX market. Deutsche Bank out with a big call coming into this morning. Bram, I know you saw this one. Here's the quote. The burden of proof has shifted further and the data over the summer now needs to disprove the case for a 50 basis point hike early in this hiking cycle. We're not talking about the Fed. We're talking about the ECB. They go on to say, our previous baseline was to expect back-to-back 25 basis point hikes from July. We now expect one of the two hikes in Q3 to be a 50 basis point hike. That's the call from the team at DB on the ECB, Lisa, for the path ahead.
And frankly, they got some confirmation from the ECB Governing Council member, Robert Holtzman, who also supported a 50 basis point rate hike at the ECB. How much can they get ahead of inflation? But then if they get that right, what's the impact on the euro, right? Does it actually support the euro or does it actually make it weaker? We've been talking about this for a while, John, but honestly, unclear.
If you ask someone in the FX market that question, it's still so incredibly divisive. Tom, Deutsche Bank go on to say the following. We believe the ECB is continuing to underestimate inflation and we expect support for a 50 basis point hike will increase as the summer progresses.
I would say 10 other houses can do that. John, what I find fascinating here, and I'm sure others will correct me out on Twitter and such, so what? They're going to make a first rate hike like the U.S., a first rate hike, nothing really happens, maybe even a second rate hike, nothing really happens, and then maybe you get to some interesting things in the case of the U.S. in September. What are we waiting for?
Well, you know the so what of it. Rates have been negative since the summer of 2014, Tom. It's been 8 years.
Normalize. That's all I can say.
When do you speak to President Lagarde next?
I don't know.
Could you take this tone with President Lagarde the next time you talk?
She and I are watching the Platinum Jubilee together.
50.
Yeah,
Kick
right.
it up 2%.
Just lay the boot into BTPs. Get it done. TK. Futures unchanged on the S&P. I actually think you'll get a lot of support with that tone on Twitter.
Thank you.
To be honest with you.
Let's go.
The Nasdaq down 0.2.
It's like the Red Sox. Let's go.
I can't wait for your coverage of the ECB next week. That'll be
You're
special.
waiting for my coverage of the Platinum
Yeah, right.
Jubilee. I'm fully briefed.
Oh, yeah. Our Raw correspondent picking up the coverage tomorrow from New York. This is Bloomberg.
Keeping you up to date with news from around the world with The First Word, I'm Ritika Gupta. Treasury Secretary Janet Yellen says she got it wrong last year on inflation. Yellen made the admission in an interview with CNN. Last year, Yellen predicted that elevated inflation wouldn't pose a continuing problem. Now she says she didn't fully understand the circumstances. The U.S. is ramping up military support to Ukraine. President Biden says he'll give the Ukrainians advanced rocket systems and other weapons that will allow them more precision in attacking Russian targets. The weapons will let Ukraine hit targets as far as 50 miles away. The U.S. says Ukraine has agreed to not use the weapons to attack targets inside Russia. Investors are weighing the future of OPEC Plus unity just as ministers from the group prepare for a routine meeting Thursday. According to the Wall Street Journal, OPEC members are exploring the idea of suspending Russia from its oil production deal. That could mean an end to the OPEC Plus supply pact and see Saudi Arabia add more barrels earlier than expected. And the city of Shanghai reported its fewest coronavirus cases in 3 months. That came on a day when residents celebrated an end to mandatory home isolation for most of the city. Shanghai saw just 15 new infections Tuesday. That's a dramatic drop from the peak of more than 27,000 a day in April. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
Yo, dude, you need some help?
Don't worry about me.
Yo, there's no shame.
No shame. You don't know my family, man.
It's okay to ask for help. Find a licensed therapist at BetterHelp.com.
I have a number of money managers that advise me on investment strategies, portfolio construction, and asset classes. But sometimes I just want to do a trade by myself. So I went to the App Store and downloaded IBKR Global Trader. No conversations, no messages, no friction, all done in 20 seconds. They have 90 trading venues, 27 currencies, and even crypto. So give it a try. You're going to like the way it works.
Only at Vanguard, you're more than just an investor. You're an owner. That means that your priorities are ours, too. Our interactive tools and advice can help you build a future for the ones you love. That's the value of ownership.
This is the feeling of certainty. The feeling that comes from knowing you're inspiring your customers, uniting your team, recognizing achievements, and expressing heartfelt thank yous with promotional products people use and love from the experts at 4imprint, your partners in creating special moments and memories by making people smile. Enjoy that feeling of certainty with promotional products at 4imprint.com. 4imprint, for certain.
Take the world by cloud. Accenture, let there be change.
It doesn't have to be like this. You don't have to live in fear just because you don't have life insurance. With Ethos, 10 minutes could protect your family for as little as $10 per month. To get a quote in seconds, go to ethoslife.com. Honey?
If you struggle with mobility, the sturdy and comfortable Hurricane helps you walk on any surface and truly stands alone. It comes with a worry-free 100% money-back guarantee plus free shipping. Get America's #1 selling cane at hurricane.com.
Time for our Memorial Day sale on the Sleep Number 360 smart bed. It senses your movement and automatically adjusts so you both stay comfortable. It can help you get almost 30 minutes more restful sleep per night. Save $1,000 on the Sleep Number 360 Special Edition smart bed, Queen, now only $19.99. Only for a limited time.
10 years, crypto could be a part of everyone's investment portfolio.
Mine?
Yeah.
My yoga teachers.
Why not?
Okay, the woman holding the camera.
Grayscale, building the future of financial legacies. Sure, you'll teach her to drive a car, then use Greenlight and teach her to save up for her own car. Mowing lawns and getting paid. Navigate the world of earning, saving, and investing together. Invest in your best investment. Greenlight.
Time-saving element of Tovala has definitely changed my day, my night, and just makes life easier for me. Tovala is my personal chef.
Tovala. Browse this week's meals at tovala.com.
This June, in honor of Pride Month and Juneteenth, Bloomberg brings you a special Equality Series every Thursday in June at 1 p.m. Eastern. Bloomberg Equality, celebrating inclusion this Pride Month and all year long.
I think I was wrong then about the path that inflation would take. As I mentioned, there have been unanticipated and large shocks to the economy that have boosted energy and food prices.
Credit to Janet Yellen, one person in the administration with a mea culpa on inflation, the Treasury Secretary to CNN. From New York City this morning, good morning. Futures look like this on the S&P 500, just about positive 0.05% on the NASDAQ, negative 0.17%. TK, someone stepping up, stepping forward and saying, I got it wrong.
There's not enough of this. And of course, the reason is she is a first-class academic, grizzled academic in economics. And rule number one in academics is when you get it wrong, study why. And I'm sure she and others around her are really thinking of how they got transitory wrong. John, full disclosure, I'm going to cut him some major slack. There was a small matter of a pandemic.
Okay, Tom, but some people did get it right and they were ignored by this administration, by this Federal Reserve. There was a lot of groupthink going on within the Fed and within the White House, too, on this particular topic.
I think there were people, including Mr. Dudley, who's going to join us later, that did a lot better at this guesstimate than anything there. We'll touch on this here in a moment. Right now, though, we need to go to Anne-Marie Horton, our chief K-pop correspondent in Washington. Anne-Marie, let's go to the tape. Elbowing NBC, CNN, and Fox out of the way. Horton in the front row yesterday at the press conference for BTS. And it got a lot of play here, folks. The lads lined up in black suits and did what they did. But the answer, Anne-Marie, when everything's said and done, is they're up there for a serious reason, which is Asian hate crime in America. It was not light, was it?
No, this was certainly a serious moment having BTS at the White House. And obviously, given their supergroup, right, they have a ton of popularity. So this is a way the administration was able to amplify that message. And as I was walking out, there were fans outside. And I had tweeted a video of the fans asking me what they look like, what they wear, were they cute. I got a lot of Twitter inbox messages from other fans asking me to delete that because there's a fight within the supergroup fans. They're called their army. And there's a fight about the fact that some of these fans say they should have never showed up because they didn't want to distract from the serious message. So interesting moment. We should note that there was a ton of people in the briefing room. The second BTS left, Brian Deese came out and he said, I got to tell my kids that BTS opened for me. And then a lot of other reporters also left. But obviously, Bloomberg, we stayed for the Deese briefing.
I know. V and Anne-Marie crush. Let's move on right now, Anne-Marie, to the meeting yesterday on inflation. And, of course, what Secretary Yellen said. All that's great. What does day two of the great Biden inflation battle look like?
Well, they're going to be dealing with this for the entire month of June as they make this concerted effort to really try to talk about the economy. One issue, of course, is that inflation was at 7.5% in January. So they could have been talking about this since the end of January, and they're really just making this effort now in June. Yesterday, when Brian Deese came out to brief us on this rare meeting the president held with the Fed chair and also with Secretary Yellen, really the takeaway was that he wanted to make sure, and the president wanted to make sure, that it is the Fed's job. It is the Fed's. This is in the Fed's realm. This is one of their mandates to control consumer prices. But the administration is also really trying to hammer home the fact that they are doing everything they can to bring down inflation. But then when you ask them, well, what about the tariffs? There's a lot of economists who say that could potentially, even if it's a little bit, that could potentially shave off some inflation. There's still no decision.
And Marie,
so there's a lot of things still just in limbo that we don't have answers to.
And nothing is sticking, right? There was an NBC poll that came out earlier in May, and basically it found that 33% of Americans approve of the handling of the economy by the Biden administration. 23% approve of the handling of the cost of living. These are terrible numbers heading into the midterm. Will there be a shakeup in the White House at a cabinet level? And if so, who is going to get the boot?
Yeah, it's a great question. These poll numbers are scary, right? If you're looking down a few months of a midterm election, and this is really top of mind of American consumers. You know, Lisa, I can't answer that right now. Obviously, they're struggling and they're trying a few new communication efforts, I would say. You know, something we haven't really seen the president do is writing back-to-back opinion pieces, first in the Wall Street Journal, then in the New York Times. Potentially, this will help shake things up or different kind of messaging. But I don't know yet who potentially would go. We did see yesterday that mea culpa from the Treasury Secretary, Janet Yellen, really the only one, though, to come out and own that there were mistakes to be made in this once-in-a-lifetime pandemic. Brian Deese was asked the same exact question yesterday, and he said things were uncertain and then kind of pivoted and then also said we're not the only ones to deal with it. Look at the Eurozone. They're north of 8%. So you don't know exactly where yet, but it looks like potentially if there was to be a shakeup, maybe in the structure of the management of the White House or the economics of it.
And Marie, there was an op-ed in the Washington Post by Henry Olsen, and he came out and he said the Biden administration just laid out what they plan to do about inflation. And basically, it's clear he hasn't got a clue what to do about it. And basically, that's been, frankly, the takeaway for a lot of people. Is there any proposal that he has put out there that is garnering another opinion from experts in the field?
Well, there's a lot of proposals that have been put out there from the Biden administration that some say could work, but then, you know, like everything, there's debates on either side of the aisle on what could and what could not stick. I mentioned the tariffs. Potentially that can shave off some inflation, but many say that that would not be a good negotiating tactic when dealing and trying to combat a stronger China. Then there's the issue like the gas tax holiday. We've heard this time and time again. It's been floated, but others say that would it even get to the consumer? Would the end result hit the consumer, or would the industry just eat that up? So there's always these debates about issues, and you never really get to the final finish line of whether or not they're going to go through with it or not. If they're going to fight inflation, then is that going to be the key focus, or are they going to use the, you know, issues that potentially on each thing, gas tax, tariffs, there's always going to be something else that there's going to be a pushback, and there seems to be a lot of debate on which lever they should pull.
MH, thank you. Anne-Marie down in DC on a lot of things, including K-pop. TK, just quickly, the NBC report that came out in the last couple of days on the increasingly frustrated president, the name that came up within that was Ron Klain. Greg Valliere came on the show how many weeks ago, Tom, and talked about that. There was a target on his back. I think it's a matter of time for a lot of people now before he goes.
There's a tradition to this. Ron Klain is hugely respected on both sides of the aisle, John. I don't know the details. I don't know what's inside the White House, but always the chief of staff is the focal point. And what's important here is President Biden has 4, 5, 6, 7 candidates to choose from of different character, and really it depends on which way the president wants to go.
Clearly a massive effort in the last couple of days, Lisa, to shake things up and sharpen a message.
Yeah, but is any of it sticking whatsoever? Is there a new message? I mean, honestly, do you hear a message coming out, or do you just hear a lot of new kinds of speaking points thrown at it?
You mentioned the polls. And let me tell you, every time we get a CPI print, it sticks all right. It sticks to this White House, and they can't shake it. Futures unchanged on the S&P from New York City this morning. Good morning. This is Bloomberg.
We empower those who act. Those who see the correlation between upswings and downswings. Those who manage risk by meeting each obstacle with a perfectly executed strategy, a measured approach, the right tools, driving accuracy. CME Group, where risk meets opportunity.
Wow, we're crunching tons of polygons here.
What's going on? Where's Regina?
Hi, I'm LaDonna. I invest in Invesco QQQ, a fund that gives me access to NASDAQ 100 innovations like real-time CGI.
Okay.
Yeah, don't worry, I got it.
Become an agent of innovation with Invesco QQQ. Before investing, carefully read and consider fund investment objectives, risks, charges, and expenses, and more in the prospectus at Invesco.com.
Sleep. Feel. The Chic's difference is real. From the light to the dark. Hold back. Fall in. Exhale. Woo! Hot damn. No, ma'am. So chill all night. On a cloud like a feather. Smooth, soft, nothing better. Just right on the night. Visit trychics.com and get 25% off this Memorial Day with a 60-night guarantee.
Selling a home is expensive and stressful, so we set out to create a better home selling experience with a network of the most successful real estate agents in America that'll sell your home for as little as a 2% commission.
The icing on the cake with the Ideal Agent was that we saved $12,000 in commission.
We would definitely use Ideal Agent again. The whole process was so positive for us.
Excellent, excellent service.
Getting right to the point, hiring Ideal Agent, I wish we would have done that sooner. And we would have saved 6 months of time and mortgage payments that would have probably never happened if we would have just gone with them first.
They were so stress-free. The whole process was amazing, and I would definitely recommend them.
We certainly recommend Ideal Agent now to all of our family, all of our friends. It's just a great experience.
We are not a discount brokerage. These are top local agents that'll get you the best results.
This is Scribd, an app that gives me access to ebooks, audiobooks, podcasts, and more. With Scribd, I can get in my steps in countless pages. Scribd makes every moment a reading or listening moment.
Remember when you used to get stickers for doing something good? What if you got Bitcoin? With Upgrade Card, you can. You can get 1.5% back in Bitcoin on payments. Upgrade rolls all your monthly purchases into one easy installment loan. Get started at upgrade.com.
Yo, dude, you need some help?
Don't worry about me.
Yo, there's no shame.
No shame? You don't know my family, man.
It's okay to ask for help. Find a licensed therapist at betterhelp.com.
This is the feeling of certainty. The feeling that comes from knowing you're inspiring your customers, uniting your team, recognizing achievements, and expressing heartfelt thank yous with promotional products people use and love from the experts at 4imprint. Your partners in creating special moments and memories by making people smile. Enjoy that feeling of certainty with promotional products at 4imprint.com. 4imprint, for certain.
Sometimes, in fact quite often, things don't feel the way they actually are. For the month of May on the S&P 500, don't worry, this won't be a therapy session. 0.01% higher on the S&P 500 last month. It didn't feel that way, but that's how it was. Futures this morning, exactly 0.01% higher as well, matching the gain we saw throughout the whole of May. Futures on the Nasdaq down about 0.2%. A note from Citi coming into this morning saying that yields haven't topped and equities have not bottomed. Let's take a look at the bond market. Yields lower through the month of May, particularly at the front end of the curve. Your 2-year 256.87, just a little bit higher on the session by a basis point. On a 10-year to 285.67, up about a basis point on a session also. The story for a lot of people going from the Fed to the ECB next week, June 9th, President Lagarde, and euro-dollar very much in focus. Deutsche Bank out ahead of that, saying in Q3 expect 2 hikes, and one of them could be 50 basis points from this ECB. TK euro dollar 107.19.
We massaged that in the last 30 minutes. John, what about the ISM numbers today? You're bigger on them than I am.
A little bit of soft data, Tom, some survey data. I think the JOLTS data is going to be the one that gets a lot of people's attention.
Okay.
It's dated.
10 o'clock?
It's dated, so I'll say that up front. But for a lot of people, that's the target for this Federal Reserve.
Yeah.
Can you bring down job openings? Can you rebalance the labour market without pushing unemployment up too high? Tom, that is such a delicate balance. And the Fed's going to be trying to do this with some data that's a little bit old, a little bit stale.
Well, and again, a little bit stale is Brent crude 117.20. We need to remember that that is elevated as well. Right now, let's elevate to the equity markets and looking at it through the math and derivative strategy at BNP Paribas of Greg Bowdle, head of their U.S. equity shop. Greg, what do the derivatives say right now? What do the cross moments say about the bet on equities?
Good morning. Thank you, Tom. When we look to the derivative market, we actually see some remarkable similarities towards what we saw in the back end of 2000, 2001, 2002, that bear market. When we look at the range that the VIX has been trading in, it looks remarkably similar to that regime.
Okay, well, it looks like that regime we had a May that John mentions was flat, flat, flat. Is it giving you a direction? Is there a bet within the equity market, and particularly within derivatives, that signals some form of June, some form of bet for June?
Well, I think what we've seen over the last week is very much a bear market rally or a dead cat bounce. What we've seen in terms of the price action, the laggards in the last month or so in this sell-off have all outperformed. It's really been a mean reversion trade. We've moved into month end, and we think there was some decent buying pressure that supported the market, and we now find ourselves in a little bit more no man's land. What we think is going to drive the market forward over the next coming week and over the next coming month, whether that bear market rally will turn into something more sustainable, is exactly what you were talking about just before I came on the show, and that's the macroeconomic data.
So, Greg, it sounds like you agree with both Citi and Morgan Stanley in saying that basically the valuations have to continue to re-rate downward, that we are not done with this repricing. Is that correct?
No, I don't necessarily think so. I think we're in a regime that I would describe as very much a bear market regime. But I think it's been driven by two things. One is an extreme multiple compression that we've seen this year. The type of multiple compression we've seen on the S&P PE, we've only ever seen in a recessionary environment. So our view is that we're in this kind of bear market environment, yet we haven't seen the recession manifest in the macro data yet. So we still think there's a path for the US economy to have a soft rather than a hard landing. And in that type of environment, P multiples, although they're not cheap in absolute terms, we don't think are expensive enough anymore that it's necessarily going to prohibit the market rallying from here. So we think if the macro data comes in a little bit less bad than people are anticipating through the second half of the year, that could actually set us up for an equity market rally.
So do you think that it's good to position for that, given the uncertainty, given the wide band of potential economic outcomes and, frankly, earnings as well?
I think it's incredibly difficult to have super high conviction on where the market is going to be on a 1 week or a 2 week view. But over a medium term view, we think the retracement that we've seen year to date is more than justified by the economic data. So if we do have the data improve, we think it sets ourselves up for certainly some of the more cyclical parts of the economy and the market to perform. So we think the current spot levels for the equity market could remain choppy, but ultimately we think we end the year higher than where we are now.
I mean, Greg, I love the idea of a dead cat bounce, and of course that's written up at BNP Paribas is rebound du chat mort, or something like that as well. It's a phrase we hear a lot, and it's a cheap phrase, but you're a grizzled pro. Describe for us the symbolism of a rebound du chat mort.
Oh, please.
Thank you, Tom. I think the thing which most obviously characterizes this is a lack of new leadership and more just a mean reversion trade. So when you look over the last week, when the market has had this bounce, you look at what has led the market, what has lagged the market, it's the exact mirror in terms of price action of what we saw in the prior month. So I would look for two things to confirm that this is less of a dead cat bounce and more of a sustainable rally. One would be new leadership, so actual constructive moves from stocks driven by better data. And the second thing we'd look at is a further normalization of the volatility market. We'd look for that for that VIX spot level to come back towards the low end of the range.
Okay, this is really important. Give me a VIX level that you've got your eye on here. We're at 26.33 right now. I watch this like a hawk like you do. Give me that level that signifies the end of Les Rebonds du Chamois.
I think if we move lower from here, so we view the lower end of the likely range that we could trade in the VIX to be around 20. We don't see us moving back into a high teens.
Mon Dieu.
2-0. We don't see us moving back into a high teens regime or a mid-teens regime very soon, but we do think we can get to the bottom end of that range around 20, and we do think that would be a good signal that we could be in for a period of more comparative calm.
Greg, I give you incredible credit for maintaining a straight face, as Tom Keene butchers French. I do wonder, going forward, what you see as the dichotomy between retail positioning and institutional positioning, something that you've picked up on, and say that it indicates perhaps more of an unwind in specific names. Tell us about it.
Yeah, I think that's a great question, Lisa, and it really comes to the core of our thesis of what we think could out or underperform through the balance of the year. You know, when we look at equity markets and what drive them, as I said, macro data is important, valuations are important, but ultimately it's positioning and flows that really moves the market. When we go around and speak to a lot of institutional accounts, we get corroboration of what we can already see in the data, that hedge funds have degrossed, asset managers have put cash on the sidelines. Now, that is at odds with the picture that we see in retail positioning. In retail positioning, we still think that there's a lot of excess in the market. Now, the interesting thing about that is those two pockets of investors have tended to be concentrated in different areas of the market. So retail have been much more concentrated in some of these more euphoric, ultra-high growth stocks that have already been underperforming, but still look expensive relative to value stocks, and we think that rotation could have much further to run.
So, Greg, I was actually immediately looking at GameStop, and it's down more than 15% and down ahead of the market. Does this matter to the broad overall averages, or is this just noise on the peripheries?
No, I think any single stock, particularly a small or mid-cap stock, is noise around the edge. Now, we can take a signal from what those stocks are doing more collectively. We put a basket together back in November called the Cappuccino Basket. This was BNP's play on the frothiest names in the market. We've seen that basket half over 5 months. So taking a collection of these smaller idiosyncratic stocks that are not necessarily any one of them going to move the needle, we think is a much better way of looking at it than focusing in on one single name.
Did you say the Cappuccino Index?
The Cappuccino Index, the frothiest names in the market, Tom.
What are you going to do with a basic call here for the equity markets? Away from a Cappuccino Index, is it just about profit and free cash flow forward?
Yeah, I think the best single metric that we can find for timing equity markets is earnings forecast revisions. So whenever analysts are putting through upgrades or downgrades to their forecasts. What we've seen this year is those downgrades have been very concentrated in the growth names. So when you look at the earnings momentum for the NASDAQ, it looks pretty poor. When you look at the S&P, it looks more reasonable. When you look at something more cyclical like the Russell 2000, it actually looks pretty okay. So that's one of the gauges we're looking for. When we move into the next earnings season, that's going to move the needle again. But to the extent that we see better earnings momentum in some of the cyclical names, this is one of the things that is giving me a little bit more comfort that maybe we're heading potentially towards a soft rather than a hard landing.
I'll tell you one thing, Tom, no tickets for us for Roland Garros after that.
Got that right.
Greg Bowder, thank you, of BNP Paribas. Johnny Filion is not going to let him on this show again, Tom.
I thought
you've been practicing your French.
I don't know about the practice of my French, but our love of cats is so sensitive.
Of course. Last time we did this, Tom, the cat mafia called in. I'm not going there.
The cat mafia.
Got nothing to say about cats.
Let's talk about the French Open. Exciting, huh?
Rafa Nadal. Tom, I get so emotional watching Nadal that I can't even watch him play tennis.
Admit, I play dumb, but
deeply invested in that guy. Just phenomenal. And the smile on his face yesterday at the end of that game against Novak, just joyous, Tom.
He's not a young guy in that heat.
No, he's not.
You know, it's something.
And he was upset that they had to play so late as well. I saw a headline, Tom, that the game started in May and ended in June. Went through midnight in Paris. Just unbelievable, and good luck to him in the semi-final.
Well, we'll see there. He's got semi-final, so he's got to play the semi-final, then the final, right?
Yeah, and that'll be number 14 at the French, Tom.
Very good. Okay. Well, we'll have to see on that as well. I see a mixed market. We're sitting here on the data, John, and I'm going to go back to the data this morning, John, and I think that just within all the turmoil, it's not another June 1st. This is some data that matters, as you mentioned, the jolts later.
ISM data, to what degree will we see some form of deceleration here, Lisa, in the ISM a little bit later, and then on to jolts after that, then on to claims and payrolls through the rest of this week?
It's so noisy. I mean, all of the economic data points have had less and less significance as it really just all adds up to a sea of mush. But I do think I get your point.
A sea of mush.
A sea of mush. I was, having breakfast in London. Honestly, I do think that jolts
Did you just call breakfast in London a sea of mush? Is that what that was?
No, there was a lot of...
Lisa.
I actually really enjoyed it. It was I had avocado toast.
Right before the Queen's Jubilee, you're calling English breakfast a sea of mush.
Oh, come on. The Queen's got,
Come on.
for the lunch there, she's got to have a full
It was with
English.
love. I like mush.
Do I get tomorrow off and Friday?
You get an
How's this
extended bank holiday.
Do I really?
Yeah.
So I don't have to come in tomorrow or for payrolls. Awesome. Futures unchanged on the S&P. From New York, this is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Ritika Gupta. Ukraine will get advanced rocket systems and other weapons from the US President Biden made the announcement in an article published in the New York Times. The rockets will allow Ukraine to hit targets up to 15 miles away. The US says Ukraine has promised not to attack targets inside Russia. In the UK, consumers are being urged to brace for inflation getting worse before it gets better. The British Retail Consortium says that fresh food prices are now rising at their fastest pace in a decade. It says fresh food rose 4.5% in the year that ended in May. China is planning for years of COVID zero with testing sites on almost every corner. Tens of thousands of lab testing booths are being set up across the country's largest and most economically vital cities. The goal is for residents to always be just a 15-minute walk away from a swabbing point. The richest person in the world doesn't appear to be thinking much of working from home. Elon Musk apparently sent an email to the executive staff at Tesla with the subject line, "Remote work is no longer acceptable." He wrote that anyone who wishes to do remote work must be in the office for a minimum of 40 hours per week or leave Tesla. And the new Top Gun movie had the biggest ever theatrical debut for a Memorial Day weekend. Paramount's Top Gun Maverick brought in more than $160 million worth of ticket sales in North America through Monday. That lifted the spirits of movie theater operators hoping to bounce back from the pandemic. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
Time for our Memorial Day sale on the Sleep Number 360 Smart Bed. Why choose proven quality sleep from Sleep Number? Because every Green Thumb, 5K, and all-day dance party starts the night before. The Sleep Number 360 Smart Bed senses your movements and automatically adjusts to help keep you both comfortable all night and can help you get almost 30 minutes more restful sleep per night. Sleep Number takes care of the science. All you have to do is sleep. During our Memorial Day sale, save $1,000 on the Sleep Number 360 Special Edition Smart Bed, Queen, now only $19.99. Only for a limited time. To learn more, go to sleepnumber.com.
Time-saving element of Tovala has definitely changed my day, my night, and just makes life easier for me. Tovala is my personal chef.
Tovala. Browse this week's meals at tovala.com.
A Hall of Fame swing. Like Capital Group's new ETFs, there's so much behind it. A lifetime of experience. Honing your skills. Dealing with curveballs, and having a whole team behind you. Introducing actively managed ETFs powered by Capital Group. Can I find an ETF with a whole lot behind it? With Capital Group, I can.
Sure, you should teach him to ride a bike. Then use Greenlight and teach him how to invest in bikes. Teach him to be smart about money, and he'll go far.
Super far! Oh, hey, Mom!
Navigate the world of money together. Invest in your best investment. Greenlight.
Yo, dude, you need some help?
Don't worry about me.
Yo, there's no shame.
No shame? You don't know my family, man.
It's okay to ask for help. Find a licensed therapist at BetterHelp.com.
You may think every weather app is the same until you see WeatherBug over-deliver on so many layers. With millions of 5-star reviews and more free map layers than any other weather app, WeatherBug warns you the moment lightning strikes near you, prepares you for your commute with road conditions, routes, and even cameras. With everything from pollen and air quality to severe storm risks, radar, and satellite coverage, WeatherBug protects you from the unexpected. Used by over 10 million and counting. Download the WeatherBug app today for free.
In principle, we recognize our responsibility as a financial services leader is to help more people and businesses feel secure in their finances and their future. For us, good business has always been about people, from helping our newest investors get started to providing more valuable insights to our most sophisticated investors. We're committed to fostering a more diverse, inclusive, and sustainable world. And working together, we can create a brighter future for all of us.
Enjoy the magic of freshness from nuts.com. Fresh nuts, dried fruits, sweets and treats, freshly roasted, freshly dipped, freshly seasoned, and delivered fast with free shipping. Nuts.com. Fresh snacks from our kitchen to yours.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
On the David Rubenstein Show, Peer-to-Peer Conversations, I uncover the untold stories of the world's most successful leaders. Watch Wednesdays on Bloomberg Television.
My plan is to address inflation. It starts with a simple proposition. Respect the Fed. Respect the Fed's independence. They have a laser focus on addressing inflation, just like I am.
The President of the United States saying respect the Fed, sitting alongside Chairman Powell. Tom, what did you make of this? It was a little more elegant than the former administration, but ultimately making the same point, isn't he?
Yeah.
In just a more subtle way.
Exactly.
Respect the Fed. I respect the Fed, but it's their job, not ours, to sort this out.
I thought, for pros on the street, it was a colossal non-event. I thought it was timid. I thought it was tentative. And the difference is, and John, you were talking about this on the break when we weren't talking about Nadal, and that is that there's a difference of relief from inflation versus moving the needle of inflation lower, as we'll speak to Adam Posen here later.
Well, Tom, that's a point you've been making too. So just elaborate on that a little bit more, what we can do about inflation to bring it down and how we can provide some relief to consumers who are getting really squeezed right now.
Let me take the giant of Brown University, William Poole, and all of his public service. It's real simple. You've got a monetary solution and you got a fiscal solution. In an election year, the fiscal solution is just flat out. You're not going to do a fiscal contraction to slam a nation into recession. So you're on the monetary side, a la Dudley, and what we're arguing about is simply the speed to get there, to get to some form of there, understanding that there's a complete mystery on rate rise.
Over to you, Chair Powell, Tom.
Yeah,
bottom line.
We'll have to see, and I don't know. I'll leave it to Emery Horton to tell me about it. I mean, she was more focused on K-pop than she was on that.
So
meeting.
were you, to be fair, Tom.
Expert on K-pop, teaching a course there Wednesday nights is Wendy Schiller at Brown University, director of the Taubman Center for American Politics. Wendy, I want to talk about one-term presidents. And of course, I'm being bold here and suggesting maybe Mr. Biden, like Mr. Trump, is a one-term president. What do the last 2 years of a one-term president look like?
Well, obviously, Tom, you're pointing out a sort of speculation right now. Two fronts. One is, what kind of Congress do you work with? Do you work with a narrowly controlled Democratic Congress or a narrowly controlled Republican Congress? And we don't know that yet. So we're going to have to wait and see. Presidents tend to look towards executive orders. They tend to try to do things to get around Congress when they have that circumstance and do as much as they can through the executive chain rather than a legislative congressional chain. There's also going to start to be a bit of a free-for-all in the Democratic Party if it becomes clear that either Biden doesn't want to run or can't run or, will step aside. Right. Then you've got those dynamics, which will get very, very messy pretty quickly when those signals appear.
Wendy, years ago, you sat with me at the bar at the Black Pearl in Newport, Rhode Island, and you said, Tom, you got to read your Alan Nevins. So I read my Alan Nevins about the 1890s. To me, it's a lot like the 1890s pre-Teddy Roosevelt with huge polarized America. Is that close?
You're spot on, absolutely right. If you look at the levels of polarization, and people do these figures all the time, the gap of polarization and division was as high as it was then as it is now. The difference is the range of issues is so much broader, right? The government does so many more things that we are divided along many more dimensions than we were then, but they were still very divided. And the parties were in flux, particularly the Republican Party was really a mess in the 1890s and the 1900s. So we're going to have to see if the Republicans can get out of their own way moving forward. So Biden may have not as difficult a time, theoretically, if the Republicans are divided amongst themselves. And that's going to depend on the big T, meaning Donald Trump. How much does he intervene? How much does he pressure members of Congress once they win the majority? If they win the majority, you've got terrible economic conditions, I think, for the Democrats, you rightly point out. But there are other issues on the horizon. Gun violence, sadly, is very much present again. And, of course, we have abortion. So these can mobilize constituents that didn't vote for or who the Republicans were already counting on. And it raises levels of uncertainty going into November.
Wendy, if you were advising President Biden on how to rearrange his staff and how to position best heading into the midterm elections and, frankly, out of them, what would you recommend?
Well, he's got a Commerce Secretary. I'm a little biased. She was the governor of Rhode Island, and I'm from Rhode Island. But she's good. She's good in crises. She's good on TV. And she got national attention handling COVID in our state. So if you can get that kind of attention from a little state like Rhode Island, think about what you would do on the national stage about the economy. So he's got to put more of his cabinet members out front, which, Obama didn't do either. And so you have to think to yourself, you've got some stars, people that can help you, get them on the road and get them out there.
Professor Schiller, we saw Secretary Raimondo in Davos. She was wearing a Browns men's hockey T-shirt. She was like exercising, getting in a couple miles.
Well, she didn't go to Brown, but she got along well with Brown.
She financed it.
Thank you, Tom. Wendy,
I didn't go to Brown either, so.
Yeah, but she financed it.
But Wendy, your view here is actually exactly counter to a lot of what people are saying, which is to actually get rid of cabinet members. You're saying push them forward more, make them more visible, make it less Biden focused. Talk a little bit about how unpopular your view is and why that might work.
Well, I have been advocating staff change on the communication side for Biden. And Psaki did a good job for a while, but it was time for a change. We'll have to see how that change works. But the general infrastructure, the staff that's advising him, he's got a lot of long-time people. He's very loyal. He's been around a long time. But you need people with a fresh perspective, people who are on the ground, newer people, younger people, perhaps, not to be ageist. But you need to, I think the internal staff, I think the circle of advisors has to change. And the communication staff, I think, has to ramp up better. But presidents don't like to do this. They finally got there. They want to run the show, understandably. But then you're Jimmy Carter. And that didn't turn out too well. Is
Joe Biden Jimmy Carter?
Well, in the sense that he knows a lot, right? We know that he's been there a long time. He's been in the hot seat. So and he's with it. People claim he doesn't know what he's doing. I don't think that's true at all. So, he's got to let go a little bit and let the people who are the next generation, who are good, who've proven to be good in communications in his cabinet, out the door and send the message out that the Democrats are better in economic crises than Republicans, which history shows to be true. We're not hearing that message at all.
Wendy Schiller, thank you.
It's great.
Wendy, great to catch up, as always. Headline just caught my eye. Just want to bring it up just quickly. A financial services company, S&P Global, suspending guidance for 2022 on macroeconomic conditions. Lisa, if that doesn't tell you a lot, I don't know what does.
I mean, this is a company that literally tracks other companies and their earnings.
Literally, that's what they do.
Literally, that is what they do. And they have no clue. So that tells you everything you need to know about how difficult it is to get any visibility right now whatsoever.
Unbelievable, Tom, just to read that headline.
I've never seen that. That's extraordinary, John. You're absolutely right.
Isn't it bizarre?
It's the times are bizarre. That's perfectly said, but it's not S&P Global. It's bizarre. It's the times we're living in. The math of this, John, way out on the right side of the equation is an epsilon, a Greek fancy letter that means we don't have a clue what we're doing, and that epsilon now is original.
Isn't it your job, though, if you're S&P Global, to have a clue what you're doing on stuff like this, Lisa? How many examples of this have we seen now?
Yeah, and they talked about significant deterioration in macroeconomic backdrops. I wonder how much read supply chain disruptions, the issues in China, the prices of some of the materials, but also debt issuance, right? Because they rate debt issuance. And the unclear aspect of how much debt companies are going to want to raise, given how much higher interest rates are, is a big wild card for not only the S&P, but also for big banks.
A little bit awkward the next time you put out a rating, isn't it? On a country and your own company.
We have no idea.
Can't provide any guidance on the future. This is Bloomberg.
Healthcare professionals agree that sleep impacts everything you do. Chic Performance Sheets are engineered to keep you cool, dry, and comfortable. Chics are the world's most breathable, moisture-wicking, ridiculously soft sheets with superior stretch, even tested and proven on adjustable beds. Upgrade to Chics now.
Go to trycheeks.com to get 25% off, and we'll ship them for free. Plus, we'll include 2 additional pillowcases at no cost. That's over $100 in savings. Go to trycheeks.com now.
What if you were a global bank who wanted to supercharge your audit system? So you tap IBM to unsilo your data and start crunching a year's worth of transactions against thousands of compliance controls with the help of AI. Now you're making smarter decisions faster, operating costs are lower, and everyone, from your auditors to your bankers, feels like $1 million. Let's create smarter ways of putting your data to work. IBM, let's create.
Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
Great question. Great question. Best question I get all night.
Bloomberg, top experts, great questions.
Selling a home is expensive and stressful, so we set out to create a better home selling experience with a network of the most successful real estate agents in America that'll sell your home for as little as a 2% commission.
The icing on the cake with the Ideal Agent was that we saved $12,000 in commissions.
We would definitely use Ideal Agent again. The whole process was so positive for us.
Excellent, excellent service.
Getting right to the point, hiring Ideal Agent, I wish we would have done that sooner, and we would have saved 6 months of time and mortgage payments that would have probably never happened if we would have just gone with them first.
They were so stress-free. The whole process was amazing, and I would definitely recommend them.
We certainly recommend Ideal Agent now to all of our family, all of our friends. It's just a great experience.
We are not a discount brokerage. These are top local agents that'll get you the best results.
Script is my time to listen.
I can listen at home, in the car.
It's a way for me to stay informed, get entertained.
Script is ebooks, audiobooks,
magazines, podcasts.
Script, it's awesome.
I had such anxiety. Sometimes it felt like I couldn't breathe. Fortunately, one of my friends told me,
"You've got to relax. You're going to get yourself sick."
This is Sandra. She gets her financial advice from her mother. This is Tony, who gets his financial advice from his old college roommate. And this is where Frank used to sit. He got smart about retirement at smartasset.com. They matched him with vetted fiduciary financial advisors to help turn his retirement priorities into a retirement reality. Everybody sure misses Frank.
Can someone get that?
Smartasset.com. Take our free quiz and be matched with up to 3 vetted financial advisors. Get smart about retirement.
I'm Jeff from nuts.com. When my grandfather started this business, he relied on freshness, quality, variety, and service. We still deliver the freshest nuts, dried fruits, snacks, and sweets to families all around the country. Nuts.com. Enjoy free shipping on your first order.
I think the Fed is very aware that the U.S. economy is already showing signs of easing, that we're already seeing cracks in the armor.
Companies are still able to pass costs through.
But again, as we reach higher and higher price levels, that becomes more difficult.
There's this frustration with where policy is headed.
Tightening will get us down to about a 4%, but getting down to a 3% probably is going to engineer a recession.
The reality is, I don't think they're going to be able to raise as much as markets have priced in.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Live from New York City for our audience worldwide. Good morning, good morning. This is Bloomberg Surveillance on TV and radio alongside Tom Keene and Lisa Abramowitz. I'm Jonathan Farrow. Futures just about positive, 0.01%. TK, new month, same problems.
New month, same problems. Deceptive market today. Really, John, just to churn to the market. We don't even need to go into it. We'll do a mini data check here to get to the major call, John, which is what happens not in this June, what happens in July, what happens in August, complete, total mystery.
And Tom, how do we reset in September? September 21, that's the date in your diary, the date in so many people's diaries. What happens when this Fed gets around a table? They hiked 50 in June, they did it again in July. What's in store in September?
What's in store is the data's going to be there, and by that time, John, corporations are going to really begin to adjust to the cards dealt to them, and I'm not predicting a massive cost-cutting by corporations, but it's got to be in their mind, and particularly to speed up their rationalizations of 2023.
Because right now, Bramo, these corporations are struggling to get any visibility on the future.
Yeah, you pointed out this headline, and I'm actually just sitting here thinking about it. The S&P Global, this company, suspending 2022 guidance on macroeconomic conditions. Basically, they have no clue. Their job is to rate companies. Their job is to actually have visibility into a corporate activity and what is going to happen ahead. They have none. What does that tell us about how much visibility there is? And then how does the Fed arrange on this, which is the reason why so many people think that ultimately it's whatever way they decide to shift that's going to determine the path of the markets, because everybody else just sees a whole slew of mush.
So many people are getting caught wrong-footed. We've seen it corporation across corporation, industry across industry, of corporations and leaders, policymakers struggling to gauge where demand is going, Lisa, and struggling to recalibrate their company to have the appropriate level of capacity to meet that demand. And we've seen that repeatedly over the last 12 months and over the last few weeks, mistake after mistake after mistake coming to the surface.
Capacity with respect to goods and capacity with respect to employees. And I think this is important. It's the reason why we're watching that JOLTS data that comes out later this morning. How many job openings are there? When do companies start to pull back on their employment because they don't want to be caught wrong-footed, overly employed, paying people higher wages at a time when there is such fluctuation in terms of the macroeconomic conditions?
Well, Elon Musk has a plan, Tom, over at Tesla. Remote work is no longer acceptable, Musk says. Anyone who wishes to do remote work must be in the office for a minimum, and I mean minimum, of 40 hours per week or depart Tesla.
This is a tinderbox, John, and I don't know which way it cuts. I don't have any wisdom on this at all, other than senior officers running out of patience seems to be the rate of change here.
Do you remember this time last year, Tom? Do you remember, get back to the office by Labor Day? Labor Day. Enjoy the summer, because in September it's back to work. What happened?
It didn't happen. I mean, in the Midtown Manhattan folks where we're located, it decidedly did not happen. I don't know what your story is. Tell us about your story. John, do a data check here and save me right now.
Before people tell us about their stories, phone in. We should do a segment on that. Phone in from your trading floor and tell us about your story.
And speak French.
And do it in French.
Damien Sassauer can phone in from Turks and Caicos. It works.
Futures positive about 0.05%. Really flat month through the month of May. Kicking off June with more of the same. Yield high by a couple of basis points. Bramo on a 10-year, 286.22.
This is what we're watching today. Quantitative tightening supposedly starts today, formally anyway. It doesn't actually start until June 15th, when about $15 billion of treasuries rolls off, comes due. How much can they get the balance sheet down, the $9 trillion balance sheet, at a time when a lot of people are expecting this to have a bigger influence over markets than many people have priced in? 10 a.m., I'm watching this because the Bank of Canada, frankly, has been a sort of precursor to the mood in other central banks around the world. They're poised for their second 50 basis point rate hike at today's meeting. This comes on the heels of record CPI, like we've seen all over the world, but also in Canada. Do they get more aggressive? Do they stay more aggressive? Do they indicate they will remain so going forward? And what does that mean for the Fed Fed for the ECB, especially as the hawks start to get louder. And today, talking about hawks getting louder, we hear a slew of Fed speak, including New York Fed President John Williams at 11:30 a.m., St. Louis Fed President Jim Bullard at 1 p.m. Also, the former New York Fed President Bill Dudley joining us here on Bloomberg Television in about 45 minutes time. John, you talked about that JOLTS data, the job openings data. How much does it start to come down? We have nearly 2 job openings per unemployed American. How does this actually trickle out into a labor market that by all accounts is overheated, by all accounts isn't really getting that much better? And that is a big concern, clearly, for the Federal Reserve.
It's this perfect picture this Fed's trying to paint and ultimately trying to realize. And Lisa, it's really difficult. You've got to bring down job openings, take out some demand, some heat from this economy, rebalance the labor market without seeing unemployment go much higher. That's a tough job to try and execute.
Which we will hear from Bill Dudley about how to be realistic and what realistic guidance from the Fed might look like. I'm sure he'll have a lot of things to say on that.
Looking forward to that. Joining us now is Stuart Kaiser, the head of equity derivatives research over at UBS. Lucky to have Stuart with us in a studio. Stu, let's start here. Big squeeze last week. You called it a low conviction rally. Talk to me about how you saw investors using that rally to reposition, readjust and protect themselves once again to the downside.
Yeah, great. Good morning, Jonathan. Yeah, and that is how we termed it, I think, mainly for 2 reasons. One is that, during the rally, we just saw investors adding to hedges. So put open interest rose pretty considerably across most U.S. benchmarks, across U.S. home builders, and in the retail sector. So it did seem like people were using a higher price point to kind of reset hedges as the market moved higher. And then secondly, frankly, it was just a very low volume rally. So there wasn't a whole lot of participation either in the option side or in cash market. So it certainly seems like either folks are out of the office or they were just using this as an opportunity to kind of reset their protection.
Stuart, what does that mean for the NASDAQ move that you've been waiting for quite a while now over the last few months?
Yeah, I think what it means is you've really hurt sentiment, over the course of the last 3 months, and it's going to, take a preponderance of data to get people more engaged in the market. We think that's underway. You've had 2 CPI and now 2 PCE prints that we think look relatively positive for our inflation outlook, which, calls for a pretty significant decline in inflation, over the summer. Inflation break-evens are lower, rates have come in a bit. So I think all of this is incrementally positive, but really it's a critical mass issue. And I think for investors, we haven't, reached that critical mass. And folks are still focused on recession risks if the Fed needs to aggressively tighten. And until we see, again, a critical mass of inflation data, I think the market's going to be pretty cautious about executing that view.
I heard a little sigh as you spoke, and I'm wondering how difficult it is right now to be a bull.
It's not easy, but I mean, if S&P can, get rid of their guidance, I guess I can get rid of mine too. So, that'll make it much easier for all of us. Look, it is very difficult. I think, we view this as kind of a 3-step process, and we're in step 2, which is, essentially accumulating enough data and evidence that you can be confident that this decline in inflation is underway. It's going to take some time, and with sentiment as negative as it is, you're also overcoming kind of the animal spirits, aspect of this as well. So it's been difficult, but, we're trying to, stay close to home, which is focus on the fundamental data. And we do think that data is moving in our direction, albeit relatively slowly.
Well, how do you even look at the fundamental data? You mentioned S&P Global, so let's go there, right? Suspending 22 guidance. What's notable, as Marty in the newsroom points out, is that they just gave guidance on May 3rd. So that indicates that in just a span of about a month, things changed so rapidly that they withdrew it. What does that mean in terms of what you should be clinging onto and how to interpret data that's already dated by the time it comes out?
I think it's a great point. I think the same thing happened to Snap, if I remember correctly. They posted guidance and then quickly kind of, shortly thereafter cut it as well. It's really difficult. I think, honestly, the confidence intervals around these forecasts are incredibly high. I think that applies to us and for the Fed as well. I think you need to track the high frequency data as much as you can. And really, I think to us, it's identify the signposts you're tracking and really kind of focus on the data in that way. And, from us, from an inflation perspective, that really gets back to wages. So it's looking at, composition adjusted average hourly earnings. It's looking at, kind of core services and really keeping a close eye on what that is, because we think that is kind of one of the key signposts to matter. So I think, look, the data is going to be volatile. I think you need to identify a few signposts that you're comfortable with, that you think are going to ultimately determine the outcome, and follow those, frankly, as closely as you can, and not listen to the radio too much, I guess. I don't know.
Well, be careful what you say there, Stu. Did he say that? It's not my fault, Al. I'm sorry. Okay, Stuart, I want to talk about the easy move on pandemic inflation from 8% down to whatever percent. How do equities respond when we get to 5% inflation?
Look, I think the process of getting from 8 to 5 is going to be very, very positive for equity markets. I think the question, and
then what?
That's the big question. That's the debate we're having with investors. It's not necessarily whether it's peaked; it's the rate of decline and what level it kind of settles at. And we think it's going to get back into the 2 to 3% range on core inflation by the end of this year, and that's on a year-on-year basis. But to your point, if we get into the 4 to 5 range and it looks to be stalling out there, I think that's actually quite a negative outcome for equity markets, because then the Fed is going to have to probably slow demand materially. So the debate really is rate of decline and what level we settle at. And in either case, though, I think there is a tradable window there. If you go from 8 to 5, I think risk assets will respond positively. If you think we're going to settle at 5, then that window is shorter, and you need to approach it maybe using options in a more risk-adjusted fashion. If you think we can get down to 3 or 4, then I think you can run more risk.
John, I don't know. It was Stuart Kaiser on radio and television.
Turn it down, apparently. Tom, is Stuart Lab back?
So
I think he is.
Yes.
Stuart Kaiser, UBS. Stuart, great to catch up, buddy. As always. TK, I think Mohammed mentioned this with you guys last week, just the potential for a stop-start from this Federal Reserve, that even if they do have to pause in September, ultimately, to Stuart's point, if you settle down at 5, you've got to go again. And you've got to go again.
And what's important, what Mr. Kaiser said there, was the idea of core versus top-line inflation. The media is focused on 8%, 7%, all the ugly numbers. Core is 6-ish right now. That's still way too high. But what does core do if it gets to 4?
I'm just looking at the estimates for next week for headline. June 10th is when we get that read on CPI. 8.3% the previous read. Survey at the moment, there's only 4 estimates in so far. 8.2%, so far still with an 8 handle. And Morgan Stanley with a pretty punchy estimate from Morgan Stanley too. We'll get into that in just a moment. Futures are positive on the S&P by about 0.1%. The Nasdaq just about negative by not much at all, and yields are higher by 3 basis points. 287 from New York City this morning. Good morning to you all. Kicking off a month of June with a flat market.
On radio.
This is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Ritika Gupta. Treasury Secretary Janet Yellen says she got it wrong last year on inflation. Yellen made the admission in an interview with CNN. Last year, Yellen predicted that elevated inflation wouldn't pose a continuing problem. Now she says she didn't fully understand the circumstances. Meanwhile, the Federal Reserve is about to deploy a second tool to curb inflation alongside higher interest rates. It will begin shrinking its $8.9 trillion balance sheet. Officials don't know how effective that will be. They say it should cool price pressures by tightening financial conditions. And the U.S. is ramping up military support to Ukraine. President Biden says he'll give the Ukrainians advanced rocket systems and other weapons that will allow them more precision in attacking Russian targets. The weapons will let Ukraine hit targets as far as 50 miles away. The U.S. says Ukraine has agreed to not use the weapons to attack targets inside Russia. The city of Shanghai reported its fewest coronavirus cases in 3 months. That came on a day when residents celebrated an end to mandatory home isolation for most of the city. Shanghai saw just 15 new infections Tuesday. That's a dramatic drop from the peak of more than 27,000 a day in April. And Deutsche Bank has replaced the CEO of its DWS group hours after a police raid at the asset management. Ashoka Woermann will be succeeded by Deutsche Bank executive Stefan Hoops. The raid had to do with allegations that DWS made unsupported claims about ESG investments. Global news 24 hours a day on air and on Bloomberg Quick Take. I'm Ritika Gupta. This is Bloomberg.
Bloomberg Surveillance is brought to you by Infosys, a global leader in next-generation digital services and consulting, helping you navigate your next.
In a global economy, there are countless moving parts. If you want to grow, you've got to know. Vertex, cloud-powered tax tech that enables frictionless transactions, invoicing, and payments. Companies who know, go with Vertex.
Only at Vanguard, you're more than just an investor. You're an owner. That means that your goals are ours, too. And Vanguard Retirement Tools and Advice can help you get there. That's the value of ownership.
This is real-time business. With so much change and uncertainty in the world, companies are rethinking how they plan for the future. For more on this, we're joined by Raj Sharma, EY America's Vice Chair Consulting. Raj, how are you advising clients to future-proof their business in this environment?
Disruption is here to stay. Strategic planning and transformation are key. When we're sitting across from our clients, we advise them on three things. First, don't go at it alone. Make sure you're taking advantage of the digital ecosystem around you. Second, understand the impacts of digitization on your business processes, data you're creating, and insights that you can drive. Third, and the most important one, focus on the culture, focus on people, focus on creating an environment of innovation, an environment of taking risks, and an environment of retention.
This thing, it's making me get an ice bath again.
What do you mean? These straps are mind-blowing. They collect hundreds of data points like HRV and REM sleep, so you know all you need for recovery.
And you are?
I'm an investor in Invesco QQQ, a fund that gives me access to NASDAQ 100 innovations like wearable training optimization tech.
How long you...
I'm done.
Become an agent of innovation with Invesco QQQ.
I'm okay.
Before investing, carefully read and consider fund objectives, risk, charges, expenses, and more in prospectus at Invesco.com.
Here in London, in Sydney, in San Francisco.
9 a.m. in Beijing and Shanghai.
Good morning, everyone.
Have a great evening.
To recap the headlines.
You do not want to miss this
How
story.
are you thinking about those dynamics?
Greater constraints and tighter regulations are impacting the volatility of the commodities markets. Bloomberg's enterprise solutions deliver powerful end-to-end support for your commodities workflow. Gain deeper perspective on our planet's valuable resources. From data analysis to price discovery and beyond. Tap into the world's most advanced commodities solutions.
Earnings season continues.
There's so much nervousness in the market right now.
This market punches you in the face.
Bloomberg is fastest with the numbers and analysis.
Big numbers from Disney.
It just slammed expectations.
Bloomberg, the fastest numbers and analysis you trust.
We have unique economic strengths, which position us well now to focus on this challenge, which is bringing prices down. Obviously, the Federal Reserve plays a primary role in that, but fiscal policy and the economic choices that we make with Congress play an important role as well.
Brian Deese there, the director of the National Economic Council, on the moment we're in right now. Futures on the S&P positive by 0.13% as we kick off the month of June, closing out May with a really flat market, positive 0.01% over the month. Yields are higher by about 3 basis points on a 10-year, 287.31. No drama here. Euro dollar 107.14, negative 0.2%. Some drama here for next week, Tom. June 9th, with the ECB decision just around the corner.
The ECB decision is there, and part of it's commodity-based. And, John, you know, Brent crude 117.30 after the fireworks yesterday is still, to me, elevated from where we were X number of weeks ago. And I noticed, John, Newcastle coal down in Australia, not out to new highs, but breaking higher again.
We were whipsawed yesterday, Tom, by that report in the Wall Street Journal that maybe OPEC ditches the plus and goes without Russia and ultimately goes forward and does some kind of production deal without them.
Yeah,
what do you make of that? I mean, the market completely turned around on it.
Yeah, I just think it's noise, and, you know, there's an OPEC noise, and we all need to do, I think we need team surveillance in Vienna again for their next 20-minute
It's noise, but you want
meeting,
to finance a trip and cover it.
You know,
okay.
Team coverage. But when I look at it, John, to me, it's just we're sustaining here nicely above 100 a barrel.
But one number matters, Tom,
means.
and it's not that one. And Anne-Marie puts it out every single morning now. It's the average price of gas.
AAA unleaded there, breaking out the new highs yesterday. We'll see what the quote is this morning. Anne-Marie Horton joining us now, our Bloomberg Washington correspondent. Anne-Marie, I want to go to the actual policy now. And we see in China moments ago an $800 billion infrastructure, whatever. I don't know what it is. It's $120 billion U.S. supposedly. I don't know what it is. Where is the fiscal impulse of this White House? That's one thing they can do, is heat it up a little more into the election. Can they?
Well, Congress would have to help them act, right? And so far, this administration hasn't been able to get even every single member of their own party on board. I'm talking about some of the provisions that they want to do when it comes to the the Build Back Better proposals. Potentially before the midterm elections, you could see movement on maybe prescription drugs and also some climate provisions. But that big package we were talking about this time last year, that's not happening before November.
Are the senators from West Virginia and Arizona, are they diminished in power as we go into the summer, starting this June?
I actually would argue that potentially they have more power in these final months, that they are likely going to wield this power that they probably potentially, or potentially not probably, they potentially may not after the midterm elections if Republicans are able to snag a few more seats. So right now, really, their positions have a tremendous amount of power because it's the 11th hour for this administration this summer to try to get anything done that they can only get done if they have every single Democrat on board.
Anne-Marie, what a busy couple of days for this administration. Let's go through it piece by piece. We had a report from NBC News yesterday that the president was becoming increasingly frustrated by those around him also, and wanted to sharpen the message. We've had an op-ed piece in a Wall Street Journal on inflation, in the New York Times on foreign policy, a mea culpa from his Treasury Secretary, and a meeting with the Fed chair where it felt like it was more of a it's them, it's not us kind of scenario over inflation. What do you make of what's transpired over the last few days?
Yeah, that was a bit of a pass-the-buck photo op, and then Brian Deese only came out to reiterate that message that this is the Fed's problem. We know that the White House aides have told us that they are making this concerted effort in June to refocus and talk about the economy, because this is the #1 issue that is really starting to hit them very badly in the polls. I believe it's the earlier poll this month from Washington Post. It was 9 out of 10 do not agree with how the administration is handling the economy. And the biggest issue, of course, is inflation, consumer prices. And talking about that NBC poll report, Jonathan, and also some stories in Politico, this is something the administration focuses on. Like every day, I check gasoline prices and I tweet about it. This is what Ron Klain does as well when he wakes up. And it doesn't matter what the administration puts out in the New York Times, in the Wall Street Journal. If you have a car or you're walking on the street in America and you pass a gas station, that is advertised every single day.
Anne-Marie,
the price of per gallon.
So let's end where we began with this report in the Wall Street Journal about the potential for OPEC Plus to exempt the Plus, Russia, basically, from some of the production targets. Basically, a nod to the United States, to European nations, by Saudi Arabia, saying, you know what, maybe we will kick up production substantially to offset the fact that Russia is decreasing its presence on the world oil stage. How significant is this, and how much does this have to do with the trip of President Biden to the Middle East?
Two things. One, I would say that Saudi and Russia are still definitely working together. You have Sergei Lavrov in Riyadh today. So I think that speaks volumes about where the Crown Prince and the kingdom view their relationship as well and want to keep that relationship with the Kremlin. But if this is to be true and the plus part of OPEC Plus starts to diminish, I'm not sure if so much of this is the Saudis really trying to make sure that they're falling in line to what the United States and maybe other consumers wanted, even others saying that how can you do business and have this partnership with Russia given the war in Ukraine. If they don't have the oil and they cannot export it and they cannot reach their production limits, then what does the new deal become? Saudi and the UAE, the only two that really have the spare capacity, it's inevitable that they're going to have to step in.
AMH, thank you. Down in D.C., outside of the White House, Anne-Marie will catch up a little bit later. Big turnaround in the oil market yesterday. If you're just tuning in, crude pushed 120, 119.98 at the highs. Then off the back of that Dow Jones story, Tom, big turnaround, 116.22 right now on my screen.
Yeah, it's very, very volatile, and, you know, you follow it technically and the rest of it as well. But, John, I would also look at the blended indices. I think it was you, John, that mentioned copper yesterday as well. I got to be honest, I'm watching copper more than anything.
Well, Tom, I give you credit to bring up China time and time again over the last few weeks and pushing that through the commodity market.
I'm sorry, this is a huge deal as Shanghai comes out of lockdown. We learned from Leland Miller, it's one big mystery. It's like S&P Global and macroeconomics. Nobody really knows. I think people understand I'm a Pacific Rim optimist on this. I think they're going to come out and you're going to see a boom, boom, boom.
Again, Tom, what do you make of the leadership, though? Do you think that we've got the support for President Xi right now? Because I can't get any clarity, visibility on what's going on any of those topics.
I'm going to defer to international relations specialists on that. I listen most closely to Elizabeth Economy of the Council on Foreign Relations.
Brent crude 117, WTI 116, a turnaround in this oil market as we start to think about China and demand clicking back in, and maybe the potential for OPEC to do something they haven't done in quite a while, have a meeting longer than 15 minutes. Futures on the S&P up about 0.1% on the Nasdaq 100. We are unchanged. Euro dollar 107.11, negative 0.2%. From New York, heard on radio, seen on TV. This is Bloomberg.
This list is now Angie, and it's easier than ever to get your projects done right. Inside, outside, big or small, Angie helps you find the right solution for whatever you need done. With Angie, you can connect with top local pros and see ratings and reviews. Just search or scroll to see upfront pricing on hundreds of projects. And when you book and pay through Angie, you're covered by our happiness guarantee. It's easy to make your home an Angie home. Check out Angie.com today. Angie, and done.
Sleep. Feel. The Chic's difference is real. From the light to the dark. Pull back. Fall in. Exhale. Woo! Hot damn. No, ma'am. So chill all night. On a cloud like a feather. Smooth, soft, nothing better. Just right on the night. Visit trychics.com and get 25% off this Memorial Day with a 60-night guarantee.
Politics to the world of business. Balance of Power with David Weston. News, analysis, insight from and about politics power players. Weekdays. This is Bloomberg.
Selling a home is expensive and stressful. So we set out to create a better home selling experience with a network of the most successful real estate agents in America that'll sell your home for as little as a 2% commission.
The icing on the cake with the Ideal Agent was that we saved $12,000 in commission.
We would definitely use Ideal Agent again. The whole process was so positive for us.
Excellent, excellent service.
Getting right to the point, hiring Ideal Agent, I wish we would have done that sooner, and we would have saved 6 months of time and mortgage payments that would have probably never happened if we would have just gone with them first.
They were so stress-free. The whole process was amazing, and I would definitely recommend them.
We certainly recommend Ideal Agent now to all of our family, all of our friends. It's just a great experience.
We are not a discount brokerage. These are top local agents that'll get you the best results.
This is Scribd, an app that gives me access to ebooks, audiobooks, podcasts, and more. With Scribd, I can get in my steps in countless pages. Scribd makes every moment a reading or listening moment.
Hi, this is Lisa from 4imprint. Yes, I like 50 welcome wows, 300 customer, I love it, and 200 team member, oh yes, certainly. You know we got some brand new woohoos.
Dial up the wow factor with promotional products from 4imprint. We specialize in awesome items that are certain to awe and guaranteed to deliver some ooh yes. From apparel, backpacks, drinkware to high-tech items.
Wow. I love it. Woohoo!
Go to 4imprint.com and find some wow now. 4imprint, for certain.
What are you gonna do?
Here! Grab onto me! We can double up!
No, don't worry about it. I'm good. I don't want to detract from your experience.
Just give me your hand!
No, don't sweat it. Probably just a passing thing. The harness fits great, though. Snug.
Sometimes you just need some help. So if you need therapy, find a licensed therapist at BetterHelp.com.
After all the choppiness we've seen over the last couple of weeks, this is pretty muted stuff so far. Tame. Futures positive by a little more than 0.1% on the S&P. On the Nasdaq 100, totally unchanged. The story for the equity market over the last week, massive squeeze. Big move higher by more than 6.5%. Stuart Kaiser of UBS about 20 minutes ago calling it a low conviction rally and pointing out, highlighting how investors use that rally to add downside protection. For the equity market for Citi, we talked about it already this morning. They don't think we've seen a bottom. They don't think we've seen a high in Treasury yields. Let's talk about this bond market, 2s, 10s and 30s, and focus on the 2-year, as the 2-year yield came in last month by about 15 basis points. 257.88 right now, up about 2 basis points on a session. Not just about the Federal Reserve here for the bond market, but also about the ECB, with Deutsche Bank talking up the potential for a 50 basis point hike from this ECB, Tom. Maybe not in July, but later in Q3.
So they do that. What happens? What happens the morning after?
The morning after where? To markets,
they
to
raise
the FX
50
market.
beeps.
They get back to zero, Tom, on the depot rate potentially. That's a big turnaround. We've been in negative territory since 2014.
I agree. But I just think it'll be good. It'll relieve uncertainty.
Do you think it will be good if we start to see the economic data go down? That's the problem the ECB has, Tom. It does not have the economy the US has.
That's true.
In the Eurozone.
Fair.
That backdrop for growth in Europe is really fragile. Does not have the strength in the labour market that the US economy does either. It's a very, very different scenario, Tom, I think.
It is. I'm just trying, John, I'm just trying to get a road trip to Vienna, and then on our way we'll stop at Frankfurt for ECB.
So Vienna on Thursday, and then you don't want to do the Jubilee? Throw that into the mix as well?
That's coming up at a meeting this afternoon as well, with the Jubilee starting tomorrow.
I look forward to the planning meeting a little bit later.
Me and Lisa will be in London because John will be on an extended super bank holiday weekend.
I think Bramo's going to give that a miss too, Tom. Can I get to the commodity market just briefly?
Please, the commodity market.
Thank you. Please. WTI very close to 120 yesterday. I think 119.98 at the highest. Then a Wall Street Journal report came out and suggested that OPEC Plus could drop the plus, be negative Russia, and ultimately have some kind of production deal. That's the speculation now. The speculation fueled by that journal report. Right now, crude off the highs of yesterday, but positive on the day by 0.9%. WTI 115.69. And for many of you, you don't see that price. The price you see is the price of gas, Tom, and that's pushing 470.
Yeah. Well, you know,
that's the problem.
That's where we are. I mean, we're elevated, to say the least, and many people say higher through June.
Is that your version of the Fed minutes?
Yeah, several.
Several, a couple, many, perhaps. That's the cross-asset price action. We've got a treat for you. If this wasn't enough...
This is a treat.
We've got some single names with Bramo. Good morning, Lisa.
Good morning. I just got to say, I love standing over here and listening to you guys try to figure out our road trip schedule. I will go where I am told. I'm happy to remain silent. What I'm looking at today is the partition between services in the tech world versus hardware. What we are seeing is services continue to be robust. Demand is there, despite some of the concerns about supply chain disruption. Salesforce earnings came out yesterday after the bell. They actually increased their projected earnings, their shares popping more than 9%. Amazon and Alphabet, the reason why I looked at those is because these also are big web services, cloud service providers. Those shares also gaining ahead of the market. Amazon up about 1%, and Alphabet, Google, we should call it, up about 0.4%. Tom, you were talking earlier about Tesla. I was also looking at Tesla shares after Elon Musk came out and basically said, if you don't come to the office 40 hours a week, and I mean the main office, find another job. Those shares down 0.6%. How much of an aberration is it for one of the representers, excuse me, of the younger crowd, of the more modern, more millennial crowd coming out and saying this? To me, that was my takeaway from this, because that's unusual. Typically, it is the younger set that are more amenable to staying and working from home and being more flexible. How much does this go against that image right now that Elon Musk has been trying to go out there?
It's going to be an HR football for the next 12 months, no question about it. I should note the death rate from COVID today, tipping again constructively in one survey, under 300 deaths. That's a positive sign, Lisa.
Honestly, what does Elon Musk do that's not an HR football? That is one question. HP reporting, am I wrong?
No.
Well,
Can I just clear one thing up about the millennials? I think the millennials get too much flack. It's the Gen Z. Gen Z doesn't not only want to come into the office, they don't want to work, Lisa. So I'm not sure there's a problem for for Elon Musk over at Tesla because they're probably not working over at Tesla.
You're worried about the cat mafia. Worried about the Gen Z millennial.
They do not want to work.
Honestly, you can make whatever argument you want. What it really represents to me is it cannot be bifurcated between young and old in terms of whether to come back to the office or not. It is idiosyncratic and it is specific to different cultures. And I think that that seems to be one takeaway. HP reported earnings and they came out better than expected. Those shares are popping. Those are more of the hardware. Basically, demand there is robust, which is interesting. But the supply chain disruptions have been an issue. And Hewlett-Packard Enterprises, HPE, that is the service side reporting after the bell. Those shares gaining with the anticipation that perhaps they'll provide something of a sales force.
Lisa, thanks so much. This is not a small matter. Lean forward and listen, Global Wall Street. There's a guy up in Connecticut, runs a small shop, who says cash is trash. Deborah Cunningham joined Federated when she was 12 years old. She's been doing this forever. She is the absolute dean of global liquidity markets and CIO at Federated, Hermes, CFA, Pittsburgh, and the rest of it as well. And Deborah, you go after Mr. Dalio and you say cash is an asset. Discuss why cash is not trash.
Well, first of all, I want to know how I can get in on the trip to Vienna.
Very
Please
good.
include me in those emails.
We will.
As far as, the cash markets at this point, as you mentioned earlier, we have been in a zero yield environment for the better part of 14 years now at this point in time. It's not a healthy market. 17% isn't healthy, but 17 basis points isn't healthy. We are now getting back to a point from an economic standpoint where we have an inflationary environment that is above the bare minimums, 1.5% to 2.25%. In that environment, we need short-term yields that are above that, and we are getting to that end result. As such, your cash is now a valuable investment that no longer is just there earning your earning safety and a minimal return. It is now not only earning safety, but also earning a viable return above where the inflationary rate is. We're getting there. We're not there yet. But certainly above, sort of the zero bound where we have been locked for a very long period of time.
And the heritage of this, folks, with the federated funds, basically is a generalization. They invented the money market fund. There's some that would quibble with that. But they've been doing this and owning the high ground on short-term paper for years. Deborah Cunningham, talk to Lagarde and the ECB, as John and I were talking about. Should we fear these initial rate rises from any major central bank?
Well, I do think the ECB, as was mentioned before, has some unique issues going on with it. Certainly Brexit, complicated, and was a factor that led into some of the shortcomings of both the UK economy as well as the European economy in broad terms. So I think that's a factor that still has to be dealt with in a way that we are not subjected to here in the United States. Having said that, when you look at those economies, yes, they're not as vibrant, they're not as fulsome, and certainly from a labor market perspective, they don't have the same, numbers that we have along those lines, the same strengths that we have, and as such, there are more challenges, and yet they should not be in a negative interest rate environment. They should be at a point where there is cash, there are cash earnings there as well. The economies, for the most part, are not in any kind of danger of going into a recession. Not a large growth environment, but when you're looking at sort of steady and sure, you may see some setbacks as you go from -5 to 0 to +5 to 1, but that's part of what needs to happen in order to get out of I think part of the malaise that they have been in addition to Brexit, has been the negative rate environment where there has not been healthy fixed income alternatives.
Deborah, just real quick here, I'm wondering whether you're actually seeing investors respond to this idea that cash is not trash, that it's a viable asset class in its own right with real yield. Is that something that you're seeing create a shift away from riskier assets back into cash for the asset value?
Yes, it's out of riskier assets, absolutely. It's also out of bank deposit assets because those don't follow the natural market rates. They're an administered rate, and so they remain in that zero bound for the most part, for most banks who don't want deposits. And it's certainly something that I think is a welcome alternative for investors that don't want to take on a lot of risk, want to maintain a lot of liquidity, keep their powder dry, yet still earn a return in the process of keeping their cash invested.
Deborah, looking forward to your appearance in Vienna. Thanks for being with us. Deborah Cunningham there at Federated Hermes. Lisa, yields up on the front end by 3 basis points this morning. Let's call it close to 260.
Well, but this really presents a conundrum, right? Because if investors start to put their money into cash, does that indicate that they're basically betting that inflation is going to come down? Because on a real basis, they're still not getting yield. So is cash really preferable to bonds that are yielding more? Is it preferable to riskier assets that are a better inflation hedge? It's a very tricky moment, which is the reason why cash itself is polarizing for the likes of Ray Dalio, as well as Deborah Cunningham.
Where else do you put it? Right now, you're going to face the relative loss versus inflation or the absolute loss in capital depreciation because markets get absolutely hammered. And they have been over the last few months. That's the problem.
And this is one reason why people keep going into commodities. And again, why a lot of people are saying it's surprising that commodity prices aren't even higher, given that that has been the main inflation hedge for so many investors.
Well, they're pushing hard this morning, Tom. 115.80 on WTI.
Yeah, I'm going to watch it. 117 on Brent crude is maybe what I'm watching more, the global price of oil. And John, you look at the peripheral distillates as well. I'll get it out. The distillates as well, like diesel. And the answer is we begin June with a serious hydrocarbon angst.
And looking potentially maybe at some downside surprises in the data. That's what we've started to see recently. Lisa talked about that yesterday. It's such a good point. It's starting to build, which is why for some people who believe this Fed takes a pause, they take every single downside surprise and say, you know what, that validates my position. That's what the Fed's going to do. If the Fed keeps pushing forward, that's where the pain's going to be. That's where the pain's going to be later this year. From New York City this morning, good morning. Bill Dudley, the former New York Fed president, coming up on this program very shortly.
Keeping you up to date with news from around the world. With the first word, I'm Ritika Gupta. Ukraine will get advanced rocket systems and other weapons from the U.S. President Biden made the announcement in an article published in the New York Times. The rockets will allow Ukraine to hit targets up to 15 miles away. The U.S. says Ukraine is not to attack targets inside Russia. In the UK, consumers are being urged to brace for inflation getting worse before it gets better. The British Retail Consortium says that fresh food prices are now rising at their fastest pace in a decade. It says fresh food rose 4.5% in the year that ended in May. China is planning for years of COVID zero with testing sites on almost every corner. Tens of thousands of lab testing booths are being set up across the country's largest and most economically vital cities. The goal is for residents to always be just a 15-minute walk away from a swabbing point. Shares of Salesforce are rising today. The company raised its annual profit forecast, a signal that demand for business software is holding up despite a broader downturn for major tech firms. Salesforce co-CEO Mark Benioff says that so far the demand environment remains strong. And the richest person in the world doesn't appear to think much of working from home. Elon Musk apparently sent an email to the executive staff at Tesla with the subject line, "Remote work is no longer acceptable." He wrote that anyone who wishes to do remote work must be in the office for a minimum of 40 hours per week or leave Tesla. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
What does the future of strength look like? It's dynamic weight that adjusts for you in real time for a more efficient workout. And you can only experience it on Tonal.
Learn more at tonal.com.
A Hall of Fame swing. Like Capital Group's new ETFs, there's so much behind it. A lifetime of experience. Honing your skills. Dealing with curveballs. And having a whole team behind you. Introducing actively managed ETFs powered by Capital Group. Can I find an ETF with a whole lot behind it? With Capital Group, I can.
Hi, this is Lisa from 4Imprint. Yes. I like 50 welcome wows, 300 customer, I love it, and 200 team member, oh yes. Certainly. You know we got some brand new woohoos.
Dial up the wow factor with promotional products from 4Imprint. We specialize in awesome items that are certain to awe and guaranteed to deliver some ooh yes. From apparel, backpacks, drinkware to high-tech items.
Wow.
I love it. Woohoo!
Go to 4imprint.com and find some wow now. 4Imprint, for certain.
What if you were a global energy company with operations in Scotland, technologists in India, and customers all on different systems? You need to pull it together. So you call in IBM and Red Hat to create an open hybrid cloud platform. Now data is available anywhere securely. And your digital transformation is helping find new ways to unlock energy around the world. Let's create a hybrid cloud that can change an industry. IBM, let's create.
It doesn't have to be like this. You don't have to live in fear just because you don't have life insurance. With Ethos, 10 minutes could protect your family for as little as $10 per month. To get a quote in seconds, go to ethoslife.com. Honey?
Time-saving element of Tovala has definitely changed my day, my night, and just makes life easier for me. Tovala is my personal chef.
Tovala. Browse this week's meals at tovala.com.
This is the planning effect. This is how it feels to have a dedicated Fidelity advisor looking at your full financial picture. This is what it's like to have a comprehensive wealth plan with tax-smart investing strategies designed to help you keep more of what you earn and set aside more for things like healthcare or whatever comes down the road. This is the planning effect from Fidelity.
Welcome to Lenovo Late Night IT, where industry insiders tell us what they tell their therapists. Is fog the new cloud?
We're going to have solutions that require some things to be pushed out to the cloud and some things are going to be in between, which is the fog.
Fog is a real thing. I was joking. What's next? Mist computing?
Mist.
Wait, is mist a real thing?
Cloudy? No.
Okay, thank you. This is Lenovo Late Night IT.
Yo, dude, you need some help?
Don't worry about me.
Yo, there's no shame.
No shame? You don't know my family, man.
It's okay to ask for help. Find a licensed therapist at BetterHelp.com.
Time for our Memorial Day sale on the Sleep Number 360 Smart Bed. Why choose proven quality sleep from Sleep Number? Because every Green Thumb, 5K, and all-day dance party starts the night before. The Sleep Number 360 Smart Bed senses your movements and automatically adjusts to help keep you both comfortable all night and can help you get almost 30 minutes more restful sleep per night. Sleep Number takes care of the science. All you have to do is sleep. During our Memorial Day sale, save $1,000 on the Sleep Number 360 Special Edition Smart Bed, Queen, now only $19.99. Only for a limited time. To learn more, go to sleepnumber.com.
The economy is already slowing. 50 basis points may not be doable as we move into the fourth quarter or even later in the third quarter. They can resort to balance sheet reduction at a faster pace, which will provide nice upward pressure to the longer end, or at the very least, provide a floor to longer rates.
That was Lindsay Piegza, the Stifel chief economist from New York City. This is Bloomberg Surveillance with Tom Keene, Lisa Abramowitz and Jonathan Ferro. Futures positive 0.2 on the S&P, on the Nasdaq up about 0.1%. Yields higher by 3 basis points, pushing 290, 287.85. Bill Dudley, the former New York Fed president, out with this morning. Tom, here's the headline of his new column. The Fed's mild inflation forecasts need explaining.
They do. They need explaining. It is a brilliant note. I'll have it out on Twitter. I'm sure John and Lisa will as well. William Dudley is the former president of the New York Fed and, of course, writing for Bloomberg. We're thrilled that Bill Dudley could join us this morning. Bill, buried in your essay on inflation is a single sentence on what it means for the labor market. April of 2020, a 14.7% unemployment rate. We were at 4% at the beginning of this year. We're now down to 3.6%. I need you to explain to our listeners and viewers why it's the Fed's job to move the unemployment rate, as you state, up above 4%.
Well, the labor market is the tightest basically it's ever been, and you can see that by the ratio of unfilled jobs relative to the number of people that are unemployed. That ratio is 1.9 to 1. In February 2020, it was 1.2 to 1. So we have a labor market that's unprecedentedly tight. The Fed needs to loosen that up, or wage pressures will accumulate, and that will keep inflation above the Fed's 2% inflation objective. The problem the Fed has is that in the past, it's been very, very difficult to push the unemployment rate up meaningfully without precipitating a hard landing. That's what the Fed's going to try to do this time, but extremely difficult to do. And they haven't really been as forthcoming, I think, in their forecasts as they need to be, because if you look at their last summary of economic projections, for example, the disinflation occurred almost immaculately. The Fed didn't really tighten very much. The unemployment rate didn't rise. Yet inflation came back to the Fed's 2% target. And it really begged the question of what caused inflation to come down. I think the way you get inflation down is you need more slack in the U.S. labor market. That's not a friendly message from the Fed, but that's what's necessary at this point.
And Bill, just to put some numbers on that, as you say, core PCE year end for the Fed 22, 4.1%, 23, 2.6, and unemployment 3.5, and then 3.5 again. And many people have been asking the same question. Bill, you know the chatter right now is this conversation about a pause in September. How are you interpreting some of that conversation?
I wouldn't put too much stock on it. I think what's happening is the Fed's pretty convinced that they need to go to something close to neutral, and expeditiously is the way that they put it. And so that's what they're doing. The notion that at some point they're going to take a pause and look around, of course that's going to happen at some point, but it's going to be driven by the economic data. I think that the economy is going to have enough momentum to keep the Fed so the Fed will keep going into the fall. The market's priced to a peak in the federal funds rate of 3%. I think we're going to get to there pretty easily, and the Fed will probably actually have to push beyond that ultimately.
Bill, what kind of unemployment rate are you looking for to indicate perhaps a tightening, a loosening in the very, very tight labor market?
Well, the Fed's own forecast is that a neutral unemployment rate consistent with 2% inflation is 4%. So I think you need to get the unemployment rate up to at least 4%. The fact that we have so many unfilled jobs suggests that maybe the unemployment rate consistent with 2% inflation is even higher than 4%. So I think we need to at least get to 4%. And that's the problem. It's difficult to do that without precipitating a full-blown recession.
Bill, did you take any message from the fact that President Biden met with Fed Chair Jay Powell yesterday, that there was this focus on the Fed being the main driver for what happens with inflation going forward and the politicization of the Federal Reserve?
Well, I think Biden was actually not politicizing the Fed. He was basically saying the Fed's job is to control inflation, and I'm not going to challenge the independence of the Fed to do that. In some ways, though, he's putting the burden now on the Federal Reserve rather than on the5administration. I viewed it as a political event, not an economic event. I don't think it changes what the Federal Reserve is going to do or what the Biden administration is going to do.
Bill, we had a one-off medical event, a pandemic of our lifetime. That got us out to 14.7% unemployment. Can we cut any central bank slack and have them extend out the x-axis and just take longer to get this done, to repair off of this medical event?
Well, if they take longer, the risk will be that inflation will stay higher, and then that will start to get embedded in higher inflation expectations, which will make their job more difficult. The good news for the Fed right now is they're highly credible. Market participants expect the Fed will do the job and get inflation back down. Inflation expectations at the longer-term horizons are still very well anchored. If the Fed dawdles, then the risk is that inflation expectations become less well anchored, which will make it harder for the Fed to get inflation back down.
Bill, is your view hardening, not softening, based on incoming data that this Fed funds might end up with a 4 handle and maybe not a 3?
I don't think it's changed too much. I mean, the good news is that the Fed has things in hand today in terms of market confidence, in terms of inflation expectations being well anchored. That's the good news. The bad news is I think people are understating how difficult this job is.
What do you make of this idea that they can target job openings, Bill? JOLTS data, which is a little bit dated. What do you make of that?
Well, I think their story is a quite an optimistic one, that they can tighten monetary policy sufficiently to reduce the demand for labor without actually pushing up the unemployment rate meaningfully. This is the tightest labor market I think we've ever had, frankly. And it seems to me if the labor market is tighter than it's ever been before, that makes the job more difficult, not easier.
Super hard. Bill, wonderful to catch up. Bill Dudley there, the former New York Fed president, on the path forward, and a really interesting piece on the Fed's inflation forecast available on Bloomberg.com and on the Bloomberg terminal on the Bloomberg opinion column. Lisa, to bring job openings down, to take out some demand from a hot labour market, to rebalance supply and demand, and ultimately not see unemployment go higher. That's the dream. Is it going to be real?
Right now, here are some of the issues right now, and I'm stuttering over my words because the uncertainties are just so monumental, not only with the economic trajectory, but the data itself, right? I mean, we saw last year the revisions to the labor market data came in much hotter than we had previously expected by the end of the year, so that all of a sudden the summer months did not look like a softening, did not look like we were seeing some sort of deceleration in how hot that labor market was. How much can we really look at these job openings as concrete? Some people say perhaps people are just listing 15 job openings because they're not getting enough applicants. I mean, honestly, there's so many people having their own interpretations of this, which is the reason why you get 5 economists in a room and you get 6 different opinions on the trajectory of where things are going.
Isn't that always the way? On the one hand this, on the other hand that, and on 5 different hands this, that, and this. This is from Delta. Just came moments ago, Tom. They see their second quarter revenue fully restored to 2019 levels. And this is what they said on the second quarter capacity. And I think it's the capacity numbers that keeps getting my attention from the airlines. 82 to 83% versus the second quarter of 2019. They had seen those capacity levels up to about 84%. We are all living that. If you're traveling at the moment, Tom, we are all living that.
I look at 2 prices. I look at the trip to Paris just as a gauge, and I also look, John, at New York to LAX. Delta Airlines, $800 to $8 economy. I can honestly say I've never seen that number.
Unreal. So expensive at the moment. The stock is up 2%.
$800
$42.50. Delta Airlines. The airlines are doing well, aren't they?
Hey.
For many reasons.
We're taking the
living
trip.
it.
Welcome back to another special Roland Garros update for Bloomberg TV and Radio. From Tennis Channel, I'm Erin Coscarelli. Day 10 in Paris saw quarterfinal action for both the men and the women. Rafael Nadal won his battle of the legends as he beat Novak Djokovic to reach the Final Four. The victory was the Spaniard's 29th over the Serb and leaves Nadal just 2 wins away from a record 22nd Grand Slam title. He'll face Alexander Zverev in the Final Four after the German took out wonder kid Carlos Alcaraz in 4 sets. And Coco Gauff will make her debut in the semis at the majors after she beat Sloane Stephens in style. After taking the opener 7-5, the team closed it out 6-2 in just over an hour and a half. And don't forget, Tennis Channel's daily live coverage from Roland Garros hits the air at 5 a.m. Eastern. I'm Erin Coscarelli.
On the David Rubenstein Show, peer-to-peer conversations, I uncover the untold stories of the world's most successful leaders. Watch Wednesdays on Bloomberg Television.
Script is my time to listen.
I can listen at home, in the car. It's a way for me to stay informed, get entertained. Script is ebooks, audiobooks,
Magazines, podcasts,
Script, it's awesome.
If you're someone who struggles with mobility, even a short walk won't seem like a short walk. But the sturdy and comfortable Hurricane provides the balance and support you need. It helps you walk on any surface and truly stands alone. Get the #1 selling cane in America with our worry-free 100% money-back guarantee, plus free shipping. Check out the new Hurry Cycle too. Lightweight and low impact, you can easily move it without bending. Find both at hurricane.com.
Yo, dude, you need some help?
Don't worry about me.
Yo, there's no shame.
No shame? You don't know my family, man.
It's okay to ask for help. Find a licensed therapist at BetterHelp.com.
Imprint, this is Lisa. Hi, I'd like 50 welcome wows and 300 customer I love it.
Promotional products from 4imprint are certain to deliver ooh yes.
Wow.
I love it.
Find some wow now at 4imprint.com. 4imprint, for certain.
There's a reason big dental bills often come as a shock. Because sometimes you don't realize what's not covered until you get the bill.
That's why affordable dental insurance from Physicians Mutual is important. It can give you benefits that go beyond what you get from more limited coverage plans. Because no one likes a big dental bill, especially if you're retired or on a fixed income. For a free information kit, call or go online now. This isn't some discount plan or preventive-only coverage. This is real dental insurance that helps cover over 350 procedures, like cleanings, fillings, crowns, bridges, root canals, even dentures, at any dentist you want. Dental insurance from Physicians Mutual Insurance Company helps cover preventive care, basic work, and major procedures with no deductibles and no annual maximum. For your free information kit with all the details, call now or visit sendinfokit.com.
Physicians Mutual, Physicians Mutual.
The Biden administration has a very real problem here. They've got to get inflation down to a more comfortable 3%.
This inflation's really coming from everywhere.
We're going to be in that 3 to 4% consistent inflation level. And I think it's going to be for 3 to 5 years.
I think if inflation peaks, it will provide some relief.
I think the Fed is very optimistic that they're going to see lower levels of inflation, but they're not forecasting 2% inflation anytime soon.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Good morning, everyone. Jonathan Farrow, Lisa Abramowitz, and Tom Keene on radio, on television. Bloomberg Surveillance greets June. John, 1 year ago, Brent crude up 66% in 12 months.
What a turnaround, Tom. And look at the equities on the S&P 500. They're up about 60% as well. A massive move. And that's the place where the likes of Bank of America is still pretty comfortable, Tom, taking that exposure in the equity market in that industry specifically.
Everything we do, John, we talk about the Fed, the president, everything, ECB, all of it is backed by a commodity foundation, which is a commodity boom.
And that's why a lot of people, Tom, think this Fed has got a job to do, and that's to take out demand from this economy. As Bill Dudley, the New York Fed, the former New York Fed president, said just moments ago on this program, the challenge for this Fed is so difficult. How do you take out that demand from a hot labour market, rebalance the labour market, supply demand, and, Tom, do that without unemployment climbing? That's in their forecast, 3.5% on unemployment this year, again next year. In reality, that is so difficult.
Jobs from 14% unemployment down to 3% unemployment. We're back. Maybe Bill wants to model out to 4% unemployment. What's the risk, John, that all of a sudden 4.1% becomes 5.1%? That's unacceptable to Americans.
And then what does the Fed do, Tom? Are they still hiking?
Right.
I doubt it. I doubt it, because CPI is going to be going in a very different direction, or maybe it won't. And that's the fear. You end up in this situation where inflation persists and growth starts heading lower. What does the Fed do in that world, Tom?
On June and on a June reset out front of a mid-year reset, Lisa Abramowitz, it's real simple. Bonds say all. What do bonds say on June 1st, 2022?
That maybe it's time to shift back after a shift in the narrative. Basically, we saw people saying that the Fed was going to go really quickly and actually get out ahead of expectations. It was who could out-hawk each other in terms of how much they could up their projections for Fed rate hikes. Then you had the Fed pause, right? Raphael Bostic sort of took the mantle on that. And now it's shifting back again that the Fed will have to be more aggressive, with Andrew Hollenhorst of Citigroup coming out this morning and saying basically all indications show that inflation is not slowing. And without inflation slowing, you're not going to get that pause.
We pause for the Surveillance Sports Report right now. John, Rafa Nadal, this Friday, 2 days from now, 36 years old. I'm sorry, it's a huge deal, underreported in America.
Seeing him smile yesterday, Tom, at the end of that game after beating Novak across 4 sets. I think it was John McEnroe, that said years ago that beating Rafa in Paris at the French Open is one of the hardest things to do in sport across 5 sets. Tremendously difficult. And, Tom, he's only lost in that event, I think, 3 times. 3 times across his career. Just unreal.
Across the span of June, we'll have to watch that. And, of course, the Red Sox are going to drag themselves back to 500 baseball.
I thought we didn't talk about the Red Sox, Tom. I thought that was done.
It's too painful. We'll move on from there. Futures up 15, Dow futures up 170. John, June, in honor of the Queen, we quote the Dow often.
Do we? Does the Queen like the Dow? Is there a price target at Buckingham Palace we need to talk about?
She follows it every day.
Okay. Yield time by 3 basis points on a 10-year, 287.49. It's a quiet morning, Tom. Crude advancing 115, let's call it 60, up 0.8%.
I mentioned coal in Australia. I'm sorry, I'm watching some of these small items to see if copper turns around. on the China opening. Brent Schutte joins us now, Chief Investment Officer, Northwestern Mutual Wealth. Brent, what are people actually doing with their money? You observe this across all of the conservative Northwestern Mutual platform. What are they actually doing?
Well, I think the good news over the past few years, people have actually saved money. And so one of the conversations that I think gets avoided quite a bit is that the consumer is in pretty good shape right now. So yes, gas prices are eating away at that, but overall the consumer remains in good shape. And I think that's going to help them get through this time period where inflation is high. But importantly, I disagree with the Citigroup message that you had earlier. I do think inflation has peaked. I think it's rolling over. I think that's already begun. And I think that's going to give the Fed the ability to not tighten the U.S. economy into a recession, which I think is the market narrative that kind of came out last week, but I think you'll continue to see in the future.
So, Brent, based on the rally of last week, can we learn anything about where the leadership comes from in this equity market that you're a little bit more constructive on?
Yeah, I mean, we've been pounding the table for value and things that are cheaper for the past year, and that's played out well. So you've seen a market dislocation because you've had an economy that is moving back towards what it was pre-COVID. You have monetary and liquidity issues that are moving back to pre-COVID, and the most expensive names have been repriced because you've repriced the bond market, and many of those names actually were stay-at-home stocks. And so if you've been in value stocks, you have not experienced near the downturn that you have in the more expensive stocks. And that's where we continue to focus because it's not going to get that much easier. It's still going to get tougher. But those cheap names give you a margin of safety that we would still want to own.
How big is the range of outcomes, Brent, if you're wrong, if the Fed doesn't pause, if frankly, yes, inflation has had a mechanical peak, but it doesn't come down all that much? Is your thesis completely wrong, or do you just have to tweak it around the edges?
I think more so tweak around the edges. And the good news is that we build a diversified portfolio. And so we've owned things like commodities for much of the past year and a half, 2 years when it's been very unpopular to own. We've continued to own those because we did believe you would actually see what you're seeing today, which is an inflationary environment that is much different than the past. I have not believed that inflation was dead. I just thought it took longer to get there. And I did believe all the things that happened during COVID would lead to where we are today. We also own TIPS. We've actually moved out of that position right now because we do believe inflation's coming down. I guess the good news is that I think it'd be tweaks around the edges, but there certainly is a wide range of outcomes. And the most complicating issue is the Ukraine-Russia war, which quite frankly wasn't on the radar much before the past 2 or 3 months.
So it's interesting that you say that. I want to go back to what S&P Global came out with earlier this morning, where they basically withdrew projections for 2022 forecasts, even though this is a company that tracks other corporate balance sheets to get a sense of where things are going. What are you tracking, Brent, for some sort of compass at a time of such uncertainty?
Yeah, I mean, I think the big news is what happens with inflation. And certainly if you take a look at inflation and where it's been on the good side. That good side of the economy had pulled forward demand. Think about those earnings that we all worried about last week with, I think it was last week, Target, Walmart, Amazon, things of that nature where they rebuilt their inventories because they thought demand was here to stay, and that actually is now shifting. And so they're caught with heightened inventories. They're having to lower prices. And so if you kind of put all those together in a nice mosaic, I do think you will see inflation fall, which is the biggest question that's out there that people have is what will happen with inflation? And then secondarily, what will the Fed do about it? And you mentioned in your opening that the Fed talked tough. So people are worried about these rate hikes, but they're already priced into the market. It's what happens from here. And that's where I think there's some room for the Fed to go shallower and just a bit slower than what's imagined.
Brent, in the great moderation, we've had pension funds with a true actuarial assumption come down. They've brought that bogey down. And we've also had it in our heads. What are we going to take out of retirement plans per year? Are we at a point where you now need to increase your actuarial assumption or be able to increase what you take out of a portfolio?
Well, I mean, I think that I understand the question. I think if you're looking forward, I do think returns will be less than they have in the past. I mean, we've had a pretty good decade, even on the back of bad economic growth. I think in the future, you're going to actually have lower returns because the market, at least the majority of the bigger part of the market, is more expensive. I just think that people need to look overseas and in other places that haven't worked quite so well over the past few years. I think there's actually a positive story building where those equities are much, much cheaper. I know that people get tired of waiting for valuation to work, but I think there's probably a bit of a catalyst coming that will actually propel those areas of the market higher.
Brent, that screams China, doesn't it?
Yeah, I mean, that's an interesting commentary because you have to add geopolitical risk on top of that. But certainly places like international stocks trade at 12 times earnings, and those earnings are near levels they were 10 years ago. Contrast that with the U.S., where we're still, at 16.6 times forward earnings, which is not cheap, at least in the larger parts of the market. I think you're looking at something more like post 1999, 2000, where other parts of the market do better than the part of the market that did well during that time period and was quite frankly overvalued. I think you need to look elsewhere right now.
So, Brent, are you saying that maybe the S&P might be mechanically challenged at the index level for quite a while, given its weighting to big tech?
I think so, and I think that was the message post-1999, where you had parts of the market that were overinflated. They had been brought forward by demand. They had done well. Investors had bid them up to levels that were probably a bit excessive. And then you had other parts of the market do quite well, and it wasn't a lost decade for those parts of the market. I think expectations are still so low outside of those parts of the market that everybody wants to talk about that you have the impetus for a push higher in the coming years.
Fascinating, Brent. Trudy, thank you, buddy. As always, good to catch up. Brent Schutte there of Northwestern Mutual. Tom, a more constructive view in some places, but that last point, just on how challenged the index level might be because of the weighting to big tech, that's where the advantage has been for American equities at the index level to allocate to that passively, and some people suggesting that may be where the disadvantage is for years to come.
Well, I agree with the passive weighting debate there. We've seen that before, and of course, years and years ago with the huge energy overweight, I'm going to say 30 years ago off the top of my head. What I found really interesting there, John, is once again, major shops saying we've got to at least study, if not act on international investment. And I'm so old-fashioned here, John. To me, the overwhelming factor there is you need a weak dollar to make it happen, and we just flat out through the month of May didn't see that.
Are you saying that's a symptom, Tom, or a driver of?
Driver
you get
of.
the weak dollar because it's a symptom, you think it's a driver of?
Driver of. And, you know, I defer to Ibrahim Mabari or George Saravelis to tell me I'm wrong on that, but I'm looking at 102 DXY. Maybe the yen's giving me some love here out past 130 would be interesting, but euro? I mean, come on, if they pop 50 beeps like Deutsche Bank says, you're going to get a weaker euro? I don't think so.
Hey, TK, that's the problem, though. Lisa's mentioned it many times. I have too. Can you say with conviction that higher rates of the ECB means a positive euro story or a negative one?
That's the drama that keeps us employed.
That's going to keep things really entertaining at the ECB next week. That's why you should stay tuned to full coverage of a non-snoozer presser with President Lagarde. I can't even promo it, seriously. Yields up 3 basis points, 287.31. Equities positive, 1/3% from New York, heard on radio, seen on TV. This is Bloomberg Surveillance.
Keeping you up to date with news from around the world with the first word, I'm Ritika Gupta. Treasury Secretary Janet Yellen says she got it wrong last year on inflation. Yellen made the admission in an interview with CNN. Last year, Yellen predicted that elevated inflation wouldn't pose a continuing problem. Now she says she didn't fully understand the circumstances. Meanwhile, the Federal Reserve is about to deploy a second tool to curb inflation alongside higher interest rates. It will begin shrinking its $8.9 trillion balance sheet. Officials don't know how effective it will be. They say it should cool price pressures by tightening financial conditions. The U.S. is ramping up military support to Ukraine. President Biden says he'll give the Ukrainians advanced rocket systems and other weapons that will allow them more precision in attacking Russian targets. The weapons will let Ukraine hit targets as far as 50 miles away. The U.S. says Ukraine has agreed to not use the weapons to attack targets inside Russia. And the city of Shanghai reported its fewest coronavirus cases in 3 months. That came on a day when residents celebrated an end to mandatory home isolation for most of the city. Shanghai saw just 15 new infections Tuesday. That is a dramatic drop from the peak of more than 27,000 a day back in April. And Delta Airlines is back to where it used to be. The carrier estimates that second quarter revenue will be, quote, fully restored to 2019. Capacity is expected to be about 83%, just 1 percentage point off the 2019 figures. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
I had such anxiety. Sometimes it felt like I couldn't breathe. Fortunately, one of my friends told me,
"You've got to relax. You're going to get yourself sick."
Time
time for our Memorial Day sale on the Sleep Number 360 Smart Bed. Why choose proven quality sleep from Sleep Number? Because every Green Thumb, 5K, and all-day dance party starts the night before. The Sleep Number 360 Smart Bed senses your movements and automatically adjusts to help keep you both comfortable all night and can help you get almost 30 minutes more restful sleep per night. Sleep Number takes care of the science. All you have to do is sleep. During our Memorial Day sale, save $1,000 on the Sleep Number 360 Special Edition Smart Bed, Queen, now only $19.99. Only for a limited time. To learn more, go to sleepnumber.com.
ESG is responsible investing. Who's responsible for building ESG into your investments? At PGIM, the pursuit is on for outperformance. As active investors to outdeliver with customized strategies, integrating ESG best practices into our investment decisions. As asset managers and fiduciaries to outserve with our commitment to better ESG outcomes. Join the pursuit of outperformance at PGIM, the investment management business of Prudential.
Only at Vanguard, you're more than just an investor. You're an owner. That means that your priorities are ours, too. Our interactive tools and advice can help you build a future for the ones you love. That's the value of ownership.
Why is Roger happy? It's the little things Carvana does. See, Roger wants to sell his car, stat. Little things like getting a real offer in 2 minutes really make Roger happy. So does Carvana's customer advocate, Caitlin, picking up his car at promptly 10 a.m.
Hi, are you Roger?
Burgling with the Honda Accord? Yes, I am. It's right over there. Will I be getting...
And he loves that Caitlin pays him on the spot. Yep, Raj, it's the little things that drive you happy. We'll drive you happy at Carvana.
Adapt in a changing world. You could hire a professor of theoretical mathematics.
We all know this equation, right?
He'd crunch numbers day and night.
That's it.
To maximize profitability.
Morning.
I have quarterly numbers. They're beautiful.
And forecast revenue from every corner of your organization.
Is that important?
Or you could use Workday, the finance, HR, and planning system that helps CFOs make better decisions faster. For a solve problems like a genius world. Workday, for a changing world.
Bitcoin in your IRA? It's possible with symbol GBTC. Grayscale Bitcoin Trust, the world's largest Bitcoin investment vehicle. Type GBTC into your IRA account to invest today. Grayscale, building the future of financial legacies.
Time-saving element of Tovala has definitely changed my day, my night, and just makes life easier for me. Tovala is my personal chef.
Tovala. Browse this week's meals at tovala.com.
We're all horrified by what's happening in Ukraine. Hundreds of thousands of civilians are fleeing for their lives, and an estimated 12 million people need humanitarian assistance. I'm Sienna Miller, and I am a Global Ambassador for International Medical Corps. Our teams have been on the ground in Ukraine since 2014, when conflict first broke out in Crimea. Now, with attacks by Russian forces across the country, we are scaling up our relief efforts inside Ukraine, as well as in Poland, Romania, and Moldova, to provide medical and mental health services, protection for women and children, and clean water, sanitation, and hygiene. The needs are immense, and the situation is worsening by the day. You can help. Please visit internationalmedicalcorps.org to find out how. Thank you.
This June, in honor of Pride Month and Juneteenth, Bloomberg brings you a special equality series every Thursday in June at 1 p.m. Eastern. Bloomberg Equality, celebrating inclusion this Pride Month and all year long.
You have to just look at the cost structure of the industry. You have to look at where new production is coming and where it would be coming even if we didn't have $123 Brent. And I'd say it's more in the $70 range than it is in the $120 range.
Ed Moore's taking the other side of the trade, the Citigroup Global Head of Commodity Research from New York City this morning. Good morning. Equity futures look like this on the S&P. Positive 1/3% on the NASDAQ. A similar amount, up by 0.32%. Yields higher by 3 basis points, 287.31 on the 10-year. And crude higher by 8 or 9/10%, 115.66. Here's a note from our next guest, Tom. Back in April, we lampooned a Washington Post opinion writer for their obtuse observation that if it were not for that darn on inflation, Biden's economy would be extraordinary. The writer went on to say that Rubin's logic was as intellectually robust as us saying that if our grandmother had wheels, she would be a bus.
That can only be the wonderful Stephen Schork, founder and president of the Schork Group, John. His note, folks, is just the breath of fresh air within the petroleum business. Is Ed Morris of Citigroup, who we just listened to, talks about the macroeconomics of the moment. Stephen Schork is hyper-defined. Steve, let me go to the single sentence of your note. 99% of us are simply getting poorer in this commodity surge. Will that trend continue?
Absolutely, Tom. So real disposable income, what we have to spend, has fallen in 10 of the past 13 months because of runaway inflation. Inflation, by the way, that all the smartest people in the world spent the better part of last year doing yeoman's work, making fools of themselves every single week, saying that, oh, inflation is transitory. Yes, if I don't have to eat, if I don't have to put the lights on, if I don't want it to stay cool this summer, yes, right. Inflation is not a problem. But what we're seeing now, Tom, it always comes down to commodities. And what we're looking at in the energy industry, well, we know that story. But what most people, especially the ESG crowd, or the people that are taking the war against natural gas, is the war on natural gas is a war on the American consumer. So what it has done to fertilizer prices, of course, natural gas is a key feedstock into synthetic ammonia fertilizer. So we're putting fewer seeds into the ground this spring, which means we're going to take fewer crops out of the ground in the fall. So the inflation has not peaked. Right. I mean, it's peaked on the core level, but as far as energy and food, which is all dealing with all, inflation has not peaked. And Tom, this is the problem. Runaway inflation at the gas pump and at the grocery counter has been the lead indicator for recession of the last 6 recessions in the United States, beginning with the
Steve, I want to go to the hyper detail of your note and your true expertise on distillates. Do you have any optimism we're going to invest given these higher prices?
Well, as Winston Churchill once said about America, we always make the right decision after we've tried every other decision. So I'm not quite sure we're there yet. Here on the East Coast, of course, what has happened? Well, over the past 3 years, we've cut our refinery capacity by 40%. So now gasoline production on the East Coast has held steady. But when you cut your capacity to make things out of crude oil, something has to give. So while we've maintained the status quo on gasoline production, diesel production has fallen 40%. So right now, diesel stocks for the first time ever in the East Coast are below 9 million barrels. So we are looking at a dire situation in the diesel market, but we're not quite there. The smartest thing the Biden administration can do with regard to the energy crisis here in the United States is rescind the Jones Act. The Jones Act requires all interstate commerce, waterborne, be tagged on American flagged vessels. Well, guess what? We don't have enough American flagged vessels. You need to rescind the Jones Act, allow diesel, gasoline being manufactured in Houston, to put that on foreign flagged vessels, to bring it around the tip of Florida and get it into the East Coast. That is the smartest thing to invest in a short-term fix. Yeah. Regard to the longer-term fix, no, there is not a political will at this point to invest in fossil fuels. Thereby, the long-term structural imbalance between supply and demand will remain. High prices, therefore, have to remain, Tom.
Stephen, have you been surprised by how little pushback there has been on consumers with respect to reducing spending? There has been a reduction in real spending if you look generally at the trend. However, overall, they continue to spend more, even as you see new records every day of gas prices.
Yeah, absolutely, Lisa. Now, the calculus there has changed because we have substitutes in the market, i.e. EVs. So it used to be consumer spending would drop off and gasoline prices, national average, hit about $3.60, $3.80. Gasoline on the NYMEX now is trading over $4 a gallon. So the AAA average right now is about $4.60 national average. Given where futures are trading now, by the 4th of July, gasoline prices will be another 20 cents higher, $4.80. I do have to believe, even though we've never had anything to mark this against, we will start to see that. But to your point, yes, that it has been one of the positives. Consumer spending, the last read came out last week, stronger than expected. But the problem there is that we're waiting for the other shoe to drop because the personal savings rate plunged to 4.4%. We are well below the 30-year non-recession mean on savings and the 60-year non-recession mean on savings. In fact, savings rate is at the lowest point since 2013. So the bottom line, Lisa, is we've run out of all the stimulus money. Americans are dipping into their piggy banks. It costs more to drive to your picnics, to go to the beach, so forth. So in the next quarter, yes, I do expect to see consumer spending to tail off, which of course is a problem given that consumer spending is 2/3 of the U.S. economy. And therefore, this is why I'm still comfortable in saying if the United States is not currently in recession, given these food costs, these energy costs, our falling income, we will be in a recession within the next 6 months.
Stephen, usually I say thank you, but that one was a little bit depressing. Stephen, thank you, though. Anyway, Stephen Schork there of the Schork Group. Thank you, buddy. Good to catch up. And right on cue, Goldman at the gate, cutting price targets on Ford, GM, Tesla.
Wow. They
say this, Tom, supply chain troubles in the near term, weaker demand in the immediate term. They go on to say key metrics that correlate with auto demand, housing data, consumer sentiment, throw in PMI metrics, the ISM, consumer demand data points, they've weakened. And they're removing those price targets and cutting them to 14 from 18 on Ford, Tom. GM, 46 from 59. Still punchy price targets on the likes of Tesla, 1,000 from 1,200. But the direction of travel of the story there, Tom.
Exactly. The direction of travel resounded by Ite, my colleague today over at Citigroup, John. He was a little more optimistic than that, but he made it real clear there's some intermediate trends in autos which are challenging.
And those challenges look to come through the auto market. Elisa, if the Goldman team are leading us towards the truth right now, and that seems to be where things are heading.
I do wonder whether the macroeconomic headwinds that are suddenly so surprising to executives come from China, and frankly that the extent of the lockdowns perhaps weren't known to such a degree.
Are you questioning the surprise in the surprise? How surprised we should be about the surprise?
It's a toxic
derivative surprise.
It's a what, Tom?
A mushy surprise.
A mushy toxic.
A sea of mush, as you called the English breakfast a little bit earlier this morning. I've not forgotten.
I actually really enjoyed it. It was great.
This feeling of certainty comes from inspiring your customers and expressing heartfelt thank yous with promotional products people love from the experts at 4imprint. Enjoy that feeling of certainty at 4imprint. 4imprint, for certain.
When you work in IT, complaints are part of the job.
Bill says the coffee's weak today.
But since CDW helped us switch to Mac, everyone's happier. Dan from Finance likes getting performance without a big price tag. Phoebe digs the power of the Apple M1 chip. Mac is easy to manage, compatible with all our apps, and came pre-configured by CDW. Now we're even getting compliments.
That was Bill again, says he loves his new Mac. He's right about the coffee.
Sleep. Feel. The Chic's difference is real. From the light to the dark. Hold back. Fall in. Exhale. Woo! Hot damn. No, ma'am. So chill all night. On a cloud like a feather. Smooth, soft, nothing better. Just right on the night. Visit trychics.com and get 25% off this Memorial Day with a 60-night guarantee.
Nobody does anything perfectly the first time, or the second, even the third. We learn from mistakes. But when it comes to retirement planning, who can afford mistakes? Smart Asset can help you avoid those unpleasant mishaps with a free guide, The 7 Crucial Mistakes of Retirement Planning. We also match you with up to 3 vetted fiduciary financial advisors who can help you achieve your retirement goals. Using Smart Asset is free with no obligation. Discover what others learned the hard way at smartasset.com.
This is Scribd, an app that gives me access to ebooks, audiobooks, podcasts, and more. With Scribd, I can get in my steps and countless pages. Scribd makes every moment a reading or listening moment.
I've got a very
serious question. Are you tired of worrying about hair loss? Are you tired of looking in the mirror and not loving the man you see looking back at you? If the answer is yes and you want to get your real hair back, I want you to take out your phone that I know is sitting right next to you and send that text down below to Bosley to get the free Bosley info kit. You're also going to get the $250 Bosley gift card. It is a huge no-brainer because Bosley is America's #1 hair restoration experts. Do you think these guys are happy they went to Bosley? Bosley uses the latest technology and science to give you your real hair back permanently. And that's a promise backed by the Bosley Guarantee. Guys, you deserve to feel incredible about yourself, and you deserve to have your real hair back. Bosley can make it happen. They're going to help you love the way you look. But you need to take action.
For your free information kit and free gift card for $250 off, text CHARGE to 642-642. Ask about the Bosley Guarantee. Text CHARGE to 642-642.
Yo, dude, you need some help?
Don't worry about me.
Yo, there's no shame.
No shame? You don't know my family, man.
It's okay to ask for help. Find a licensed therapist at BetterHelp.com.
Enjoy the magic of freshness from nuts.com. Fresh nuts, dried fruits, sweets and treats, freshly roasted, freshly dipped, freshly seasoned, and delivered fast with free shipping. Nuts.com. Fresh snacks from our kitchen to yours.
Live from New York City this morning. Good morning and hello to the month of June. Goodbye, May. Futures positive about 0.5% on the S&P, on the Nasdaq 100 up by 0.47%. Yields just a little bit higher. They bleed higher 3 basis points, 287.31 on a 10-year, and crude all over the place yesterday. Nicely positive, then whipsawed by a Wall Street Journal report, which led some people to believe maybe we can get some kind of output deal without Russia involved. Crude lower, then ultimately positive again, up by 1.4%. TK 116.28.
There it is right now, John. We got to note the market's turned around. I mean, we've got a lift to the market.
It's nice. 0.5%.
VIX under 26 still gets me going from 31 here.
Should we call it a quiet move, Tom?
Yeah, it's
nothing overly dramatic.
It's nice. Anytime a move in the equity market is called nice.
It's a nice move.
It just shows how long it's going to last.
Give the bulls something. It's a nice move. Just give them something.
Like,
you know, give them some crumbs, all right? It's been a tough year.
This is a joy.
Is it?
Can we move on?
This is a joy. I'm with you.
This is a joy. Mickey Levy's going to hang up. We're gonna move on here.
I think other people might too.
Long ago and far away, out of the crisis, there was analysis like Chair Yellen getting, inflation wrong in the last couple days, where a group of people said, beware inflation. And the coined inflationistas maybe got it a little wrong 10 years ago. Mickey Levy was part of the Shadow Open Market Committee, of course, his work with Bank of America, and now Definitive at Berenberg Capital Markets. And right now, Dr. Levy, things have changed. It is people who worry about inflation with all the heritage of Alan Meltzer, Marvin Goodfriend, and others of the Shadow Open Market Committee, and now you are amid high inflation. How do you interpret the ancient worry of inflation now that we're amid real, tangible inflation?
Well, Tom, I mean, you just feel it everywhere. The inflation was generated in a classical manner, just excessive monetary and fiscal stimulus generating too much demand. At the same time, you had supply constraints. And now you just feel it. It's an inflation tax, and you feel it imposing itself on real purchasing power. And so the question is, how embedded has the inflation become in wage and price setting behavior? Once again, and the Fed has a long history of this, the Fed has waited too long to exit from its easy policies, right, and inflation's come back. And now the question is, will the Fed be able to weave this fine needle of raising rates just enough to slow the economy to take the edge off inflation without tightening too much? And it's going to be a challenge.
Are you using here conventionally?
We have a new regime, and the new regime is we will.
Jumble or Mickey Levy, is this so original how we got here and where we are now that you've got to be as data dependent as Jerome Powell?
Well, yes, you have to be data dependent. I mean, it was almost as if last year the Fed was deaf to the data. But now the difficulty is monetary policy, works with a lag. So, and the problem is you have this deeply negative real funds rate. And the Fed doesn't know how much it needs to raise rates to dampen things because, some of the higher inflation is due to supply constraints. And it's a guessing game for the Fed as to how much they need to raise rates to dampen demand. Now, it definitely has to raise rates probably more than the Fed funds futures is suggesting. But we're in this very difficult situation. Tom, the other thing I would add, I hear so many people talking about, recession now. And if in fact we're on the verge of going into recession, then this expansion peak is very, very different than all other expansion peaks in its economic and financial characteristics. So we could be entering a gray area, and I caution people about thinking in binary terms, either recession with a capital R or continued economic expansion. It could be a very difficult to define gray area that we're entering.
Who's further behind right now, Mickey, the ECB or the Federal Reserve?
Oh, the Federal Reserve is core inflation in Europe is well below that in the U.S. Europe faces a whole host of other issues, not just high inflation, but it's very low potential growth. But in the U.S., whatever measure of inflation you use, core inflation is much higher. And if you look at different measures of inflationary expectations, the Fed has a difficult task ahead of it to raise rates, enough to interrupt that wage price feedback mechanism.
Do you buy the pause argument that a lot of people are eschewing, basically saying the Fed will take a break from raising rates 50 basis points, maybe perhaps come September, and sort of take a look at how the effect is really trickling out into the economy?
Lisa, that's a great question. Okay, so the Fed dithered through last year. And now it's all excited that it needs to hike rates aggressively. And the question is, not only will they raise rates enough, but will they have the resolve to really lower inflation? And there, it depends critically on the economy and particularly labor markets. If, as the Fed hikes rates, labor markets remain okay, the unemployment rate increases just a touch, but not that much, then the Fed will continue to hike. But I wouldn't be surprised if, not this September, but later in the year, early next year, when the unemployment rate starts moving up, the Fed, comes out with a statement saying, oh, we have to be balanced on our dual mandate, and it kind of backs off from things.
Right. Mickey,
we're in a difficult situation.
Mickey, Chair Yellen came out yesterday and said she was wrong on inflation. What did the people get right who pushed against transitory? Let them take a victory lap right now. What did they get right? Dudley, Alarian, Levy, Summers, the rest. What did they get right?
That all you needed to do, Tom, was look at broad measures of aggregate demand, like nominal final sales to domestic purchasers or nominal GDP. It was accelerating sharply last year, which was completely inconsistent with what the transitory camp said, that it was just supply constraint. And so basically the root of that was we had this unprecedented amount of deficit spending that was, and the bonds, the Treasury issued, were largely purchased by the Fed, purely classical. If you just put on simple standard fiscal policy multipliers on what the fiscal authorities did with deficit spending, you would have predicted a surge in aggregate demand. And when the data started showing that, it's really quite striking how the Fed and the Biden administration were in complete denial.
Mickey, groupthink. It's been a problem at the Fed for a long time. Mickey, have we fixed it?
this is truly a wake-up call. The Fed has just gone through so many unforced errors that it really needs this wake-up call. We hope it learns from the current situation, but I think there still is too much groupthink. The big Furbus macro model that the Fed uses has not been working, but the Fed still talks about it as if it's working. The Fed really needs to think more broadly. I think it learned something from this, but I still worry that it just relies so much on its own discretion and does not use a more rules-based approach to monetary policy.
Mickey, awesome to catch up. Mickey Levy there.
There's a Mickey we know.
Mickey, fantastic. In fact, the Taylor rule was coming up there, Tom.
I think that's where he was heading.
Just a little bit.
A little bit. Folks, this is what we try to do. Different opinions all the time. John, a doozy from JP Morgan moments ago.
Give me the number, Tom. Give me the number.
Christian Malik, who joined us in London, and of course there's people that disagree with the JP Morgan view, see Ed Morris over at Citigroup, but they reaffirm on the dynamics between Russia and Saudi, and that Saudi, quote, will keep the powder dry, that you get a risk towards greater than $150 a barrel.
139 is the high of the year. That was the 7th of March. Tom, trying to convince people that we haven't seen the high of the year on crude. Can you imagine?
There's nobody out there.
150 plus?
Well, it's the way they walk through it. And, I want to make clear, this is not some throw a dart at the dartboard.
No, sure. There's a lot of work on capacity that's been done here by Malik and the team.
A lot of work on that, but it's about unforeseen events. And Christian walks through, if Russia blinks, what does Saudi Arabia do? The usual ballet of OPEC+. Plus, of course, if we went to Vienna, we would have a better knowledge of this, John.
Bramo would like to talk about this nice move in the market this morning. Lisa, futures up 0.5%.
It's so nice. It's so
it's a
sweet.
Nice move,
it's
isn't
just,
it? The Nasdaq
honestly,
up 0.4.
Okay, look,
market,
the fact
Lisa.
that we're getting,
Equities.
thank you, I appreciate that. The fact that we're getting a lift, though, is notable, especially given the fact that people are still seeing interest rates go higher. I honestly can't make much of any of these moves because, honestly, they'll be different in a half hour.
Of course they will.
I mean, it's like,
it's
great,
always the way,
nice.
isn't it?
I know,
it's always
but
the way.
It's all over the place these days. So how much conviction can we really have?
We said it when we started the program earlier this morning. When we look back at May, did it feel like a month where we were flat on the S&P 500, up 0.01%? Anything but.
Honestly, uncertainty is deeply unpleasant. Everyone feels that. And that is what we have right now. And it's profound uncertainty. You see that in some of the fluctuations and, frankly, the single name moves in the wake of certain earnings reports. How do you parse that into an index level call is beyond me.
John, we're uncertain about our uncertainty.
We are. It's very philosophical.
It's the pendulum of fixed income only.
There is a conversation you do not want to miss. It takes place in a couple of minutes' time. It's Lisa Abramovich sitting down with Howard Marks of Oak Tree. Don't miss that. It's coming up very shortly on Bloomberg TV and on Bloomberg Radio. Futures up 0.4%. It's a nice move. Bramo said so. From New York.
No.
This is Bloomberg.
You can't put that on me.
Keeping you up to date with news from around the world with The First Word, I'm Ritika Gupta. Ukraine will get advanced rocket systems and other weapons from the U.S. President Biden made the announcement in an article published in the New York Times. The rockets will allow Ukraine to hit targets up to 50 miles away. The U.S. says Ukraine has promised not to attack targets inside Russia. European Union ambassadors are set to approve the bloc's 6th package of sanctions against Russia. The final compromise targets Russian oil transported by ship, but it spares crude delivered by pipeline to satisfy Hungary's demands. In the UK, consumers are being urged to brace for inflation getting worse before it gets better. The British Retail Consortium says that fresh food prices are now rising at their fastest pace in a decade. It says fresh food rose 4.5% in the year that ended in May. China is planning for years of COVID-0 with testing sites on almost every corner. Tens of thousands of lab testing booths are being set up across the country's largest and most economically vital cities. The goal is for residents to always be just a 15-minute walk away from a swabbing point. In New York State, Governor Kathy Hochul and legislative leaders pledged to raise the legal age to purchase an AR-15 assault rifle to 21 years old from 18. They'll also say they'll pass a package of measures to tighten gun laws this week. Officials cited the recent mass shootings in Uvalde, Texas and Buffalo. Global news 24 hours a day on air and on Bloomberg Quick Take. Powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
environment now which is very different to the one we've seen in the last couple of decades, when both commodities and labor were easily available and relatively cheap. And now we're in an environment, probably structurally, where both commodities are becoming more scarce, more heavily contested and competed for, more expensive, and labor as well.
From London, Peter Oppenheimer. He is Chief Global Equity Strategist at Goldman Sachs. His views on an equity market and the hallmark here of a 1st June day is the uncertainty that is out there right now, which means everyone reading Howard Marks leans forward and reads a little more carefully. He is successful. He is a philanthropist. And Lisa Abramowitz, we know for certain, is a member of the Board of Trustees of the Metropolitan Museum of Art. The Met Gala is Howard Marks' fault.
Yes, well, we actually very much appreciate it for us who have spent many, many hours at the Metropolitan Museum of Art. There also is this question of investor psychology, and Howard Marks is co-chair and co-founder of Oak Tree Capital. And frankly, one of the co-founders of the entire distressed debt market, really understands how psychology can drive what is perhaps the best philosophy going forward. And he writes these fabulous memos from time to time, as late as Bull Market Rhymes. Howard, thank you so much for being with us. I want to start with trying to understand investor psychology, and as a student of history, where are we right now in terms of bullish or bearish?
I think that attitudes were quite bullish prior to a few months ago, with the exception of a brief respite during the pandemic. We've been in a bullish climate since the end of the global financial crisis in 2009. Not wildly bullish, certainly not what I would call euphoria, but optimistic. And that has been crimped now. A lot of the big name stocks are off 50, 70, 80%. The whole market is off, I guess, probably 15% from the high. So I would say that attitudes are more balanced today. But when there's euphoria, when there's optimism, when there's greed, when there's risk tolerance, and so forth, that's a very difficult climate for the value investor to find bargains. So we're happier today than we were 6 months ago. I don't know if we're going to be happier 6 months from now. That is to say that the bargains will be more pronounced. But at least, as they say, the bloom is off the rose.
At a time of such incredible uncertainty, how do you position seeing value now, but also preparing for seeing more value in 6 months?
One of the 6 tenets of Oak Tree's investment philosophy, which we established when we started in April of '95, and I've never changed a word, and I believe in thoroughly, is that we're not market timers. And that means mostly 2 things. We never sell to raise cash to prepare for a decline. And we never say it's cheap today, but it'll be cheaper in 6 months, so we'll wait. If it's cheap today, we buy it. If it's cheaper in 6 months more, we buy more. And I think that works much better than an assertion that we know where the market will be in 6 months.
This is really important at a time when so many pensions and institutional investors have been shooting for that 7.5% to 8% bogey. We talked about that extensively in the past 5 to 6 years. This idea that seemed completely unachievable in an era of quantitative easing. Suddenly, high-yield bonds have an average yield of more than 7%. Is this the best period that you have seen for pensions to actually hit their bogeys for more than a decade?
Well, I think that's right. Well, of course, many have hit their bogeys. It just didn't look in advance like they would, but the stock market and many other things have surprised on the upside for the last 10 years. But now, as you point out, one of our big activities is high-yield bonds. And a year ago, they were yielding in the 3%. One deal was even done in the 2s. That's not a very high yield for high yield. Today, as you say, they yield in the 7s. So a pension fund that needs 7 or 7.5 can make use of high yield bonds. And everything, see, when everybody gets concerned when prices decline. But if you flip that over, the flip side of price deterioration is increases in prospective returns. So now the prospective returns on many asset classes are higher than they were just a little while ago. And again, a much better climate for the bargain hunter.
Some people would counter this by saying inflation takes a lot of the value out of those returns, that basically on a real basis, you're still not getting very much. How do you counter that as a long-term investor by saying, you know what, at this point, it's worth it to get higher returns, even if on a real basis, it's not necessarily that much more?
Well, you're right in that we're not talking about an increase in real returns. We're talking about an increase in nominal returns. Most pension funds and other organizations reckon their need for return in nominal terms. You know, I mean, that is a challenge. Nobody knows what inflation is going to do. I think I heard out of one ear your previous guest say that, you know, some of the inflation factors will probably subside in the next few months, which means, all things being equal, an increase in real returns.
How much are you trying to game out where inflation is going to go over the next 6 to 12 months, considering the fact that I know that you do not time the market or look at a sort of day-to-day price swing kind of issue, but this really does determine how important some of these returns will be going forward?
Yes, it does, but I don't think there's anything to be known on that subject, and I'm sure we don't know it. You know, and another tenet of our investment philosophy, there are only 6, we're going to touch on 2 today, is that our investment decisions are not based on macro forecasts. Macro forecasts are very important. The only problem is they're rarely right. And more importantly, any one forecaster is rarely right more often than the others. So we don't make our decisions on that basis. We are what's called bottom-up investors. We invest on the basis of micro, not macro, companies, industries, securities, and we feel there, through hard work and skill, we can get an edge.
So where are some of the industries, some of the areas that you're actually seeing deep value?
You know, they are much more spread around than they were before. You know, some growth names are offering much better value than they did a year or 2 ago, down 70%. But, you know, we continue to find opportunities throughout the investment universe. You know, the prosaic industries are also offering good value.
When you talk about the global investment picture, I know over the years, especially as the U.S. yielded less and less and yet less in real terms and in nominal terms, you looked overseas, in particular to China, yes, as a potential area of prospective return. Has that changed as yields have gone up in the U.S. and frankly the economy has slowed so substantially in China?
Well, on the one hand, we have a preference for investing in the U.S. You know, the U.S., in most regards, has the best economy in the world, and it has an excellent environment for rule of law, for being able to predict the outcome when various stakeholders' rights come into conflict. That's very important to us, especially you mentioned our business in distressed debt investing. That's very important if you're going to buy distressed credits to be able to predict how we'll be treated by the law. On the other hand, from time to time, other parts of the world offer better bargains. We have the best in the U.S., but the best usually doesn't come cheap. So, and on the third hand, we like to have some diversity in our portfolio. So, you know, we've been investing in places like China and India in the last couple of years, and absolutely will continue to do so. When I hear people say, you know, I've made my living for the last 50 years investing in the things other people said were uninvestable, high-yield bonds, distressed debt, emerging markets in '98, et cetera. And when I hear people say that China's uninvestable, to me, uninvestable says maybe there are some bargains there if everybody else is boycotting that sector.
How fully invested are you? Are you always fully invested?
We strive to be fully invested. Again, we're not market timers. Market timers say, well, right now we want 20% cash. We strive to be fully invested. Our clients hire us to invest in our asset class, not to time the market. And again, if better bargains arise, I'm always confident that we'll be able to raise more money to take advantage.
About 3 years ago, when we were talking about what prospective returns seemed plausible or realistic on some sort of safe or reliable basis, you said 5 to 5.5%.
You have a good memory.
Where are we now?
I think we can make 7 to 7.5. I mean, I'm not talking, I'm saying an institutional portfolio. At that time, I was talking for the Metropolitan Museum of Art, where I chaired the investment committee, and I talked the expectation down to 5.5, as you say. Or I think we came out, I think the committee as a whole came out at 6. Today, I think an institution like the Met or another pension fund, endowment, et cetera, can make 7, 7.5. Of course, you have to be willing to go into alternatives to do it, but most people are willing.
What kind of alternatives?
You know, the big classes are private equity, private debt. Then there's distressed debt, there's real estate, and specialized forms of investing. The important thing is not which sectors. The important thing is which manager. You know, in the public asset classes like stocks and bonds, we call them beta markets because most of the return is determined by the performance of the market. And which manager you have means a little plus or a little minus. In the alternative markets, there isn't that gravitational pull toward the market return. There's no really market to pace it. What really matters is whether your manager is highly skilled and disciplined or not. And that's why we call them alpha markets, skill markets.
Do you think that your peers are taking undue risk or not enough risk?
Some of each, of course. There's a disparity. You know, there's a range, and all peers do different things. The point is, an area like private lending, where we're very active, has been a darling in the past decade. A lot of money and a lot of managers and a lot of funds have moved into the area. Buffett always puts it best. When the tide goes out, we find out who was swimming without a bathing suit. When economic and financial conditions become more difficult, we find out who made good credit decisions and who made bad ones. We'll see.
What's the historical precedent for this moment?
For this moment? Oh, you know, it's very hard to find one that fits exactly. You know, we've never had this externality of the pandemic. There hasn't been a war going on in a long time, an important international conflict with the threats this embodies. The U.S. never had an economic rival like China before. We never really had an economic rival since World War II. And of course, we have historically low interest rates. We had interest rates went down by what we call 2,000 basis points. That is to say 20 percentage points from 82 to 22. And that was a big tailwind. So these conditions are not reminiscent of any that I've lived through. But I think the important thing for your purposes and hopefully your audience's purposes is that I think that our taken as a whole, I think conditions are fairly normal today in terms of how you should manage your money and the risks you should take. And to me, that's the key decision.
Howard, thank you so much for taking the time. Howard Marks, the co-chair and co-founder of Oak Tree Capital. Tom, honestly, fascinating to hear how much some of the pessimism of today that we hear from so many people translates, frankly, into more optimism than a long time, simply because there finally is yield, there finally are opportunities, and finally there is not some monolith of optimism out there.
It's really old school, but it's also old school with a superb excess return over the years. And what's so interesting there, Lisa, with your conversation with Mr. Marks is the idea of a lifting up of the actuarial assumption. This is the Metropolitan Museum of Art. And Lisa, I'm not there yet. If you have a 5% assumption, When do you tick it up to a 7% return? Howard Marks is the first person I heard that from.
And it's frankly when you're starting to see that as the average yield on a lot of these instruments. So if you lock it in, if you believe that these companies are not going to default, if you believe, and you can get into the whole idea of whether the Federal Reserve has killed the credit cycle and whether we're not going to get the same slew of defaults in the same kind of way, this is what more people on the edges are talking about.
That's what Deborah Cunningham said at Federated as well, pushing against Ray Dalio. And she makes clear cash is not trash. And even at the short-term view where she is, basically full faith in credit, there's finally some value there. And that's something Howard Marks or any of us haven't seen in, I'll say, 15 years.
Yeah, suddenly, perhaps this isn't the end of a bond bull market, but if it is that actually really positive for bond investors?
Well, you pull back and you go price down and yield up. This is a huge topic at Davos. There's a point, where do you step in? It's no different than the courage to step into equities.
Yeah, honestly, especially when you do the credit analysis. We're getting a nice lift. That's what John says. Yeah. A nice lift to equities. I think it's interesting, especially given the uncertainty and yields higher, that there can be that sustained gain.
And the VIX, 25.94. Please stay with us through the day on radio and television. This is Bloomberg.
It was Bramo that called it a nice lift. Not me, it's a nice lift, according to Lisa, up about 0.4% from New York City this morning. Good morning, good morning. The countdown to the open starts right now.
Everything you need to get set for the start of U.S. trading. This is Bloomberg, the Open, with Jonathan Ferro.
Live from New York City, we begin with the big issue. Goodbye, May. Hello, June.
If we look at the performance in May,
we're clearly in a bear market. We've seen a nice little rally.
It's important to listen to what the market's telling you.
We're not in the all clear here at all.
The losses this year have been the biggest on record.
We now find ourselves in a little bit more no man's land.
This is not a time when you try to chase and call a bottom, call a peak, call an inflection point.
You look to June.
We could see quite a bit more downside in equity.
Let's get the conversation started with Neuberger Berman's Ashok Bhatia and Cameron Dawson of New Edge Wealth. Cameron, first to you. Hello, June, and hello, QT. How much of a difference is that going to make?
Well, I think it really remains to be seen, because what is very uncertain is how much of the higher bond yields we've seen year to date is in anticipation of QT versus the actual action of it. We start today. We think that the Fed has left the door open to be able to accelerate the movement to the full $95 billion a month. But we really don't know how QT will affect this bond market, if we'll see a really big push in longer end yields. And so I think we'll have to watch that closely, because if yields start to roll over and yet we're still doing QT, what is the bond market saying about growth? And I think that's where risk assets could find another challenge.
Ashok, any lessons at all from 2018 in that period when it comes to QT?
Yeah, I think for QT this time around, the Fed has obviously well telegraphed that, as well as the hiking cycle. So, the Fed will be taking down its balance sheet by, it's going to be about an annual rate of over $1 trillion a year. Really starts in the fall in September. So, our sense is that balance sheet unwind, a lot of the spread widening we've seen in various asset classes, and partially the rise in rates is just anticipation for that. So, our sense is it's closer to fully priced than unpriced.
Ashok, do you have confidence as to whether it is positive for treasuries or negative for treasuries based on what we have seen?
I think for treasuries, it's going to be, more or less irrelevant. Our main view is this first half of the year for bonds has really been about rhetoric. It's been about the Fed wanting to reset the hiking expectations, which they've obviously done pretty successfully. But we're now entering a transition zone. In the second half of this year, and particularly the next few months, we're going to be much more driven by the data. If we see, as we expect, weakening on the job front, weakening on the inflation front, rates and credit are going to find some footing at these levels. But it's really about entering a more of a data-driven market than a rhetoric-driven market. And in that sense, if the data cooperates, I think QT and such will sort of move to the background pretty quickly.
This is what Citi said this morning. They said yields haven't peaked equities haven't bottomed. They went on to say, despite signs that upside inflation momentum may be slowing, yields tend to not peak until well after inflation has peaked, especially when the starting point of the inflation peak is so high. Cameron, your thoughts on that quote there, your reaction to it, do you agree?
I do agree, because I think that even if we see the headline or the core number peak on a year-over-year basis because of base effects or tough comps from last year, the reality is that inflation is so broad now. Back last year, only 20% of the components in the CPI were above 4%. Now that's 80%. So even if a couple things start to roll over and bring that headline number down, the reality is that inflation is so broad, and the Fed looks at that. They look at something called the trimmed mean CPI. It throws out the extreme readings on the top end and the bottom end, and that remains very elevated at a 40-year high. So even if we see those headline numbers roll over, it really isn't enough to warrant a full dovish pivot by the Fed because the labor market still remains so tight. It might be softening or easing some, but we're coming off of record tightness. Powell called it an unhealthily tight job market at the beginning of this year. So some easing really isn't enough to warrant a dovish pivot.
The high of the year, 320 on a 10-year in early May. Ashok, the degree of confidence you have that that might be the high of the year for the rest of the year?
Yeah, we're putting that at about sort of 70% odds. So I think it's better than even that this and sort of call it the 280 to 320 range is where bonds are going to find a footing. And, the view on that, you mentioned the Citi quote. I mean, we're a little bit more optimistic that we'll see a little bit faster decline in inflation. Certainly it's going to still be elevated. We'll see a little bit more weakness in wages. We're already starting to see that. So the macro environment we see is probably a little bit more supportive for fixed income than maybe consensus here right now. There is a chance, right? I mean, inflation, there's a lot of risks associated with it, and specifically on the commodity front. So I think there's, 1 in 3 type of chance that we're going to see something maybe around 350. But, we've been putting cash to work in these markets and various asset classes in this broad range and in 10-year notes.
We'll talk about where you've been putting cash to work more specifically in just a moment. 25 minutes out from the opening bell, futures are positive by about 0.4% on the S&P. Katie Lyons, looking back on May, I have to say it didn't feel like a flat market, but on the S&P, that's what we got.
Yeah, literally almost exactly unchanged on the month of May, even in spite of all of the volatility we saw over the course of the month. John, a whole lot of drama to go basically nowhere. The question now is, where are we going to go in June? Because as you were just discussing, finally the start of QT, persistent growth and inflation concerns, a war still raging in Ukraine, fueling those. Not a great cocktail heading into a month that historically isn't great for the equity market. On average, since the year 2000, June has brought with it a decline of about 0.4% on the S&P 500, the third worst month out of the year. And we have to consider how far we've already fallen coming into this month. The S&P 500 down about 13% year to date, its worst start to a year since 1970. And looking back at starts that rough over the course of history, 4 out of the past times we've seen losses of that size by this point in the year saw the index end the year lower. Interestingly, the one exception was in 1970, but even then it only closed higher by about 0.1%. And of course, back in 1970 and the years following it, we know that there was a pretty sizable inflation problem in the U.S. economy. We are facing an inflation problem in this moment as well. And in part, that stems from higher commodity prices like oil driving up gas prices at the pump for American consumers. And that potentially is poised to get worse with inventories at 50% of normal levels. And they tend to fall in the summer driving season as it is. So that could mean more price pressure on consumers who may start to change their behavior, become less tolerant of higher prices. That raises the question of the ability of companies to exercise pricing power to retain profit. That comes back to earnings and the fate of this equity market, John.
A lot of drama on the road to nowhere. Kaylee, thank you for that. Thank you very much. Ashok, just to come to you on that, your view on where you are comfortable taking risks. You touched on it briefly. Talk me through it.
No, I think there's 2 broad areas. First is, high quality fixed income. I think, one of the underreported stories, in this environment has been, 4% types of yields, which for a lot of global bond investors is an important bogey. For the last few years, there was no way to achieve that without non-investment grade and emerging markets and bank loans. Well, suddenly with the rise in rates and widening spreads, things like agency mortgages, investment grade credit, short and intermediate term is offering those yields and more. So we've been deploying capital into those high quality fixed income markets like those 2. And then the second area is the non-investment grade market. The non-investment grade market is moving up in quality. And suddenly we find ourselves in an environment with the backup in interest rates where, double B, some triple B securities, 60 to 80 cents sort of price, dollar prices. That type of low dollar price credit instrument is the second area that we like right now. And, yields on offer there are anywhere from, 6 to 8.5%.
Cameron, from your perspective, how competitive is fixed income now? Pockets of it with the equity market?
I think it's far more competitive, mostly if you are a longer term investor and can lock in those yields. The thing that's interesting is that despite the fact that we have seen near term inflation, we haven't seen those long term inflation expectations blow out, which means that the fixed income market still rather believes that inflation will get back towards the Fed's 2% target. So it'll be interesting as we go into the Jackson Hole period, how the Fed talks about that 2% target, because that could be the one risk for fixed income looking forward, is that if the Fed starts to move away from that, do we see those long-term inflation expectations actually need to move higher, because they do surprisingly remain anchored.
We keep hearing about it, don't we? This idea of a September reset. I'll go through the dates for you. Fed meetings on the 15th of June, July 27, September 21. Before we get to September 21, you've got a CPI reading next week, June 10th, July 13th, August 10th, September 13th. 4 CPI readings going into that September 21 Fed meeting. Ashok, to you on that, I want your view on it. How you think we reassess things at this Federal Reserve in September? Because there is this conversation fueled by President Bostic last week that perhaps they can pause after doing 50, then 50 again, then pause. Do you agree with that?
I think there's a decent chance we get that. I mean, we certainly think, Fed going 50 at the next couple of meetings, that should be base case, largely priced. But by the time we get to September, we're going to have three months plus more of data, and we're just all going to have a much better sense of how quickly inflation's moving off and what's going on with the labor market. And our best guess is that the data will essentially bail out the Fed, and by September, they'll be able to slow, elongate a hiking cycle, potentially pause. But it's really going to be, to state the obvious, driven by the data. But our sense is the data will give the Fed wiggle room to be thinking about a pause or a moderation in the hiking by the fall.
We'll keep talking about it. Ashok sticking with us alongside Cameron Dawson. Your market looks like this. Equities up about 20. No drama here. Up about 0.5% with your movers. Here's Abby.
Well, John, we certainly do have a nice bullish tilt here for U.S. futures. And one of the stocks helping out, Salesforce.com. Shares are soaring. This, of course, after the company put up a strong quarter. They also raised the full year profit outlook. Solid demand for business software remains in place. And JP Morgan saying that the management tone on the macro is much better than expected. Delta Airlines up about 0.75%, the company following in the footsteps of United Airlines and Southwest Airlines to raise the revenue outlook, saying that the demand is strong even with fares up. And of course, the second quarter adjusted revenue is fully restored to 2019 levels. So it's almost as though the pandemic had not existed for Delta Airlines right now. Really pretty impressive. ExxonMobil rising in sympathy with oil back higher again. ExxonMobil up 1.3%. And then Tesla had been down about 0.75% earlier, now down just fractionally. This, of course, is Elon Musk is saying that the return to office, that the employees of Tesla must return to the office or work somewhere else. And I will say New York City, just over the last week or so, John, I don't know if you're seeing this yourself, seems much busier than it had just a couple weeks ago.
You know why they were so frustrated over the last year? You'd see the restaurants downtown New York full at the weekend. Abigail, they'd come into New York for the weekend to be at the nice restaurants and then not come into New York in the weekdays to be in the office.
Yeah, it seems now, based on my look at Grand Central and Park Avenue and Lexington, just folks coming back into the offices finally. Midtown had been very deserted now.
Slowly.
Yes, encouraging.
Slowly. Abby, thank you. Thank you very much. We'll catch up with Ed Ludlow a little bit later on about that line from Elon Musk. We did get some price target cuts from Goldman this morning. I'll go through them later on Ford, on GM, on Tesla too, on two things: additional supply chain troubles in the near term, weaker demand in the intermediate term. We'll talk about that a little bit more a little bit later. Coming up next on this program, President Biden passing the buck on inflation.
My plan is to address inflation. It starts with a simple proposition: respect the Fed, respect the Fed's independence.
That conversation up next.
reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
When you're a small business owner, there's no such thing as 9 to 5. Days are longer, and business hours, well, they're anything but predictable, especially when you have clients like ours. When I considered payroll providers for my business, I looked for a solution that fit into my busy schedule. Sure Payroll makes running payroll easy, and its U.S.-based customer service is there for me when I have questions, after hours, and even Saturdays.
Visit surepayroll.com for a 3-month free trial, because small business is our business.
At Fidelity, your dedicated advisor will help you create a comprehensive wealth plan for your full financial picture with the right balance of risk and reward, so you can enjoy more of this. This is the planning effect.
Another crazy day? Of course. You're a CIO in 2022, but you're ready because you've got the next generation in global secure networking from Comcast Business with fully integrated security solutions all in one place. So you're covered, on-premise and in the cloud. You can run things the way you want, your team, ours, or a mix of both, with the nation's largest IP network from the most innovative company. Bring on today with Comcast Business, powering possibilities.
Thinkorswim by TD-Ameritrade is more than a trading platform. It's an entire trading experience. With innovation that lets you customize interfaces, charts, and orders to your style of trading. Personalized education to expand your perspective, and a dedicated trade desk of expert-level support that will push you to be even better and just might change how you trade forever. Because once you experience Thinkorswim by TD-Ameritrade, there's no going back.
This June, in honor of Pride Month and Juneteenth, Bloomberg brings you a special equality series every Thursday in June at 1 p.m. Eastern. Bloomberg Equality, celebrating inclusion this Pride Month and all year long.
My plan is to address inflation. It starts with a simple proposition. Respect the Fed. Respect the Fed's independence. They have a laser focus on addressing inflation, just like I am. And with a larger complement of board members now confirmed, I know we'll use those tools in monetary policy to address the rising prices for the American people.
Over to you, Chair Powell. President Biden passing the buck on inflation. Secretary Yellen issuing a mea culpa.
I was wrong then about the path that inflation would take. As I mentioned, there have been unanticipated and large shocks to the economy that have boosted energy and food prices and supply bottlenecks that have affected our economy badly that I at the time didn't fully understand.
We need to get to AMH down in D.C. Anne-Marie, credit to Secretary Yellen, stepping up, standing there and saying, I was wrong.
Yeah, a lot of people got it wrong, right? Including the Fed chair, Jay Powell, who the president has now said it is fully his responsibility to fix. Also, yesterday, Jonathan, in the briefing room, after that meeting, Brian Deese, the president's head of the National Economic Council, came out to brief reporters on the meeting on inflation and was asked as well. Said, sir, you stood at this podium telling us this was going to be temporary, and instead of owning it the way Janet Yellen did, really deflected and also pointed a lot of attention to how uncertain this was coming out of a pandemic, but also the fact that this is a global problem. Look at Europe. They're dealing with north of 8% inflation as well. So clearly, Jonathan, you see the administration really coming out aggressively that you're going to see more of this as well for the month of June to pivot towards tackling the issue of the economy. But the question is it so much going to be in different policies or more about the messaging? And so far, it's really been the messaging. The president, 24 hours, 2 op-eds, Wall Street Journal, New York Times. He had a meeting with the Fed chair. He's going to be meeting with suppliers for infant formula. There's going to be a lot of different messaging, and very aggressively so for the month of June, because when you look at the polls, and one recent one said 9 out of 10 of Americans, out of a minimum, say inflation is the biggest concern, and they don't like the way the Biden administration is handling it.
You said it. Let's unpack it piece by piece. We had an op-ed in the Wall Street Journal on inflation. We had an op-ed in the New York Times on foreign policy, a mea culpa from his Treasury Secretary. You can throw in the fact that he sat there with the Fed chair, and not so subtle, it's them, not us, about inflation with the Federal Reserve, and an NBC report in the last 24 hours suggesting this president is increasingly frustrated with his own administration and the people around him. As you pointed out, Anne-Marie, is this going to be about policy or messaging going into the midterms?
Well, at the moment, I think a lot of this is about messaging, right? One of those nuggets in that NBC report, Jonathan, said the president is incredibly frustrated where he comes out and he says something and then only for his own aides to then walk it back. So there does seem that there are a lot of questions around potentially is there going to be any shifts in the administration. The NBC piece talked about potentially with the White House Chief of Staff, Ron Klain, maybe after the midterms. That would be a more traditional path of a lot of presidencies. After 2 years in, after a midterm, sometimes there is a change of course, but it does look like our changing course at the moment ahead of these midterm elections, where this is the #1 issue for voters to change the communication on inflation. When it comes to policies, they say that they are doing everything they can, but then you question, are they? We asked Brian Deese yesterday in that briefing room. Reporters asked him, sir, where are we when it comes to the China tariffs, which some economists say could shave off some inflation? And they said, I don't have an update for you on that. So there are a number of policies that have been floated, but then they've not actually followed through, that some say could impact the inflation story right now.
Anne-Marie, thank you. Related to this story, the price target cuts that we're seeing over at Goldman on those 3 automakers, Ford, GM, Tesla, this is what they had to say. Supply chain troubles in the near term, weaker demand in the intermediate term. On the demand story, they said key metrics that correlate with auto demand, housing data and consumer sentiment have slowed. The analyst added, PMI metrics like the ISM index and consumer demand data points have also weakened. Ashok, I want to come back to you, and thanks for being patient as we work through some of this. Your thoughts on where the automakers sit now in the credit market for you, given what could be happening with consumer here in America?
Well, from a credit perspective, the automakers are still in good shape. And I think it speaks to, this cycle, COVID hits and companies really, they raised a lot of cash, improved balance sheets, extended maturities. So they entered this year with actually, just as a general statement, stronger balance sheets and better looking from a bond perspective than they did 2 years ago. And then, typically we would have seen that cash get used and balance sheets deteriorate. But the events that happened with Russia and Ukraine and the Fed hiking, starting a hiking cycle in March, happened so quickly that companies really never had an opportunity to use that cash on balance sheet. So we're actually very comfortable with where autos and other industries sit from a credit perspective. And a lot of it is the improvements that happened over the last 2 years are still there and will ultimately, I think, stabilize this credit cycle, however it turns out, with lower defaults, lower downgrades than we typically see in a cycle.
Cameron, tell me, how does the same story look from the equity side?
Yeah, I think the equities are really starting to sniff out that there could be some challenge for the consumer because we are seeing demand destruction, or at least early signs of it, for high ticket price, sort of larger purchases, and also those interest rate sensitive parts of the market like housing, like autos. And I think that the reality is that the consumer is finally getting to the point that they're becoming much more stretched. If we look at real wage growth, it's actually been negative since April of 2021, which means that consumers have been losing purchasing power for a year. Now, this wasn't a problem early on because we had child tax credit, we had supplemental unemployment, and we had high savings balances. But now we're at the point where you don't have benefit from the government, you don't have that high savings balances, people are having to spend down, they're turning to credit to bridge the gap between what they want and what they can afford. And the end result is that we're likely to see more belt tightening because of high energy prices, because of high food prices, really eating into the ability for people to spend on discretionary items. And so that was the story from this earnings season as you start seeing the early signs of that belt tightening.
And Cameron, just quickly, do you worry that these supply chain issues will get fixed just as the demand starts to disappear?
Yeah, I used to be a cyclicals analyst, and that always seemed to be the time is that you would see inventory builds right into the peak of the cycle, just as you're starting to see demand start to roll over. So that certainly could be the challenge here. And I think it'll speak to or put pressure on possible pricing power for these companies, because the problem that we have is that prices are remaining very high, or cost inputs are remaining high. But as demand starts to slow, they lose the ability to pass on those higher costs to their end consumer. And that's where we're seeing margin pressure. So margin pressure, I think, really is the story for the remainder of this year, because if you look at estimates for EPS growth, a lot of the upside comes from margins going to a record high by the end of this year. And that's likely too optimistic.
There's so many companies caught wrong-footed through this cycle. Cameron, great to catch up with you. Thanks for being with us today. Cameron Dawson there. Ashok Bhatia, thank you to you, sir. Coming up, the morning calls, and later, Morgan Stanley slashing price targets on a number of US tech companies. We'll catch up with BlackRock's Jean Bavin around the opening bell.
You probably know Vistaprint for business cards, but did you know we also print that, and that, and that, and that too? Can't forget about that, or that either. So next time you think print, remember, when you use Vistaprint, the print abilities are endless.
Do you know how much your broker charges on margin loans? On a $100,000 margin loan, Interactive Brokers charges just 2.33%. Fidelity and Schwab charge over 3 times as much. E-Trade or TD-Ameritrade are even higher. Move your account to Interactive Brokers and save at least $5,200. Or much more if you're trading big bucks.
This is Lisa. Hi, I'd like 50 welcome wows and 300 customer I love it.
Promotional products from 4imprint are certain to deliver ooh yes.
Wow.
I love it. Find some wow now at 4imprint.com. 4imprint, for certain.
A Hall of Fame swing. Like Capital Group's new ETFs, there's so much behind it. A lifetime of experience. Honing your skills. Dealing with curveballs. And having a whole team behind you. Introducing actively managed ETFs powered by Capital Group. Can I find an ETF with a whole lot behind it? With Capital Group, I can.
Assalamu alaikum.
It's great to see you.
Welcome to the Qatar Economic Forum powered by Bloomberg.
Some people say that there's a de-globalization going on, but I prefer to think of a re-globalization.
Our accomplished speakers, from heads of state to business and policy leaders, will discuss evolving technologies, education, culture, sustainability, and the impact on the economy.
5 minutes from the opening bell, equities doing okay, up 0.6%. That's your price action. Here are your morning calls. RBC Capital upgrading Danaher to outperform, seeing an opportunity to own a high-quality defensive stock at a reasonable price. Next up, Goldman cutting its price targets on Tesla, Ford and GM, highlighting supply chain headwinds and weaker demand. And finally, Morgan Stanley slashing price targets on a number of tech giants, cautious amid growing signs of an economic slowdown. Coming up, BlackRock also cautious. Jean Bavin saying the equity rally isn't sustainable. That conversation and your opening bell up next.
Bloomberg Television is brought to you by Bank of America. What would you like the power to do?
Rise up this morning, smile with the rising sun, saying, this is my message to you.
Say hello to Truebill, the #1 personal finance app, packed with tools to help manage your money, like canceling unused subscriptions with just a tap. If you're ready for an all-in-one money management solution, then download the Truebill app today.
I had such anxiety,
Sometimes it felt like I couldn't breathe. Fortunately, one of my friends told me,
"You've got to relax. You're going to get yourself sick."
Pay over $100 a month for cable when it's half the cost for Fubo TV. Get all the channels you want with all the entertainment you love for the price that cable can't beat. Learn more at FuboTV.com.
What does the future of strength look like? It's a personal trainer that assesses your strength and adds weight as you progress. It's dynamic weight that adjusts for you in real time for a more efficient workout.
Come on!
And it's a roster of coaches that motivates you to get stronger, faster. The future is strength you can feel and results you can see. And you can only experience it on Tonal.
Learn more at tonal.com.
This is Scribd, an app that gives me access to ebooks, audiobooks, podcasts, and more. With Scribd, I can get in my steps in countless pages. Scribd makes every moment a reading or listening moment.
This couch.
I'm just saddled with so much credit card debt right now.
I need an upgrade card. It rolls all my monthly purchases into one easy installment loan so I can avoid stuff like that.
Where do I sign up?
Get your upgrade card at upgrade.com.
We're excited to do business with you, but before we sign, I gotta ask.
Sure, anything.
We searched you online, and maybe you can explain this?
Can't believe that garbage is still coming in. That is so false.
Frustrated with your online search results? Call Reputation Defender today to join tens of thousands who've improved their online reputation. Get your free reputation report card at reputationdefender.com or call 1-877-866-8555.
We closed out the month of May positive 0.01%. You can't make it up sometimes. The numbers speak for themselves. It did not feel that way, that's for sure. Futures right now positive about 0.6% as we kick off the month of June. On the S&P, on the Nasdaq 100 positive about 0.7%. We kick off the month of June right now. Switch at the board and get to the bond market. We look a little something like this on a 10-year yield in America. Treasury yields pushing just a little bit higher by half a basis points to, let's call it 285, 284.95, and then we turn to 285. Euro dollar 107.24, negative about 0.1%. Deutsche Bank out with a fascinating call on the ECB. They think in Q3 the ECB goes twice, and one of those moves is a 50 basis point rate hike. We'll touch on that a little bit later in the week. Crude up by almost 2%, 116.89, whipsawed by that Wall Street Journal report from yesterday, suggesting that perhaps OPEC Plus could drop the plus, go negative. Russia ultimately come to their own deal on production, boost production, crude lower, you get the picture. And that's why crude yesterday backed away from 120. I think the hardest session 119.98 yesterday. Looking at the open today, up about 0.6%. Information technology top of the pile, up by 1.1%. Materials and financials with some relative underperformance. The financials up by only 0.1%. With more, here's Abby.
John, well, definitely a nice tailwind here for stocks for the start of June, and a piece of it, the airlines. Of course, we have Delta Airlines following in the footsteps of United Airlines and Southwest, raising the revenue outlook. Demand staying strong even with fares up. Americans determined to take their vacations. In fact, they see their second quarter adjusted revenue fully restored to 2019 levels. ExxonMobil up 1.5%, as you were just mentioning, the possibility that OPEC will drop that plus or exempt Russia from its targets. You see oil higher, as you were mentioning, and ExxonMobil going along for the ride, up 1.5%. Salesforce.com really outperforming, up 11.4%. The enterprise software company raised their full-year profit view. Demand for business software solid. And JP Morgan was impressed by the management's tone, saying that their color on the macro stronger than expected. Finally, General Motors. You've been talking about that Goldman cut to price targets. You see General Motors not paying attention. The investors bidding it up 1.6%. They cut the targets, of course, on supply chain and demand risks, but it was a cut to 46 from 59. So a bit of housekeeping, and we will have Ward's auto numbers here in the U.S. for the month of May, looking at 13.7 million autos sold in the month of May here in the U.S. down just slightly from the previous month, John.
Just toning down the optimism on the year ahead over at Goldman on the automakers. Abby, thank you. About 2 minutes into this, we're positive 0.8% on the S&P on the session. On the year, we're down 12.6%. On the Nasdaq, on a session up 1.1%. On the year, we're down about 22%. Big Tech, very much hoping for a better summer following a rough start to the year. The sector's biggest names, the FANG stocks, racking up some major losses through the month of May. On the West Coast, let's get to Ed for more. Morning, Ed.
Yeah, good morning, John. The FANG stocks have been a focus, and as we sort of head to the midpoint of the year, you look at all corners of the technology sector, and they're not all created equally, right? You look at the NASDAQ 100, the Philadelphia Semiconductor Index, some of those mega cap tech stocks included within those baskets, both down more than 20%. But really, it's the more speculative and risky areas of the market. I look at the Goldman Sachs non-profitable tech index down almost 50%. You look at the names within their higher multiple software stocks. Some of the pandemic era winners like Uber are also within that basket. I gave a smile at the close last night, John. I enjoyed it. I haven't seen that in my career. Flat in the month of May on the S&P 500. We narrowly avoid the bear market, but we've already seen bear markets in other indices, right? Particularly tech-focused ones. The NASDAQ 100, as you and I have discussed in the last 24 hours, the narrative is building that there's legs to run more on that bear market in big tech. We're in a position now, and I saw this throughout the session on Tuesday, where yields are rising, right? We see this shift to value. Value stocks are outperforming growth in a big way, not just in the moment, but over a historic precedent basis as well. The concern that your guests keep raising is, does this change with the inflation picture as it is? How do these non-profitable companies in the tech sector in particular fare?
You know who wants to see a bear market? Elon Musk working from home. This is what he had to say. You've read this already. I'll share it with our audience who haven't seen it yet. Remote work is no longer acceptable. Musk went on to say anyone who wishes to do remote work must be in the office for a minimum, and I mean minimum, of 40 hours per week or depart Tesla. This is less than we ask of factory workers. Ed, your view on how this is playing out?
That was a very good Elon Musk impersonation, John. Well, look, he's been consistent throughout from the early days of the pandemic, right? He fought very hard to keep Fremont over the water from where I'm sitting open. At this time, they're moving mountains to keep Shanghai running amidst those Shanghai COVID restrictions, which are now easing. The biggest line for me in that quote in the memo was, he will personally approve any exceptions to the rule. And last I checked, Tesla had more than 100,000 employees worldwide. So you can imagine how busy his inbox is going to be over the next 5 days.
I think that's going to be filling up pretty quickly. I just wonder how Twitter is feeling, Gad. Can you imagine the tech world of Twitter, of Elon Musk, if he does get his hands on it?
Yeah, look, Twitter internally, employees are discussing this day in and day out about what the company is going to look like, about the culture of the company. They're referencing recent reporting and allegations against Elon Musk around sexual harassment. We have some reporting coming later on the Bloomberg terminal about some of the product changes that may be changing at Twitter, right, with a view to what Elon Musk might be focused on. But internally, for these employees and these software engineers, it's still a great unknown.
Ed, looking forward to your reporting a little bit later. Thank you, buddy, as always. The pain in big tech, then, may be far from over. That's the view from the team over at Morgan Stanley, slashing their price targets on Amazon, Alphabet and Meta amid growing signs of an economic slowdown. Back with us for more. Here's Katie.
Yeah, John, Brian Nowak and his team saying that the odds of a recession here in the U.S. are now up to about 35%, up from about 5% at the start of the year. And they say that could spell bad things for advertising and e-commerce growth, which is a bad thing for a number of these tech names. They slashed their expectations for online ads and e-commerce growth by about 1 to 4% for 2022 and 2023. And also, as you said, sizable price target cuts for the likes of Snap and Pinterest. Snap's target cut 56% down to $24 a share. The cut for Pinterest was about 25% down to $21. And you also had some sizable cuts for the larger players as well. Now, to some degree, this is a game of catch up because as Ed just ran us through, these stocks have already seen a lot of pain so far this year, all of them down 20% or more. And that has knocked trillions of dollars in value off this equity market and dragged the NASDAQ 100 into a bear market. Global tech more broadly heading for its worst annual performance in 14 years, since all the way back in 2008. Obviously, though, these stocks are now much cheaper. The forward PE multiple on the NASDAQ 100 is now about 21. That is the third below below its height in 2020 and below the 5-year average of 23. So these stocks are cheaper. Valuations maybe look more attractive for dip buyers. The question is, how many people want to dip their toes in this water with all the headwinds still out there, John?
Kelly, thank you. Seemingly some today, at least. On the S&P 500, up 0.8%. On the NASDAQ, up by 1.2%. Just yesterday, we caught up with Savita Subramaniam of Bank of America. Take a listen to this.
Maybe we're not at the absolute bottom, but there are some areas within the equity market that are likely to be, some of the best opportunities, some of the best entry points that we'll see in this sell-off. So equities offer inflation protection and cash return. Where can you get those things? Well, a lot of equities have them. Energy, financials, even healthcare staples.
Let's get the BlackRock view from John Bavan. John, great to have you with us on the programme. You've toned down your view on equities recently. Just walk me through the thinking.
Great to be with you, John, this morning. Thanks a lot. So the main, it's all about the policy landscape and the Fed in particular, I would say. We have been, overweight equity. By a lot of the arguments we've just heard about, equities are attractive in an inflationary environment and will continue to be, but there's been a significant repricing of the policy path in the U.S. Over the course of the last few months. Very significant. We don't think that ultimately that policy hiking will be fully delivered. But for the time being, the Fed is really playing for the inflation, politics of inflation. And until that changes, I think we're going to be in an environment where, it's difficult to see, a buy the dip mentality working out. I think we're gone the days of just simply buying the dip. It's a different kind of environment. And so we'll need to have clearer signals on how the Fed is framing this environment before we see, a more constructive rate landscapes supporting equities.
Jean, you were previously overweight. There might be some people, they might be rude, they might turn around and tell you this is like closing the barn door where the horse is already about 2,000 miles down the road. What would you say back to him, Jean?
Well, I think we're adjusting to a pretty significant backdrop that has changed in terms of the rate side of things. I would say, our biggest conviction underweight was on fixed income government debt, which we thought yields will have to go up. We still believe they have to go up from here. So that has played out, partly in the long end where we think that has more to continue. There's been more noise now on the Fed front, and we're acknowledging this. We think ultimately central banks will have to pivot to a more dovish stance. And as a result, we will see eventually a more constructive environment. But right now, we think it's better to be neutral. Just to be clear, we're falling back to neutral, staying invested, but neutral. And we think they're going to be better entry points, still over the next few months until we get clarity.
On the central bank story, here's the quote on the Fed from you and the team. You said the path of short-term rates is less than what the market is pricing in now. That's what you expect. On the ECB, you say we see the path of market pricing too aggressive. You see that both at the Fed and the ECB as well. You mentioned there that they might have to pivot. So let's talk about that, Jean. What's going to trigger that move? What's in the path forward, in your view, that you think triggers that move?
Well, I think it's important to maybe take a little step back to see why we think of this way going forward. But last year, we had commentators and the Fed, I think, central banks in general, oversimplifying the story of inflation with framing it around a time frame, right? Which was temporary, which we don't use anymore. That turned out to be wrong, could not be sustainable as a story, so we shifted away from that. But unfortunately, I think we've shifted to an oversimplified story again, which is one where we're going to raise rate until inflation is under control. But that's trivializing the world we're in. The cost of bringing inflation quickly back to 2 would be extremely acute, high, and I think that's going to become clear over the next few weeks and months. And as this becomes clearer, I think there will be no choice but to acknowledge a trade-off that is not as simple as simply raising rates until inflation is tamed. So that's the trigger is acknowledging these costs, which will be pretty real and will come clear over the next few weeks.
So, Jean, this is really, really important. Fading the tightening story at the Fed isn't necessarily good news. It can mean inflation is coming down because the supply side surprises in a positive way, or it can just mean the economy can't handle it. So, Jean, just be more specific for us. Which one is it, and what implications does that have for how you allocate capital?
So we don't think there's a nice Goldilocks scenario in the middle, which I think is what you're getting at. I think either we're getting a world where we're slamming the brakes, we're insisting on getting inflation back to 2, which I think is a world where we're going to see a recession. I don't see any homegrown reason or endogenous reasons for a recession to happen. It's not a typical recovery that leads to a recession, but the risk of over tightening could be leading us there. The alternative, which is what we think is going to be ultimately the most likely scenario, is we're going to live with somewhat more inflation. So it's not a great scenario. It's not like a Goldilocks like we might have seen over the last 20, 40 years, but it's one that I think is more benign than a recession one. And that's why we expect a bit more inflation than the market is expecting. We see rates going not as far up ultimately, but at the same time lower cost in terms of economic activity.
So John, coming into this year, my thoughts on fighting the Fed. A lot of people would say don't fight the Fed. And I had to think about, well, what does that mean for 2022? And what I thought it meant would be inflation protection would no longer be needed because this Fed doesn't want inflation anymore, and ultimately means higher real rates. Are you saying we can fight the Fed? We can fight that effort because ultimately they won't be able to succeed without causing a recession?
Pretty much, that's what I think we're saying here is that it's going to be very difficult to tame this inflation, bring it back to 2 quickly. And it's not something that is caused by, a monetary policy itself. Interest rates themselves are not really addressing the root cause of what we're dealing with right now. Massive reallocation shock between goods and services, the biggest we've ever seen in terms of sectoral reallocation. That won't be solved by tightening policy. I think that's going to become clear. And if we try to do it, it's going to be extremely costly. And so I think that's what, don't fight the Fed or fight the Fed, I don't know, but it means not buying the idea that inflation will fall back quickly to 2% and connecting that to rates rapidly increasing.
John Bavin of BlackRock. John, stick with us. We've got some data out in just a couple of minutes, and Mike McKee's going to drop by and break it down for us. John, thank you. We are positive by about 0.5% on the S&P 500, on the NASDAQ higher by about 1 percentage point. Coming up just around the corner, jobs day in America and a ton of economic data.
The Fed's pretty convinced that they need to go to something close to neutral, and expeditiously is the way that they put it. And so that's what they're doing. I think that the economy is going to have enough momentum to keep the Fed so the Fed will keep going into the fall.
That conversation up next. Every Friday with 30 minutes dedicated to fixed income, I'm Jonathan Ferro. This is Bloomberg Real Yield.
If you invest in the S&P 500, your portfolio may be too concentrated in big companies. This can leave it imbalanced and exposed when performance varies. Invesco's S&P 500 Equal Weight ETF RSP is spread equally across the S&P 500, which reduces potential concentration risk and helps keep your portfolio in balance. Stay in balance with Invesco's RSP. Before investing, carefully read and consider fund investment objectives, risks, charges, expenses, and more in prospectus at Invesco.com.
My little sister's got a birthday coming up, and she loves Lily. Celebrations Passport makes it easy to say I love you or happy birthday.
Sam! Oh my gosh!
How you doing?
Get free shipping, perks, and points with Celebrations Passport from 1-800-Flowers.com.
At Fidelity, your dedicated advisor will work with you on a comprehensive wealth plan across your full financial picture. A plan with tax-smart investing strategies designed to help you keep more of what you earn. This is the planning effect.
You asleep? Do we have enough life insurance? How would just one of us afford the house, car, Jason's college?
Ethos Life.
Ethos Life?
Go to ethoslife.com and get your personalized quote in seconds and apply online in minutes, often without a medical exam. And Ethos is very affordable.
Hey, I just got my free quote with Ethos.
That's great, sweetie. Sweetie? Get a free personalized quote at ethoslife.com.
We're excited to do business with you, but before we sign, I gotta ask.
Sure, anything.
We searched you online, and maybe you can explain this?
Can't believe that garbage is still coming in. That is so false.
Frustrated with your online search results? Call Reputation Defender today to join tens of thousands who've improved their online reputation. Get your free reputation report card at reputationdefender.com or call 1-877-866-8555.
At Southern New Hampshire University,
you can finish your degree faster and for less money. Transfer up to 90 college credits toward your bachelor's degree.
I was able to transfer a lot of my credits, and it made it easier for me knowing that I don't have to start all over again.
Definitely lowered the cost by being able to transfer those credits in.
Get more transfer credits, pay less tuition. Now that's something to celebrate. Next term starts soon. Visit snhu.edu.
Shipping manager left to find themselves, leaving you lost. You need to hire.
I need Indeed.
Indeed you do. Indeed Instant Match instantly delivers quality candidates matching your job description. Visit Indeed.com/hire.
This is Bloomberg's The Open. I'm Ritika Gupta. You are live in the principal room. Coming up on Balance of Power, Betsy Stevenson, the University of Michigan Professor of Public Policy and Economics. That's 12 p.m. New York time, 5 p.m. in London. This is Bloomberg.
Fed's pretty convinced that they need to go to something close to neutral, and expeditiously is the way that they put it, and so that's what they're doing. The notion that at some point they're going to take a pause and look around, of course that's going to happen at some point, but it's going to be driven by the economic data. I think that the economy is going to have enough momentum to keep the Fed so the Fed will keep going into the fall.
Bill Dudley there, the former New York Fed president. On the economic data, let's get to Mike McKee. Morning, Mike.
Good morning, John. Some fresh data coming in from S&P Global. It's U.S. manufacturing PMI out. And as is the case around the world today, it's basically a story of stabilization, with the number coming in at 57, down from 57.5. However, a little bit less than the market thought, but it doesn't really matter all that much. It's a kind of a rounding error in this case. And it does suggest that the manufacturing business has stabilized. Of course, top of the hour, we'll get the ISM number, and that'll get a lot more market attention. But around the world, same story. We've had some slight changes in the manufacturing ISMs for Germany, France, Italy, the Eurozone, and the Euro-K. Some up, some down a little bit, but all still in the 50s, all still suggesting manufacturing is expanding around the world, and that's what the central banks want to see as they are raising rates. Rest of the week is going to be interesting. Here are the most important things that we're watching. The ISM, as I mentioned, we'll also look at the prices paid as part of that. Auto sales are those starting to be affected by higher interest rates. Jobless claims, everybody's canary in the coal mine. And then, of course, Friday is Jobs Day and ISM services. I mentioned at the bottom there, the Fed balance sheet. This is June. We're starting the balance sheet reduction this month. Doesn't really start until the 15th, when the first bonds start to roll off, but people are going to be watching. Nothing's going to really happen or change in the markets, John, for some months, because we're talking such huge amounts of money, but it does begin this month.
It's finally here, and you asked the chairman himself for the news conference, why did we wait so long? But we can go there another day. Mike, JOLTS data, it's taken on this new importance. What do you make of that?
Oh, it's just people trying to figure out where the Fed is going. And the Fed is, we know, going 50 in June and July, they say, unless they come out and change their mind. So then what happens after that? And there's a feeling that the jobs data will help them make a decision, because, as Bill Dudley was pointing out, the Fed is probably going to be pushing the unemployment rate up. It's been going down. It's forecast to go down again. So when do we start to see a change in the employment situation? Because interest rates are higher, that will give the Fed a clue as to how their medicine is working.
Mike McKee, thank you, buddy. As always, going through the data, the PMI behind us, ISM coming out in about 10 minutes. You get JOLTS data, job openings in America as well. On to tomorrow, we get ADP, jobless claims. I think we get some factory orders, durable goods, capital goods orders in the mix as well. Then onto payrolls Friday. Jean Bavin waiting patiently for us. John, thank you for that. Let's frame the debate with the Fed. And we know your view now. You've got the one side of the conversation, the debate, the argument that the Fed is going to keep on going. Think Bill Dudley. He thinks the economy is resilient. They'll have to do more. Your view, the Fed takes a pause. I often think about this, often ask this question. How and when would you know if you're wrong? Where on the calendar can you identify when this argument gets settled one way or the other, Sean? Where is it?
I think they're going to 2.5 or close to that level by the end of the year. We'll see. We'll get a better sense as we get closer whether this is close to what we think is neutral. We've already seen a pretty sensitive market to this repricing of rate hikes. So I think this is a sign that we'll get more and more evidence that like neutral might be, not that high in this cycle. But I think by the year end, we'll get to that point where the Fed has framed things around two phases. We're going to try to go back to neutral swiftly and then reevaluate. And that's going to be then a question about what we do next. And I think this is coming into sharper relief, by the year end. And so that's the horizon we're looking at. Getting close to neutral as quickly as possible. I think that's a kind of a 2.5 number that we are looking at. And once we're at that number, reevaluate.
John, just to lead on your central bank experience, as you know, it's impossible to know where neutral is in real time. Monetary policy operates with long variable lags. You know that quote. We use it all the time. John, how do we know any of this stuff where neutral is, and ultimately, do we find out too late? And if it's too late, we've already made a mistake, haven't we?
Well, I think one of the things I find a bit troubling in this environment is that we've completely lost this story about being forward-looking when it comes to central bank. All of the communication is kind of backward-looking. We've talked about framing things like we're going to hike until inflation is tamed. That's an example, right, of where by the time we know that, it's going to be too late. We're going to have overdone it. So there's a bit of a worry here of being in the mode of backward-looking policy making, and I think also solving for politics. I think the politics of inflation is really like the driver here, and there's a bit of a rear view mirror here story that is at play. But I do think that we won't never know whether we're at neutral, but we'll see sign of pressure cracks that I think will be more apparent, and they'll start to build a narrative around that, and we'll see some part of the committee making these arguments more forcefully as we get closer to the end of the year.
We've got to leave it there. Great to catch up, as always. Jean Bavin, there of BlackRock. We saw the politics of inflation on full display in the last day or so. Your equity market's positive by 0.5%. Your trading diary is up next.
The Principal Room, brought to you by Principal Financial Group, combining actionable insights with specialized solutions to help meet your investment goals. Get to know us at Principal.com.
As a woman of color, I knew early on I would need extra support to overcome the barriers I would face. During my senior year of high school, I participated in a program called IJAC. It focuses on mentoring, financial education, and exposure to diverse careers. It's important to learn these values and to pass them down. Investing in programs that create possibilities for people of all backgrounds can create a lasting effect for generations to come.
Every day, big decisions are made without full information. Overloaded by data. Compounded by complexity.
Being blamed on this heat wave and it's
made in the dark. Without relevant insight and advice. Better decisions are made in the light. Full context. All the facts. With clarity and confidence. So organizations and the people they rely on are protected and able to grow. Aon is in the business of better decisions.
Twenty-six minutes in, stocks are higher. Here's your trading diary. ISM manufacturing numbers coming up at the top of the hour. Some Fed speak from President Williams and Bullard following the Fed beige book a little bit later. President Biden meeting with baby formula manufacturers at 2:45. Another round of jobless claims on Thursday, and rounding out the week with a big one, the payrolls report. Job openings a little bit later too. Ton of data this week from New York City. Thank you for choosing Bloomberg TV. This was the countdown to the open. This is Bloomberg.
You probably know Vistaprint for business cards. Yeah, we print that. But did you know we also print that? And that. And that. And that menu. And that's embroidery, but yeah, we print that too.
Can you print here?
Sure, we can print there. We can even help design it. We make print that lets people wear your brand. Take it. Stick it. Carry anything in it. So next time you think print, remember, when you use Vistaprint, the printabilities are endless. Print it all at Vistaprint.com.
Your time to invest in companies that make stuff like this hard seltzer and this jetpack is now. It's all on Start Engine, which has an investor community of over 500,000. Go to startengine.com today and start investing.
When a folded flag is placed in your hands, it can feel as if you're marching alone into an uncertain future. But you're not alone. Just as soldiers march together, the Folded Flag Foundation is there, marching right beside you. By funding educational opportunities for Gold Star families, the Folded Flag Foundation helps us on our path to a better future. March together with us. Give today at foldedflagfoundation.org.
Remember when you used to get stickers for doing something good? What if you got Bitcoin? With Upgrade Card, you can. You can get 1.5% back in Bitcoin on payments. Upgrade rolls all your monthly purchases into one easy installment loan. Get started at upgrade.com.
Do you listen to the TV on high volume or have trouble hearing conversations? Then you would benefit from hearing aids. Don't waste thousands on expensive hearing aids when you can get Nano's revolutionary technology for just $397. Don't be fooled by higher-priced hearing aids. The CIC Recharge is a true hearing aid, not an amplifier. With rechargeable technology many customers say is superior to more expensive models. Call now and get not one but two Nano hearing aids for just $397. Plus, we'll add a portable charging dock and ship your order absolutely free. The CIC Recharge has a tiny in-the-ear canal design that is nearly invisible. Why keep missing out on important conversations or waste thousands of dollars? Call and get two CIC Recharge hearing aids for only $397 and free shipping.
800-833-9735. Again, 800-833-9735.
Paying for in-flight Wi-Fi for months before I finally caught it. Truebill uncovers hidden subscriptions and notifies you when a charge is upcoming. From there, you decide if you want that service. And if not, cancel it right from the app with one tap. Download Truebill, the money app that works for you.
Yo, dude, you need some help?
Don't worry about me.
Yo, there's no shame.
No shame? You don't know my family, man.
It's okay to ask for help. Find a licensed therapist at BetterHelp.com.
From the financial centers of the world, this is Bloomberg Markets with Alex Steele and Guy Johnson.
It is 30 minutes into the U.S. trading day on this Wednesday, June 1st. Here are the top market stories we're following for you at this hour. Let the QT begin. The Fed starts shrinking its massive balance sheet today. It's a runoff versus tightening. We'll look for where strains in the financial markets may appear. And finding deep value, Howard Marks of Oaktree sees opportunities in growth as well as India and China. More from our exclusive interview with the legendary investor. And jolting the jobs market. The latest read on hiring, inflation, and manufacturing with Tim Fiore, chair of ISM's Manufacturing Business Survey Committee. From New York, I'm Alex Steele, my co-host in London, Anna Edwards. Guy Johnson is off today. Welcome, everyone, to Bloomberg Markets. First day of June, equities on the front foot, economic data front and center.
Yeah, economic data front and centre. European markets struggling to find much direction, although US markets giving a little bit of that. But it is a bit varied. Doesn't feel as if perhaps there's all that much commitment behind it because we're quite low on volumes here in Europe. So we'll return to that theme. Let's get to some of that economic data that Alex was just mentioning. And we'll go first to the jolting the US economy. See what you did there, Alex, in the headlines like that. So we've got JOLTS job openings coming in at 11,400. So that's 11.4 million. Essentially, and that is almost in line with what we were expecting. 11.35 million was what we were expecting. It's down a little bit on the prior period, but it is more than the survey. And if this is part of the continual recovery in the jobs picture in the United States, then we're certainly still seeing that. We got down to levels of around 5 million back in 2020. A lot of people starting to ask questions, when do we get more job openings in the US economy than we have unemployed people in the US economy? We certainly got to that particular landmark event here in the UK some time ago. So interesting to keep an eye on the tightness of this labour market right now, Alex.
All right, here in the U.S., you got the ISM. Manufacturing, prices paid, new orders, all coming in stronger than estimated, particularly the new orders coming in there at 55.1, and the manufacturing index coming in over 56. The one lighter area, though, that missed estimates a touch is ISM employment coming in under 50, which is usually that expansionary mark. Equities, though, not reacting that much at all. You still have S&P up by about 0.4%. Let's dig into the numbers here, because the question really becomes, what kind of demand destruction do we see from higher inflation? That's what the Fed's watching. That's what markets are going to be watching. Want to bring in Tim Fiore, chair of the ISM's Manufacturing Business Survey Committee. Hey, Tim, it's great to see you. What was your biggest takeaway from the ISM today?
Well, not to avoid the employment number, which we'll get to shortly, I think the greatest news here is that demand, after softening slightly in April, bounced right back. And all four sub-indexes that I use to track demand all reacted positively. The customer inventory number, the backlog number, particularly new export order, was a little bit soft, but not a big surprise with Europe and China, and the new order number popping up. So it feels good. I mean, the sentiment of the panel was 5-to-1 positive about future demand, which is makes you feel real good. So I think demand is stable, solid. There was a little bit of concern in the April timeframe, but it seems to be rectified. But there are some signs in some industry sectors that we're seeing a little bit of slowing in expansion, primarily in those sectors that support the building industry. We had comments from the chemical industry sectors and fabricated metal products and non-metallic materials where there's some indication of some softening, not a big surprise.
Timothy, good morning. Let me ask you about that a little bit more then, because from what you said at the beginning, it sounded as if any weakness was coming from overseas, and actually the US dimension here was really strong, but then there is maybe some weakness in construction. Talk us through that a little more.
Right, so I go through the comments and I look for people feeling that things are slowing a bit. It's time to start to look for that, because at some point it will happen. And I came up with slightly less than 10% of the general comments indicating that things may be slowing, not things are slowing. So there's 18 industry sectors that make up the manufacturing economy. I looked into those, and there were three that kind of stood out. Non-metallic materials, that's a big building construction area. Chemical products, it's a foundation element that goes into a lot of other materials. And fabricated metal products, but that does the same. So, I mean, it's not widespread. It seems to be industry specific. And I guess not that big of a surprise given what's happening now with the housing market.
Yeah, Tim, I wanted to get your take on that. Is it more of a supply issue, right? We don't have the construction material to build the stuff, or is it an underlying demand issue?
Well, the indications were it's demand, but it could also be that there's over ordering and that people have really pumped up the purchase order pipeline over the last year to account for long lead times. We're still sitting at record lead times. That hasn't budged. You did see that the price index eased a little bit, which is a positive sign. And our supplier delivery index came off a little bit too, which is a positive sign, but we're not seeing dramatic movements in those. We're seeing slow and steady improvement, post the Russia invasion of Ukraine. So we're moving in the right direction here, but it's going to be slow. And let's get to the employment numbers. So we did contract. Not a really big surprise. We're dealing with very significant quits. It seems to be slowing a little bit, but not very much. And although our panelist companies are getting better at hiring people, they're still losing people. As you saw just recently, I think we set records in the month of April, I think it was. So that's still continuing. There's still a chase for wages. And until that employment number really comes back, our production number isn't going to get into that high 50s that we're really looking for.
Okay, and let me ask you about any clues you've got for us, Timothy, around inflation. Looking at the prices paid component here, the actual number coming in at 82, above the survey, but lower than the prior period. Any clues as to where the inflation narrative goes?
Well, it's in transportation, it's in energy for sure. There seems to be some topping off. We just recently did our forecast for the second half of the year, and we're feeling that the prices are up about 11.4% compared to December of last year. But we believe by the end of the year, it'll be up 11.1%. So that kind of indicates that we're at the peak of growth, and that will have a slow come down, not even 100 basis points here, but will come down slightly as we close on the year, which means that we're moving more towards equilibrium. I think it's, I think this is a really strong month at this point in our 24-month manufacturing expansion cycle. It's really positive. As I've mentioned before, our typical cycles are about 34 months. I feel that this one will be longer. If the Fed doesn't do something on the interest rate side next year that could slow it down faster. But I think we're in a great trajectory here. There's still a lot of demand out there. Supply chain is getting better. And you can see it with some of the sub-indexes. We're still struggling with conversion, and that's primarily due to labor issues on the factory floor, which is driven really by the quits there.
Hey, Tim, maybe an unfair question, but if the Fed looks at this number, is this the kind of number where they're like, okay, great, economy is good enough, but demand's too strong still. We're going to have to hike a lot more than just 250 basis point hikes over the next few months?
Well, I can't speak for them, but sitting at 1% federal funds rate is still really low. I mean, it's a long way to go towards what is equilibrium. So I don't think that they would be disappointed in this number. It doesn't feel like it's an overheating number, and it doesn't feel like it's collapsing towards the 50 level. So, I mean, if we ran 55 to 58 for the next 6 to 9 months, that would be really good. I mean, every 2.5 points here in the PMI is approximately 8 to 10% improvement month over month. So, we're doing much better than April.
Timothy, thanks very much for joining us. Good to speak to you. Timothy Fiore, Chair for the ISM Manufacturing Business Survey Committee. Let's get to some other breaking news we've had just in the last few minutes, and that comes to us from Bank of Canada. Of course, we're monitoring rate hikes across the globe, as that seems to be the dominant narrative, not in China, of course, but many other places. Bank of Canada hikes key policy rates by 50 basis points to 1.5%. They're warning, another red headline tells me that the Bank of Canada is warning it could be even more forceful if needed. And there was going to be a lot of focus on the hawkishness or otherwise of the statement. This is the second jumbo hike we've had from the Bank of Canada. Another one is currently due in July. That would be a third. Do they pause after that? How will the market interpret that? More forceful if needed. Does that mean could do more than 50? I mean, 50 is what they've done twice, and an expectation in the markets that they will do another 50 shortly. So this is what we see in the FX markets as a result. The loonie maintaining its gain after the Bank of Canada policy decision. Now, coming up on this program, the Fed has another tool to fight inflation. It's shrinking its $8.9 trillion balance sheet. That starts today. Where are the biggest risks from quantitative tightening? We're going to ask Lisa Shallett from Morgan Stanley Wealth Management, where she's Chief Investment Officer. That conversation coming up next. This is Bloomberg.
Wherever you get your news.
This is Bloomberg Daybreak with Lee.
On Bloomberg Radio.
Welcome to Daybreak Australia. This is Bloomberg Technology. This is Bloomberg Green.
On TV, radio, and the web, this is Bloomberg.
What have we got to look forward to?
I always think about this William Gibson's quote about the future, that the future is already here. It's just not very equally distributed.
I'm more interested in parallel versions of what might happen. My practice in art and research is just posing some of these questions to imagine more of these different singular possible futures.
Hyundai Motor, connecting art and technology.
What could the father of the bride possibly be doing on his phone? Checking with his marital advisor to see if he's on track to do this again. And again. Did I mention she made the guest list?
Digital tools so impressive, you just can't stop. What would you like the power to do?
When the market feels toppy, investors may want to switch to low PE stocks with rising earnings. They're hard to find in the US, but not in many other markets. But you can't compare and buy stocks trading in different currencies, right? You can now, with Interactive Brokers Global Analyst.
Interactive Brokers. Invest globally in stocks, options, futures, currencies, bonds, and funds from a single integrated platform.
100flowers.com just made my birthday.
I can't stop smiling.
Wow, it's so cute. And there's berries too?
Hello! How can you compete with flowers?
It's like a whole garden, just for me.
Best birthday ever.
Thanks, 1-800-Flowers.
Throughout history, I've observed markets shaped by the intentional and unforeseeable. For investors who can navigate this landscape, leveraging gold, a strategic and sustainable asset. The path is gilded with the potential for rich returns. June, in honor of Pride Month and Juneteenth, Bloomberg brings you a special Equality Series every Thursday in June at 1 p.m. Eastern. Bloomberg Equality, celebrating inclusion this Pride Month and all year long.
The labor market is the tightest basically it's ever been, and you can see that by the ratio of unfilled jobs relative to the number of people that are unemployed. The Fed needs to loosen that up, or wage pressures will accumulate, and that will keep inflation above the Fed's 2% inflation objective.
That was Bill Dudley, Bloomberg opinion columnist and former New York Fed president, of course, speaking earlier on Bloomberg TV. Let's get to our question of the day. Where is the biggest risk from QT, from quantitative tightening, from the runoff of these balance sheets that we see starting today at the Fed, but actually has been taking place from other global central banks already? Lisa Shallett joins us, Morgan Stanley Wealth Management Chief Investment Officer. Lisa, really nice to have you with us. Let's start on this question then about QT, because it starts today at the Fed, and we're all curious to know what the biggest risk from QT is going to be for markets.
Yeah, look, I think what people need to remember is, the Fed is using two tools. One is the Fed funds rate, which is the cost of capital, and, running off the balance sheet is the amount of capital. And I think, as we've been trying to caution clients about, it's where that quantity of capital and quantity of liquidity has been most beneficial, that its withdrawal is going to continue to be felt. And that is in the most speculative parts of the market, the most richly valued parts of the market. So while I think we've seen a bounce back over the last 5 or 7 trading days in some of those sectors, whether it's unprofitable tech, if you will, whether it's some strengthening in some of the smaller cap sectors or sectors levered to some of the more speculative parts of the market. That's, I think, where we're going to see this withdrawal of liquidity really start to bite.
So, Lisa, I guess I wonder how much of that is already in the market. And I'm just looking at the front end of the curve now, whether you're looking here or in Canada, for example. The Bank of Canada hikes 50 bips. They say we can do more if we need to. We kind of knew that was going to happen. But the market reacted quite strongly anyway. What's appropriately priced?
So, look, I think we need to remember, from our perspective, what's happening on the front end of the curve is all about, what people think is going to happen to rates. What happens on the back end of the curve is very much about what people think is going to happen to the balance sheet. And so I think, we saw, a pullback in the 10-year and the 30-year over the last, kind of 3 or 4 weeks. And our sense is we may give some of that rally in long duration treasuries back as people begin to further internalize what this withdrawal of liquidity looks like for that longer duration bid.
So that's the longer term story. And as you say, that might be driven by the balance sheet. Let me ask you what you expect to hear next from the Federal Reserve. I mean, we just went through some data on the US economy. The data suggesting, according to our colleagues on the Markets Live blog, that the economy can handle a hawkish Fed. For how much longer do we hear a hawkish Fed, Lisa? Do you have any kind of pivot point in mind?
I think the Fed's going to remain extraordinarily hawkish through September. But I do think that September is going to be a watershed, and it's going to be a watershed in terms of the deceleration of Fed hawkishness, if that makes sense. I mean, let's think about it. We're going to, live through what's likely to be 50 basis points in June, 50 basis points in July, potentially 50 in August as we get closer and closer to, Fed funds futures forecast for the full year. And at the same time, that quantitative tightening is ramping up. And we don't get to steady state on those things until September. So I think by the time we get to September, we should have some more constructive inflation data. That will give the Fed some cover. We'll also be approaching the midterm election season when the Fed typically, in their spirit of independence, wants to try to quiet down and not get into the fray of campaign season. So we're targeting September for a shift in the tone from the Fed. But it's going to be a rocky summer from where we sit, and the Fed's going to keep their foot on the accelerator.
So, Lisa, this is such a simplistic question, but what do you buy and what do you sell on that? In that if we're in for a higher volatility regime until things calm down, what do you do with that? We haven't been in that kind of regime in a very, very long time.
Yeah, so our advice to clients has been to be a very active asset allocator and be a very active security selector. We're advising, maximum levels of diversification by region, by sector, by exposure to style and quality factors, by capitalization, and we're really just hollowing out the parts of our portfolio exposure that's very sensitive to rates. And so that has left us, surprisingly, very focused on a suite of cyclical-oriented sectors like energy, like industrials, like financials, like some consumer services, and balancing that with some more defensive exposures, most particularly healthcare.
Okay, so that combination of the cyclical and the defensives. On the subject of that cyclical, you mentioned commodities, you mentioned oil. Is that still a good place to hide, Lisa? Do you think we've seen peak oil? I mean, clearly the geopolitics, very difficult to call here, but you have the geopolitics pushing the supply side, but then you have the demand side from China. Where do you think this heads?
I think we go higher before, we get to a resolution around equilibrium. Clearly, we've gone through this period where much of the pressure has, quite frankly, come from the constrained supply side and what's going on emanating from the Russia-Ukraine war. But what we have to appreciate, exactly to your point, is that China and, quite frankly, a swath of emerging markets have been, if not slowing, close to a recession. And so as those economies come back, which, again, we have a very high degree of confidence they will, towards the third and fourth quarter of this year, in large part because we do think that China is going to aggressively stimulate into the next Communist Congress in September, when Xi goes for a historic next term. And so, if we see a spike in demand, in the back half of the year, I don't think that the supply situation globally is going to be fixed by then. And so we're looking at least another 6 to 12 months, in our humble opinion, of tightness in oil markets here. And so that trade's got more ways to run.
Hey, Lisa, it was really good to catch up with you. Thank you so much. Lisa Shallett, Morgan Stanley Wealth Management Chief Investment Officer. Coming up, I was wrong. Treasury Secretary Janet Yellen admitting she made a major misjudgment when it came to inflation. More from Washington next. And just to point out here, we're seeing a little bit of a risk-off mood underway. The S&P is now down by about 0.4%. Dollar moving higher, yields moving higher. That really took effect when the Bank of Canada came out with that 50 basis point rate hike and warned of further more to come, and that good data from the U.S. We're seeing a little bit of risk repricing here as we head into the session. Also want to point out that Jamie Dimon, CEO of JP Morgan, is speaking at the Autonomous Strategic Decisions Conference right now. Some really interesting headlines coming out saying on the economy, it's a hurricane. I thought it was a storm before, but now it's a hurricane, and that you better brace yourself. I don't quite know what that means, but he is definitely warning of tightening conditions and private borrowers, and saying that you should brace yourself on the U.S. economy. We'll continue to update you on some of those headlines as they cross. This is Bloomberg.
Real chart. If I have to hold twice as much capital as somebody else, then somebody else should own the loan. Now, I may not be able to do it overnight. You're damn straight I'm going to do it over time.
Joel, since Kansas, we've taken our own path. We've never done what everyone else did. We took on the fear. We ignored the doubt. We loved the excitement. We believed. Even when our path didn't make sense to everyone else, we kept going. We keep going until our path is the one they wish they had taken.
Wow, we're crunching tons of polygons here.
What's going on? Where's Regina?
Hi, I'm LaDonna. I invest in Invesco QQQ, a fund that gives me access to NASDAQ 100 innovations like real-time CGI.
Okay.
Yeah, don't worry, I got it.
Become an agent of innovation with Invesco QQQ. Before investing, carefully read and consider fund investment objectives, risks, charges, and expenses, and more in the prospectus at Invesco.com.
tech stock we talked about? I picked up 500 shares.
You get in at a good price?
Oh, yeah.
Schwab saved you how much?
With Schwab Order Execution Advantage, you get price improvement on 96% of orders and commission-free online trades.
I'll take care of this.
Are you getting complete price transparency? Expect more from your firm. Schwab, the better place for traders.
I think I was wrong then about the path that inflation would take. As I mentioned, there have been unanticipated and large shocks to the economy that have boosted energy and food prices.
It is not something that you hear every day from a Treasury Secretary. For more on Janet Yellen's surprising remarks, want to go to Bloomberg's Anne-Marie Hardern joining us in Washington. Anne-Marie, this is all sort of the White House's push to start controlling the economic narrative, right? I feel like there was a flood of officials over the last 24 hours trying to place the blame and trying to do mea culpas.
Yeah, there is definitely going to be a concerted effort for the month of June. There seems to be a lot of angst within the administration, according to this NBC report, that the president hasn't exactly liked how the communications have gone regarding a lot of these issues. And when you look at inflation and some of the recent polls, one earlier this month was that more than 9 in 10 Americans think at a minimum inflation is a huge concern, and they don't like the way the administration is handling it. So you're going to see a lot of communication from this administration. Yesterday, we heard from Treasury Secretary Janet Yellen, a mea culpa, saying maybe we got this wrong, or we did get it wrong in terms of the path forward for what we thought inflation or how high inflation would get. But there is an issue in the sense that the administration says that they are doing everything they can, but then when you ask them questions like, well, where are you on the China tariffs, for instance, something that has been, dealt with potentially as a means to shave off some level of inflation, and they don't have answers yet. So this is going to be a month where I think there's going to be a lot of questions of the administration. If they're serious about doing anything to bring down inflation, what exactly are those actions? Because right now, a lot of it is rhetoric. It was a photo op with Jay Powell. We've had 2 op-eds, and it's been a slew of officials on television networks, as you pointed out, Alex.
Anne-Marie, good morning to you. So what are we hearing from President Biden then? Or give us the context, I suppose, because in international financial markets, we like to talk all the time about what the Fed is doing and the Fed's role in fighting inflation and the independence of the Fed. But I imagine that's not necessarily how Main Street sees it in the US, or at least they need maybe reminding by politicians that there are others responsible for fighting inflation too.
That's a great point, Anna. And actually, Guy and Alex asked this to me yesterday. How many people in America know who Jay Powell is? And I didn't know. But I looked back at a poll in 2014 when current Treasury Secretary Janet Yellen was the Fed chair. She was named Forbes' most powerful women, and yet only 24% of Americans, when asked who she was, knew who she was. 24%. So this moment with the president standing next to Fed Chair Jay Powell, who just got his second confirmation from the Senate to be the helm of the Fed, is really the president saying, passing the buck a little bit, this is the Fed's responsibility. They are responsible for the unemployment rate, and they're also responsible for consumer prices. This is something that, as you say, a lot of everyday individuals need to be reminded of, because when you see gasoline, another record today, $4.67 going up, when you see your groceries going up, you blame the individual sitting in the Oval Office. You don't necessarily think of the Fed chair.
Yeah, so the emphasis maybe from Powell on the independence, but with that independence comes responsibility presenting Jerome Powell. Anne-Marie, thank you very much. Bloomberg's Anne-Marie Hardern outside the White House, of course, for us. Coming up on this program, we're talking markets and bargains in a time of inflation. Our exclusive interview with the co-chairman of Oaktree Capital, Howard Marks. He sat down with our colleagues at Bloomberg TV to talk about these markets. More detail from Howard Marks coming up shortly. This is Bloomberg.
Market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that Geopolitical tensions are rising.
You asleep? Do we have enough life insurance? How would just one of us afford the house, car, Jason's college?
Ethos Life.
Ethos Life?
Go to ethoslife.com and get your personalized quote in seconds and apply online in minutes, often without a medical exam. And Ethos is very affordable.
Hey, I just got my free quote with Ethos.
That's great, sweetie. Sweetie, get a free personalized quote at ethoslife.com.
Pay over $100 a month for cable when it's half the cost for Fubo TV. Get all the channels you want with all the entertainment you love for the price that cable can't beat. Learn more at FuboTV.com.
Never be afraid of your strength, because your body is capable of amazing things. The one they said you shouldn't have. The one driven by a power they can't see. Own your strength and see how far it takes you. Tonal, be your strongest.
This couch. I'm just saddled with so much credit card debt right now.
You need an upgrade card. It rolls all my monthly purchases into one easy installment loan so I can avoid stuff like that.
Where do I sign up?
Get your upgrade card at upgrade.com.
I started Truebill because I hate paying for subscriptions I'm not using. Find something you no longer want? Truebill can cancel it for you.
Truebill is an all-in-one finance app that tracks and categorizes your spending and alerts you if anything needs your attention.
Download Truebill, the money app that works for you.
Yo, dude, you need some help?
Don't worry about me.
Yo, there's no shame.
No shame? You don't know my family, man.
It's okay to ask for help. Find a licensed therapist at BetterHelp.com.
Script is my time to listen.
I can listen at home, in the car.
It's a way for me to stay informed, get entertained.
Script is ebooks, audiobooks.
Magazines, podcasts, Script, it's awesome.
You may think every weather app is the same until you see WeatherBug over-deliver on so many layers. With millions of 5-star reviews and more free map layers than any other weather app, WeatherBug warns you the moment lightning strikes near you. Prepares you for your commute with road conditions, routes, and even cameras. With everything from pollen and air quality to severe storm risks, radar, and satellite coverage, WeatherBug protects you from the unexpected. Used by over 10 million and counting. Download the WeatherBug app today for free.
We're about an hour into the U.S. trading session. We got a pretty strong ISM manufacturing number. Demand really holding up quite well. Now, that actually spurred a little bit of a risk-off move. You have yields and surging higher. Dollar on the highs of the session. Stocks dropping to session lows. Let's dig beneath that a little bit now with Bloomberg's Abigail Doolittle. Abigail?
Well, Alex, that's a great setup because it's really interesting to see this because, of course, on the open we had stocks higher, but right now that S&P 500 down about 0.6%, the NASDAQ down 0.3%, having everything to do with that ISM number coming in stronger than expected. Perhaps it means that the Fed's fully on course. They, of course, floated the idea of having flexibility later this year, but if the economy is okay and does not need help, it could maybe create the path to continue raising if needed. In any case, we have some more volatility for stocks. Crude is up 1.6%. This, of course, on the possibility, the report that OPEC Plus may consider dropping the plus and exempt Russia from its targets. There's also super tight inventories. So we have crude oil at 116. And to Alex's point, take a look at that 2-year yield backing up 10 to 11 basis points. So right now, an interesting day here with stocks down, bonds down, and crude oil higher. Now, what is also lower is the housing market in terms of the number of the mortgage rate here for the applications, for mortgages. Not surprisingly, in the bottom panel here, down for a third week in a row. This as the 30-year average rate for mortgages. It's been trending off of the high, but nonetheless, it's ticked back up just a little bit. So that, of course, created a little bit of an issue for the home builder sector. As for sectors on the day, the energy sector up 1.2% in line with oil trading higher. We also have software and services higher, up about 0.6%. This after CRM, Salesforce.com, put up a great outlook saying that business demand for enterprise software is still very, very strong. And that stock itself up more than 10%, helping out that sector. Communication sector services up a little bit at this point. And then we see airlines. This is an interesting turnaround because earlier airlines had been sharply higher, now down 3.5%, maybe having something to do with the oil. But we do, of course, know, Anna, that Delta Airlines joined both United Airlines and Southwest in terms of reiterating and raising the revenue guide because demand remains strong. But the airline sector not following along right now. We'll be digging into that.
Yeah, aviation under pressure today here in Europe as well. A tough week, one where European aviation businesses were hoping to make quite a bit of money with lots of vacations taking place certainly here in the UK. But it's proving difficult to get up to speed, to get up to capacity for those aviation businesses. Thanks to Bloomberg's Abigail Doolittle with a look at the markets there. Now, Howard Marks thinks it's a good time to be a value investor. Marks is the co-founder of Oak Tree Capital Management, the largest investor in distressed securities worldwide. He spoke with Bloomberg in an exclusive interview.
Attitudes are more balanced today, but when there's euphoria, when there's optimism, when there's greed, when there's risk tolerance, and so forth, that's a very difficult climate for the value investor to find bargains. So we're happier today than we were 6 months ago. I don't know if we're going to be happier 6 months from now. That is to say that the bargains will be more pronounced. But at least, as they say, the bloom is off the rose.
At a time of such incredible uncertainty, how do you position seeing value now, but also preparing for seeing more value in 6 months?
You know, one of the 6 tenets of Oak Tree's investment philosophy, which we established when we started in April of '95, and I've never changed a word, and I believe in thoroughly, is that we're not market timers. And that means mostly 2 things. We never sell to raise cash to prepare for a decline. And we never say it's cheap today, but it'll be cheaper in 6 months, so we'll wait. If it's cheap today, we buy it. If it's cheaper in 6 months more, we buy more. And I think that works much better than an assertion that we know where the market will be in 6 months.
This is really important at a time when so many pensions and institutional investors have been shooting for that 7.5% to 8% bogey. We talked about that extensively in the past 5 to 6 years. This idea that seemed completely unachievable in an era of quantitative easing. Suddenly, high-yield bonds have an average yield of more than 7%. Is this the best period that you have seen for pensions to actually hit their bogeys for more than a decade?
Well, I think that's right. Well, of course, many have hit their bogeys. It just didn't look in advance like they would, but the stock market and many other things have surprised on the upside for the last 10 years. But now, as you point out, one of our big activities is high-yield bonds. And a year ago, they were yielding in the 3%. One deal was even done in the 2s. That's not a very high yield for high yield. Today, as you say, they yield in the 7s. So a pension fund that needs 7 or 7.5 can make use of high yield bonds. And everything, see, when everybody gets concerned when prices decline. But if you flip that over, the flip side of price deterioration is increases in prospective returns. So now the prospective returns on many asset classes are higher than they were just a little while ago. And again, a much better climate for the bargain hunter.
Some people would counter this by saying inflation takes a lot of the value out of those returns, that basically on a real basis, you're still not getting very much. How do you counter that as a long-term investor by saying, you know what, at this point, it's worth it to get higher returns, even if on a real basis, it's not necessarily that much more?
Well, you're right in that we're not talking about an increase in real returns. We're talking about an increase in nominal returns. Most pension funds and other organizations reckon their need for return in nominal terms. But that is a challenge. And nobody knows what inflation is going to do. I think I heard out of one ear, your previous guest say that some of the inflation factors will probably subside in the next few months, which means, all things being equal, an increase in real returns.
That was Howard Marks, Oaktree Capital co-chairman, earlier today on Bloomberg Television. All right, coming up, the political climate in Latin America and how it is affecting investments. We're going to speak with private equity investor Oscar Dicatelli, DXA Invest CEO, coming up next. This is Bloomberg.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
Let's say your car needs a new part, like an alternator. You could get just the one part at the typical auto parts store, or for the same money at rockauto.com, get the alternator plus the belt and tensioner kit you'll need to do the repair right, and have money left over to buy lunch. Since 1999, rockauto.com has provided reliably low prices, easy-to-use website, huge selection of parts, and fast shipping.
All the parts your car will ever need, Rock Auto.
Dream when you're feeling dream. That's the thing to do.
When you see value in all directions, you add value in all directions. Accenture, let there be change.
A Hall of Fame swing. Like Capital Group's new ETFs, there's so much behind it. A lifetime of experience. Honing your skills, dealing with curveballs, and having a whole team behind you. Introducing actively managed ETFs powered by Capital Group. Can I find an ETF with a whole lot behind it? With Capital Group, I can.
This is Omaha Steaks. This is Omaha Steaks. So's this. And this. And even this. And yeah, this too. There are so many ways to enjoy our guaranteed perfection. Just a little everyday wisdom from Omaha Steaks. Visit omahasteaks.com/TV today and you'll get 8 free burgers. Never tried Omaha Steaks? Save an extra $20 with code SUMMER at checkout.
Your time to invest in companies that make stuff like this hard seltzer and this jetpack is now. It's all on Start Engine, which has an investor community of over 500,000. Go to startengine.com today and start investing.
What the world needs now is people. People who see energy a little bit differently. Where a switch to cleaner power means a more resilient grid. With renewables and gas power, providing energy whenever it's needed. Because seeing a more sustainable world isn't far in the future. We're building it now. GE, building a world that works.
This is Bloomberg Markets. I'm Ritika Gupta. You're looking at a live shot of the principal room. Coming up, Quincy Crosby, the Prudential Financial Chief Market Strategist on Bloomberg TV, 3:30 p.m. New York time. This is Bloomberg. Keeping you up to date with news from around the world, here's the first word. I'm Ritika Gupta. Ukraine will get advanced rocket systems and other weapons from the U.S. President Biden made the announcement in an article published in the New York Times. The rockets will allow Ukraine to hit targets up to 15 miles away. The U.S. says Ukraine has promised not to attack targets inside Russia. In New York State, Governor Kathy Hochul and legislative leaders pledged to raise the legal age to purchase an AR-15 assault rifle to 21 years old from 18. They also say they'll pass a package of measures to tighten gun laws this week. Officials cited the recent mass shootings in Uvalde, Texas, and Buffalo. In Colombia, the peso rallied after construction mogul Rodolfo Hernandez defied the polls to secure a place in the election runoff later this month. That reduces the chance that leftist Senator Gustavo Petro will be the next president. Hernandez is something of an unknown, but he is seen as a safer bet for business interests. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
All All right, thanks so much, Ritika. Let's stay in Latin America for a moment. So we have that election uncertainty in Colombia. Brazil has a presidential election in October where former President Da Silva, the leftist, is really looking to stage quite a comeback. And on the economic front, Latin American economies are dealing with high inflation and a high U.S. dollar and questions about the strength of the consumer, just like everywhere else. So joining us now to discuss investments in Latin America is Oscar Dicotelli, DXA Invest CEO and founder, joining me here on set. Oscar, it's a pleasure. Nice to see you.
Yeah, it's great to see you again, Alex, in person. It's been a long time since I've been here in New York.
It has been quite a long time. I got your name right, and that feels like a huge, his name is one I couldn't say forever. So the climate from where you sit, you invest in private equity, mid, small companies, mostly geared towards the consumer. Where are you right now?
Well, Alex, I think it's what's going on is really kind of an example that it's not about macro, right? So we're seeing a lot of bad information on the macro side, as you were mentioning, inflation, the slow growth, and even on the election side, there's a lot of discussions to happen there. But when you look in terms of the underlying companies, venture-related, tech-enabled companies, innovation-related, it's a new market. It's a different setup. We just saw, for instance, in Colombia, we just saw last month a new unicorn coming out of Colombia with international big funds investing and backing that company, just to give you an example.
But do you need, so we're talking like those technology exposed to the consumer, and then do you need a strong consumer? Do you need the macro to hold up for that to continue to happen?
Not necessarily. I'll give you an example. So when you think about Latin America from a macro standpoint, it would say there's no security, there's political instability, there's poverty. And when you look from a couple of different companies, they're resolving those problems. So I always say about Uber, right? Because there's no security there, the three best cities for Uber are in Latin America. Mexico City, Sao Paulo, and Rio are the biggest number in terms of number of rides. And you say there's political instability, and there are companies that are doing, for instance, cameras, surveillance cameras that they're using to pile up that information to resolve something that the government's not doing. So I think that the fact that you have big problems are now becoming more and more a big market and landscape for you to be able to tap into that with technology.
Oscar, good to see you. So security becomes a business opportunity there where governments are absent, then private business can make some money. Let me ask you about, though, some of the macro themes and how they do impact the kind of private equity deals that you're doing. Because, I mean, the Fed with its tighter policy, private equity has been a big winner, of course, from low interest rates. A lot of money allocated in that direction. Is it harder? Is money harder to come by now?
Look, I think, of course, money is a little bit harder than what we saw in the past. We're still seeing massive drives of growth in terms of the volumes that they're coming into the region. So I'll give you an example. If you take a percentage of tech-enabled companies versus GDP, Brazil and LATAM is about 2%, okay? India is at 14%, China 40%, and the US 70%. So there's still a long way to go there. So you're coming from such a low base that it's not impacting that much. However, we are seeing, especially in the deals that we're doing, when you start putting interest rates into that deal. So you do things like a debt that has an interest and it converts on the next round, and you're starting to see things, well, especially in Brazil, that now interest rates are at 12 3/4. You have to factor that into your deal. So I think that funds and investors that can be kind of a little bit more flexible, and definitely the companies are open to that, you're able to factor in the interest into those negotiations.
So tell me about maybe the most recent deal that you did, and then maybe one area that you're most excited about.
So we do have a strong view in terms of consumer changes, right? We've just done a deal in beauty tech. It's a company that started off basically, it's called Beauty for All. Basically, they started giving kind of small kits that people that would kind of pay on a monthly subscription side, right, to have the newest lipstick, and then that drove into an economy for second income. So now these creators and influencers, they buy these subscriptions, but they set up their online shops and then use the internet to drive that. So when you got into a situation where income is not very well and everything, you started to have bigger subscribers because people were looking to use that as a way for a second income. And now they have about 100,000 subscribers on a monthly standpoint and 1 million people that really kind of run that network. So I think there's a lot of different things that are happening in the landscape, and it's not just Brazil, it's Colombia, it's Mexico, all across Latin America that we're seeing these kind of opportunities.
Okay, subscription models then of interest to you, Oscar. Let me ask you about clean tech. We're going to talk later this hour about electric vehicles and expectations for their future development. But around clean tech, are you finding interesting ideas on that theme, Oscar?
For sure, Anna. Well, first of all, we're seeing a huge impact of investments towards solar, towards wind energy also, especially in Brazil. There's some new legislations around it. We're looking a lot at clean tech, for instance. You have companies that use technology for you to reduce the expenditures around, for instance, private planes. This is a deal that we're currently looking at, for instance, where you have like a NetJets here, just to give you an example. Similar situations that are using there also. These are definitely drivers of clean tech movement. Brazil already has, specifically Brazil, already has one of the cleanest matrix of energy in the world. And I think that we're seeing now these big investments towards solar and wind. They're definitely going to drive like the big change. Just to give one example, in the northeast of Brazil, the load factor for wind is about 65% efficiency. You look in the Nordics, it's 40% efficiency. And now they just issued a law where they're going to allow for you to have offshore wind turbines. So this is something that's still at the verge, at the beginning. So when you see market volatility like that, it doesn't impact that much because it's coming from such a low base of low amount of capital is being invested in there.
So let's just go macro for just a moment.
Yeah, of course.
You mentioned the high yield and sort of what that winds up doing when you're factoring in your investment and issuing debt. What about inflation? Like, how do you look at inflation and then eating into your returns? Like, do you just change your profile?
Well, I think you do need to factor in specific products that you're investing in that will use inflation as an aspect. So if it's gasoline prices that's going to generate an impact into that company, you should be shying away. We are doing that, of course. But I do think that macro will impact, from a political standpoint, will impact the landscape of innovation being driven. So we've seen a lot of new legislations to allow fintech to operate freely. We're looking at things around health tech to be freely. If we do have the impact of inflation affecting the political landscape, and then you see a backdrop of the mentality towards a pro-business region, then that's, I think, it's something that becomes a bit more risky.
Oscar, let me ask you that about pro-business and how pro-business some of these geographies are. We started our conversation talking about Colombia, where somebody who is relatively pro-business and pro-risk assets is now going to be in the runoffs, and maybe that was a surprise to some people. Are there geographies, countries, where you feel you have a more pro-business backdrop, or are you saying the opportunities don't really correlate with that?
Well, I think it's quite interesting. What happened in Colombia, for instance, is a discussion with Hernandez coming now into the second round, is really showing that the population, they want to change. They want to see, don't want to see the old politicians in power, right? We saw that in 2018 in Brazil when Bolsonaro came into power. Although he was a long-time politician, wasn't somebody that was really kind of on people's mind, right? So I think what we're seeing in Colombia also is especially the younger population that was really kind of connected to Hernandez with TikTok, like they call it TikTok king, right? We saw that this is the same population that wants more innovation, wants more products. So I think that Colombia has a great setup for the future. Brazil has it, Mexico has it also. Even in some stances, we're seeing a lot of interesting opportunities that come out of even Argentina. That's in such a difficult moment, but it's through innovation and technology that we're starting to see companies that are kind of resolving those issues for the general public.
Oscar, it's really good to catch up with you.
Yeah,
really appreciate seeing you in person. Oscar Dicatelli, DXA Invest CEO and founder. Thank you so very much. All right, coming up, electric vehicle sales are expected to soar in the next few years. We got a new report from Bloomberg that says that's not enough to get to carbon neutrality. More details on that next. This is Bloomberg.
The Principal Room, brought to you by Principal Financial Group, combining actionable insights with specialized solutions to help meet your investment goals. Get to know us at Principal.com.
As a woman of color, I knew early on I would need extra support to overcome the barriers I would face. During my senior year of high school, I participated in a program called iJack. It focuses on mentoring, financial education, and exposure to diverse careers. It's important to learn these values and to pass them down. Investing in programs that create possibilities for people of all backgrounds can create a lasting effect for generations to come.
What if you were a global bank who wanted to supercharge your audit system? So you tap IBM to unsilo your data and start crunching a year's worth of transactions against thousands of compliance controls with the help of AI. Now you're making smarter decisions faster, operating costs are lower, and everyone, from your auditors to your bankers, feels like $1 million. Let's create smarter ways of putting your data to work. IBM, let's create.
9:30 a.m. New York time. A massive wave of market data comes out of the U.S. exchanges.
We handle around 200 billion pieces of financial information a day. There are millions per second at peak moments.
Those spikes are what we size our system for.
It's vital we don't fall behind during the peaks when our customers need us most.
It's an incredible feat to get this right every single day.
Bloomberg Television is brought to you by Empower, providing saving, investing, and advice.
It's time for the Bloomberg Business Flash. A look at some of the biggest business stories in the news right now. I'm Ritika Gupta. Shares of Salesforce are rising today. The company raised its annual profit forecast, a signal that demand for business software is holding up despite a broader downturn for those major tech firms. Salesforce co-CEO Mark Benioff says that so far the demand environment remains strong. The richest person in the world doesn't appear to think much of working from home. Elon Musk apparently sent an email to the executive staff at Tesla with the subject line, "Remote work is no longer acceptable." He wrote that anyone who wishes to do remote work must be in the office for a minimum of 40 hours per week or leave Tesla. And that is your latest Business Flash. Anna?
Rishka, thank you very much. Rishka with the Business Flash. Now, staying with electric vehicles, she was just talking about Tesla there. A new report predicts that EV sales are set to more than triple by 2025. But it says governments and car makers need to lean even harder into eliminating emissions. That report comes from Bloomberg BNEF, New Energy Finance. With us now is Ryan Fisher, Bloomberg NEF analyst for electrified transport. The perfect person to speak to you then about this report. Ryan, really good to speak to you. So what's the big takeaway coming through from this report then?
Yeah, so as we hear in the news, we're selling more and more EVs. I mean, last year, a lot of the top markets, China, Germany, getting 15, 25% of car sales being EV. So it certainly is a success story. But when you even look at that and you project out to the future, we're still in a position where we're not meeting net zero by 2050. It's really difficult to get rid of those internal combustion engine vehicles from the fleet. So we end up with somewhere around a third of the fleet still being internal combustion engine. And that's even worse when you think about heavy-duty vehicles. So we end up with something like a third of the fleet being zero emission by 2050 in that case. But that still means you've got many of those on the road, and they're obviously high emitters.
And so does that mean that people aren't demanding EVs, or they're just not available, not as easy to access, they're not as available to buy, and maybe they're, the combustion engine ones are cheaper still?
Yeah, so I think price has something to do with it, but I don't think it's all the way there. So we've obviously seen EVs get problems in the supply crunch, semiconductor crisis, not being able to produce them. But one thing that I think is understated at the moment is whilst the price, when you look at it, first of all, looks expensive, you've then got subsidies, can be $7,000, say, in Germany. But then you're starting to see TCO and fuel costs actually be much lower. So whilst electricity prices have gone up, gas prices have gone up quicker. So an EV can actually be somewhere around $1,500 cheaper per year.
Alex?
Hey, Ryan, first of all, I should point out that your work is referenced among all Wall Street analysts when it comes to EVs, whether it's the equities or whether it's the commodities. So kudos to the work. Quickly, do you feel, when is the adoption rate going to happen? Like, when is it going to flip in terms of an EV becoming cheaper than an internal combustion engine? Have you revised that?
So what we started to see was in kind of looking around 23, 24, depending on the region, depending on exactly the size of the vehicle. And obviously battery prices have slightly increased. We see that in the news every day, which means that it might be a little bit more challenging. It might push it further back. But as I just kind of said a second ago, what we're also seeing is people start to look and go, actually, I can use cheap electricity in the evening, and therefore my fuel costs are much less than paying and going to the gas station. So two slightly different conversations there.
Okay, Ryan, thanks very much. Thanks for the analysis. Ryan Fisher of Bloomberg NEF joining us with the latest on the rise of electric vehicles. This is Bloomberg.
Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
Great question.
Great question.
That's a question I get all night.
Bloomberg, top experts, great questions.
Do we have any more paper towels?
Yep. Check the pantry. I just ordered from Boxed.
What's Boxed?
Boxed is the only wholesale club that lets you tap into the value of buying in bulk online.
Is that right?
But unlike other wholesale clubs and online stores, Boxed has no membership fees. And delivery is super fast. And look, free samples. Now we don't have to worry about running out.
Can we order cookies next time?
Save 20% and get free shipping on your first order at Box.com. The better way to shop bulk.
If you're someone who struggles with mobility, even a short walk won't seem like a short walk. But the sturdy and comfortable Hurricane provides the balance and support you need. It helps you walk on any surface and truly stands alone. Get the #1 selling cane in America with our worry-free 100% money-back guarantee, plus free shipping. Just go to hurricane.com today. Also available at these fine retailers.
When a folded flag is placed in your hands, it can feel as if you're marching alone into an uncertain future. But you're not alone. Just as soldiers march together, the Folded Flag Foundation is there, marching right beside you. By funding educational opportunities for Gold Star families, the Folded Flag Foundation helps us on our path to a better future. March together with us. Give today at foldedflagfoundation.org.
This is Scribd, an app that gives me access to ebooks, audiobooks, podcasts, and more. With Scribd, I can get in my steps in countless pages. Scribd makes every moment a reading or listening moment.
What does the future of strength look like? It's a personal trainer that assesses your strength and adds weight as you progress. It's dynamic weight that adjusts for you in real time for a more efficient workout. Come on! And it's a roster of coaches that motivates you to get stronger, faster. The future is strength you can feel and results you can see. And you can only experience it on Tonal.
Learn more at tonal.com.
With your finances?
Yeah.
Save yourself the pain and let Truebill do the work. Truebill automates your personal finances by canceling subscriptions you're paying for but never use.
Who signed up for those?
Give your finances the fix and download Truebill today.
Nice.
Yo, dude, you need some help?
Don't worry about me.
Yo, there's no shame.
No shame. You don't know my family, man.
It's okay to ask for help. Find a licensed therapist at BetterHelp.com.
It's Wednesday, the 1st of June. Stocks drop around the globe after US data builds hike expectations from the Fed and diamond casts doubt on the economy. The countdown to the European close starts right now.
The countdown is on in Europe. This is Bloomberg Markets European Close with Guy Johnson and Alex Steele.
Welcome to Bloomberg Markets, the European close. Guy Johnson is off today. I'm Anna Edwards here in London with Alex Steele over in New York. Half an hour then until the close of these European equity markets for this Wednesday. And let's have a look at what we are dealing with. We're weaker across Europe right now. On the Stock 600, down by 0.7%. But this seems to be a story coming through from the US that's pushed its way across the Atlantic and developing here as well then. For a lot of this morning's session, we seem to be without much direction coming through on these markets. And then we got the data at the top of the last hour from the US, which seemed to be pretty decent, reinforcing expectations that the Fed could hike. Also, we got some fairly gloomy headlines on the economy from Jamie Dimon, and all of that hitting at about the same time. So the net result of that was weakness in risk appetite in the US and some of that here in Europe as well. So we're down by 0.7%. Most sectors in negative territory now. We had been 50-50 kind of split earlier on. Brent crude up another 1.2%. We're showing you the August contract now against the August contract of yesterday, trying to get a sense of how much further higher we can go on oil prices. We spoke to a guest earlier who was saying that she thinks there's still further upside in oil prices, not all priced in terms of that supply conversation. I've heard different views on that, though. The Markets Live team have a different take on things here at Bloomberg. This is the picture on the pound. The pound was already looking a little bit sluggish before we got that data, that good data in the US and those comments from Dimon. But as soon as we got that data, we saw that the dollar jumped, and it didn't just jump against the pound, it also jumped against the euro. And so pound weakness as we head into a long weekend then, Alex, something to deal with here in the UK.
Yeah, here in the US, you were mentioning that risk-off mood. So let's take a little bit of a look at it here. The S&P right around the lows of the session. Now, you mentioned, Brent, energy, the best performing sector within the S&P, managing to hold on to some of those gains. We're still up by 0.6%. That two-year yield off its highs, but still up by 9 basis points. After that, good news is bad data when it comes to the Fed. It means they can kind of go if the U.S. data and employment is holding up relatively well, and the dollar jumping to the highs of the session. The best performing stock, though, within the S&P is not an energy name. It is Salesforce, and that's an earnings story from yesterday. The software company raised its full-year forecast for adjusted earnings. Strong demand for business software, and all of that propelling that stock higher, up by about 12%, Anna.
Let's get to some other breaking news then, Alex. We have across the Bloomberg terminal, and this is all about the Eurozone and how big is the Eurozone. The European Commission has recommended that Croatia joins the Euro next year. This has been a little bit, well, it's been in the works for some years, as you might expect. The Eurozone moving closer to adding its 20th member after Croatia was ruled to be in good enough shape to join the club next year. There are some hoops you have to jump through, of course, to enable that decision or that recommendation to be reached. This is a recommendation from the executive branch, if you like, of the European governing body, and then that recommendation goes to the individual countries, and then they have to vote on it. The European Commission then recommending that this Adriatic nation, 3.9 million people, should be allowed to adopt the common currency after finding that it fulfills the necessary requirements on issues such as inflation and public debt. Now, earlier, the European Commissioner, Valdis Dombrovskis, spoke about Croatia's prospects of joining the euro.
Croatia is meeting all the accession criteria and correspondingly is ready to join Eurozone as of January 1st next year. Of course, it's still subject to confirmation by member states. So clearly that's positive news for Croatia, so I'd like to congratulate Croatian authorities and people for this remarkable achievement.
Valdis Dombrovskis, there, European Commissioner. Joining us now, Bloomberg European economy reporter Alexander Weber. Alexander, very nice to talk to you. Give us the size and scope of how significant this is, the Eurozone now, considering its 20th member.
I mean, it's of course a vote of confidence in the stability of the euro area. The debt crisis is now sufficiently in the rearview mirror. European officials are applauding the move. The rhetoric is really positive about somebody wanting to join. It's the first accession of a new country since 2015 when Lithuania joined, and it's a very positive move for the euro area.
How does Croatia get the thumbs up for it? What are some of the requirements it has to show to get it?
So there were 4 main requirements. You already mentioned that it's on public debt, for example, on the stability of its exchange rate. But the biggest obstacle was probably inflation, because like in other parts of the world, inflation has soared in Croatia as a result of the war in Ukraine. But ultimately, it was ruled as sufficiently close to the rest of the euro for it to be able to join.
Okay, yes, and I mean, the conversation around inflation has shifted everywhere, hasn't it, Alexander? So no doubt it shifts when it comes to Eurozone membership as well. What is in it for Croatia then? Why have they decided that they want this? They want to be part of a much bigger monetary union, because some other Eastern European countries are not so sure anymore.
Exactly. So, like for the Baltic nations, the move is partly motivated by a desire to align with the West, to cement this alignment with the West after the end of communist rule. But there's also a strong economic logic because Croatia is a very popular tourist destination, and it's going to be even more attractive for European tourists if they don't have to exchange the currency before going there. And then apart from that, the Croatian Central Bank governor has also pointed to better credit ratings and lower interest rates. That will help the economy. And also, shouldn't forget that Croatia will get access to all the crisis architecture that the euro area built up over the years, like the European Stability Mechanism. So it has this insurance against shocks hitting the economy.
Alexander, thanks very much. Bloomberg's Alexander Weber joining us on Croatia being the Euro's 20th member as of January of 2023. All right, let's get more on this and all things Europe, particularly when it comes to the ECB. Banu Baweja is UBS Investment Bank Chief Strategist. Banu, it's always a pleasure to see you guys. Going to be really upset that he missed you today. I just want to start with Croatia joining the euro and sort of how you understand that from a broader sense, right? Like, why now? What stability-wise, what economic-wise would sort of lead Croatia to do this, and what it means about the Eurozone as a whole?
So let's start with what it means for the Eurozone. And look, the Eurozone could do with any incremental good news that it can get, right? So since the Central Bank of Russia was sanctioned, there has been a real question on what is hard currency, what is money, really? And you see that in the break in the relationship between gold and real rates, where everybody has been going for alternative assets rather than going into money. So the fact that this is one small incremental step that helps establish euro as money in the context of international investors, I think that should be taken as positive. I don't think this is a day-to-day trading event in that on the basis of this you don't buy the euro for the next 10, 15 big figures, and the bigger questions there remain whether or not we have seen peak Fed pricing, and what we are seeing actually what's not being talked about is the fact that European current account has gone into deficit for the first time since 2012, and how that corrects, if that corrects. These are the things that are going to drive the euro in the near term, but this is unambiguously a small positive step in the right direction for euro. And what's in it for Croatia, as your reporter was saying, was much easier trade, not just of goods, but particularly of services and tourism. And so that's the positive for them.
Okay, so that's the positive. Good to see you, Banu. So the European current account deficit, that's something we need to focus on, of course, in terms of how the Eurozone economy performs. In terms of how high inflation is allowed to get in the Eurozone, clearly this week we've really been woken up once again on the inflation front by that 8.1% print for the Eurozone on inflation. And then we have Holtzman at the ECB talking about, or at least the topic of 50 basis points is now being thrown around when it comes to the Eurozone. And now one bank, we know Deutsche Bank, has that now as their base case for the June meeting. Do you think the conversation is shifting to 50 basis points, that kind of size?
It does. It's a little bit of deja vu, isn't there? I mean, because we've seen this before with other central banks. We've seen this with the RBA giving up YCC. We've seen this with the Fed saying never 50, and then now a string of 50s is on the table. I think the ECB is going to be quite different. I mean, they're still expanding their balance sheet. The first thing they need to do is to sort of stop the APP program, so that's going to come first. And there's enough doubt because the nature of inflation in US and Europe is very different. In US, it really is quite broad spread now. I mean, this is not what the Fed had expected last year. This is not what Yellen had expected last year. She's now changed her mind. She said this is much broader and this is about demand as much as it's about supply. But in Europe, I mean, negotiated wages are still under 2 to 3%. And so that's not very similar to the US, where Atlanta Fed wages were running at 7 and now are running on sort of the 5 handle. Very different situation. And you don't have the same pressures on rent. You don't have the same pressures in autos. So it really is about energy. And therefore, I think they are going to be a little more cautious. They have to worry about spreads a little bit as well. So I think they are going to be a little more cautious. The markets are pricing in a rate of about 1.5%. So that's incrementally about 200 basis points between, which I think is about fair. You could get a little bit higher than that, but I think they're going to start in 25s and start in July.
How quickly do you think the ECB is going to be able to act, no matter if we're looking at 50 or 25, just to get to that 200 basis points like you were just talking about? And how quickly does the implication, does a recession scenario, does a stagflation scenario kind of take hold?
Yeah, I mean, look, stagflation is a central fear for markets, but most people, I think when most people talk about stagflation, they don't actually think about 8% inflation with a deep recession. That's very unlikely. It doesn't usually happen in history. What they're talking about is a poor growth inflation mix, and the poor growth inflation mix is going to persist for Europe at least until Q3. And in Q3, we think things will improve substantially, Russia permitting, right? What we've seen in terms of crude oil, lack of crude oil imports, if that also transpires into an embargo from Russia on natural gas, that's a game changer. if we don't have that, and today, and when I say today, metaphorically today, but these days, the price of natural gas is trading reasonably heavy, and the storage of natural gas in Europe is actually increasing. So contrary to the narrative, if we see prices of natural gas come down, there's no real need to see, there's no real imminent trigger that leads us towards stagflation in Europe. Now, within that context, we should see reasonably strong growth in Q3 in Europe, and we think that the ECB will be able to deliver 50 basis points this year, 100 basis points next year, potentially a further 50 the year after that. So that's the pace at which we think the ECB goes. By the way, 5 seconds. ECB still believes that growth is going to be above 2.753%. So ECB is not thinking about stagflation at all, right? ECB is well ahead of the consensus.
Okay, and sticking with the gas theme, you mentioned it there, Banu. Russia cutting off gas to the Netherlands, cutting off gas to Denmark, a smaller contract to Germany, not the main one, but a smaller contract there. Poland and Bulgaria already cut off. What downside risk is there still then when it comes to gas cut-offs for Europe? This would be huge.
Oh, tremendous. I mean, there's still a lot of downside risk because the countries that you mentioned or the parts of pipelines that you mentioned still constitute a significant minority of the overall. So if you cut off Nord Stream 1, if you cut off France, if you cut off Italy, that is the channel through which you see stagflation pressures. I don't think you see stagflation pressures through China or through the Fed tightening in the US, the housing market. Clearly, those could be recessionary events, but the only real stagflationary event that we need to focus on, I think, is natural gas flow. So if we get that embargo, that just has a much larger impact on growth and inflation as opposed to just oil prices going higher with the flow still continuing. If the flow still continues, oil prices go high, you get inflation, but you still have growth. But if you get a natural gas embargo, that's definitely something to worry about in terms of stagflation.
Yeah, because then we're looking at, factories shutting down, electricity not being able to get through, et cetera. Hey, Banu, what do you do then? What's in a good investment thesis for Europe when you have to play that big wild card and we're sort of in an increased volatile, increased yield environment?
It's a difficult one because I think first you have to think about how do you protect against stagflation, because in my mind it's a low probability event with a very high negative payoff, and you have to buy some protection in sectors that work in stagflationary periods. So on the one hand, consumer staples and healthcare works, and on the other hand, consumer discretionary does get destroyed. So you have to buy some protection out there. But in fact, we have to think about two separate horizons in the base case. One is the tactical horizon, on which actually I think the growth inflation mix could moderately improve rather than get worsen. And I think on that context, you probably see Chinese equities, European equities actually pick up. But then there's the secular horizon, which is anything beyond sort of 3 to 6 months. On that horizon, it's unambiguous that the growth liquidity mix is worsening, right? That growth is coming lower from a very high level, not high level in the last quarter, but high level over the last couple of years. Growth is coming down from a very high level, and real interest rates are going to be rising. That gives you equity returns which are half or less than half of what you've analyzed in the last 10 years. So the headwinds for equities are increasing. There's no doubt about that in a secular horizon.
The headwinds are increasing. We'll pick up on that conversation next then. Banu, thank you very much. Banu Baweja of UBS Investment Bank stays with us. What difference will quantitative tightening from the Fed mean? We've seen it from other central banks. Now the Fed starts that program today. We'll pick up on that as well with Banu. This is Bloomberg.
However you get your news.
This is Bloomberg Daybreak with Lee.
On Bloomberg Radio.
Welcome to Daybreak Australia. This is Bloomberg Technology. This is Bloomberg Green.
On TV, radio, and the web, this is Bloomberg.
To adapt in a fast-changing world, you could hire a professional pit crew.
All right. Oh, okay.
They deliver real-time data and business forecasts when you need it.
I think it was fine how it was.
To help you stay ahead of the curve. Or you could use Workday, the finance, HR, and planning system that helps CFOs make better decisions faster.
On the other hand, we had a great fourth quarter.
Or accelerate your decision-making world. Workday for a changing world.
This thing, it's making me get an ice bath again.
What do you mean? These straps are mind-blowing. They collect hundreds of data points like HRV and REM sleep, so you know all you need for recovery.
And you are?
I'm an investor in Invesco QQQ, a fund that gives me access to NASDAQ 100 innovations like wearable training, optimization tech.
How long you...
I'm done.
Become an agent of innovation with Invesco QQQ.
I'm okay.
Before investing, carefully read and consider fund objectives, risk, charges, expenses, and more in prospectus at Invesco.com.
Tune in to today's Options Insight, sponsored by Thinkorswim by TD-Ameritrade.
you see when you look at the surface? Just that, the surface. But dive deeper and new possibilities emerge. Essential intelligence from S&P Global takes you here, providing the data, risk assessment, and workflow solutions you need to plumb the wonders beneath. A better, more prosperous future awaits. It's yours for the seeking. S&P Global. Seek and prosper.
I'm finally the king of my own castle, but my castle has leaks. So I use Thumbtack to find electricians, roofers, and plumbers. I can check out reviews, prices, and book the pro I like on the app. So anytime something breaks, I know exactly where to go. Download Thumbtack today.
Welcome back to Bloomberg Markets European Close. I'm Anna Edwards in London with Alex Steele in New York. Let's get back to our question of the day. Where is the biggest risk from QT? Still with us is Bani Buwaja, UBS Investment Bank Chief Strategist, to give us his thoughts on what difference this makes. QT starts today, Bani.
Yeah, and it's probably going to continue over roughly a 2.5-year period, and we're going to see the footprint of the Fed as a proportion of the overall market. So right now they own about 28.5% of the overall bonds, overall treasuries, and that over this period is going to decline by about 10 percentage points. So between 17 and 18 is where they end up by autumn of 2024. We have a data point of 1, i.e. we have one previous occasion in which the Fed has done this, and so it's a difficult one to model. But the way to think about this, I think, is in 3 steps. So the impact that QT is going to have on term premia, you can think of that as a reverse of QE. The impact term premia is going to have on credit spreads, that's step 2, and then the impact that both term premia and credit spreads are going to have on equity valuations. And when we've done the math, and a lot of it is quite involved, we think that in the worst case where the Fed actually does increase, the Treasury actually increases the supply duration, that's about a 1.5 to 2 multiples headwind, which is about a 9 to 10% headwind over a 2.5-year, 3-year period for the S&P, just coming from QT. Again, lots of ifs and buts and qualifiers, but that's the bigger picture. Should the Treasury increase its supply duration, which is not a given, because the Treasury may actually say, the Fed's not buying 10-year, I'm going to finance myself in the 1-year or the 3-month, and which is what they're likely to do, in fact, in the near term. Eventually, it'll catch up on them, but in the near term, so the increase in term premium and the hit to the market may not be instantaneous.
Okay.
Banu, last time we had quantitative tightening, we ran into some plumbing issues, particularly in the repo market. Do you anticipate that happening this time? And sort of what are some of the indicators that you're watching for that?
Yeah, it's a great question. So liquidity is going to become a problem, not just for some of the esoteric parts of the market, but even for mainstream markets. I mean, so one of the things I'd be watching for is the bid-offer spread between, for treasuries, for tips in particular, because that's one part of the market where the Fed was a very large component, and that was a big footprint for the Fed. And in addition to that, we got ETF inflows, everybody coming in saying the carry to vol ratio in this market is great. Now the vol is increasing because the Fed is exiting, and also because inflation may print a smidgen below the fixings on the tips market, and that leads to risk the ETF inflows. And as that happens, the carry to vol automatically moves in the other direction, which is that carry to vol declines as volatility increases. So you could see an overshoot. The market that I'm most focused on is the tips market. You could potentially see an overshoot on real rates if the liquidity actually thins out there, and which is going to be extremely consequential for markets, because essentially what we are saying is that the risk-free rate of the world, the US real rate, is at risk of significant volatility as a result of QT.
Well, that's definitely a statement. That would have definite ramifications. All right, Banu, we'll get you back. Love talking to you. Thank you so very much. Banu Buwaja of UBS Investment Bank. Thanks very much. This is Bloomberg.
Another crazy day? Of course. You're a CIO in 2022, but you're ready. Because you've got the next generation in global secure networking from Comcast Business with fully integrated security solutions all in one place. So you're covered, on-premise and in the cloud. You can run things the way you want, your team, ours, or a mix of both, with the nation's largest IP network from the most innovative company. Bring on today with Comcast Business, powering possibilities.
Welcome to Lenovo Late Night IT, where industry insiders tell us what they tell their therapists.
Is fog the new cloud?
We're going to have solutions that require some things to be pushed out to the cloud and some things are going to be in between, which is the fog.
Fog is a real thing? I was joking. What's next? Mist computing?
Mist.
Wait, is mist a real thing?
Cloudy? No.
Okay, thank you.
This is Lenovo Late Night IT.
What do you think healthier looks like? CVS can help you support your nutrition, sleep, immune system, energy, even skin. So healthier can look a lot like you. CVS, healthier happens together.
Your record label is taking off, but so is your sound engineer. You need to hire.
I need Indeed.
Indeed you do. Indeed Instant Match instantly delivers quality candidates matching your job description. Visit Indeed.com/hire.
Remember when you used to get stickers for doing something good? What if you got Bitcoin? With Upgrade Card, you can. You can get 1.5% back in Bitcoin on payments. Upgrade rolls all your monthly purchases into one easy installment loan. Get started at upgrade.com.
Some breaking news in the last half hour. A panel of dealers and investors have now ruled that Russia failed to meet its bond obligations in full, triggering an insurance payout potentially worth billions of dollars. Here with the latest, Damian Sassower, Chief EM Credit Strategist for Bloomberg Intelligence. So just dumb this one down for me. Does this mean that Russia is technically now in a default and the credit default swaps need to be paid out?
Yes and no, right? Because basically, I'll tell you what happened. We basically had about 41 billion of CDS notional outstanding by the CDS Determinations Committee ruling this way on a mere $1.9 million in missed coupon just last month. What it means is that you might have a net $3.2 billion payout on the derivatives, on the CDS only. It doesn't necessarily mean you're going to have a cross default where the country is going to be in default. So they may not have defaulted necessarily, but they kind of defaulted on their CDS obligations. And so that's a pretty big deal because when $3.2 billion changes hands, Alex, that's a meaningful amount of money, and creditors are not going to long forget that. It's going to be very difficult for Russia to kind of overcome this, and certainly for a lot of the corporates like Severstal, Childpipe, a lot of the corporates which are basic, VTB, for example, which are nearing default as well.
Okay, Damian, just to go through that a little more slowly. So if we were looking for that moment where the CDDC, the Credit Derivatives Determinations Committee, says, yep, that's it, Russia is now in default, we haven't necessarily got there because what you're saying is that they just haven't included $1.9 million of extra interest in a late bond payment last month. So they did make the payment, but it wasn't enough. Is that what we take away from this?
Again, it's early days, but you're absolutely right. That's my read on it, that they just missed a little bit of accrued interest on that last payment. And so technically they are in default. That triggers the event at from the CDS Determinations Committee perspective. So anybody who's holding that, I guess it was at 1.40 billion in notional of Russian sovereign CDS, yeah, they're going to see once they net that down at the auction, it's going to be about a $3.2 billion payout. At least that's my read into it right now. I mean, again, it's early days. Yeah. It just hit the headlines.
Is Russia going to be okay with this? Like, are they going to admit that this was a default of such? And I'm asking because there's been other issues of whether or not they think that they're in default if they haven't paid.
Well, I mean, look, I think the market has long basically been pricing in a default. If you look at CDS, I mean, it was the implied probability of default was something like 98, 99%. Yeah. So the market really thought that something like this was happening. They were going to be placed into technical default, either because the U.S. government is forcing them in that direction, which is obviously what everyone is saying, or they just don't want to pay anymore. Their willingness to pay erodes. And so in this instance, yes, I think what's going to really be interesting here is, who they point the finger at. Is this indeed, the dealers, the swap desk, the U.S. government forcing Russia into a default, or not? So I think it's just going to be a very interesting as this kind of this saga rolls on. We're going to see what shakes loose.
And Damien, who owns this debt at this point? I mean, some years ago, pre-2014, maybe it was a very different profile to who owns it now. I mean, we've certainly had a lot of build-up, a lot of suggestion that this day might come.
Yeah, you know, it's a good question. You know, you have to believe that, you know, some dealers are holding the bag here. Certainly, you might have some real money investors who do have some protection on their books still. But I mean, a lot of it has been whittled away. You know, I don't, certainly not the hedge fund community. I don't think there's a lot of speculators out there who probably still have a lot of this on their books, but we'll see. I mean, look, again, you know, that's what the auction's all about. So it's early days. We're going to find out more.
Okay, thanks so much. With a quick sum up of where we are on that story, Damien Sassower of Bloomberg Intelligence getting his head around the detail very quickly for us, and we thank him for that. Let's take a quick look at European equity markets as they get ready to close for today. It is 4:25 here in London, so 5 or so minutes away from the end of the trading session here in Europe. We were pretty flat, looking for direction. Then we got some good news out of the US. That turned out to be bad news as far as Fed hike expectations went. And we see European equity markets catching that downdraft. FTSE 100 down by 1%, DAX down 0.4%. Autos helping that particular market to outperform the others just a little. This is Bloomberg. We'll be back with the close of European markets next.
Only at Vanguard, you're more than just an investor. You're an owner. That means that your goals are ours too. And Vanguard Retirement Tools and Advice can help you get there. That's the value of ownership.
I have a number of money managers that advise me on investment strategies, portfolio construction, and asset classes. But sometimes I just want to do a trade by myself. So I went to the App Store and downloaded IBKR Global Trader. No conversations, no messages, no friction, all done in 20 seconds. They have 90 trading venues, 27 currencies, and even crypto. So give it a try. You're going to like the way it works.
What does the future of strength look like? It's a personal trainer that assesses your strength and adds weight as you progress. It's dynamic weight that adjusts for you in real time for a more efficient workout. Come on! And it's a roster of coaches that motivates you to get stronger, faster. The future is strength you can feel and results you can see. And you can only experience it on Tonal.
Learn more at tonal.com.
Scribd is my time to listen.
I can listen at home, in the car.
It's a way for me to stay informed, get entertained.
Scribd is ebooks, audiobooks,
Magazines, podcasts, Scribd, it's awesome.
4% of people have subscriptions they've forgotten about. Makes sense. Managing your money can be hard. But what if there were a secret financial control center that helps you organize your spending by finding recurring charges and notifying you when they're due, so you can easily cancel unwanted subscriptions? Truebill helps you save money and lower your bills. Download Truebill, your all-in-one finance app.
Hi, this is Lisa from 4imprint. Yes, I like 50 welcome wows, 300 customer, I love it, and 200 team member, oh yes, certainly. You know we got some brand new woohoos.
Dial up the wow factor with promotional products from 4imprint. We specialize in awesome items that are certain to awe and guaranteed to deliver some ooh yes. From apparel, backpacks, drinkware to high-tech items.
Wow.
I love it. Woohoo!
Go to 4imprint.com and find some wow now. 4imprint, for certain.
I had such anxiety. Sometimes it felt like I couldn't breathe. Fortunately, one of my friends told me,
You've got to relax. You're going to get yourself sick.
I pay over $100 a month for cable when it's half the cost for Fubo TV. Get all the channels you want with all the entertainment you love for the price that cable can't beat. Learn more at FuboTV.com.
Welcome back to Bloomberg Markets. The European close, 20 or so seconds to go until the close of European equity markets. Let's have a look at where we are trading. This is the end of our European trading day. And the FTSE 100 down by 1%. The CAC 40 down by 0.8%. The DAX down by 0.4%. When we get to the sectors picture, you'll get a sense of why we're seeing that range of performance. But essentially, we have turned a lot more negative just in the last half hour or so, or the last hour of our trading day here in Europe. Let's show you what that looks like in graphic form. This is the intraday session chart of the Stocks 600. We were struggling for direction. Just last week, we of course, ended the month of May, or towards the end of the month of May. We had some slightly more positive sentiment, maybe towards risk assets. Was that going to stick this week? One of the questions. And yet we were still struggling for direction as we went through the morning session. But then we got that positive data coming through on the United States, on the US economy, and that got people thinking, well, hang on, maybe the Fed can hike as expected. We also got Jamie Dimon with some really quite gloomy comments. Just a few weeks ago, he'd been talking about maybe storm clouds that could dissipate on the US economy, and now he's talking about hurricanes. So all that very in focus, and we see all of that sent risk appetite down in the US and here in Europe as well. Let's have a look at what we've got from a sector perspective, because this was certainly causing some difference in performance across the various geographies. Autos and auto parts moving up by 1.7%, one of the only sectors in positive territory, as you see there, and that plays well for Germany. Of course, we see that sector doing very well there. Travel and leisure, I mentioned this with Abigail earlier on, and she was saying this is a weak spot in the US as well. Perhaps it's a sense that the higher energy prices are sticking around a little bit longer, but actually on the travel and leisure sector in Europe, it is partly travel, it is also leisure. That means gaming companies, and there's a different story going on there. Interesting to see utilities in the mix, and we'll get to that conversation just now. Let's pick out some of the movers that we've seen, and utilities is one area of weakness for European stocks today. I put in here Uniper. This is one of the businesses that buys a lot of the gas for Germany, and this contract is still in place. Uniper found a way to pay in euros, we understand, and to keep themselves the right side of the rules, and they certainly have not been cut off when it comes to Russian gas. So there's an interesting, they're right at the heart of all of those developments as we see Russia picking out individual countries across Europe and treating them perhaps slightly differently. That's the view of Mario Draghi over in Italy. So that stock down by 2.7% as we watch what's going on gas right now. Dr. Martens, this is the maker, Alex, of course, of the iconic footwear, which I'm sure you're familiar with, up by 18% for this business. It's not a huge company, but it's a nice story. They are upgrading guidance today, and it seems that they have pricing power. So they've got the pricing power to go and increase the price that they charge for those boots. I wonder if it has anything to do with the fact the Sex Pistols are back in the charts as well, or at least vying for a position in the charts, re-releasing God Save the Queen to tie in with the extended long weekend and Jubilee celebrations. But more seriously, I put in DWS as well. This, of course, is the German wealth management business, part of Deutsche Bank, and that stock down by 5.9% as the CEO agreed to resign. Seems to be the wording coming through from one of the memos that Bloomberg has seen after a raid on the business, allegations of greenwashing, and I know we're going to get more on that story now.
Yeah, let's get more on that. So Bloomberg's German banks reporter joins us now, Steve Ahrens on Deutsche Bank. He joins us from Frankfurt. Okay, talk to me about the read-through of the CEO change. Who takes the place? Does it help to mitigate the greenwashing allegations, etc.?
Well, it certainly is an attempt by Deutsche Bank to draw a line over a number of allegations that have been swirling around, some of them actually personally linked to Verman, so there's going to be less of a focus on those. However, the greenwashing allegations are about DWS as a company, and the probes in the U.S. and in Germany, and of course the criminal probe here in Germany are still going on, and just putting in a new CEO won't change that. However, the new one, Stefan Hopes, he's a sort of lifer at Deutsche Bank and a trusted confidant of the CEO of Deutsche Bank, Christian Sewing. He will try to clean up this company. He's got a new mandate, and of course a breath of fresh wind for
Steve?
I'm not sure if we had problem with Steve's line there. That sounded ominous, didn't it?
It
Alex?
did, a little
sounded
bit.
As if we might have lost him. Stephen, I don't know if you can still hear me. I don't think he can, or at least we can't hear you. So Steve, thank you very much. Oh, he can. Excellent. Okay, good. He's back. Wonderful. So I wanted to ask you, Steve, on the ESG side of this, I mean, how much is the ESG, community, I suppose, shaken by this? How much do people who want to sell ESG products, and let's face it, wealth management has been doing a lot of that in recent years, how much do they say, well, this is just a DWS issue, or how much is the whole space being shaken by people shining a light on it and saying, hang on, what exactly is ESG and what is not?
It's certainly a big wake-up call to the industry as a whole. it has been for some months now, ever since it became clear that the SEC in the U.S. is probing the statements that DWS has been making on ESG. That alone was something of a warning to the industry. And now, one CEO leaving essentially over or amid allegations of greenwashing means they're going to take it even more seriously. They've been looking at their statements, they've been going through them, and I'm pretty sure they've already been making changes to them.
Okay, thanks very much. Steve Aarons joining us there with the latest on DWS and Deutsche Bank and the broader ESG narrative, of course. Let's just check out where European equity markets are then. Having settled as we head to the break, this is the picture across European equities, down by just over 1% on the FTSE 100. The DAX then a little sheltered by some of those names in the auto space moving higher, although the biggest mover to the upside in that space actually coming from Scandinavia. But that's the moves we have on the major markets right now, Alex.
All right, well, here in the U.S., you're looking at the S&P now off a full 1 percentage points. Banks kind of getting hammered a little bit there. Jamie Dimon talking about the hurricane for the global economy. I'm going to talk about all of this later on today. The Bloomberg Radio's The Cable Show that's at 5 p.m. in London, 12 p.m. in New York. It's live on Bloomberg DAB Digital Radio in London. And if you can't catch us there, you can join me on Spotify and Apple podcasts. We'll be talking about inflation as well as the ECB. And then, of course, Jamie Dimon's ever head-scratching comments on the U.S. economy. Coming up on this program, oil is higher. That's as OPEC members are said to be considering whether to suspend Russia from a production deal. OPEC Plus also reducing their surplus estimates for this year. Details next. This is Bloomberg.
CME Group, where risk meets opportunity.
Opportunities can be hard to find, like catching lightning in a bottle. In uncertain times, it's tempting to retreat or simply wait and see. At CME Group, we empower those who act. We deliver tools to help manage risk and capture opportunities in every market climate, across every major asset class, to seize each possibility at precisely the right moment. CME Group, opportunity is everywhere.
Singing or speaking. Reason or fun. Daring or thoughtful. Sensitive or strong. Progress isn't either or. Progress is everything.
Your time to invest in companies that make stuff like this hard seltzer and this jetpack is now. It's all on Start Engine, which has an investor community of over 500,000. Go to startengine.com today and start investing.
You probably know Vistaprint for business cards, but did you know we also print that, and that, and that, and that too? Can't forget about that, or that either. So next time you think print, remember, when you use Vistaprint, the print abilities are endless.
G'day, we're Atlassian, the creators of teamwork software like Jira, Trello, and Confluence. Think of us as a teamwork lab, where teamwork experts have been studying how teams work for decades. Pioneering new ideas and testing every obstacle in the way of nimble human collaboration. All to perfect the everyday act of working together. Unleash the potential of your team at Atlassian.com.
Accenture. Let there be change.
This feeling of certainty comes from inspiring your customers and expressing heartfelt thank yous with promotional products people love from the experts at 4imprint. Enjoy that feeling of certainty at 4imprint. 4imprint, for certain.
This is Bloomberg Markets, the European close. I'm Ritika Gupta. You're looking at a live shot of the principal room. Coming up, Quincy Crosby, the Prudential Financial Chief Market Strategist. Bloomberg Television, 3:30 p.m. New York time. This is Bloomberg. Keeping you up to date with news from around the world, here's the first word. I'm Ritika Gupta. The U.S. is ramping up military support to Ukraine. President Biden says he'll give the Ukrainians advanced rocket systems and other weapons that will allow them more precision in attacking Russian targets. The weapons will let Ukraine hit targets as far as 15 miles away. The U.S. says Ukraine has agreed to not use the weapons to attack targets inside Russia. In the UK, consumers are being urged to brace for inflation getting worse before it gets better. The British Retail Consortium says that fresh food prices are now rising at their fastest pace in a decade. It says fresh food rose 4.5% in the year that ended in May. Russia was looking for other outlets while the EU was preparing to impose its partial ban on the country's oil. One option may not turn out well for Moscow. EC Executive Vice President and Trade Commissioner Valdis Dombrovskis spoke exclusively with Bloomberg's Maria Tadeo.
Russia is making lots of emphasis to increasing supplies to China, but what we are seeing, and especially in this situation of Russia's weaknesses vis-a-vis China, China is going to take a good advantage of this, and it's not going to be very advantageous deals for Russia.
Dombrovskis said that Russia is currently selling its oil to China at a 35% discount. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg. Alex.
All right, thanks so much, Ritika. Let's stay with oil for a moment. Some members of OPEC Plus are reportedly considering whether to suspend Russia from an oil production deal. And this is as Russia is facing a barrage of Western sanctions and that partial oil ban from the EU. Well, joining us now to discuss is Keshav Lohia, a CEO of Oilytics. Keshav, let's just pretend for a moment that irrespective of whether or not OPEC Plus is trying to kick Russia out, if Russia can't actually produce or sell their quota, what happens to that alliance?
Yeah, so firstly, thanks for having me, Alex, and you put the question spot on. This headline is very confusing. It doesn't really matter whether Russia is an OPEC or not. We are sleepwalking into a supply crisis. Every day, this war continues. And OPEC doesn't have the barrels to, replace Russian production. So that is the major news, and not whether Russia will be in OPEC or not.
Okay, and so Keshav, how high do oil prices get with that in mind? Because some people have been looking for this to be a top maybe for oil, asking themselves whether the supply issues are all priced in and the demand story will start to deteriorate because of China. It doesn't sound like you think the same.
I mean, if we look at the headline price in dollars, the 115 to 120, we're nowhere near the highs seen in 2008, but we are seeing record high product prices in gasoline and diesel. We're seeing record high prices in non-dollar denominated currencies. So the market is screaming for either demand destruction or extra supply. And the demand destruction story is taking a bit longer because we are getting, political decisions like subsidies, which is delaying how a market should work. So as it stands, if we tick along, prices, will tick higher. They have to catch up with what the product markets are telling them.
But if we wind up having Russia selling it, as Ritika was saying, a 35% discount, their oil to China, to India. I've read stories about how, you're seeing vessels at sea transport Russian oil so you don't know where it's coming from, or vessels that have GPS locators disabled so you don't know where it's coming from. As long as that oil is around, what does that do for the supply and demand balance?
So even theoretically, even if India and China can buy all the Russian oil that is being consumed by the West, there is just not enough logistical capacity to move them there, and there will be additional roadblocks thrown into that, from shipping insurance from the UK and the EU, and this discount will only get wider because you cannot just switch one-to-one from the West to the East.
So what's the maximum amount that India and China can buy, Keshav, of this Russian oil that maybe is a little more homeless than it was?
I mean, we could do between 30 to 50% and on an optimistic scenario. But the real supply cliff hits, in the 6 months' time when Europe, phase out theoretically completely of Russian barrels. So we're still not seeing the full impact of the sanctions on Russian supply. So we're just at the tip of the iceberg of the problem that's about to compound for Russia.
Keshav, let's look ahead for a moment. Tomorrow we get the OPEC meet. What kind of headlines are you looking to come out of it?
I mean, it'll just be a non-event. OPEC is raising its production as it can, but even within OPEC, we have two camps. You have the GCC countries, the Saudi, the Kuwait, the UAE that can increase production, and the rest of the countries like Angola, Nigeria are struggling, and Libya are struggling. So as a bloc, there's only that much they can increase the production. There is no magic switch that they can increase production dramatically. Saudi is producing at 10.5. They have briefly produced at 11, and they did do a one-off at 11.7. But Saudi production is at multi-month high. So I see it as a non-event as it's been the last few months.
It wouldn't be a non-event, though, I suppose, geopolitically, if OPEC Plus were no more, Keshav, and if Russia is really, which is the plus, if they really were thrown out of that alliance. Are you not anticipating that happens then?
Yeah. So I mean, even if OPEC Plus is thrown, even if Russia is thrown out of OPEC, Russia would never able to meet their quota as it stands right now. So even if Russia is thrown out, but what is surprising is that Russia's Lavrov met the Saudi counterpart. So that bilateral relationship is still very strong between Russia and OPEC, despite the pressure from the West. So even if we get the headline that OPEC Plus has disbanded, the relationship between OPEC and Russia will still remain very strong.
Keshav, thanks very much. We appreciate your time. Thanks very much for joining us. Keshav Lohia, Oilytics CEO, and we'll certainly continue coverage of oil stories as we head towards that OPEC Plus meeting and the decisions coming from it tomorrow. Coming up on this program, if you want to keep working at Tesla, forget about working from home. That seems to be the detail you need to know. We will get more on that shortly. This is Bloomberg.
The Principal Room, brought to you by Principal Financial Group, combining actionable insights with specialized solutions to help meet your investment goals. Get to know us at Principal.com.
What do you see when you look at the surface? Just that, the surface. But dive deeper and new possibilities emerge. Essential intelligence from S&P Global takes you here, providing the data, risk assessment, and workflow solutions you need to plumb the wonders beneath. A better, more prosperous future awaits. It's yours for the seeking. S&P Global. Seek and prosper.
Fall, September, late September, 25th.
May I be of assistance, sir?
Please. I know the 2013 Bitcoin, but the rest, I really need something well-balanced.
Very good, sir. May I suggest a blend?
Crypto doesn't have to be overwhelming.
That's exactly what I was thinking.
Wonderful. I'll bring that over.
Great choice.
Ask your financial advisor about Bitwise, the world's leader in crypto index funds.
Oh, a thank you note. I can't even get inside the other place without paying a fee.
Yeah, membership fees are a pain in the cash.
Nice one, Dad.
Get 20% off and free shipping on your first order at Boxed, the better way to shop bulk.
It's a hurricane. Right now, it's kind of sunny. Things are doing fine. Everyone thinks the Fed can handle this. That hurricane is right out there down the road coming our way. We just don't know if it's a minor one or Superstorm Sandy or Sandy or Andrew or something like that. And you better brace yourself.
That was JP Morgan CEO Jamie Dimon speaking in the last hour from the Autonomous Strategic Decisions Conference here in New York. He previously called the economy a storm, which storm clouds can blow over, but a hurricane feels much different. And this comes across when you look at the S&P down by 1.3%. Let's get more detail on it. Abigail Doolittle is tracking those moves.
Yeah, Alex, very colorful language influencing the markets. A little bit of a hurricane here for the NASDAQ 100 futures on this session, similar to what we've seen all year, volatility. So for overnight, you basically see down. And then at one point around the time of the open, ahead of that ISM print, up 1.4%. I would argue that some of this volatility also has to do with that better than expected ISM print, manufacturing print. Good news is bad news because it means that the Fed may be sticking around in terms of cutting and sucking liquidity out of the market longer than had been perhaps suggested by the FOMC minutes that came out last week, saying that they could have flexibility later this year. In any case, you see this nosedive down, basically down 2.5% intraday right now. The NASDAQ 100 futures down 1% on this session. Relative to some of the big movers, though, it's not all bad because if we do, of course, have some upside movers for the markets. And if we take a look at what's going on here, we are going to see Salesforce.com up 10.5%. Its best day since the summer of 2020. A strong profit outlook is really what's encouraging investors there. They're seeing strong demand for business software. Plus, JP Morgan very encouraged by the fact that their macro outlook, unlike JP Morgan's Jamie Dimon there, very strong. So it's interesting to see that contrast in views between two different companies. Amazon.com up 99, almost 1%. This is Matt Miller over at Miller Tabak is saying buy big tech. ConocoPhillips and Exxon, well, we do, of course, have oil higher for another day. And so we see both of those big oil companies higher. Some of the lagging sectors, however, if we take a look at, we are going to see most sectors are lagging. This, of course, is the IMAP and the Bloomberg terminal. And most of the sectors, only energy higher, not even up by all that much given the strength for some of those big oil names, up 0.5%. Communication services, tech toward the top. And then financials, this is very ironic, but it perhaps makes sense given Jamie Dimon's comments, down 2.5%, even as yields are absolutely surging higher. Typically, that would help the banks, but not so much today. And then finally, just a couple specialty sectors. We certainly have some weakness here, too. There you have the banks down 2.8%, but then food, beverage, and tobacco down 1.8%. And the airlines, this is just so interesting, Anna, down 4.4%. Of course, earlier, the airlines had been surging higher as Delta, similar to United Airlines, and Southwest Airlines boosted the revenue view, and for the second quarter adjusted earnings at 2019 levels, but it comes at a cost. That there are rising costs, and I should say for the second quarter adjusted revenue, not profits, it comes at a cost. They expect that the per seat cost to be up as much as 22%. So there's that margin issue that we've been hearing so much about in recent times.
Abigail, thanks very much. Bloomberg's Abigail Doolittle. Yeah, the worst performing sector in Europe, also travel and leisure. Now, the richest person in the world doesn't appear to think much of working from home. Elon Musk sent an email to the executive staff at Tesla with the subject line, remote working is no longer acceptable. Here with more is Bloomberg's Ed Ludlow. He clearly has some very strong views and he's been getting them off his chest then. Ed, tell us more.
Yeah, it's interesting because we don't know who's on that speed dial, right? Tesla has 100,000 employees approximately all around the world, from a range of sort of software engineers to assembly line workers. They employ a lot of contractors, but the subject line or the speed dial did say executive staff. And it's interesting because the other line that jumped out at me, Alex and Anna, is he would personally vet individual cases where they wanted an exemption. So imagine how busy his inbox is right now, all those people asking, hey, I still want to work at home.
Yeah, and it's very different than when you look at the big banks, where there is competition among the banks for staff. I feel like it's a different scenario when it comes to Tesla. If I worked at Twitter today, would I be freaking out?
Yeah, I think so. I mean, this is at odds with Twitter's policy. You remember kind of midway through 2021, Jack Dorsey, when he was still CEO, said that even when our offices open in September out on Market Street, downtown San Francisco, you'll have the option to work from home indefinitely. That's the decision Twitter made. If Elon Musk is to buy Twitter and take over in some kind of management role, we just don't know. You'd imagine that would change.
Yeah, it's so interesting the way these things become so polarized, don't they, Ed? I mean, instead of some happy medium, maybe there's some nuanced solution, maybe there's some hybrid solutions in here, but they become certainly very polarized in some contexts, certainly when they become part of culture wars. Let me ask you about your story on Twitter right now, because you've got a nice story out on the Bloomberg terminal about what it's like to work at Twitter whilst they're waiting to find out whether the world's richest man is buying them or not.
Yeah, I think a lot behind the scenes, a lot's going on at Twitter, right? Sources are telling us that management have moved to, we knew about a hiring freeze, but they've basically looked at the resources they've got, the teams that they've got, and said, we're shutting down or scaling back certain projects. And they've moved staff away from things that just aren't gaining traction, Spaces audio, for example, to other priority areas. One source also tells us an edit button for Twitter is coming. And it could come by the end of this year in the form of a time-limited window where you can edit your tweet because you made a typo or whatever, but also it would show the history of the tweet. So we're very much getting the sense from sources that management are like, we need to focus on growth and making engagement with the platform stronger, irrespective of the takeover bid. You know, there are things that we've known are an issue for Twitter for some time, and management is certainly shuffling the deck when it comes to talent.
All right, Ed, love it. Thank you so much. Really appreciate it. Bloomberg's Ed Ludlow joining us there. That wraps it up for me and Anna here on television. Coming up, Betsy Stevenson, the former U.S. Labor Department chief economist, will be joining Balance of Power with David Weston on Bloomberg Television and Radio. I'm also headed to radio, so join me with Bloomberg DAB Digital Radio on the cable, or check it out as a podcast. This is Bloomberg.
This couch.
I'm just saddled with so much credit card debt right now.
I need an upgrade card. It rolls all my monthly purchases into one easy installment loan so I can avoid stuff like that.
Where do I sign up?
Get your upgrade card at upgrade.com.
Do you know how much your broker charges on margin loans? On a $100,000 margin loan, Interactive Brokers charges just 2.33%. Fidelity and Schwab charge over 3 times as much. E-Trade or TD-Ameritrade are even higher. Move your account to Interactive Brokers and save at least $5,200. Or much more if you're trading big bucks.
Yo, dude, you need some help?
Don't worry about me.
Yo, there's no shame.
No shame? You don't know my family, man.
It's okay to ask for help. Find a licensed therapist at BetterHelp.com.
I was paying for in-flight Wi-Fi for months before I finally caught it. Truebill uncovers hidden subscriptions and notifies you when a charge is upcoming. From there, you decide if you want that service. And if not, cancel it right from the app with one tap. Download Truebill, the money app that works for you.
This is Scribd, an app that gives me access to ebooks, audiobooks, podcasts, and more. With Scribd, I can get in my steps and countless pages. Scribd makes every moment a reading or listening moment.
This is the feeling of certainty. The feeling that comes from knowing you're inspiring your customers, uniting your team, recognizing achievements, and expressing heartfelt thank yous with promotional products people use and love from the experts at 4imprint, your partners in creating special moments and memories by making people smile. Enjoy that feeling of certainty with promotional products at 4imprint.com. 4imprint, for certain.
We're excited to do business with you, but before we sign, I gotta ask.
Sure, anything.
We searched you online, and maybe you can explain this?
Can't believe that garbage is still coming in. That is so false.
Frustrated with your online search results? Call Reputation Defender today to join tens of thousands who've improved their online reputation. Get your free reputation report card at reputationdefender.com or call 1-877-866-8555.
What does the future of strength look like? It's a personal trainer that assesses your strength and adds weight as you progress. It's dynamic weight that adjusts for you in real time for a more efficient workout.
Come on!
And it's a roster of coaches that motivates you to get stronger, faster. The future is strength you can feel and results you can see. And you can only experience it on Tonal.
Learn more at tonal.com.
from the world of politics.
It's a fair debate to look at the AR-15 style weapons and whether they should be sold to 18-year-old and whether that limit should be raised to 21.
To the world of business.
I think that what the president is doing is saying, look, one of the things we're going to do is stay out of your way to the Fed, and some of the other things we're going to try to do are to reduce costs.
This is Balance of Power with David Weston.
From Bloomberg World Headquarters in New York to our television and radio audiences worldwide, welcome to Balance of Power. Well, the White House has been out in full force this week so far, addressing the issue of inflation, trying to persuade us the president is on it, he understands we have a problem, and he's going to do something about it. So that makes economic numbers all the more important as we get them. We did get some economic numbers this morning, and to take us through them, we welcome now Michael McKee. He's Bloomberg International Economics and Policy Correspondent. So, Mike, we got both jobs openings and we got those ISM numbers. What's important in them?
Well, if you're Joe Biden and you're wandering around in the unpopularity desert, you're looking up to the sky going, Lord, give me a sign. And we got a little bit of a sign that things are getting a little bit better. It's going to take a while for all this to change, but prices paid. The ISM number, normally we look at the headline, and the headline was pretty good, 56.1, better than it was the prior month. But the prices paid number came down just a little bit to 82.2 from 84.6. That is still a very, very high number, but it does suggest progress in the right direction. Question is, can it be maintained? The JOLTS report came in with 11.4 million job openings, which would have been the same as last month, but they revised last month up to 11 million, almost 900,000. So you could argue maybe that the labor market loosened just a little bit, which is also what they want to see.
A little bit, but is a little bit enough? We had Bill Dudley on, as you know, Bloomberg earlier. He's got a column on Bloomberg saying, you know what, you got to loosen up the job market a fair amount if the Fed is going to get to where it wants to go with inflation.
That's the problem, is it does take time for all of this to feed through into the economy. We see interest rates go up, and the market front ran the Fed interest rates wise, and mortgage rates went up, and new home sales have gone way down in the last couple of months. Now that's going to lead, in theory, to businesses laying off construction workers, but that hasn't happened yet that we have seen. So that's the kind of thing that we're waiting for. We did see a drop in the index for manufacturing employees to 49.6, and anytime you get below 50, in theory, it suggests contraction. So maybe companies are starting to get to the point where they don't need as many people or don't think they can hire them, and that will push us in the right direction as well.
From the Fed's point of view, thank you so much, Mike. Always great to have you with us. Bloomberg's own Michael McKee. And now we turn to an economist for her read on what's going on in the economy, particularly when it comes to the labor market. Betsy Stevenson is professor of public policy and economics at the University of Michigan's Ford School. In an earlier life, she was the chief economist for the Department of Labor. So, Professor, thanks so much for being back with us. Really good to have you here. Give us your sense of the jobs markets, particularly in light of those JOLTS numbers. There's still an awful lot of job openings out there.
There are a lot of job openings, and there are a lot of people being hired. You know what, these JOLTS numbers give us a little bit more detail into the employment reports we've already seen. And we know that hiring has been strong through this year. A lot of people are out there looking to change jobs. That's why we've got really record high quits, record high job openings. Yes, they came down a little bit this month compared to last month, but they're just high overall compared to what they've been in the past. Layoffs are down. I mean, it's a tight labor market, but it's one where there is movement. We're seeing a lot of people getting hired. We're seeing people going into new jobs. And we don't see a lot of upward wage pressure contributing to inflation. So it's absolutely true that the Fed needs to cool demand in our economy right now, but it's not clear to me that they need to cool the labor market. What they want to do is cool demand while actually trying to keep the labor market sort of where it's at without seeing unemployment spike. You know, that's obviously a really difficult job for them. Can they get inflation down without bringing unemployment up? But certainly that should be their goal.
Well, I want to come back to that very question. But before that, let me pick up on something you just talked about. And let me ask it this way, from my point of view. Is there more churn in the labor market today than there was pre-pandemic? I mean, as you said, there are a lot of openings. There are a lot of people taking jobs. Are people cycling through the process more than they did before the pandemic?
There is a lot of churn. Well, I mean, one way to think about this is that we stopped churn for a year. So there's a bunch of people who just didn't, in 2020 or early 2021, they didn't want to change jobs. So there's sort of some pent up demand for making a career change. And then we also saw that the pandemic affected people's priorities about what they're looking for in a job, how much work-family balance they want, how much they want to get paid, where they want to live. And all of that churn is showing up in the labor market, and it's showing up in the housing market. There was actually a recent study that found 50% of the price increase in the housing market is due to people thinking being able to work from home and sort of churning jobs. So there's this connection there. People are making changes, and I don't think that's fully settled down yet.
So let's come back to that question you raised, actually, whether it is possible to get our arms around inflation effectively without significantly increasing the unemployment rate. Earlier today, we had the former New York Fed President Bill Dudley on Bloomberg, and he addressed this question. This is what Bill Dudley said.
The Fed's own forecast is that a neutral unemployment rate consistent with 2% inflation is 4%. So I think you need to get the unemployment rate up to at least 4%. The fact that we have so many unfilled jobs suggests that maybe the unemployment rate consistent with 2% inflation is even higher than 4%. So I think we need to at least get to 4%. And that's the problem. It's difficult to do that without precipitating a full-blown recession.
So, Professor Stevenson, there's a lot in there, but let's start with first his premise that you got to get perhaps significantly over 4% unemployment before you can really get inflation down to 2%. Does that make sense to you?
Look, this is not an exact science. I know, what we do is we look at the past. We see what we've been able to do in the past. I think what's really difficult right now is that we're trying to fill a lot of jobs in the service industry, and the service industry is a sector that's always had a lot more churn than the goods producing sector. So normally recessions hit the goods producing sector and they barely touch the service sector. This one was the exact opposite. We don't actually.
And monetary policy mistakes that just haven't been corrected. And I really think, everyone keeps saying, well, is there going to be a hard landing? Are we going to pay the price for what the Federal Reserve is doing now? I think we're paying the price right now for what the Federal Reserve didn't do 6 or 9 months ago. So where we are right now in the markets, look, the market is 3% below the 50-day moving average. If you're bullish, you could take hold on that. You could easily go to that 50-day moving average. That just shows how far away we are. But unless you tell me that the Federal Reserve is going to get far more hawkish, that China is going to reopen and be a global engine of growth, that the Biden administration is finally going to put logic first above all else and temporarily suspend the tariffs, I don't really see what the catalyst is to which you could therefore say we've got an all clear for markets to begin to recapture the losses that we've experienced so far in 2022.
So Weiss, we're going to give back. I mean, the lows, we're a good distance from the lows that we had on May 20th, though. I mean, the markets are so volatile, things can change quickly. S&P is 8.5% higher. It's the NASDAQ and the 100 that have really rallied. NAS is up 9.5%. NASDAQ 100 is up 10%. Are you going to be looking to trade in and out of the market like you've been doing? Or at some point, are you just going to do that sideline maneuver that you had before where you had pared back everything in your book? As of a week or so ago, you were willing to stick your toe in the water even if you weren't ready to jump in.
Yeah, so I'm back to the sidelines. Look, if you read through the lines in terms of what Jamie Dimon said, it goes back to what I said a week or two ago, which is that companies are going to have that mentality of preserving cash because they see that we're going into a recession, which I believe we are. And read between the lines further, and you'll see that when he says we're going to watch our balance sheet, to me that means they may not buy back stock. Stock buybacks in 2021 were almost $1 trillion, 891 billion, I believe it was. That's a fantastic sum, and that helped move the markets higher. So you don't have, or I believe you'll significantly cut back on that share buyback because you're going to need cash on your balance sheet. So Look, we are in a very tough time, and if China does come back online, sure, it'll increase demand, but you know what that'll do? That'll drive inflation much higher. So I just don't see where people are getting it, aside from a tenth of, a basis point or whatever it was in a decline in some inflation measures, that is coming down. I drive around and I fill up my tank with gas, and it's 20% higher than it was 2 weeks ago. Guess what? Crude oil goes into everything. It may not go into growing a tomato, but it sure goes into transporting a tomato.
Well, it's not
so
like
the transportation costs, the input costs.
It's not like inflation's going to start rolling over in certain areas, like at the pump.
Correct.
In other areas, it might, but at the pump, it's not. In fact, prices are expected to even go higher than they are now. Look, Steve, we just need to see inflation stabilize, right? Let's not confuse, or at least peak. Let's not confuse peak with go down, because I think everybody who is out there saying inflation's peaked, I don't know that in the same sentence they're saying, and it's going to roll over real hard. Maybe they believe that, and the proof is in the pudding yet, but I don't know. We're yet to see that.
But even if it peaks, you still have the ongoing increased cost to consumers and to industrials. And that's going to be the issue. So, yeah, you might get a momentary respite, and maybe even a bounce like we got last week in the indices, but it'll be short-lived, because you're coming into the quarterly reports and margins are going to get crushed. And the ones that survived and the ones that engaged in pure folly, like a Macy's and raising estimates, I mean, that's ill-advised. They're going to have to retract that, as we've seen so many times. They're not going to be an island of price stability and consumer demand with the lower to mid-level consumer. Just not going to happen. Luxury, yeah, they'll still do okay, but that's a separate class of people. And that's sometimes the bubble we live in, on the show and with people that come on. It's not the real world.
Yeah. Let's bring in our headliner now. Dubravko Lakos. He's the global head of equity macro research, JP Morgan. It's been a while. Welcome back.
Thanks, Scott. Good to see you.
You as well. Your headline today is market internals point to an extremely bearish setup. However, you have a 4,900 price target on the S&P. You still have earnings at $230. You say valuations are getting increasingly more attractive. Multiples have already adjusted to rising rates. I mean, that doesn't sound like your narrative is extremely bearish. So where's the disconnect?
No, I don't see a big disconnect. When I basically look at the fact that investors are paying an arm and a leg for defensive stocks, that just tells me the positioning is very bearish, and I would be basically looking to the other side. That just tells me that sentiment is very negative, tells me the position is very negative, and people are basically positioned for recession. Our base case is this is not going to be a recession in the next 12 months. That's our house view. And so we think from that angle, the portfolios are wrong-footed.
I mean, I don't want to put you in a difficult spot because, you might see Jamie in the cafeteria from time to time, and he may wander by your office and vice versa. But what do you make of he sounds like somebody who would not have a 4,900 price target on the S&P, nor that earnings were going to hold up to the degree at which you do, nor that he thinks valuations are all of that attractive now, and that maybe we've adjusted to rising rates, because he talks about one of the principal reasons for his worry is Fed tightening and never having had QT like this, quote, end quote.
Yeah, so I think Jamie says, right, there's a storm coming. We don't know if it's a mild storm or if it's a severe storm. I think the market is already discounting and pricing in something more than a mild storm, and we don't think it's a severe storm. So again, 4,900, that's our year-end price target. Between now and then, that's 7 months. A lot can happen. We need to see what happens on inflation side. We need to see if Fed goes restrictive or if they pause somewhere around neutral rates, in which case positioning being so bearish, I think you're set up for a potential reversal.
Why? That's what I'm trying to get my arms around. Why? When everything seems to suggest, as Steve Weiss said as well, we're in a very difficult environment. And the unknowns, I would make an argument, skew to the negative rather than the positives. I mean, could there be an unknown positive coming out of the war in Ukraine? Sure. But the other unknowns skew negative, don't they?
No, I would actually argue the opposite way. I think that a lot of the unknowns, most of the unknowns are there. I think the backdrop has basically gotten hit from all sides, from basically just about every angle. And so I think the big unknowns here is really, do we have some form of, I don't know, further escalation on the Ukraine side, where, I don't know, Russia decides to, completely put a halt on natural gas, and then Europe goes into recession. That's an unknown. That's a tail risk. It's not our base case. Another unknown could be, could we see more hedge funds going basically belly up that were riding the tech wave? That's an unknown, but I think it's very hard to put a base case on those. So we generally, when we look at the economy and when we sort of look at the current backdrop, are we going into a slowdown? Yes. Are certain parts of the economy on the good side going to go into recession? Yes. Arithmetically, they have to. But I think the broader backdrop, to me, doesn't suggest a full-fledged recession. It suggests at most a technical recession. And I think the market is pricing in a pretty heavy dose of negatives already. And so that's why I would almost be asking the other side of the question.
Okay, that's fair. You also see this is going to be a point of contention, too, for some. You see a cyclical growth bounce. So you think that let's just talk growth, like tech. You think tech stocks have re-rated, if you want to use that terminology, enough?
So you mean derated, I imagine, right?
Yes. But I mean, they have re-rated, too, lower.
Okay, yes. So, look, I think there's a little bit of a confusion here when you sort of look at the street sentiment. Everybody just goes immediately to assuming recession. And to me, this is less about recession. This is more of what I call equity duration cleansing. We basically entered this historic rate pivot. We just simply an S&P 500 index that had too much duration bias, long duration bias. And so we've been generally arguing for rotation from long duration to short duration assets. On the short duration, for instance, you have energy. And I think we're pretty far along that process. And so I think the index sensitivity to rates, I think, will be diminishing because there's been already a pretty substantial adjustment done on the long duration side. So the market has gone to basically pricing in from early cycle, immediately late cycle playbook. And in my opinion, anything short of a recession, late cycle playbook is just wrong. So I think we need to be open-minded about the fact that we go back to mid-cycle. Mid-cycle, you basically see both cyclicals, traditional cyclicals, as well as tech bounce before eventually you go back into some form of defensive growth trade. So okay. That's where I just think the market has basically ran ahead too fast.
It's definitely run ahead. Whether it's too fast or not, it's going to be interesting to watch. Joe, you have a question for Dubravko?
I certainly do. Dubravko, good to see you. So I think you're talking about a very large sector rotation within the equity market where a lot of the current leaders should be sold off and should be going out and buying the laggards. Can we be doing that now without knowing whether or not inflation is going to be arrested? Do you have any confidence that inflation will be arrested to make that rotational trade?
So again, rotation for us is from long duration to short duration, so from tech to energy. I think if inflation stays at an elevated level, I think the energy, the commodity trades, I think they actually continue to do just fine. And again, our base case is this is not a recession and we're not going to have significant demand destruction. So we think that side of the equation, I think, holds. Tech, on the other hand, has derated quite a lot. And so I think sensitivity now of these long duration equities like tech to rates, I just think it's lower. And so that's why here I think you need to see inflation accelerate even further from the current levels, and you need to see rates go a lot higher, I think, for there to be a lot more carnage. So that's why I think the question is where are sort of expectations and sort of how much further do you go from the current level? And I think a lot is already in the price. I think a lot is in the expectation. And there's been already a pretty substantial adjustment. And that's why sort of when you look at defensive versus cyclical, the multiple spread between defensive stocks and cyclical stocks, it's at 98th percentile. Why would you want to be in defensive stocks? I mean, even if you go into recession, the last stocks that are holding up tend to roll over. And if you're not going in recession, which is our base case, back to mid-cycle playbook, defensive, I think, is going to be used as a source of funding for other parts of the market.
Well,
so I just think the positioning is too skewed to the negative side.
Lastly, I mean, it's interesting you say that, and to play off of that, I saw a downgrade today of utilities to underweight at Jefferies, and I thought of that line in your note where you talk about defensive stocks having valuation risk. But in terms of rotation, I mean, there are some who say, and I know you like energy, as you just said, as the best risk reward. But there are some who say, that's the last group that's yet to be hit hard, and that eventually they're going to come after that. And that, that's just, it's going to happen. It's just a matter of when. You don't think so?
Oh, so could there be some tactical profit taking? Absolutely. But I'll say a few things. We as a house estimate that by 2030, you need about $1.2, $1.3 trillion in oil and gas capex for oil and gas demand and supply to balance out. On the supply side, nothing is being done. Nothing. Valuation-wise, the sector hasn't gone up. The entire move up in energy has been in lockstep with earnings. Multiple is a 9.5. So could there be some profit taking? Possibly, absolutely. But I think the sector remains in a very good spot. And so I would be buying on pullbacks, especially for the energy complex.
Great to see you again. Better yet, it's great to get your perspective and your point of view, Dubravko. We'll see you soon.
Thanks for having me.
Yeah, that's Dubravko Lakos over at JP Morgan. We have more big guests coming up on the half today. We have a first on CNBC interview today with the Delta CEO, Ed Bastian. The airline just raised its outlook. We'll talk about that moving forward. Plus, famed commodities trader Mark Fisher gives his take on what's happening and the best ways to play it right now. Is it nat gas over oil, oil over nat gas, all the above? He'll tell us in 2 minutes.
A Hall of Fame swing. Like Capital Group's new ETFs, there's so much behind it. A lifetime of experience. Honing your skills, dealing with curveballs, and having a whole team behind you. Introducing actively managed ETFs powered by Capital Group. Can I find an ETF with a whole lot behind it? With Capital Group, I can.
Another crazy day? Of course. You're a CIO in 2022, but you're ready because you've got the next generation in global secure networking from Comcast Business with fully integrated security solutions all in one place. So you're covered, on-premise and in the cloud. You can run things the way you want. Your team, ours, or a mix of both with the nation's largest IP network from the most innovative company. Bring on today with Comcast Business, powering possibilities.
On Closing Bell Overtime, Quadratic Capital's Nancy Davis, navigating market turbulence, protecting your portfolio, finding opportunities now. A CNBC exclusive today, 4 p.m. Eastern. Watch or listen live on the